Lebanon has pushed to get Israel out of Lebanon in exchange for what? It's Hezbollah, not the Lebanese government, that's been attacking Israel, and it has no power over Hezbollah. So this agreement with Lebanon is a paper agreement. It's not really.
So you don't think that is going to work? You don't think that's going to work?
It has no security guarantee value. It has no. The Lebanese government lacks the tools of enforcement and the will to do what's needed. Certainly not without an international backing.
Correct.
In practical measures.
So there are so many of these non-negotiables, and some of these are really sticky points. Ambassador Goel, in that sense, the world is watching what can come out of this meeting between the US and Israel. India, of course, on its part, has these strong ties, both Israel and Iran. We remain heavily dependent on imported oil. That is not changing for a while. So in that scenario, what kind of outcome should New Delhi be hoping for from this meeting?
Now, that's a difficult one. First of all, I want to be very clear. I think that in this context, India had a very difficult geopolitical position or stance to adopt, considering that Israel and Iran, with both of which are extremely important to India, bilateral interest, as well as the USA, to manage the relationship between all three of them is a very, very difficult thing, really. And I think we had just barely managed to avoid any kind of a conflict as far as India is concerned.
Yes.
Number two, I think our expectation would be that if there is some kind of a rapprochement or an understanding possible between the USA, Israel and Saudi Arabia, including security matrices, including security, I don't know to use the word guarantees, they are very difficult,
yes,
but certain kind of security alignment may be necessary. If that can happen, I'm sure that the other Gulf countries would join in and Iran would be isolated, but Iran would always remain a challenge.
Correct. So if Iran is going to continue to remain that challenge, Lev, very quickly, if I can ask you, I'm running out of time, does Netanyahu leave this meeting with Donald Trump more likely to support a diplomatic path, you think, or more determined to keep military options open?
I'm afraid Netanyahu will have to comply, to be very obedient to whatever Trump tells him.
Right. So, yes, the wars may begin on the battlefield, but they rarely end on the battlefield. What is said is seemingly very true. Trump may want a deal to exit the war. Netanyahu may want stronger guarantees. But unless security concerns and political realities are addressed together, this could remain a ceasefire without a lasting settlement. I want to thank my guests for joining us, Lev Aran, Suresh Goel, Irina Sukuman and Zaki Zaidi. Thank you so much for sharing your insights with us. Of course, now the real question is not going to be only about the longevity of the war. As far as the conflict is concerned between the two sides, US does want out. But how is this meeting going to perhaps align the two sides for the considerations they have both on the domestic front? There are elections to be fought for Trump in the US and for Netanyahu in Israel. That's going to be watched very closely. I'm Vikram Oza with the big question. Thank you for joining us.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade. Spots the trends before they hit the screen.
In what could lead to renewed Middle East escalation, Iran launches ballistic missiles at a US military base in Jordan. This is the first attack since US President Trump paused strikes on Iran. CENTCOM said all missiles were intercepted. And oil prices rebound, snapping a 3-day losing streak as renewed hostilities in the Middle East reignite geopolitical tensions after several days of relative calm. US futures trade flat amid fears of renewed tensions with Iran. Investors also await the Federal Reserve's policy decision, where it is expected to leave interest rates unchanged. Apple briefly hit a market capitalization of $5 trillion a day after passing Nvidia to become the most valuable publicly traded company. It's only the second listed company to achieve this feat after Nvidia. The Nifty ended Tuesday's monthly expiry session on a subdued note, with traders staying on the sidelines amid a lack of strong direction cues. GIFT Nifty indicates a flat start. Good morning, you're watching Markets Today with me, Shreyanshi Singh, and over the next half an hour or so, we'll tell you everything that you need to know in terms of starting the day on the right note. In fact, let's do that with a handover coming in when it comes to the fresh tensions that have erupted in the Middle East after Iran launched ballistic missiles at a US military base in Jordan. And this is its first direct attack coming in since US President Trump paused strikes on Iran. So US Central Command is saying that all incoming missiles were successfully intercepted, preventing casualties, even as Trump claims that Tehran is eager to strike a deal. And you do, of course, have Israeli Prime Minister Benjamin Netanyahu also discussing Iran with Washington. The conflict is widening right now. Meanwhile, US and Saudi forces have launched retaliatory strikes as well on Iran-backed groups in Iraq, citing a wave of IRGC-directed drone attacks over the past month, raising fears that regional tensions could really spiral once again. And that's something that you're looking at. But, when you talk about Netanyahu's commentary also coming in, he's called his White House meeting with President Trump excellent, and I quote him here when I say this, as both leaders also reviewed their joint campaign against Iran. This is the update that you really have coming in terms of that very important meeting. But that said and done, let's quickly take a look at the global cues that we have for you this morning. In fact, when you talk about US markets, it's a little bit of a mixed session that you're looking at. So some strength really coming in when you talk about Apple, and that seems to be reflecting just a tad bit. Now, when you talk about Nasdaq, that was down about 0.2%, though despite all of that, and S&P 500 about 0.2% uptick coming in, 1% higher when you talk about Dow Jones. And when you talk about US futures, that's why you're seeing a little bit of caution really creeping in across the board when you talk about Nasdaq with that 0.1% downtick, S&P 500 not decisively higher at all, and not even a proper positive bias if you look at that one as well, and Dow Jones about a little bit higher as well, a little bit lower as well. So a little bit of caution really is what you're seeing creeping in. And let's also talk about why that caution is presenting itself before we take a look at the Asian indices as well. It's actually oil prices that are also edging higher yet again amid all of that tension, and we'll talk about that in just a bit. But like I mentioned, it's actually Asian indices. In terms of Nikkei, that's down about 0.2%. Hang Seng 1.5% higher as well, and about 0.5%, about 0.2% uptick also coming in for Shanghai as well. Now, like I mentioned, when you talk about oil prices, that's why you're seeing oil prices also creep up just a little higher, so 4.5% uptick coming in, whether you talk about Brent or WTI. So Brent close to those $88 a barrel levels yet again, and WTI also somewhere close to $83 a barrel as well. So that's the kind of move that you're seeing coming in as well. But let's also talk about one important stock to be keeping on your radar this morning, and that's actually Larsen & Toubro, that's delivered a mixed set of numbers. In the first quarter, you're looking at strong order inflows that were offset by the margin pressure also creeping in. In fact, Parth is joining in with some more details when it comes to this one, Parth.
Yeah, absolutely. So L&T has reported a decent set of numbers. The order inflows for the company have seen a good growth despite a weaker momentum during the quarter. The EBITDA margin, however, missed the estimates due to delays and higher credit provisions according to the management. The profit, however, was above the estimates despite that margin miss, and that was basically because of the lower finance cost that the company had to face during the quarter. The green energy orders saw a very strong growth due to the offshore wind wins, and the solar segment of the company was hit a little bit because of the Middle East disruptions that we saw during the quarter. And also the company has exited Nabha Power and also signed a divestment deal for the Hyderabad Metro project as well. If we talk about the other details, then order inflow stood at 1.08 lakh crores, seeing a growth of 14% year on year, and this number beat the analyst estimates as well. On the international orders front, they formed 56% of the total order inflow for the quarter, and the order book also, the entire order book stood at 7.78 lakh crores, seeing a growth of 27% year on year. The finance cost that led to that profit beat saw a downtick of 31% year on year, and that is what led that performance in terms of profits above the estimates. Now, if we talk about the key operational trends, then infra orders have more than doubled, but revenue saw a small downtick of just 3%. The conventional energy orders, however, saw a big fall of 90%, and that is because of the higher base that the company saw in the same quarter last year. The green energy orders rose by 58% year on year, and that was on the back of strong offshore wind energy wins, but revenue also saw a contraction of 11%. That was because of the West Asia disruptions that we saw. Now, if we move on to the brokerages, starting with Citi, they have maintained a buy rating with a target price of 4,650 rupees. They've said that the Q1 was a resilient performance and supply chain pressures will remain manageable for the company going forward. The second one is Jefferies. They have maintained a buy rating as well. They have hiked their target price from 4,885 to 5,000 rupees per share. Now they say that margins will remain intact going forward, and the company has maintained its guidance in the range of 10 to 12% year on year. With H2 in H2 they have guided for a better execution. And lastly, CLSA, they have maintained an outperform rating with a target price of 4,842 rupees per share. They said that the order inflow during Q1 was a surprise, and they believe that L&T stock weakness is actually a buying opportunity, and L&T is the most undervalued company when we talk about the India industrial segment as a whole. So that's the entire outlook and brokerages on the L&T results.
Absolutely, and thank you so much, Parth, for joining us with that entire update also coming in. Let's also hear out the commentary coming in from the management in terms of the impact of geopolitical uncertainty on the company's business and the outlook.
L&T is that because we have seen that there's a significant chunk of exposure of Middle East when we talk about the order backlog, the order inflows as well, and because of the disruptions that we saw in the last quarter, there's definitely that exposure. So how is L&T hedging this exposure, and what is the strategy of L&T basically to offset that in the coming quarters?
Middle East uncertainty is concerned, it has not been just a one-way street in terms of everything coming to a halt and everything is in a distraction mode, etc. We've been having a very volatile situation where there have been pockets of peace, pockets of disturbance. You might be relieved to know that most of the project sponsors who actually provide us the orders are extremely positive in terms of what they need to do going forward.
Alright, then there you go. So that's the management's outlook also coming in when you talk about the growth picture. But let's also talk about the FNOQs in terms of what they're indicating this morning, and quite the interesting setup really, Puneet, with oil prices really edging up yet again.
Well, most certainly, as the world is catching a cold because of Donald Trump, so have I, and that's certainly visible in the voice. But most certainly at this point of time, you are seeing the geopolitical pressures having a big impact on our markets too. Currently, the implied open indicates a start in the green, but watch out for any kind of move that you might see post the first hour or post the opening essentially on the index. We are close to that 24,000 mark yet again, but very important to monitor all of those moves given the geopolitical uncertainty. Similar with the Bank Nifty as well. Yesterday we highlighted that at 57,200 to 300 odd is not a great support given the current geopolitics, as well as most of the major earnings come through, and that's exactly what happened as well, down by almost 0.5%. and at this point of time too, we're not sure if the 56,200 mark will be supported. So 56,200, 55,500 are two important levels that we're watching out for right now. Cash markets continue to be the other factor. You saw some buying by foreign investors, but you would be hoping in terms of the index longs that finally you would want that bearish uncertainty to be left behind in the July expiry, pardon me, because largely just 8 to 10% index long means that foreign investors have been net short by almost 90% at this point of time. And when you also look at the open interest distribution across key levels, you always continue to monitor the 24,000 level as we are right now, because seeing some impact yet again on that level. For specifically the stock specific action, you have seen Tata Power and Godfrey Phillips both seeing massive buildup of shorts. Weak results by Godfrey was one of the bigger reasons for a short buildup on this stock yesterday. But for the open interest losing part, you are seeing some other key counters as well. So let's show those as well. On the open interest loser side, Torrent Pharma and Wipro were the one. Wipro actually saw some covering of shorts led by very strong Coforge earnings that drove the IT index up as a whole. But that continues to be an important monitor. Now, the rollover data yesterday also indicated a good 56 to 60% kind of rollover. So that is the other important factor. But most likely investors would want a better August in terms of the foreign investors' long position compared to July.
No, absolutely, and let's see if the market really catches a cold with oil prices there as well. Thank you so much, Puneet, for joining us with that. Let's also talk about some of the other earnings to really watch out for. In fact, Varsha is standing by with just that list as well. Varsha.
Let me start with the companies which has given a good set of numbers. You have SH Kelkar, wherein a strong set of numbers have been seen. One-time gain aids PAT though. True Alt Bio, please keep this counter in your watch list, because a very sharp rise you're seeing when it comes to PAT. PAT is up almost 12x year on year. They've also seen increase in ethanol capacity. Sanofi Consumer has seen a strong growth when it comes to their domestic India business. RPG Life Sciences, wherein the EBITDA was up almost 22% year on year. So these are some of the companies where the numbers were really good. But let's also focus on the companies where we've seen a weak set of earnings. You have Birlasoft, margins were impacted by wage hikes. You have VST Industries, wherein there was a excise duty hike impact. PTC India Financial Services have seen a weaker numbers than estimates. Phoenix Mills, if you see, have seen a Q1 EPS miss, which was driven by weak residential revenue. So all these companies might see some kind of pressure because of the weak Q1 earnings. So these are all the companies that you should keep on your watch list as of today based on Q1 numbers.
Absolutely, and thank you so much, Varsha, for joining us with that entire update as well. So there you go. Those are some of the counters that you should be watching out for, and we'll tell you about some of the counters other than the ones that you should be focusing on the back of their earnings. But before we do that, let's also take a look at Godrej Capital as well. That's making a significant entry into the fast-growing gold loan market with the acquisition of Kanak Durga Finance, marking its first inorganic expansion in the lending business. In fact, let's go across and listen in to slice of the exclusive conversation that we had with the CEO of the company as well. Let's go across and listen in to slice of the exclusive conversation that we had with the CEO of the company as well.
In terms of funding, the promoter had infused capital. You say you will reach 100,000 crore on lending side over the next 5 years. Now, once you reach 1 lakh crore, you also enter the RBI's upper layer list of NBFCs. And it says that once you're classified in that, then you have 3 years to actually get listed. But would you actually wait that long? Or in terms of listing of Godrej Capital, when do you see that happening? Or in terms of listing of Godrej Capital, when do you see that happening?
Yeah, so we're, these businesses are best listed for various reasons. On the lending side, one is that you have a continuous and ongoing need for capital. You also, just from a governance perspective at that scale, you're right. Upper layer for us, when we get to 100,000 crores, it'll be split between the NBFC and the HFC. So one might argue we may have more time, but we very much think that the right time to list would be, in the next 4 to 5 years. You're right. We've been, the promoters infuse capital. We will, by the end of this year, in the lending companies alone in Godrej Capital, have 5,000 crores. Over the next 1 to 2 years, we continue to expect, funding from Godrej Industries. But thereafter, it would be incumbent on us to look at other avenues of equity, and it very much culminating in a listing over the next 4 to 5 years.
Alright then, so there you go. That's the entire timeline also coming in terms of the listing there. But let's also talk about some of the stocks that I was mentioning earlier in terms of that entire bit, in terms of news flow as well. A bunch of stocks that you're looking at that make it to your radar. Let's also talk about some of those counters as well and get that entire list going as well.
Well, yes, largely we look at the overall earnings, how things have actually panned out, and of course the first one would be the IT stocks, a strong technical setup coming in, and of course remember that the software stocks have been rallying for the last 2 trading sessions. ONGC and Oil India, that's something you should be watching out for. The oil has rebounded back, and of course the Middle East tensions are coming in. Granules India, Aurobindo Pharma, these are the stocks you should be in your radar. Of course, commentary coming in that Centre is actually planning the drugs API scheme and revamp in that, and this will benefit these counters. The capital good infra stocks also you should have in radar because of the IIP data. It was very strong, almost highest levels in the last 2 years. OMDC gets an environmental clearance for its manganese ore, and InfoEdge, interestingly, the NCLAT approval comes into the merger of 4 arms into the company itself. Dynacon Systems, RailTel have a focus on it. Order win coming in, and speaking of orders, RVNL also gets a significant order of almost 370 odd crore rupees. Paradeep Phosphates, numbers were in line, but the capacity expansion is something which the street is looking for, and that is where momentum can come in. 5 Paisa Capital, if you look at it, they'll be acquiring Discard Data Tech, a 122 crore acquisition. Seems on the positive side for the company. Jain Resource Cycling, the unit operations start their operations again, and graphite is a negative news flow coming in as they face US countervailing duty on the graphite electrode exports going ahead. So these are the stocks which should be on your radar today.
Absolutely, but not the only stocks that make it to your radar as well, Sharad. Let's actually talk about the brokerage verdict as well, yours and brokerages as well. You're looking at Chola Finance as well. There's Morgan Stanley, Citi and Jefferies really hiking their targets, and it's quite the interesting commentary also coming in here.
Well, yes, bullish views coming in from most of the brokerages tracking the stock. Citi has hiked the target price to 2100 from 1945, and a couple of things they've stated is largely in a seasonally weak quarter, the operational parameters have been good. Morgan Stanley also hiking from 1720 to 1900. The FY27 forecast, they have risen here. Remember, the macro risks are there, but still the company has outperformed. Jefferies also stated that this remains one of the top picks in the NBFC space, from 1960 to 2100, the target hike price, as well as Chola Finance. They have, of course, stated that most of the issues are manageable. And lastly, Macquarie has also stated that the growth momentum is quite strong for Chola Finance going ahead, but the maintain and underperform is there, and the target price, they have not changed. It's at around 1495.
Absolutely, and thank you so much, Sharad, for joining us with an update on that as well. But let's also keep it going with the brokerages. Talk about some of the other counters that make it to brokerage radar, something like an HUL, Varun Beverages, as well as Avenue Supermarts. In fact, Mahima is joining in with a summation of their views, and it's quite the interesting view and some bit of silver lining really coming in when you talk about HUL for the brokerage verdict here.
Right, so I mean, we saw how the stocks corrected yesterday, all three of them, right? All three of them tanked in trade yesterday. HUL largely on account of volumes not being at par with the expectations. Varun Beverages on the back of the India business growth, and DMart on the back of store guidance being cut. In terms of what brokerages are making of these earnings and developments, I'll start with HUL first, where Jefferies has maintained buy with a target price of 2850. Says the 7% share price drop is baffling given the extent of the miss. There were a few weak spots, but offsetting factors meant the overall miss in EBITDA was small. They note the consistent improvement in growth and profitability over the past 5 quarters, and management commentary was also reasonable according to them. Goldman Sachs has cut the target price to 2450 versus that of 2725 earlier. What they're saying is that revenue growth is improving. They see further acceleration happening in FY27, and home care was strong and likely to accelerate further as price growth kicks in FY27. There's also encouraging recovery in the beauty and well-being space. The next one is Macquarie. Macquarie has maintained outperform and maintained the target price at 2860. What they're saying is that broadly Q1 was in line with what they were expecting. Volume growth moderated Q-on-Q basis, but did not like the continued weakness in soaps due to inflationary pressure. They like the stable FMCG demand outlook going into Q2 despite the inflationary pressure, and premiumization continues to grow the top line. The other aspect is Varun Beverages, where Citi has cut the target price to 580 from 640 earlier. According to them, for Varun Beverages, Q2 was below estimates. India growth debate persists, and management, however, remains constructive. International business was strong. Growth has continued. They believe the category remains attractive over a long term, and competitive intensity should gradually be easing. Jefferies has maintained buy with a target price of 615. What they're saying is that the overall, if you take a look at the correction that the stock has seen, is it a buying opportunity or not is a question mark. India business volume growth disappointed the market. Softer volume base kept expectations high on growth according to them. And overall, management has remained confident, especially as July saw strong momentum. Believe correction is excessive. The last one is Macquarie on Avenue Supermarts. They've maintained underperform with a target price of 3250. What they're saying is that the target of 15% store growth is something which is less than what they had guided for earlier. Overall, apart from that, outlook is unchanged. The focus on improving and proving the sustainable and profitable nature of DMart Ready is something that they'll be watching out for, and believe online and offline consumers are different, and hence also does not see merit in integrating DMart Ready and physical stores. So this is the overall view of the slew of brokerages that have come out in the consumption space.
Absolutely, and thank you so much, Mahima, for joining us with that view as well. So there you go, that's some brokerage commentary as well coming in on some of those counters. But let's also talk about something interesting. PM Modi is on a historic 2-day official visit to New Zealand, where the focus is on deepening bilateral ties, including advancing negotiations on a free trade agreement. The visit marks the first by an Indian Prime Minister to New Zealand in 4 decades beyond trade and diplomacy. The visit has also highlighted the cultural links between the two nations. In fact, NDTV Profit's Nimit Dixit caught up with Daniel Eugene Wade, a member of New Zealand's indigenous Maori community, about these shared similarities. Let's take a look at a snippet of that conversation.
What would you say are the key things that have been preserved from the times that, of course, maybe not right back when you started, and the things that have actually changed, maybe for the good as well? People evolve for the good as well as, some things stay preserved. So what do you think are the key things that have stayed the same and things that have changed?
One thing that I'd like to share is that we still have that communal way of life. We still do everything together. So as a village, we still cook together. We still respect each other's space. We all bathe together. Yeah. So we have a bathing communal area where we all bathe together. And we have just that, what the village people call whakawhanaungatanga, which is we're all together as one. So the Māori people are also known as tangata whenua, which are people of the land. So we are the land and the land is us. And that's one thing that the village people embody, that we are connected not only as a people, but also to the area, to our environment.
And that's really similar to Indian culture as well.
I understand.
Because we're very communal and we're very social, and the community is in fact more important than the person is something that's written in most of our religious and our lifestyle texts throughout history. Yes. Do you see similarities between the Indian culture and the Maori culture?
It's quite interesting that you asked that question, because we do have a strong Indian community that do come on our tours, and I do notice the similarities between the Indian people and the Māori people and their connection to Mother Earth as well, and also the principles and the belief systems around nature as well is very, very similar.
Alright, then that's a look at the Maori community's traditions as well. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what?
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open. We're bringing this to you from the Suzlon studio, and it's looking like it's going to be a good morning in the markets.
Yeah, it's going to be a great morning in the markets. Why so?
Well, for one, crude has
No, I have an answer. I have an anscer for that.
Because crude is softer.
I have an answer for that.
The AI trade is making India more attractive.
I have an answer for that. The answer is on your screen, viewers. Well, happy birthday.
Thank you so
Happy
much.
25th.
Finally. Thank you so much, Neeraj. That was really sweet of you. And of course, thank you to the entire team who surreptitiously have put this together. But yes, one has...
Else, how would you allow that any which way?
one has turned hopefully a little wiser. But yeah, markets are looking interesting and exciting today. We're learning a lot of lessons through these markets too, aren't we?
Yeah, we are. And actually, while there is a lot of volatility per se, a lot of specific moves back home as well. The IP data coming out, plus the new FNO norms, so much to talk about.
Yeah, and you have an interesting insight on what's happening on the India-China border.
Yeah, I mean, it's an interesting thing, Tamanna, that Uttarakhand's Lipulekh Pass is going to resume on August 1st after a gap of more than 6 years, with China now apparently permission given to 20 Indian traders to visit, according to officials. This is after a gap of 6 years. Now, the is this one more signaling of sorts of there being some bit of thawing of equations, if you will, on the trade side, because we've seen enough
100%.
announcements.
Yeah, 100%. On press note 3, there has been thawing, and I think there is an understanding, maybe on both sides, that these two very large nations need to work together while the world is figuring out where things are placed. And all of that volatility between US and Iran also yesterday. I mean, the last 12 hours has been a whirlwind of ups and downs as far as the US-Iran relationship, the strikes, the firing, the pause, etc. is concerned. So you've seen crude prices also seesawing in that sense. Earlier you had reports that maybe Iran is willing to have a conversation. Trump came and said that there's some signs of peace. Then it turns out there was a surprise attack from Iran on US military sites. Earlier you had reports that maybe Iran is willing to have a conversation. Trump came and said that there's some signs of peace. Then it's that the US CENTCOM has intercepted, according to them. And then you have Brent back about 5% up at 87. So here's what the global cues are looking like this morning. It was a mixed day of trade in US markets as Dow zooms ahead of the Fed decision, while Nasdaq faces pressure from chip stocks. This semiconductor trade meltdown is just right now relentless, so which is why you had the Nasdaq mildly in the red. Let's pull up US futures, and possibly you have the same kind of mood going on, and that there you have it, Nasdaq about 0.5% down right now. Bond yields meanwhile continue to slide. Big day today. There's going to be a Fed announcement, the Federal Reserve meeting, and the announcement will happen later tonight India time. Rates are expected to be unchanged. 10-year is at 4.61%. Meanwhile, oil prices have risen after Iran's surprise attack on US military positions. The Brent is at $87. And think about it, you've had huge amount of ups and downs in just the last 12 to 14 hours. So volatility continues to be the name of the game. Asian markets, and let's pull up what Asia is doing this morning. A bit of a mixed bag. Hang Seng up about 1.5%. Nikkei is down about 1%. And I don't know if you have the Kospi rate, because I mean that's the one to watch right now, right? All of the pain is in the Kospi. I want to pull up the implied open if we can, and we'll get you those Kospi rates very quickly. 127 points up for India, following some sort of relief yesterday. Seth Freeman, Senior Managing Director, Glass Ratner Advisory and Capital Group, joining us now. Seth, a very good morning to you from where we are. Thank you so much for joining in. Do you think the AI trade or the semiconductor stock meltdown is something which will continue for some time, or is it just a bit of profit booking right now?
Probably a little bit of both. I think we need to separate the semiconductors from the AI companies, but there's increasing concern about basically something I mentioned several weeks ago about NVIDIA, for example, investing in its suppliers and then in turn buying products, needing to buy products from those suppliers. So we're kind of getting this pyramid sort of situation, and that could be really risky if revenue and eventually profits it disappoints.
Got it. Seth, good morning to you. And let's assume that even if we separate it, but the fact remains that both of them kind of are melting down, if I can use that term, at the same time, right? The US Semiconductor Index, I think I saw a post on X that all stocks are now trading below some key levels. We know the AI trade is coming off as well. If it continues to unravel the way it is doing right now, could it be beneficiary to the anti-AI trade nations, or does money just come off equities in general and go to safety, and therefore every equity market would kind of face the pressure?
That sounds pretty dire.
I'm asking
and I'm basically a skeptic. I don't think the sentiment is going to change that drastically, and it is a problem when these stocks represent such a huge percentage of indices, and that's really where the risk is.
You know, Seth, I have quite the other side of the question, perhaps. For those who have been watching this AI trade gallop away, sitting on the sidelines and wondering if they missed the bus, are these opportunities as well that are presenting themselves? to come in and maybe create positions?
Well, you make a good point. The fear of missing out is certainly something on investors' minds. But I guess the opportunity would be if there's a big correction. The long term should be good. Revenues are growing, but there's no profitability, and that's really where the risk is. So, should investors get in on these sentiment-driven dips? I don't think so.
Seth, just want a quick take from you on what we're seeing with crude as well. Volatile, seesawing, all of the conversations yesterday between US and Iran. Now Oman has come into the picture. There's haggling about which side of the Hormuz Strait will be used, who will take a toll, etc. Is this something that equity investors are going to start paying less heed to by and by? We saw this happening with long-standing conflict between Russia and Ukraine as well. Is that what's going to happen here?
I don't think the market and investors are so desensitized, because what's happening is the oil crisis is really jacking up inflation, not just in the United States, but around the world. And that sits on consumers' minds, especially when what's happening is the oil crisis is really jacking up inflation, not just in the United States, but around the world. And that sits on consumers' minds, especially when people have to start driving back to work once the summertime's over. And they're going to really feel it. We're feeling it in food prices. So I think the situation is actually going to really affect at least individual consumers. Institutional investors may not be so sensitive.
Thank you so much, Seth, for speaking with us today and giving us your views. You have to sit on the fence on the AI trade right now. I think the last word is not said yet. All right, here's what happened with the markets yesterday. The Nifty ended marginally lower, and it was HUL which was the pain point, really. If you look at the Nifty minus HUL, it might not have been so bad, because otherwise the mood was great and IT was powering through, right? But HUL plunged in trade 7%, BEL was down 4%, and that's where the laggards are. Watch out for HUL today, because when you see after the brokerage notes that have come out, maybe some kind of recovery, that's what you need to look out for. Mid caps have outperformed. Kalyan Jewelers jumped about 8%, and small caps were lagging. Capri Global, GSPL have all tumbled about 7% each. IT sector was really the shining star. The whole sector rose about 3.5% and extended gains for a third day. Watch out for IT today as well. Banks, PSU banks, FMCG have snapped their winning streak. It was also the Nifty expiry day, and some of the data to put out for you on Nifty expiry in the last 4 months and how it's been, how the Nifty has behaved on expiry day and consistently trending lower. For July, it was 23,985. So I think the IT trade continuing would be my number one question, Neeraj, and I think you have more legs to it, at least as a there's no clear inverse correlation right now that if the AI trade is sulking, then Indian IT trade is up. There's no clear inverse correlation right now, but it might be forming.
Yeah, and we've had one strong commentary from Coforge yesterday.
Yeah.
The other one, which will possibly give out fairly strong commentary, Persistent, is due in a couple of days. So you might be wedged in between mid-sized names which the market looks forward to, right? So could well be true. Yeah, but Tamanna, just a couple of very interesting things that happened yesterday. One is a field day for option traders yesterday, and I've chosen the 3 names, specific strikes. So you to excuse me for being very specific, but 3 strikes for 3 names, and look at those price gains that happened. HUL 2100 put option was up 4900% yesterday. Anybody who bought it made it or laughed it all the way to the bank. I feel for the person who have sold it, because the losses are unlimited when you sell an option. Similarly, the TCS 2340 call option was up 2617%. DMart 4,000 put option was up 567%. So for the newsmakers and the large ones where the price moves were very, very strong, the kind of option movements that happen were quite something really. It is something to watch out for. And by the way, there are some changes on the FNO side as well, particularly in the stocks in the futures and options segment. We'll talk about that a bit later on. The other thing that happened post-market hours is the June IIP numbers. And India's IIP grew about 7.3% YOY in the month of June. Manufacturing accelerated to 7.8% on a low base. Mining turned positive. Consumer goods hit 6.1%. Yes, the demand risks are rising as the base turns adverse a bit later on once the GST base effect goes away, but for now the IIP numbers look very solid. So in line of all that Tamanna said and a couple of other data points that have come out, what's the trade setup for the day? Simple. I think the pause in the slide of oil prices may create a bit of a downward bias today, though the markets look like starting off positively. So let's wait and watch if they continue that way, or is there a bit of a pullback that comes later on. And watch out for the auto names, because I think two comments that caught my eye. One, Nuvama has come out with a note for the July numbers. They say the wholesales uptrend shall sustain in the month of July, with both PV and CV volumes likely to expand over 20% on average for the month of July, which is great news in a monsoon quarter, if you will. And Toyota Kirloskar Motors, a senior official out there, said that the company expects the growth momentum in the passenger vehicles industry to continue in the second half of the fiscal year as well, despite headwinds, including fuel price hikes emanating from the West Asia war. So keep an eye out for autos. We might be looking at a seriously strong month of July. Even if the expectations are high, the actual delivery might just help. And Tamanna, very interesting set of numbers today. A lot of large caps and a lot of very interesting names, right? Asian Paints, Adani Group.
That will report.
Yes, that will report.
Today, I think is we tend to get really obsessed with the IT results and the banking results as business journalists. But I absolutely agree with you, Neeraj. These set of numbers that will come today and maybe the next couple of days are very, very crucial to understand what's happening with Indian markets and the economy.
Yeah, so the commentary to be watched out for. What factors should one keep an eye out for?
I think among the factors, and if I have to start with what's happening with markets, the index have traded in that very narrow range during the monthly FNO expiry, and we had that lovely chart which we showed earlier on how the Nifty ends on a monthly expiry, at least for the last 4 months. So this indicates indecision after Monday's sharp rebound. The immediate trigger for the next leg of the rally is a decisive move above 24,050. A decisive breakout above 24,050 will open room towards 24,200 to 24,300. Resistance levels now at 24,025, 24,050 and 24,080. Supports at 23,960, 23,940, 23,905. What are the key make or break zones? 23,800 to 23,900 on the downside. For the bank Nifty, it's closed below its 50-day EMA, that's the exponential moving average, after facing profit booking at higher levels. Near-term weakness persists. The bank Nifty needs to reclaim 57,300 for bullish momentum to return. Resistance at 56,975, 57,065, 57,210. Support levels on your screen: 56,680, 56,590 and 56,445. And of course, we told you about the Nifty expiry in the last 4 months. But let me go across to Puneet on what the FNO setup is after that monthly expiry day yesterday.
Well, thank you for that, and wishing you a very happy 25th, Tamanna. But largely what we have seen in the world, that there's a geopolitical pressure certainly, but that's not had an impact on the implied open for now. But be wary a little bit about the opening post that what happens, because you could see selling pressure yet again coming in at those elevated levels at 24,200. Now, why I say elevated, because every time we've gone toward that level, we've seen some selling pressure come through yet again. So all those moves very, very important right now. Trading just sub 24,000 at this point of time. But the Bank Nifty also a similar story. Yesterday you saw some pressure, 56,200, a near-term weaker support at this point of time, but those moves will be important yet again. Some buying seen in yesterday's trading session from the foreign investors, but it's also important to note that the last 4 months preceding July have seen a lot of selling pressure by the foreign investors. Till now, We are mildly positive at this point of time by just 10 to 11,000 odd crores, but mildly positive is an important factor which we'll watch out for in the next 2 days as well, if that continues to be the case. But open interest distributions and the index longs yesterday continued to be depressed, and hence you'll see hopefully a better August compared to a more depressed positions by foreign investors. That has been a consistent theme as well. Finally, in terms of stock specific action, you are seeing multiple key result reaction. Yesterday was a day of IT and hence and certainly not a day for FMCG as well. So Godfrey was weaker results, stock was down 8%, you saw build up of shorts. Tata Power was the other one where some kind of short build up was visible as well. But in terms of the open interest losers, you did see some stock specific action coming through on Torrent Pharma. Wipro was one where covering of shorts was visible, and so was on HCL Tech, largely led by Coforge and the good set of earnings as well. So that's the picture for the F&O side of things. You'll want to watch out for what happens post the first hour of the trading session, if that rally sustains or not, and that will be a key factor for today.
Thank you for that, Puneet. All right, let's take a look at some of the stocks on my watch list. I'm starting off with Phoenix Mills. Strong set of numbers. Net profit was up 23.2% at 297 crores. Revenue up about 13% at 1,075 crores. EBITDA up 13.5%, and margins have also stayed steady at a 59.6%. In fact, improved mildly. So consumption growth has translated to rental income growth of 17% for the year. Offices income grew 44%, driven by contribution from offices commissioned in 2025. That's a strong one. Excluding new offices, office income grew 17%. Offices completed in 2025 were at 64% occupancy versus blended portfolio occupancy of 72%. Hotels delivered steady growth. St. Regis revenues increased 19% year on year with a RevPAR up 15%. Courtyard by Marriott revenue grew 5% with RevPAR rising 26% year on year. The only note of caution here, because the results are good, and if you're correlating this immediately to the stock impact, is that we had a preview, right, of how Phoenix Mills will be doing because of their business updates. You had a fair bit of reaction then. So you'll have to wait and see how the stock react, but we're looking at the results, and the results were good. Likewise, I would say for True Old Bio, net profit at 57 crores versus 4.7 crores, like a huge jump over there. Revenues have pretty much doubled from 304 crores to 627 crores. EBITDA has gone from 41.5 crores to 133 crores nearly, and margins have gone from 13.7% to 21.2%. There's a new appointment as well of the chairman position for a year. Now, it's a strong Q1 performance, undoubtedly. The dual feed integration strategy has driven growth. Total income is nearly 2x, PAT has risen 12 times, EBITDA has jumped 3.2 times. Q1 was the first quarter post completion of their grain integration program, and installed ethanol capacity increased by 43% year on year. So you're already seeing that ethanol boost for a True Old Bio. Current capacity utilization is 60.57%, and it's India's largest ethanol producer by installed capacity. Company is country's only dedicated listed biofuels company. We're hopefully going to have an opportunity to speak with the management of True Old Bio and understand what has worked for them this quarter and how it can sustain. Birlasoft, the third one on my list, it's I would say a muted quarter. Revenues were up 2.3%. For the quarter, EBIT was down 11.5%. Margins were also down from 17 to 14.8%, and net profit was down 8.5%. Revenues have grown pretty much flat in constant currency, 0.3%. And year on year is minus 3%. Total contract value was up 20%. Net new deals were at $57 million, which is a drop. Management has highlighted AI-led pricing pressure and competitive environment as delaying revenue conversions. So that is a bit of a pain point as far as management has highlighted AI-led pricing pressure and competitive environment as delaying revenue conversions. So that is a bit of a pain point as far as Birlasoft, which has really run up. If you pull up the 1-year chart, you'll see that this is a company and this is a stock which has definitely been in focus. Here's what Nuvama is saying about Birlasoft. They've retained a reduce with a target price of 270 rupees. It was 340 earlier, so big pull down. They're saying nothing incremental to turn positive on yet. Management expects stronger deal wins in the first half of FY27 versus first half of FY26. Execution remains key. So Birlasoft, they're in focus and not that great. But the first two were pretty good.
Yeah, and I dare say that I have one good one. The other two are probably a bit of a dampener, but the one good one is a large one, so therefore it's impactful. And just I'm resting on the shoulders of a couple of brokerages to talk about what L&T could look like and could do, if you will. So CLSA cornered the note on L&T after their numbers and the commentary, more importantly, that has come out. So they maintain and outperform with a target price of 4842. That's about 27-28% upside from the levels that it is right now. They say there is an order win surprise in Q1, and by the way, L&T said that Middle East is doing just fine for them in their commentary. They say L&T is expanding the total addressable market to Europe and India industrial pieces as well. Capex drive will drive a surprise. They believe that L&T stock weakness on cyclical factors such as the Iran war is an added buying opportunity. They also say that L&T is the most undervalued large cap in the India industrial stock space, and the about 78 or 80 billion dollar backlog is up 28% YOY and appears solid in the current environment. And they believe that L&T is emerging as a global capex cycle play. So keep an eye out for Larsen. We haven't seen that really lead the factors for a while now on the bourses. Let's see if it does something different this time around. So keep an eye out for L&T. Graphite India might have some bit of bad luck because the US Department of Commerce has preliminarily imposed a 3.68% countervailing duty on exports of large diameter graphite electrodes from the company. Maybe that has sulks today, as does VST. The only point about VST is that this is well known. We've spoken about it so much that the cigarette makers will not have a great quarter, and it is well known. So Godfrey did the same, ITC may do the same, and VST has done the same. Revenues are down 13%, operating profit margins are 19.4 versus 25.8, profit after tax is down 24%. Just pull up the 1-month chart of VST Industries if we can, and you will see what I'm talking about. Some pieces of what these stocks will do is already been factored in with this 12% downtick. So, well, let's see if there is more in store today.
Yeah, definitely more in store from us because a whole host of other stocks that should be on your radar, and Sharad joining in with that list.
Well, thanks a lot for that, Tamanna, and of course, happy birthday to you as well. But let's start with the three stocks. This is Granules India and Aurobindo Pharma, and why I'm talking about these stocks is a very important commentary was made. Center has planned bulk PLI scheme revamp, and now this statement is coming in from Pharma Secretary Manoj Joshi. Now why this is important is because it's almost a 20 billion market when it comes to bulk drugs and API in India. Already in the first scheme there were 3 companies, and largely they are expected to gain more out of it. This of course includes Granules India and Aurobindo Pharma. Remember, Aurobindo Pharma is via an arm. It's not the entire company as well, and also a small cap called Sadhana Nitrochem. Second stock, Paradigm Phosphates, should be there in your radar. Numbers were largely in line, but the main focus is on the capacity expansion. Aluminum fluoride capacity expansion of almost 15,000 tons per annum. That's where the street is quite bullish on, and the value of investment is roughly 250 crore rupees. And also a very interesting data came post market hours. I'm talking about the India IIP data. From there it was a 7.3% jump in June month itself. But the two most important things from that was, of course, the capital goods segment. That has jumped up 14% on a year-on-year basis. Infra numbers were also very strong. That is why Siemens, ABB, Thermax might see a good technical up move, at least at the initial hour of trade. So these are the 3 stocks or themes which I'm tracking.
Okay, well, thanks a lot for that, Sharad. Now, before we take that break though, here's some things to keep an eye out for. Why is it that we've been talking about IT so much? Why is it that suddenly the India numbers look pretty good because since mid 2025, and Tamanna, correct me if I'm wrong, but since mid 2025, everybody's talking about how India and some other markets will benefit when the anti-AI trade starts. Now, we are not saying it's starting, but the AI meltdown seems to be real. And here's some data, and I know you have some data too, but here's some data. SanDisk, the stock, fell double digits overnight. I think it was a 16 or a 17% downtick overnight. It is down nearly 30% in 5 days, and it's down over 50% from its record high. That's what, officially about $200 billion lost in market cap since June 22nd. Picture that. Micron, Seagate, etc., all of them corrected overnight. And of course, I don't even talk about the 3x leverage SK Hynix ETF, because I mean, that is painful for Korean retail traders. As per a Kobesi post, all the stocks of the US semiconductor index, which is this rig that they go by, they are now trading below their 50-day moving averages. It's the first such occurrence since April 2025. Now, will this recover? Nobody knows. But is this the classic sign of a meltdown or a pullback in the AI and the semicon trade? I would bet my last dollar this is it, because it is showing.
My question is why? What is the trigger? And that to me is unclear. And I'll tell you what I'm talking about. Look at, for example, SK Hynix. Worst hit, terrible situation. Just look at how they're reporting. So the fundamental facts of what's happening, their profit has jumped 557%, and this is despite an earnings estimate miss. The revenue has jumped 257% year on year. The company has flagged demand growth from expanding AI infra investments. They expect capex to reach the high 40 trillion won range. The quarterly results, though, are short of expectations. Now, what is key to watch? AI memory demand remains firmly resilient, and shares have slid as outlook has disappointed investors. The spending outlook remains to be watched. And okay, there is rivalry. That is one problem as far as SK Hynix is concerned. There are valuation concerns as well, and spending justifying lofty valuations. But if I remove the expectations from the picture, and I know that's how investors will look at expectations, but the fact is that it's not like there is any fundamental concern with the way this company is showing profitability.
You're right, Tamanna.
Yet the reaction is so harsh. So I wonder whether there will be a balancing act at some point.
At some point, yeah, sure. So at some point of time, this meltdown might correct, because even the outlook for the next 12 months, at least posted by even Samsung, etc., seems okay.
Very strong.
Very solid. Could it well be the post that Chris Wood put out yesterday in a note saying that top Chinese AI models are now processing, I think the note said, we don't have it as graphics, but just reading it out, the top Chinese AI models processed about 36.39 trillion tokens on Open Router during the week ended July 19. And the US models did about 7.39 trillion only. So Chinese models actually handling 5 times as many tokens as the on the global aggregation platform. Is the and CXMT debut, and that's the 4th largest. There are 3 more to come, right? Presumably. Is China now really putting its weight out there and giving competition? And is that hurting this whole global AI and therefore the semicon trade as well?
So China fear, valuation fear.
Yes.
Then this other problem of circular investments, are companies taking money from one and then investing in another. So a lot of things to panic about as far as it's concerned. Maybe we shouldn't feel so bad now anymore that we don't have a semiconductor trade, but we have a lot of other ideas to trade on in the Indian markets. We'll take a very short break. We're coming back with our top trading strategies for the day.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत.
Welcome back. You're watching India Market Open. I want to pull up the implied very quickly this morning because it seems like we're going to have a bit of a recovery after the monthly expiry session yesterday. That's out of the system. 135 points up is what's showing. Very good morning, Kushbora, Parag Thakkar. Thank you for joining us. As always, I'm wondering, Kush, what you're looking at today in terms of recovery.
Why? Why are you even going there? You know that's not what I'm going to start with.
Some of us have to work, okay?
Not today. Why aren't you on a planned sick leave?
No.
Birthdays are meant for planned sick leaves. पहले से डाल देना चाहिए.
See, I can't be hypocritical. I have stopped many people from taking leaves on their. No, but
that's a wrong bar to set.
I think it's fun. I think it's fun to come and see everyone's making me feel so special. Why would I miss this?
Indeed, but नीरज complain है तुमसे. Publicly on air तुमने एज रिवील कर दी, वो भी गलत. 25. I would have said perhaps 27. We still qualify for 30 under 30. So, but a very happy birthday.
Thank you so much, Kush.
A very happy one for many more to come. And have a great day. Have a fabulous year ahead. Keep smiling, keep shining. That's my wish. Parag bhai, over to you.
Yeah, same. Parag bhai, with the grace of God, very happy that we are doing this show together.
Thank you so much. Thank you so much to both of you. That's very sweet of you.
Now over to business, as you say. Nifty अगर देखोगे तो अब वही उसी रेंज में आ गया है. 23,800, 24,300, that range that we've been talking about. In fact, this 24,000 number has been so pivotal. Not now, since March actually. We've been up and down all over the place. But if you see, we've largely pivoted around this number of 24,000. There is a good possibility that we might now break 24,300, even go to 24,500 like we did last time, perhaps even higher. But we know in a market and in a scenario like this, we take each day as it comes, right? Where does my confidence stem from? A couple of factors. One, we've seen an interesting rollover activity where overall rollover for the market is slightly under the last 3-month average, but most of it was on the short side, so the short positions haven't been rolled over. That's a good thing. We are seeing supports kick in for the Nifty. The 23,800 for the most part has been respected, barring a day. If you do get this gap up by the way of about 150, 200 points, I think the initial long trade is lost, because then you come very close to the 24,300 resistance mark and the risk reward ratio is not favorable. So like I've been saying for the last few days, if you have a long position, you should continue to hold, keep trailing your stop losses higher. If you have a flattish opening, that's a good time to get into the Nifty.
Interesting setup on Bank Nifty, by the way. For the last few sessions, it's been the one that you need to be wary of. Now Bank Nifty is starting to look good. Couple of reasons. Again, the 56,000, 56,500 support zone largely been respected. PCR for Bank Nifty at 0.72. We know it's very close to oversold territories, right? Also one very important factor. I think we've had enough and more discussions about HDFC Bank from a fundamental lens. Technical also suggests that, the stock is very, very close to long-term support zones. The risk-reward ratio here very favorable, and an uptick in HDFC Bank and strength in some of the other counters can actually push the Bank Nifty significantly higher. Positionally, I'm looking at 58,500, 60,000 levels also on this one. Immediate hurdle though will be 57,400, 57,600, that 20 and the 200-day moving average convergence zone. So be a little watchful, but I think Bank Nifty is an index where you can go long from here. 56,000 stop loss, mind you. Yeah.
What about HUL? Before I ask you about your stock picks, because the kind of hammering that HUL has got yesterday, the management has come out and spoken, there are some brokerage notes. I mean, nothing that says, okay, all is well, but at this level, do you think that there's some bounce back possible?
So, from an immediate standpoint, the stock is approaching oversold territories. Mind you, even with this kind of a fall, the stock is approaching oversold territories. And let me give you something interesting. If you actually bring up the last 12 months chart for HUL, you draw the peaks, a falling trend line from the peaks of September 2025. The high point for yesterday was exactly at that falling trend line resistance. So the point is that technically some of these FMCG names are starting to show interesting up moves like Britannia and Colgate, but they aren't really strong enough, or they aren't giving you that momentum to go out and really buy and have that positional trade from a momentum perspective. For me, HUL at this level could have a rebound, but I have bigger fish to fry, better stocks to trade, so I will not trade in HUL right now.
What are some of these bigger fish you have to fry when it comes to your stock picks today?
Again, it's incidental that they fall from something that Neeraj mentioned just a while ago, which is the auto space. Just incidental that I have two stocks, big ones, from the auto space. So one of them is Escorts Kubota. Strong moves ended at the high point of the day yesterday. Volumes, of course, very healthy, hence they make the cut on my list. So about 3090, 3200 are your targets. 2920 is where you keep that stop loss. The other one is Metropolis. Rising trend line support on this one, gradual up move, not very sharp, very big ones, and we'll take that, but a positive move nonetheless. So 603, 621, these are your targets. 567 is where you keep that stop loss. And the second one, by the way, is Mahindra and Mahindra. You could call it a trade, you can call it an update as well, because just 3-4 sessions ago we discussed this for a target of 33.30 and 34.50, 31.30 being your stop loss. The stocks moved higher from here. Today, if you get it close to the first target of 33.30, you should book partially and trail your stop losses higher. Why do I say that? Kal result hai. And we've seen what happens on result days, right? Especially with the moves in SK Hynix. So just for that reason, book partially, trail your stop losses, you could continue holding on the rest of the quantity.
We were talking about HUL before we get to Mahima on what the brokerages are saying. Just your view, Parag Bhai, on the kind of performance and then the kind of reaction.
Yeah, reaction is overdone. In my view, it is a buying opportunity. I would not thumb the table yet. It is a staggered buying opportunity. So sometimes it is staggered, sometimes it is thumping the table, right? TCS was thumping the table.
This is a tap.
This is something you should start buying. This is at this price.
Why? What's the premise for that call?
The stock, see, actually they have done well. Actually, only the home care EBIT margin, that has disappointed. And
volume growth?
Volume growth was 5%, expectation was 6 to 8. So nowadays market reacts to 1% disappointment, like the entire world is breaking down. So, and that too for a company like Lever. So I would buy into this dip. So let me tell you, HDFC Bank, HUL, Reliance, this kind of large caps, even L&T can make a cut, but right now still we are seeing this Iran-US war going on. So L&T again a staggered buy. But I would say that these three stock prices are compelling me to buy: HDFC Bank, HUL, and Reliance.
Just the interesting piece on as we were doing the results dissection as well yesterday, the commentary from the management is actually pretty okay.
Yeah, FY27 looks better than FY26.
Yeah, so the commentary is okay. So maybe in part that maybe is this overdone, part one. And part two on L&T, yes, the Middle Eastern conflict is an issue, but through the conflict as well, their commentary on Middle Eastern orders is actually quite superb. what they've said yesterday.
You're not seeing the pain this quarter.
Yeah,
you would have otherwise seen it.
Exactly. So that is looking okay on L&T's part. So that's the interesting piece.
And recently we saw one large AI chip company giving a large order to L&T, right? So now L&T is getting orders from new sectors also. It might be a beneficiary of the data center build-up. Who knows?
And the other interesting piece, I was talking to somebody who's buying office space in a building in BKC, which is next to one BKC. That whole building, they are doing the whole prefab steel structure done by L&T, and the people who are occupying that building are praising it till no end, and they're saying that it's the unequivocal leader in that space right now.
So a lot to look at on L&T. Let's just pull up what L&T has said in its conference call yesterday, since we've spent some time on it, and then we'll get to brokerages on HUL. So L&T in its conference call has also talked about some of this positivity. R. Shankar Raman, the CFO, has relayed his view on the impact of geopolitical uncertainty on the company's business and outlook. Listen in.
Middle East uncertainty is concerned, it has not been just a one-way street in terms of everything coming to a halt and everything is in a distraction mode, etc. We've been having a very volatile situation where there have been pockets of peace, pockets of disturbance. You might be relieved to know that most of the project sponsors who actually provide us the orders are extremely positive in terms of what they need to do going forward.
Okay, we were talking about HUL, and the stock was down 7% yesterday in markets after weaker than expected Q1 results, as volumes were hit due to price hikes. A whole host of brokerage notes this morning. Mahima, are brokerage notes reflecting the kind of pessimism we saw on the stock yesterday?
Not really, Tamanna. And before I go to the brokerages, a very happy birthday to you. And
thank you.
I agree with what Parag Bhai was saying, that the 7% downtick that we saw on the stock was slightly overdone, because that's what brokerages are also penciling in. Jeffrey says, by the way, Jeffries has maintained a buy with a target price of 2850. It's saying that the 7% price drop is baffling given the extent of miss. There were a few weak spots, but offsetting factors meant that overall miss in EBITDA was small. They've also noted the consistent improvement in growth and profitability over the past few quarters, and management commentary was also reasonable, with expectation of stable demand and margin remaining at the guided range. I mean, it's not every day, and since so many odd quarters, we've not seen a double-digit growth, top-line growth for HUL. After 13 quarters that's been seen, that's something that they've liked. Goldman Sachs has cut the target price slightly to 2450. What they're saying is that revenue growth is improving, but they expect further acceleration happening in FY27. That's something that the management has also alluded to. Home care growth was strong and was likely, will likely accelerate further going forward in FY27. They're saying that beauty and well-being is something where they've seen encouraging recovery, and food business was a steady growth. Personal care was slightly weak, but their premiumization is something that they've liked, and they expect sustained EBITDA margins despite input cost inflation going forward. Macquarie has also maintained outperform with a target price of 2860. What they're saying is that overall Q1 was broadly in line. Volume growth has moderated Q-on-Q basis, but they did not like the continued weakness in soaps due to inflationary pressure. They liked stable FMCG demand outlook going into Q2. Premiumization continues to grow ahead of markets for HUL, and that's something that they've liked. So this is the overall view of what brokerages are making of HUL.
Okay, Mahima, but thanks for that, of course. But while you are with us, just tell us, and we've already discussed HUL viewers, but there is one more very interesting name which had a bit of a crack yesterday, right? And Mahima, what are brokerages penciling in for Varun Beverages?
So, Neeraj, I'll start with what Citi is saying.
You can wish me a good morning too. It may not be my birthday, but that's okay.
A very good morning to you, Neeraj. I'll start with
Neeraj, happy birthday in advance and belated birthday. So, I get last year.
I'm feeling a bit left out here.
And a very good morning as well.
Please continue.
Yes, I'll start with what Citi is saying. Basically, they've cut the target price slightly to 580 from 640 earlier. What they're saying is that overall, because they follow the calendar year, Q2 was below what they were expecting in terms of estimates. India growth debate still persists, and management remains constructive. The commentary is something that they've liked. International business is strong, and that's where the growth is being continued, and they believe that category remains attractive over a long term, and competitive intensity could gradually ease. Jeffries has maintained buy with a target price of 615. Their question right now is whether the overall dip in the stock, whether this is a buying opportunity or not. What they're saying is that India business volume growth has disappointed the market. Softer volume base kept expectations high on growth, and management has clarified that weather conditions impacted April, while the other 2 months delivered a 20% growth. International operations helped offset some of the weakness, and overall the commentary is positive, and they believe the correction is excessive and this could be a buying opportunity. So this is the overall view of what brokerages are making of Varun Beverages as well.
Okay, so Varun Beverages is the other one that we need to look at. Again, another I would say a victim of stress that investors had looking at their results. Do you think that's also overdone, Parag Bhai?
Yeah, in my view overdone. But what I'm hearing, of course, is market rumors that there is some block also there. So there is a technical pressure also in that stock.
Okay.
Apart from fundamental pressure.
Okay. But fundamentally,
if you ask me, this is a good price.
This is a good price for Varun Beverages as well. You have a view on Varun Beverages on charts?
Yeah. Apart from fundamental pressure.
Okay. But fundamentally,
if you ask me, this is a good price.
This is a good price for Varun Beverages as well. You have a view on Varun Beverages?
Fizzled out. Right now it sits exactly at that support zone of about 422, 425. If that is broken today, if it sustains below that, then I'm afraid that this recovery might actually fizzle out. I will, however, look for 375, 380 zones as the support zone, which were the recent swing lows. If those are protected, then the stock could again go into consolidation. But yeah, that recovery that was underway, that has fizzled out for now.
Okay. Well, the other names which could be in focus today, just very quickly on the names, will be the ones which Sumit Sarkar has on his list of what dealing rooms are talking about. So maybe we can take a very quick detour and go across to Sumit to figure out what is it that he's picking up from his dealing room sources. Sumit, good morning.
Good morning, Neeraj. Firstly, it's Adani Energy. Now, the company opened their QIP a couple of days back, and what we are picking up is that the demand has been quite strong for this QIP. Nearly 3x demand is what dealing rooms are indicating, and largely all domestic mutual funds and insurance companies were among the major buyers in this QIP. Apart from that, couple of other stocks, CG Power and GE Vernova. Now, there are sell flows coming in on the large HNI and the PMS desk. Dealers indicate that the fallout in AI trade has led to the selling pressure in these couple of counters, because these stocks were said to be the beneficiary of AI infra, and the fall in the share prices that we are seeing in major global AI stocks is one of the reasons why there are sell flows coming in CG Power and GE Vernova as well. For Paytm, there are few buy flows on the PMS desk. Dealers indicate that the expected block deal by SAF partners has been called off for some time now, and this block deal might take time to come in the market, but as of now this block deal has been called off is what dealing rooms are indicating. For RBL Bank, there are buy flows on the institutional desk. Delivery volumes are seen higher. Both foreign and domestic institutions have been buying this counter, and some positive news flow is expected here very soon. And lastly, when it comes to GAIL, there are buy flows on the large HNI and the PMS desk. Very strong numbers is expected from GAIL. A beat across all segment is what dealing rooms are indicating when it comes to GAIL.
Okay. So that is on Sumit Sarkar's list of the results that are going to be reported to this Asian Paints, Adani and etc. Anything that is on your radar, Parag Bhai?
No, as I said yesterday, Pidilite, I expect a good result, but I don't think it is going to report in the next 2 days. So I think paint volumes are holding on. Whatever channel checks I have done, so that should be also okay. And of course it depends on the procurement price at which they have bought the because there was so much volatility in all crude oil linked derivatives that you can, in some cases you will have companies who have bought at a higher price and now prices have corrected. In fact, in many cement companies it has happened. So I would say that we'll look out for the results, but I would say that within this pack of oil related things, Pidilite stands out. For me, Asian Paints, I'll also look closely.
Okay, let's talk a bit about the IT trade and this is I think we touched upon it a bit yesterday, but that was 3 consecutive days of the IT trade coming up. I'm not sure what's going to happen today, but there seems to be a growing confidence. Is it first of all because of what Indian IT companies are doing, or is it they've stood at the same place but everything around them is kind of collapsing?
Yeah. So basically change of narratives, right? Earlier the narrative was that these companies are going to become irrelevant and only semiconductor and AI stocks will do well. Now that narrative is changing. So now valuations became very attractive. 6% dividend yield was actually, in TCS kind of company, unbelievable. But now, so I have a completely opposite view. When there was that kind of view, I was a buyer. Now that when the narrative has changed completely, I'll be a seller on rice. So gradually, I'll trim my position.
It's barely 2 days since that narrative has changed.
2 days में TCS में 20% क्या है ले लो ना मतलब थोड़ा बहुत. I'm not totally I have 10%. I can trim it to 6.5-7% and come to equal weight position.
This is interesting because Parag bhai said this yesterday as well. मेरा 10% है मैं थोड़ा कम करूँगा, थोड़ा बेचूँगा, थोड़ा profit ले लूँगा. Because I think
I don't want to fight against the narrative too much.
Yeah. Also,
which was there 3 days ago.
Also, I think you are approaching this market currently from a perspective of not a buy and hold for a long term because the world is unpredictable.
Absolutely.
So take money while you can.
Every day morning there is something new, right?
The question will be, so if you're getting out of IT, what is it that is next on your radar where you might look to get into as a theme?
So I said, right, HUL, HDFC Bank, Reliance, these are the three
these
stocks.
are bottom-up ideas then.
I'm saying that these are the names which I am thinking. That because they have corrected to, again, like TCS, these are also now coming into a oversold zone where prices and multiples are looking attractive. So I will just consider those. But these are not table thumping for me. I'm just saying it is a staggered buying kind of thing.
At some point of okay. At some point of time they will turn table thumping as well, maybe.
Yeah.
So let's wait and watch. But a lot of specific pockets in focus today. We haven't gotten a chance to really discuss threadbare the results of TrueAlt Bioenergy. Splendid set of numbers that came out. We haven't gotten a chance to talk about Graphite India and the duties levied thereof. And there are a lot of other earnings as well, by the way, that should be in focus. In fact, Varsha joins in with a list of those. So let's first get Varsha in and then we'll talk about some of these numbers. Varsha, over to you. Good morning.
I'll be talking about three stocks which will be in focus on the back of Q1. You have RPG Life Sciences, wherein overall a steady set of numbers is what we are seeing. Domestic formulations outperform IPM growth rate, which is India pharma market. The margin uptick that you're seeing is of course led by the operating leverage and the strategic launches that the company did. International formulation also grew almost 8% year on year. The API business growth was actually a highlighting point over here, which grew almost 36%. Then you have Sanofi Consumer Health, again if you see overall a very good set of numbers, especially the margin uptick that you're seeing. One is the domestic sales, if you see, grew almost 14%, which was aided by relaunches of some of their products which the company has been doing. Export sales grew almost 27% on a lower base, I would say, and the sharp margin uptick that you're seeing is one of the reasons is of course the growth in the export sales and of course the relaunches that the company has seen. If you see EBITDA margin stand at around 38% versus 32% year on year. So that's a very fantastic growth that you're seeing in margin. Lastly, you have Paradeep Phosphates, again a steady numbers, but the margin was a disappointment over here. If you see the sales volume grew almost 4%, margin impact that you're seeing is of course led by the volatility in the raw material prices due to the geopolitical issues. Hence, if you see the revenue is up almost 36%, margins are at 11.8% versus 12.9% last year, net profit was up almost 24%.
Okay, so Paradeep Phosphates also in focus. So fair bit of good results in the small and mid cap space. I want to talk about Phoenix a bit. The numbers are good. The office segment is doing very well. New offices, of course, are pushing most of that going forward. But on the charts, Kush, because I remember Phoenix Mills was something that was a pick of yours. Do you think that story is now done?
Look, first, realty is not a space where I think there is a long positional trade to be made. But within that, if you had to, then Oberoi, Phoenix, these are the stocks that you could still hold. With the kind of move that it's already made, the profit booking, and if it does kind of see an uptick today, I think it's a good idea to book profits, right? We've seen why results are typically not the best days or the best place, right? So you could book out now
yes, there is strength still left. I would be inclined to buy closer to about 1900, 1950 odd level. So if you do get a bump up today, not a bad idea to take some money off the table, right? I mean, it's rallied all the way from what 16, 1700 in the last month or so. So not a bad trade.
Yeah, 34% uptick in the last 12 months of Phoenix Mills. Parag, you've always been not 100% convinced on the whole real estate play. I would say, how does Phoenix Mills stand out?
No, the stock is good. Company is doing very well. It is an indirect beneficiary of consumption boom. But as Kush said, the stock has already rallied a lot. So I would, in real estate space, as I always maintained, I would look to buy Oberoi Realty at a right price. That is a stock, the most well-disciplined, debt-free company, and recent Gurgaon projects has given them another tailwind. So I would say that Oberoi is one stock which I would look, and I would look to buy on dips, because right now what I'm hearing, apart from Mumbai, I think the real estate sales are not that much picking up. Although the pre-sales which of Godrej properties and all of them were very good, and there's a clear shift from unorganized to organized in real estate happening, which is helping the listed players.
Yeah.
But I would say that let's see now, let's see the inflationary outlook because of oil. I'm very seriously looking at that, frankly speaking. And with every day this...
Parag, the interesting pieces of almost anybody, and I'm sure you track it very closely, but maybe people whose job is to kind of track the economic impact of that a lot more closely than yours is. So Pranjul Bhandari, for example, of HSBC, or some of the others, have all said that this 80 to 85 range as well is manageable for India.
85 is very much manageable. It should not go up above 1995 and stay there.
Agree.
Even yesterday I was speaking to a banker, and he was very, very surprised that asset quality is holding up so well for all banks. In spite of such huge volatility in raw material prices and crude oil prices, he was in fact surprised.
I think because of the volatility, maybe the input prices have averaged out over this period. That's also a possibility.
Yeah, maybe.
And I don't think anybody has an answer to that, Tamanna, frankly speaking. You could 100% be right. It's a guess from your end too. But it is so volatile and moving with such pace that almost anybody is not, including corporates, are saying that, pata nahi chal raha hai ki agle hafte kya hoga, agle mahine kya hoga.
Yes.
So
but one news piece that I saw, and of course there's always a flurry of news sources on what's happening between US and Iran, but one which caught my eye and I just want to share is a report that Middle East countries along with Oman have agreed to a voluntary payment to Iran to use the Strait of Hormuz. So this is seeming to me like a doable, middle of the road solution. They're saying it's like what we do in the Strait of Malacca, where some of the nations around there, Indonesia, etc., do get a voluntary payment to do things like maintain the area and for rescue services, etc. So it's not a toll, which is what America is not agreeing to. They're saying you can't sit and take a toll. Iran wants some payment. Are they going to be agreeable to say let this be voluntary and not a toll? The Gulf states pay it, and then you're done and dusted with this issue. I don't know if it's going to work, but of all the things that I saw today, early this morning, I thought that was the one which had the most glimmer of hope.
And the spoils or the damages are borne by those 5 or 6 countries and not the whole world.
Yes.
Which they will be happy to pay considering what's happening to their economies right now.
And they can afford to, effectively, but then they're like, okay, let's get done with this.
Yeah.
Na tera, na mera. You get the money. We don't call it a toll. Everyone else gets on with their life. I don't know if it's going to work out.
And Trump can come out winner.
Now that now is the X factor to this whole story about how Trump reacts to it and what he says next. But Biocon in focus as the company gets a major approval in the Canadian market. Varsha, tell us more. What is this approval? What's the size of the opportunity for Biocon?
Well, an important one, and so the company has got a drug approval which treats autoimmune disease, which is called ustekinumab. Now, already Biocon has this approval for US, and the drug is in the form of injection. So auto injector offers a treatment option which is unavailable with the original product in Canada. So that's the highlighting point over here. Now onto the addressable market. So first of all, this drug treats your Crohn's disease, and kind of an autoimmune disease, I would say, target thousands of patients suffering from autoimmune disease, and which strengthen Biocon's immunology portfolio in Canada. Now talking about the market size, now the reference drug Stelara, which is ustekinumab, has almost global market size of around $12 to $12.5 billion in 2026. This approval of course expands Biocon's opportunity in the large autoimmune disease or immunology market. So hence an important one, already has approval in US, but this also gives a good growth prospect for the company.
Okay, Biocon, good growth prospect, but are we expecting anything to move on the stock? Kush Bora, ready with his charts.
Still the same view that I've been holding for the last year, 2, 3, 5
years.
Yeah, I mean the stocks, okay, if you see from the lows of about 190, 200, the stock's actually done well.
This is the 5-year chart.
This is the 5-year chart.
So 13%
Exactly my point. Exactly my point, right? तो आप ऐसे स्टॉक में क्यों जाना चाहोगे जहां पे आपको ओवर अ लॉन्ग पीरियड ऑफ टाइम वेल्थ नहीं बना है, राइट? लाइक आई से यू ट्रेड इन स्टॉक्स यू आर विलिंग टू इन्वेस्ट इन, राइट? अगर नीचे भी गया तो शादी नहीं करना है ना, तो यू कैन स्टिल स्टे ऑन, यू नो इट रिबाउंड एट सम पॉइंट इन टाइम. नाउ इन कॉन्ट्रास्ट टू दिस, look at Lupin. Now, why do I mention that? I'll tell you that as well. Look at Lupin, what Lupin has done in the last 5 years, right? There was a point in time from 20. Look at Lupin. Now, why do I mention that? I'll tell you that as well. Look at Lupin, what Lupin has done in the last 5 years, right? There was a point in time from 2015 where Lupin went from 2000 all the way up until 600. And then came that recovery. It went past those highs of 2000, sustained above those levels, and then starting to build traction. I am willing to take, a trade in a stock like this. Recovery is not the problem. It's the idea that, it has to sustain above that. Biocon's high has been around 500, 475 odd, right? Still not able to cross that. If it does, if it sustains above that, gets momentum from there on, then it becomes a good buy. I'm happy to miss, up until that mark.
And you have the 10-year chart also of Biocon. We're not able to show it, but you have pulled it out.
Which is same price.
Yeah, same price. The high point for Biocon, since at least 2020 is about 470, 480 thereabout. So it's not taken that level out as well. I am talking Lupin 10 years chart, which it has crossed 2000, able to sustain above that, and got a new lease of life. So there are signs of recovery. There were signs of that recovery and sustainability above the previous high price.
I like the comment कि शादी तो नहीं की है, then why do you have to be stuck? It just brings the question, which stock would you be married to if you had to?
Okay, let me answer it slightly differently. Most investors or traders, right, who become investors later on, get married to a stock to which they don't want to because वो loss में है, अब शादी हो गई है. Because you
और divorce हो नहीं पाता है.
अब divorce हो नहीं पा रहा है.
It's a shotgun wedding.
Yeah, it's in all honesty, if you and if most of your viewers hand on their heart say कि भाई ऐसा कौन सा stock है जो उनका सबसे लंबा holding है, is the one जिसका अब तक भाव नहीं आया है. ठीक है, तो you have to do reverse. Greed and fear works in the market, but you have to reverse it. जहाँ पे stock चल रहा है वहाँ greed रखो, जहाँ नहीं चल रहा है वहाँ fear रखो. Get out of it.
Yeah, people preserve the weeds and cut the winners, sadly.
That's the cordial. Do you, Parag Bhai, have any words of wisdom?
ICICI Bank I have married after Mr. Bakshi has taken.
Okay, Mrs. Thakkar, if you're listening to this, don't be worried.
Ask Parag Bhai with a table thumping measure. Okay, what the hell did you say on air?
But I'll tell you what. This is the difference between an expert and someone who's not.
नहीं शादी कोई भी कर सकता है. Anyone can marry. Why only expert should marry?
No, marrying is okay. I'm saying right marriage. This is the expert. Where he stuck to a stock which is doing well. That is what.
Chandan Taparia, I have no idea now what we're talking about anymore. Is this a relationship show? Is this a stock show? But no, we're talking about stocks this morning. Do you have anything to add to this exciting discussion we were having before we ask you about your picks as well as the levels for the day?
Good morning. Thanks for having me. So what a brilliant discussion today morning. And I think nowadays in the Gen Z world, such kind of topic can only give the conviction to the viewers. And I always believe there are two types of investment. First, that is based on the passion and commitment. Second is the forceful investment. कि लिया तो था कि 2 रुपए में निकल जाएंगे, but the price has gone down and अपने आप को बोला all is well, and then this is how most of the people are turning into the forceful investor. and I think जो आप discussion कर रहे, it's all about how the relationship works. But yes, I believe when you are a trader, you need to keep in trading mindset. It's better to cut your finger than getting the hurt your entire hand. And when you are talking about investment, it's all about you have to सात जन्मों का बंधन निभाना है. So there are so many counters, but you need to keep those in mind. And again, if you ask me, सात जन्मों का बंधन, तो I think you were talking about Biocon. Better to marry with Loris Lib at current scenario. You were talking about selective auto ancillaries. Better to marry with the TVS motor. So marry with the good companies where you believe that management are doing well and you have passion, commitment and dedication. रिश्तों में भी ये होता है कि खटास हो जाता है तो साइड में हट जाना चाहिए. स्टॉक में भी ये होता है खटास हो जाता है. Better to get out when you are in doubt.
Wow. So Chandan Tapare has understood that since you're talking about Gen Z, a situationship, which stocks you should have a situationship with. What are your picks for the morning, Chandan?
Yeah, so as I mentioned that again, I'll focus on situationship, and nowadays I focus on 3L, luxury, liquor and lifestyle. And here I'll focus on the Redico. Because when we are talking about Gen Z, we need to deal with the same. And first trading idea is buy on Redico. The stock has given a consolidation breakout on daily chart, has been making higher tops, higher bottom, supports are gradually shifting higher, gone into the new higher territory, and the data were quite positive. So Redico is first trade where we are suggesting to buy with support of 4150, looking for an upside target towards 4500. Second is luxury. I'll focus on TVS motor. This stock is now all set to give a fresh breakout at all-time high after the long consolidation of last 8-10 months. So recommending to buy with support of 3920 for an upside target towards 4180 to 4200.
Again, as Kushpura just pointed out to me, auto, and it does seem that auto will have a good month. I think the commentary around the passenger vehicles is very, very strong, but don't be surprised if two-wheelers actually surprise, and could TVS be that dark horse, if you will. Parag Thakkar has moved on to Bajaj Auto recently, but yep, TVS Motors, keep an eye out for that. In some sense, TVS hasn't been in the reckoning for the last 1 to 3 months per se. It hasn't quite come up in the conversations for trading calls. Could this time be different? I think let's wait and watch. But before we move any further, it's the time for the brokerage call for the day. Macquarie's upgraded Indus Towers to a neutral. Sharad Johnson with more details on the rationale. Sharad, it seems that they are not constructive on what the business is doing, but the valuations. Is it?
Exactly, you're right, Neeraj. They are not that bullish on the growth front, but overall the valuations are a bit attractive, and that is where the bullishness comes in from Macquarie. They have upgraded it to neutral, and the target price is set at 350 rupees per share. And of course, there is a dividend yield angle play also to it. They continue to forecast a lackluster growth for the company, but if you look at the Indus Africa foray, that could add to the revenue growth, but likely be ROIC, that means the return on investment capital might be dilutive because of the visibility. Also, this upgrade is coming in because of the share pullback, so it's likely to be a tactical kind of announcement on this, and the positive thesis is needed to go ahead, especially if the EBITDA numbers start showing up going ahead. So yes, it's a technical kind of a bullishness report coming in for Indus Towers.
Okay. So Indus Towers in focus, not doing much this morning, but there are a lot of exciting moves. Chola Finance, about 3% up, and a whole host of brokerage notes talking about this company as well. Varun Beverages seeing some recovery. I want to see if HUL is as well. This is pretty much the end of the pre-open session, so we'll see what's happening there. 1.5% up, nothing great. DCM Shriram has posted results, maybe some of that impact, 7% up. Look at Infosys this morning. Infosys once again, and I heard a chuckle from the left coming from Parag Thakkar when I talked about Infosys, about 4% up, because that was a very clear buy from his end. HCL Technologies again moving up. The entire Nifty IT about 2.5% up. On the table, the advice is book profits if you're making them right now. But I want to ask Chandan Taparia, how are you looking at the IT stocks this morning? How are you looking at HUL, Varun Beverages?
Yeah, so again, if you ask on...
how are you looking at the IT stocks this morning? How are you looking at HUL, Varun Beverages?
Yeah, so again, if you ask on IT counter positive, whether you talk about HCL Tech and Persistent, but I think you discuss about Varun Beverages and HUL, then trend is negative. Varun Beverage has been making lower top, lower bottom. However, on the one way, the Marico has given a fresh breakout. VBL has been making lower top, lower bottom, so weakness could continue. till it remains below 445. It can go down towards 420. And if you look at IT name, I think Persistent System can give the fresh breakout with support of 53.20. It can head towards 56.50 kind of level.
Okay, the other one is of course DMart, and just wanted to pull that one because yesterday I had a fairly volatile trading session, bounced back from the low slightly, currently at about 1/3% higher. I wonder if there is a trade there. Chandan Taparia, to you first, and then I'll ask Kush as well, because it's a very actively traded stock yesterday, so I do want both opinions here. Chandan, to you first on Avenue Supermarts.
So talking about Avenue Supermart, the DMart, the counter has been making lower top, lower bottom. In fact, 2 days back, it fell to surpass 50 DMA and drifted lower. So I believe some profit booking could be there, but one need to keep in mind that from last 5 years, the multiple supports are being visible near 3200 to 3300 marks. So any decline towards 3300, 3500 could be bought. That is what we can see, but upside seems to be kept. So we need to have patience in the counter.
Patience in the counter, viewers, but remember, it could be a long-lasting patient. Macquarie, by the way, has an underperform rating with a target price of 3250 on Avenue Supermarts, and they are saying, of course, their targets 15% store ads, but same store sales growth will stay at 8%, unchanged outlook on quick commerce. So doesn't see merit in integrating DMart Ready and physical stores as well, the company per se. So, well, let's see if this does anything. Kushbora, it's starting off flat. Would you go short on Avenue Supermarts?
Brave, very brave.
Brave
but
call.
Very interesting. You can actually go short on DMart because the rises have been sold into 200-day moving average, proved to be a stiff resistance. The primary structure for this one remains weak. Now, the immediate support is obviously yesterday's low of 37.50 thereabouts, and then the immediate low is 36.30. So yes, you've got a room of about 100 to 200 points on the downside, right? So not a bad idea. You can consider a short trade on DMart. Keep a stop losses about 75 to about 100 points higher from these levels. Primary structure weak. Yeah, not a bad idea.
Okay, well, like we said, 3 very active stocks yesterday. One of them was, of course, HUL. The second one was, of course, Avenue Supermarts. The third one, which was very, very active in trade yesterday in the call put side, was TCS, of course, and splendid show yesterday. Let's just see what it does in the session today. Kushbora, if somebody had a long call on TCS, would you now take money? Would you be tempted to take some money off the table or no? Stay long.
Book partially. I think even Parag bhai, what he was saying, I think in essence what he was saying is that मैं तो partly निकल रहा हूँ ना, बाकी hold कर रहा हूँ. The IT rebound is still underway, and remember I'm still calling it rebound, not a reversal. Reversal के लिए अभी time है, but जब तक momentum चल रहा है तो ride करो ना. You might want to book partially, hold the rest with TSL. So yeah, you can still hold, book partially, but don't let go of it. इतने मिन्नतों से तो मिला ये, IT का trade finally.
Classic rebound, and TCS has been leading this literally, and from the time they put out that commentary, I think it's looking very well. L&T, wonder what that one is doing in trade. Graphite India and VST Industries are the couple of others. I want to see L&T starting off okay. Keep an eye out for that. Graphite, not a large reaction to that countervailing duty imposed by the US. VST Industries, 5% lower though. The cigarette trade, and Parag Thakkar has been talking about it. Parag bhai, now that the stocks are showing further weakness, but you mentioned this will be last of the worst quarters.
Yes.
Which one would you buy if
ITC
at all?
Only.
You will not touch VST or Godfrey?
No. ITC, when it falls after the result, and I'm gradually staggering. So I already have some, so we'll gradually add on dips.
Okay. Anyone's looked at DCM Shriram, looking very good on the pre-open session. Profits have gone from 113 crores to 693 crores. Revenues up 9.3%. Your EBITDA is up about 11%. Margins have stayed robust, 9.3 to 9.4%. That's one stock that is doing well this morning too. Phoenix, we were talking about, is not doing so great. Chola Investment is doing decently as well. Is Chola something that you're tracking, Parag bhai?
Yes, it's a great company. It had some asset quality issues in this. It was one of the few vehicle financier companies which showed some asset quality problem, but I think it is transient in nature. It is a great company. It will continue to do well.
Okay, well, Chola Finance, and by the way, you'll hear the management a bit later on in the show, so keep that at the back of your mind as well. But very quick chart check, Chandan Taparia, on L&T and your top call for this morning today.
So L&T is recovering after a long time. We have seen a major rally in counter like ABB and BHEL. L&T is now bottoming out. It remained underperformer, but taken multiple support near 37.20 marks. So some recovery can be seen here. After the positive opening, any decline can be bought with support of 3,800, looking for an upside target towards 4,000. And looking about my trading ideas, I'll focus on counter like TVS Motor and Radico. I'll stick to the level which I recommended. A TVS Motor looking for an upside move towards 4150 to 4180, and Radico looking for 4450 to 4500 marks.
Combination, Chandan, liquor, luxury, and there was a third L that you had.
Yeah, luxury, liquor and lifestyle.
Luxury, liquor and lifestyle. Chandan's talking about the good life in his stock picks. Just DCM Shriram, that huge number that you're seeing, part of it is a large tax credit reversal because of a favorable income tax order that they had got at the Appellate Tribunal. But even after that, there is a still healthy 40% plus year-on-year rise in profit. So that's why watch out for that stock as well.
Well, Kushbura, 5 seconds. Your top call for the morning.
Escorts Kubota, go long, targets 3090, 3200, stop loss at 2920.
TVS, Escorts, M&M, like this auto pack seems to be revving up ahead of the July details coming out. Remember, Nuama says 20% growth, not out of pounds. All right, this is how the markets are starting off. 150 points in the green, 0.73% higher. Pretty good show, really. Mid caps and small caps may not be participating with as much gusto. It's very likely Nifty IT leading the charge because banks are also quiet relative to the Nifty. So is IT again piling on the gains? 3% again. Boy, Nifty IT is telling its haters that I'm doing what I do best, which is prove you wrong. Pretty good going, really. My breath is okay. Small caps maybe doing okay too. Okay, I don't know what rate this is, but let's get the small cap index up on the screen. Mid caps are about 0.4% higher, or let's get the heat map up on the screen. Either or off. A third of a percent for the mid caps as well. This is what's happening there. Look at Infosys. Ever since this whole IT downgrades have been cut off by brokerages, I think these stocks are revving up. Infi up 3.74% yet again. Must say, good call by Jeffries. HCL Tech about 2%. TCS another 1.75% higher. L&T reacting to its numbers, 1.65%. HUL trying to bounce back after yesterday's getting slammed. HDFC Bank in the green, interestingly. Tata Consumer in the green. Shriram Finance in the green. A lot of times you don't judge large caps by what's happening in a day or a minute or an hour. You judge them by what's happening over a week or a month. That's the true testament of what a large cap does in terms of its behavior. Power Grid 0.5% lower, Maruti 0.5% lower. Not too many losers, Tamanna. I think the gainers have it today, and IT once again really hitting it out of the park.
I wonder if you're going to hit 24,200 with that strong start that we're seeing. HUL also seeing some staggered buying, as we had talked about. I want to pull up India VIX just for a second, and that's an interesting chart to look at this morning. 3% down at the 12 mark, almost 12.15 right now. The advanced decline ratio looking gorgeous. 1392 advances to 390 declines right now. This is a strong market this morning. Let's pull up the sectoral heat map for you, and then of course we look at the mid cap and the small cap, which are also doing well. Nifty IT is the clear winner this morning, about 2.5% up. And FMCG stocks also coming back to the fore. You're seeing it across the board, actually. The reason why I would say this is a broad-based rally this morning is because on the top line you have a Nifty 100, Nifty 200. So across the board, you're seeing that kind of a move coming in. The only thing sulking really is the Nifty Realty more than anything else, while the oil and gas and energy stocks are also a little lower. Let's look at specific stocks this morning and what's happening there. Some of those that have reported results. So Phoenix Mills, I want to pull up. L&T, let's pull up that as well. Phoenix Mills 4% down. Also perhaps why the Nifty Realty is down. Is this a sell on news kind of a situation? What's ailing Phoenix Mills is something we should look at. Can we just move that screen partially this side, please, if we can? About 2.5% up on L&T. Chola Finance also 4% up right now. True Alt, I want to look at True Alt. Numbers almost too good to be true. 5% up. The largest alternate energy company in the country. VST industry, we'd expect that 4.5% down. Birla Soft, actually a weak set of numbers, but the stock doing okay. Is the AI meltdown an IT advantage? It definitely seems to be so for Infosys. Let's look at Infosys this morning. DCM Shriram, they're about 7.5% up. Infosys 4% up right now. HCL Tech 1.5%. Tech M also doing well. We'll look at Coforge and Persistent too while we're at it. Coforge 3% up and Tata Elxsi also 1% up right now. Biocon has got a Canadian nod for a drug that helps treat Crohn's disease. That's about 0.25% up. But it's all about IT and the large caps as well this morning. Actually, broad brush across the board, Neeraj, is seeming fairly positive.
Yeah, broad brush is seeming positive, but can't take your eyes off IT really and what IT is doing. It's quite stunning really. So let's take in their opening thoughts as the Nifty crosses or just about reaches the 24,200, led by Nifty IT and led by the large cap IT names. Stellar show thus far on the IT names. Even if it's come off a little bit from the highs of the day, it's a really brisk start. Chandan, to you first. What is it that you make of the open? What is it that you would do with the IT names now?
Yeah, so opening is quite interesting, but Nifty needs to surpass a key level of 24,224. If manages to hold about 24,224, that is also the gain fee number. I believe next rally would be there to us 24,444, 24,500. Talking about IT name, yes, positive on most of the counters. However, some cool off is visible from higher levels, but will continue to hold the long position in counter like Persistent System and HCL Tech. Persistence, one can buy the morning dip with support of 5,400 for 5650 kind of level. Apart from that, we discuss about two counter, TVS Motor and Radico. Let me add one more name, that is buy on Eternal. Here, a major consolidation breakout is visible on daily and the weekly chart. Buy small dip with support of 302 for an upside target towards 322.
Okay. Eternal. By the way, this one has had a bit of a lease of life as well recently, right? I mean, just from those 250, 260 odd levels, it's nearly been a one-way move, if you will. I'm not saying it's been a brisk move, but it's been a trending move, which might give confidence. I see Kush Bora nodding. Kush, you like Eternal too?
I do. In fact, around that 270, 280 zone, probably just before that as well, we did say that the tide seems to be turning for Eternal for the better now. And once at 300, 310, this is a very positive sign. I think you should continue holding on to Eternal. If not, if you're looking at it from a positional standpoint, by all means, go ahead. You can actually add some more. Recent swing high of 370 positionally very much on the card. So I think the tide for Eternal has turned for the better. Just a quick word on Mahindra and Mahindra. By the way, we said that 3330, that's the target, the one that we're looking at. If it comes close to that, book partially, very close to that. So I would actually suggest that you book partially, hold the rest with your stop losses at about 3250. Kal result hai, you don't want to be the last man standing in case something goes wrong, and if it goes well, then you still have that 50% holding that you have. So watch out for Mahindra and Mahindra, book partially, hold the rest.
Okay, wow, and autos are revving up indeed. Parag bhai, if indeed this is a good month of July, and usually July may not necessarily be the best month, but if they do this 20%, which Nuwama is saying, Toyota yesterday said very strong numbers, may last for the rest of the year as well. What do you do with autos now?
So, as you know, Bajaj Auto is my top pick.
Yeah, but
that I'm continuing. TVS continues to do well, and I will now look at Maruti M&M more closely. M&M also I have, but Maruti is something which I can seriously consider.
So actually, that's an interesting point because he spoke about this yesterday, but maybe people missed it. M&M currently is available at a lower PE than the average PE for the last 10 years.
Yeah. So
why is that the case?
Only problem is monsoon. If monsoon is not that great, you might see tractor volumes declining in second half. Right now, it is holding up well. So we have a small weight, 1.5% weight, but we would definitely like to increase it or no, either when we get confirmation of monsoon or if the stock corrects due to lack of good monsoon.
Parag bhai, dil mange more. Next 4-5 days, we want a small cap name from you. It may not be a part of your portfolio, but you do such fabulous research. We're lovely to hear that from you.
Thanks.
Kush Bora, keep up the great weekly picks. and Chandan Taparia, thank you so much for the LLL. We'll keep an eye out for those names. Really appreciate your time. All right. Okay. Now, the other big development that has happened, and potentially big development, but certainly something that changes how we do the closing show as well, as soon as the rules come in, because new norms kick in from Monday for stocks which are on the FNO segment in terms of closing auction prices. Now, if you're confused about what this means, Sharad joins in to explain that and the potential impact that it could have. Sharad.
Well, thanks a lot for that, Neeraj. But remember, your BTSC trading strategies are expected to change from Monday onwards. Now, why this is very important, because the new rules kick in. The closing auction session, especially for the FNO stocks, is something which is important to know. The normal continuous trading will actually, BTSC trading strategies are expected to change from Monday onwards. Now, why this is very important, because the new rules kick in. The closing auction session, especially for the FNO stocks, is some stop at 3:15 p.m. and if you look at the time period between 3:15 to 3:30 p.m, there will be a closing auction session. During this auction, all the buy and sell orders will be collected and they will be matched at a single price. Of course, the price which allows the maximum number of trades to happen, and this single price, if we talk about it, becomes the official closing price of the stock. Now, what's the impact for these new rules on the FNO players? The large players, they can no longer easily push closing prices with the big last minute orders. Of course, the volatility comes down and the index manipulation for FNO gains becomes much harder. Passive funds get a cleaning closer price also, and the HFTs, which are basically high frequency traders, and the jobbers, they lose some easy liquidity which comes during the closing sessions. Also, the markets may become robust overall, and they are actually aligning with New York Stock Exchange and London Stock Exchange as well. I did a little bit of impact analysis as well. Angel One, Grow, MOSL, it's going to be negative for them. Their broking income might be impacted between 1 to 3%, but for BSE, NSE, it's largely neutral, and CDSL, NSDL, KFintech, which are the ancillaries, largely there will be a neutral impact as well. And in a tweet by Nitin Kamath also, he had mentioned that for Zerodha, 1 to 5% of broking income might be impacted because of this.
That's important. I want to just pull up some of those stocks before we move to our conversation about what the implications of this is. Let's look at what Angel One is doing, what Grow is doing, what MOSL is doing. Mild impact, if at all, on all of them. Angel One about 1% down right now. Motilal Oswal Finance is actually fine. Kamlesh Shroff, National President of ANMI, is joining us today on this conversation. Rajesh Baheti, Managing Director at MBA Services, also joining in. Welcome to both of you. Mr. Kamlesh Shroff, I want to get your view first on what are the implications of this. The idea is to not allow large sellers or buyers to end up manipulating what closing prices are, isn't it? Does this help you or does this harm you?
So I think you just said it and you nailed it also. The objective is that the closing prices are more robust, are transparent and less susceptible to any kind of end of day pricing distortion. And as ANMI, we welcome the reforms that actually strengthen the market's integrity. At the same time, we will closely need to monitor what you just mentioned, the impacts on liquidity, trading behavior, and the brokers, especially the smaller members after implementation.
Kamlesh, good morning, Neeraj here. Just one, so a lot of attempts are made, right, which is the job of exchanges as well as SEBI to try and make this more efficient. Some work, some don't. What is your assessment of whether this will actually work, or is this still a trial balloon, the impact of which is up in the air?
So I would say, every new change has its own time that is required to actually implement, whether be the pledge, repledge, what happened earlier. So fair point. It may take a little time because it's a new system. So people get onto it, will take some time. There may be some distortions, etc. Considering the volumes may drop, in the initial stages because, but finally it will redistribute the volume over the day. So it may not be a big mistake, but yes, look at the focus area. The focus is getting the right closing price. So that's an important aspect that we are trying to clear.
Baheti, is your view different? Because the belief is that index manipulation for FNO gains becomes that much harder. There will be cleaner prices at closing. Large traders will not be able to influence the price that they want. Will all of this be possible via this mechanism that is likely to come in, that is going to come in from Monday?
No, so my take is none of this is the reason why this has been done. The single biggest reason why this has been done is because globally, the role of passive funds has become very, very big. Every day, it's getting increasingly bigger. In India, also, the passive funds, the ETFs and the index trackers are getting more and more bigger because people like to have lower management fees. And on rebalancing days, these funds were having a problem with tracking error because they had to either TWAP or VWAP across 30 minutes, and you were not sure that the closing price that was finally determined would be equal to the price at which you bought and sold, and the tracking errors crept in. One of the biggest reasons why SEBI has done this is to remove the tracking errors so that when funds have to rebalance, they can do it in the closing auction session, and the price at which they do that will be exactly the same as the closing price. So this is largely done to remove tracking errors when funds rebalance their portfolios, all the passive funds.
Yeah,
that's the primary reason.
Okay, Rajesh, not taking it away. That could well be the reason. There could be added reasons too. But the question was whether this eventually has the impact that is desired, that there will not be any manipulation of closing prices, etc. Does this serve the end which is there?
It's obviously going to inconvenience some people, but the larger
Jobbers,
interest
maybe.
of the passive fund investors have to be kept in mind. The prices will still move because they've kept a 3% window of movement, and if there is a large demand-supply mismatch at the time of rebalance, those prices will move. So while optically you will still eliminate the tracking error, the prices will go up and down from the prices at which the trade took place at 315. So to that extent, while the tracking errors will get eliminated, some kind of volatility on index rebalance days will creep in based on the demand-supply mismatch.
Kamlesh, last question to you very, very quickly. We have 30 seconds. Is there something else that should have been done which has not been done in addition to, as an addition to the norms that have been put out right now?
No, absolutely. I think this is a good start, and actually good reforms don't improve just prices; they actually strengthen the confidence in the market. So I think it's a good start.
Okay, Jaman, thank you so much for joining in and giving us that perspective. Stock in focus is Chola Finance. Let's pull up that stock for you. And the management, the company reported a strong quarter. Hear them out in a conversation with my colleague Hiral.
D. Arul Selvan, Chief Financial Officer at Cholamandalam Investment, joins in. Mr. Selvan, welcome to the show. Always a pleasure to speak to you. I mean, a strong start to the year. Do you think you will be able to surpass your FY27 guidance? Because 20 to 23% AUM growth is what you had guided for the full year. But seeing the way the first quarter has been, what is it looking like?
I would right now want to keep the the forecast or the projections at the same level because we have just crossed one quarter. Yes, it has been a good quarter, and we have been very positive about the outcome of this quarter and the future. But let us go through the second quarter, because second quarter is also a crucial quarter where the slowdown continues because of the inauspicious month and then the rainfall, etc. And I think always it has been the case where the first and second quarter are the little slow quarters, and then followed by the festival seasons and then the Q4, which gives us good traction. So if the second quarter also moves on well, then I think we should be in a position to even look at further revisiting our targets. But right now, I would rather keep them where we have said. We have not changed them through the course. We'd like to keep them as it is.
Okay, so nothing changes as of now, but obviously as things develop, we will see some updates coming in there. Have you seen an impact of the West Asia crisis on the business anywhere, maybe from a sentimental perspective as well? And two, If not in the first quarter, do you think there will be some follow-up over there happening in terms of the coming quarters?
See, the West Asia crisis has got two ways of impacting. One is availability of fuel being a constraint. So far, we have not seen this constraint, and we have been able to bring fuel, and fuel availability is crucial from the vehicle finance perspective. If fuel availability is there, the price of the fuel, even if it sort of inches up a bit, does not impact much, especially in the context of the customer profiles we have, because generally they tend to pass it on, because they are a day-to-day price. They price the product or price the services on a day-to-day basis. The second important issue is the West Asia crisis should not result in some shortfall in raw material or shortfall in production or shortfall in some other activities which would impact transportation. If that impacts transportation, then it will also have a fallout on our vehicle finance portfolio, because if there is nothing to transport, then there will be also a lack of business. So these only are the issues, I would say that.
Okay, so basically what you're saying is, on the back of the West Asia crisis, the impact in terms of elevated crude prices, that could have an impact in terms of the vehicle finance portfolio, and that is something that one should watch out for.
No, I'm not talking about the increase in diesel price. I'm talking about the availability of diesel. That is all. If there is a price increase on account of the crude price movement, that gets passed down. But if the diesel itself is not available, then the vehicle cannot run. That will be the only crisis. So far, in spite of the more higher tension periods, we have country has managed to bring in diesel from other sources, etc. So there has never been a situation where diesel availability had been an issue.
Okay, understood. And how are you baking in below normal monsoon forecast right now in terms of your expectation? I know it's something too early to even really call out for, but if you have to look at it as a risk, how big a risk that could be?
See, the monsoon, at least for the current financial year, is not going to impact much, because the storage and the irrigation facilities and the reservoir levels are quite adequate, across the country except in one or two states. So I think the immediate crop will not have an impact, but we will have to see how it impacts the subsequent crop pattern. So that is what is to wait and watch for, and we will keep observing that. But I think monsoon has picked up a bit, so there should not be too much of a shortfall.
Okay. And Mr. Silvan, what about the asset quality? Are you seeing any early signs of pressure? Because while growth is remaining absolutely strong from a profitability front, from an AUM front, the gross stage 3 assets have increased sequentially. What does this actually tell you? Is this as a temporary blip that an investor should look at it, or a mild stress that you're seeing anywhere?
See, again, if you look at it from a seasonality perspective, in Q1, the asset quality slightly, the stage 3 or the NPA numbers increase as compared to Q4. So this is the trend. And if you look at it last year versus current year, the increase had been much muted this year. So I think that is a good start for the current year. So if that is muted in Q1, normally Q1, Q2, there will be slight increase in the NPA numbers, and then it further reduces in Q3, Q4, which are the good quarters, as I was saying earlier. So this trend is always been the case, and we are going through the same thing. But actually, the positive thing is the increase compared to last year, Q4 versus Q1. In the current year, Q4 versus Q1 have been much muted. So that's a good start for starters.
Okay. And, if you have to look at the year, what is tougher for you? Is it going to be maintaining the growth momentum or preserving the credit quality in FY27?
See, between growth and credit quality always is the important one, because growing at the cost of credit is not good.
So credit quality will always be on the forefront of our watch list. So we keep tracking credit much more closer, and that would be the important criteria. Growth is there. Growth will come. Growth, because CV cycle has turned, so there should be a good growth coming in, and we have multiple levers with regard to almost 8 products in our business profile, which would help us to moderate growth, even if 1 or 2 of them goes through a slow cycle.
Okay, and Mr. Selvan, the other question I have for you is, if there is a prolonged period in terms of crude prices, does your credit cost get altered in any way? Because what 1.5% has already been achieved in the first quarter of FY27, if you have to look from a guidance perspective, versus a 1.8% in FY26. So what is the stance looking like there?
Yeah, I again reiterate that crude price alone will not be the factor that could result in the credit cost going up. Crude price is generally passed down, but mostly the most important thing is availability of diesel and availability of loan. These are the critical parameters which, if they have an impact, then it will have a fallout on the portfolio. Otherwise, we are confident the price of crude alone will not alter our credit.
And Mr. Selvan, on one side we're talking about the crisis that could come in, but on the back of FCNRB, the liquidity in the system is something which is going to be available at an abundance for some reason, right? Now, for a Chola, do you see any benefits coming in on that front, where there could be a pass on coming in for NBFCs as well, number one, and two, which are those segments that will drive growth then?
See, the FCNRB is very good move by RBI to bring in liquidity. But, currently or as of today, the pricing, at least from Chola's perspective, we are able to get from domestic itself much cheaper than the completely hedged or, the landed price of loan backed on the FCNRB deposits. So we still have not got any, we haven't moved on that front to tap this source. But that source is good, and that helps, have a larger liquidity, and it will help us to grow, because money availability is good for us, because that is what is our raw material for our growth.
Okay, and what segments will drive growth?
See, the availability of funding is not necessarily linked to each business directly or independently. We borrow in totality and we lend to the different businesses. So the availability of funds.
My question was mainly in terms of separate, I just clubbed into questions, but which are the segments that will drive growth for FY27?
Of course, vehicle finance, the CSL business, gold, LAP and HL. All of businesses are looking positive now. So these of course, vehicle finance, the CSL business, gold, LAP and HL. All of businesses are looking positive now. So these businesses will grow. Vehicle finance will grow a little faster as we see the CV cycle turn, and if that sort of holds on, so there we will see a better growth as compared to last year. LAP has already been growing at a good momentum. HL will also continue its momentum because there is enough and more demand for housing, and there we see a good traction coming in. The unsecured we will move with caution. Yes, there is always a possibility of the unsecured becoming stressed in case the economy turns over. But it's a very small portfolio, so from a growth perspective, from a smaller base, you will see the growth becoming larger.
Okay, that was the Chola management talking about their numbers, come off the highs, but still about 2% up. So much to talk about on Indian markets. We have a great conversation on the other side. Gautam Shah is with us, founder of Goldilocks Global Research. We will get his view on the charts and more when we return. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के
Back at the NDTV Profit Suzlon Studios, and let's get in Gautam Shah, founder of Goldilocks Global Research. And the reason why it's such an interesting time to talk to Gautam, almost any time is, but right now it's so critical because we are finally, Gautam, seeing the AI trade pull back. Now, it's not. I'm not saying that I want this to happen, but because it is happening, are there repercussions for what could happen to other asset classes, other markets, what have you?
Good morning, Neeraj. As a global citizen, I don't want the AI trade to pull back or even end. But as an Indian marketman, I definitely want that to play out because that helps India in some sense. In some sense, people believe that we are an anti-AI trade. And I think that's played out in the last 1 month because we have some of the Asian markets correct very big. The Korean market is down about 30% from the recent highs. The NASDAQ index has been consolidating and correcting for the last 6 weeks. A lot of the AI-based stocks around the world have corrected. And I think Indian markets have handled chaos and volatility and weakness quite well in these last 3 weeks. You know, you had this global volatility, geopolitical issues again resurfacing, and you also had oil moving from levels of 68 to about 94 on the NYMEX. Despite all of this, I think to be at 24,000 today itself, I think is a win for the bulls. You know, everybody is obsessed with the market moving higher because that validates an uptrend. But honestly, sometimes not going down itself is a great win for the bulls, which is what I feel with what has happened in the last 1 month. So I remain optimistic. I think we had the perfect storm scenario in the last 3 weeks and the market respected support levels. I think this 23,600, 23,800 area is extremely important. We are still in a band. We have been in a band for the last 3 months and we have behaved like a pendulum. 23,600 on the downside, 24,600 on the upside. We will probably oscillate in this band, but at some point of time in the near future, I still feel that the chances of a breakout on the upside is high. But you can't, you know, be very encouraged when you have an SDFC bank at near a multi-year low, when you have Reliance at a 1-year low, and when you had technology seeing such a big fall. So while I'm optimistic on the market, I still feel that the real opportunity is outside of the top 100.
Okay, you know, Gautam, very good morning to you, and this is something that you have said in the past as well. Our opportunities outside top 100. Problem is that that's such a vast sea. Right, and that's where then you need to be a little more pinpointed, have a better filter to apply when looking for ideas. What have you been seeing, and where are you seeing that opportunity coming in?
See, Tamanna, we honestly recommended a lot of clients for basket buying in late March, early April, because we felt that it had come to a point where if you just bought a basket of mid caps and small caps and micro caps, you did well for yourself. And from those levels, already buying in late March, early April, because we felt that it had come to a point where if you just bought a basket of mid caps and small caps and micro caps, you did well for yourself. And from those levels, we're already up 25% in a matter of 2.5 months. So I still feel that this entire broader market basket will do well. However, if you have to pick sectors, I mean, look at what the Adani Group has done in the last couple of months, and I think it will go on to do bigger things. The risk, I think, is phenomenal, and I think they will go on to appreciate another 15%. I think the entire pharma space has done so well in the last 1 month, and I think they will continue to do well. And we've also seen a big comeback in chemicals. So that's another space that we like. And the entire hospitality sector, travel and tourism, is another space that we like. So I think these are pockets that have done well. Yes, on an overall basis, most stocks have actually gone down then gone up. But I think if you are in the right pockets, the market is rewarding. Also, if you look at the technology index, I spoke about it in our last interaction that the worst could probably be over. We are up 17% on the technology index in the last 3.5 weeks. And I think there is more to come towards 32,000 and 35,000 on that index.
Okay. Wow. Okay. And Gautam, could it be a broad-based participation? Because erstwhile people were making this distinction that maybe the top 5 don't, but the mid-sized 5, mid-sized 4, mid-sized 3 IT companies will do well. If you indeed are so bullish on IT, or reasonably bullish on IT, let's put it that way, will it be the tide carrying all boats, or will some do better than others?
Well, when the tide turns, it definitely carries all boats. It's just that some boats are a little faster, and I think mid-cap IT will do far better than large-cap IT. We've seen that in the last 10 to 12 days, and we are likely to see further upside. And I'm tempted to believe that mid-cap IT in India is a slightly better proxy of the global AI trade in some sense. So that's a space that we definitely like on an overall basis. But the good news is that we have seen light at the end of the tunnel for the technology space, it's good for the overall health for the market, because this index had lost about 40%. It tested the level of 26,000, which was a 5-year low. And from there, we are today at levels close to 30,000 or beyond. So I think overall as a basket, it will do well. But again, if you're looking at alpha generation and outperformance, I don't think it will come from technology, because it will keep having those headwinds from time to time. On an overall basis also, I think the Indian markets in some sense have lost its mojo. So don't expect anything special out of the index, but there will be pockets that will do well.
I've got to go back to you on that, Gautam. Indian markets have lost its mojo. Any chances of finding it? We get relief when we see a 24,200 now on the index after everything that we've been through. But are we looking at that range-bound kind of space at least for the next 6 to 8 months?
I'm actually very happy if the Nifty stays range-bound. Over the last couple of decades, the Nifty has always been the barometer for the Indian markets. So if the Nifty moved higher, people celebrated, and if it didn't do well, people complained. But actually, Nifty, I don't think is a barometer to what's happening right now, because the kind of bull market that micro caps and small caps have seen, I think that's the barometer for the Indian market, and that's where the real trend and the momentum is. So when we talk about the Nifty and the top 100, again, I'm not excited. Even if we break out above 24,600, which I think will eventually happen, and we will move towards 25,500 and maybe even towards 26,000. But anything beyond that in the current scheme of things and with the current evidence on the table looks very unlikely. So I don't want to be very lofty about the Nifty targets from here.
What about targets for other kind of investment ideas? What are you looking at when you're seeing gold prices, when you're seeing crude prices? Because I know you would be looking at this entire basket from a technical perspective as well. Crude is the tricky one, I admit, because it's all over the place.
See, firstly, I think globally we are in an equity bull market. And I think that's really helping India because it's not allowing it to break down. I think last week we had an environment where we were at a multi-week low and we were languishing at 23,600, and there was this fear, will we break down? But the technology and the financial services sector helped the market come back. Just yesterday we released our US big picture report, and if you see the kind of trends that is there in Europe, you are seeing multiple breakouts in multiple markets in Europe. And even if you look at the US market indices, I think they will all go on to make new lifetime highs. I think Nasdaq will make a comeback, will make new lifetime highs. So US, Europe is in great shape. Asian markets selectively they have corrected, also because they had seen a very large move in the last 1 year. They will also come back. So in a global equity environment, I think India will eventually participate. So the trade is still very much in equities. You just have to be selective. Gold and silver for the last 3 weeks are at long-term supports. I think the area around 55 for silver, 3900 for gold are very important supports, and I'm firmly of the view that we will see a turnaround from here. So if you have to do some sort of a capital allocation, gold and silver, I think is it, because these are excellent prices.
Okay. Gautam, I'm just going back to the comment that you made that Indian markets has lost its mojo. By that, I presume you mean the Nifty 50 has certainly lost its mojo, but bottom-up stock picking will stay alive and kicking. Would that be a fair assessment?
That's a fair assessment, Neeraj. And I think over the last decade, we've seen segment rotation multiple times. There are times when the Nifty is not ready to break out for its own headwinds. And look at the situation that we've dealt with. USD INR at 97, oil was at 94, AI disruption, FI selling continues, disconnect between valuations of India versus the rest of the world, government policy. You just have too much on the plate to expect Indian markets to break out. And in this environment, to be at 24,000, as I said, is a big win in itself. So I'm very happy as a stock picker if the market stays range bound and stocks do well.
Now, Gautam, if you look at those longer term charts as well with a lot of aplomb, where is it that from what is this, July? So let's say from August this year to whatever time frame you extend it to, which is long term in the current scenario of the world, where is it that you find the most favor as a theme?
Well, I still feel as a theme, micro caps and small caps is a big theme. And I think despite having rallied 25%.
Sorry, Gautam. I'm just interjecting here only because that's like what, after 250, right? So let's say after 500, that's like 4,500 stocks. Our viewers will not be able to decipher it at all. Maybe try and narrow it down a bit as well as you finish your point.
Yeah, so firstly, I think for an average investor, I think it makes sense to even buy a basket. There are a lot of ETFs in the market that give you direct exposure to small caps. So you don't have to be really smart to go out there and do stock picking. That's my key point. If you just bought the small cap ETF, a few months back, you would do really well for yourself. So that's my key point, that just buy the index, buy the ETF, and I think you'll do well over the next 1 year. Within the overall market basket, I think real estate for me is a star performer. Pharma for me is a star performer. Technology, I think, will see further upside, maybe another 12 to 13% upside. I think PSUs will make a big comeback. I think power and energy is still a big opportunity. And I know there's been some correction in the recent past, but I think it will do well. And Adani Group remains our favorite, which I think will do bigger things. So it's not an easy market for a stock picker. You have to really work hard for returns. And that's what makes us uncomfortable, because returns have come to us literally in the last decade, not anymore.
Gautam, are you enthused by anything you're seeing in the consumption space? I mean, I'm not asking a specific view on HUL unless you have one, but that is one space where no one is quite clear where things are going. You have underlying data which seems like demand is not as bad as was earlier expected, but then an El Nino on the horizon, then crude prices add to all of the confusion. Are you forming any view there?
Well, a month back, we made the view that technology could have bottomed and the worst could be over. I'm starting to feel that consumption could have also bottomed, because, in the last 18 months, we've had a very difficult period for the FMCG index. In fact, for the last couple of years, this index has underperformed, and now they seem to be turning around, and we are seeing the comeback a lot of consumption stocks. If you feel Eternal is a consumption play, which I believe, if you feel some of the airline stocks and hotel stocks are a consumption play, which I believe, then I think they're all coming back really well. Now, consumption is a proxy to the Indian economy, and if it does come back, we can say that the markets can get back on track. But my bigger problem is not many people are giving importance, I'm talking from an FI perspective, to Indian markets in the global framework. So on a standalone basis, we will do well, but in global terms, in dollar terms, I think we will still be an underperformer.
Okay, thank you so much, Gautam, for speaking with us. We always end these conversations with a Nifty year-end target. I don't know if you want to give one right now, since you've said time and again you're not too excited about the Nifty, but any year-end, calendar year-end targets that you have in mind?
Well, gone are the days where you could you fancy yourself with round numbers. I don't think I would want to do that. But the best is we can probably go back to the previous highs of 26,500. That's the best as I see right now.
Best case scenario. All right. Thank you once again, Gautam. Always a pleasure to have you on with us on the show. We have a very interesting story for you lined up next. India's toy story is getting bigger. Government has formed a task force to boost manufacturing and exports, with India targeting a 5% share of the global toy market by 2032. But how exactly are we going to do that? Sharad here breaking it down for us.
Well, India's toy story has just started, and yes, it's not a child's play. Very important task force has come up from the government, the way the overall export data is going ahead. And let's talk about the key pointers. What does this actual task force mean? They are actually focusing especially on the growth momentum coming in from these schemes. Also remember, they are targeting almost 5% of the shares in the export segment. Now this task force will boost the overall manufacturing, which is domestic, as well as the exports going ahead. Second important reason is, of course, Piyush Goyal has announced this task force for the toy sector. And going ahead, of course, the data is changing as well. And this is the number I'm talking about, 5% of global toy market. That looks quite small, but in terms of the value, it is pretty big. Also, let's look at the other key triggers. This, of course, includes strengthening the overall segment and the innovation. There's only one cluster in Karnataka, and a listed company has a presence there. I'll get you on that. But remember, this is the entire playbook which the government has actually pointed out. But enough of the policy. Which are the stocks we should be focusing on? It's a very niche segment, so we did a little bit of research. Of course, the larger is the entire playbook which the government has actually pointed out. But enough of the policy. Which are the stocks we should be focusing on? It's a very niche segment, so we did a little bit of research. Of course, the larger players, let's have a look. That is Shelly Engineering. They have custom injections to make products in the game, darts, toy vehicles, and some micro caps are also there. And I'm holding a couple of toys and merchandising. There's a reason for it. The company is Pramara Promotions. They make merchandising and promotions, and you can see on my hand, both of these are there. These are Kinder as well as Gems product. This is where the toys are inside these products. OK Play, another micro cap where they have their toys and children's furniture as well. But moving on from the stocks itself, let's talk about the overall data, how things move ahead, especially on the exports front. So I've taken a data from 2017-18 and current financial year of FY26 to show you how growth has happened. Let's just pull out the numbers for the exports, how things have changed. And remember, India has turned a net toy exporter in FY22. These are the numbers, 3 times jump coming in FY26 for electronics and non-electronic toys. Also, the second segment, video console games and machines. I'm sure a lot of you have interest in PS5 and PS4s. Look at the numbers, 3 times. This is the jump coming in the exports. Also, looking at the other key data is the festival, carnival and other activities, and that has also jumped almost 2.3 times. You see a significant up move coming in. But what are the key factors aiding this industry? IP rights from foreign brands, that's what you're going to see. Of course, these products which I'm holding, they are having Marvel related products, exclusive merchandising and promotional opportunities. And also, third and most important thing is the strong exports that's expected to likely to continue going ahead. But apart from that, these are some government scheme announcements. The reduction of GST from 12 to 5% coming in. Second important reason, let's get that as well. That is the zero duty market access for the exports for Indian FTAs. We have signed a lot of them, and the toy sector is getting benefited. The National Action Plan for Toys 2020. And lastly, of course, we are talking about the geographical indication, the GI tagging of toys. So a lot of schemes, a lot of benefits, but a lot of fun. But speaking of fun, today is Tamanna Inamdar's birthday as well. And since I'm holding chocolates, I would go across to her and I'm going to give that to her. That's her gift, maybe.
Yeah, matlab, Sharad's getting away easy. I was just going to ask you, Sharad, how long have you been waiting to have this chocolate? Thank you.
Actually, waited it for yesterday.
Thank you so much.
That's one thing as well.
Kya baat hai? Thank you.
Thank you. Thank you. And this is no child's play. Actually, Sharad has put together a fantastic piece. Thank you once again for that and for the chocolates.
Hey, I got the bigger one.
You need the bigger one.
That's a separate question.
All right, we'll take a very quick break, but so much more on the other side. The fun and the party continues on India Market Open. Harold Vanderlinde, head of Asia Equity Strategy, HSBC, when we return.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India
All right, back with India Market Open right here on NDTV Profit, and it's a good day for the markets per se thus far. Let's see if this builds on from there. Now, a special guest, HSBC, is saying that global fund flows are showing early signs of shifting back towards markets like India, and while regional funds continue rotating into China, India has attracted fresh inflows after 4 months, with financials and discretionary stocks emerging as the biggest beneficiary. That plus the slight unwind that we see in the AI trade make this conversation with Mr. Harold van der Linde, Head of Asia Equity Strategy at HSBC, extremely important. Harold, great having you as always. Thank you so much for taking the time out and being with us.
Yeah, thanks a lot as well. I see you got chocolate over there. You can't share it this time around, but good.
Yeah, Harold, maybe the next time that either we are at your side of the world in Hong Kong, or if you are in India, we'll order this purple ball once again.
Exactly.
But speaking of chocolates, it's turning out to be a slightly sweet week, if you will, because the markets are kind of doing okay, even as the AI trade around the rest of the Asian markets comes off and brings those markets down along with them. What do you make of this combination, Harold, and therefore the risk appetite that people might have into investing into equities by and large?
No, I think there's a couple of really interesting things going on in the market, and you're right. A lot of that has to do with the AI trade. So earlier this week in Shanghai, we had the listing of a memory company, CXMT, and that has ignited interest. Hey, the Chinese are emerging as a major player in memory. They're not making the memory that the Koreans make, but this could, of course, over the next 2 or 3 years, could change the dynamic in that industry. What we've also seen is that people are getting a little bit more worried about the Chinese are emerging as a major player in memory. They're not making the memory that the Koreans make, but this could, of course, over the next 2 or 3 years, could change the dynamic in that industry. What we've also seen is that people are getting a little bit more worried. Stocks, the ones that make the memory for the data centers, those memory stocks around the world have started to come off. And what is added to the sort of dynamic is that there's a lot of people gone into these stocks in Korea, in Taiwan, with borrowed money, or they bought really leveraged products. So you see that a little bit unwinding at the moment. Not violently so, but it's a kind of an interesting process, and money therefore flows into other markets. Now we borrowed money, or they bought really leveraged products. So you see that a little bit unwinding at the moment. Not violently so, but it's a kind of an interesting process, and money therefore flows into other markets. Now we've seen actually money coming into the Hong Kong market, but I think some of for you guys.
You know, Harold, very good morning to you. I was looking at your 10 surprising statistics and just absolutely love the note. It's too much fun to read. Powerhouse, the number one, Samsung Electronics profits are projected to hit $200 billion in 2026, the same as the combined earnings of all listed companies in India. SK Hynix's shares moved more than 5% intraday on 92 of 131 trading days this year. Samsung for 82. And with the latest top-tier Chinese self-driving cars, you can drive from New York to Boston and halfway back and only need to take over the wheel once. Of course, there are another 7 very interesting ones. But I want to ask you about SK Hynix and this AI trade. Is this a blip? Is this a pause where investors are waiting and figuring out, are we going too fast? Or is something shifting?
I suspect something is shifting, but it's kind of early days. The difficulty here lies is that the actual profits that these companies make still look good. And actually their business is still looks healthy. I mean, they've doubled their prices since the beginning of the year. What is now happening is that they can't raise their prices as fast anymore as what people anticipated. Also, they've locked themselves in long-term contracts. That makes sense from the memory makers. You're building a big fab, cost a couple of $1 billion. So if your customers say, listen, can I already put in orders for 2027, 2028, and 2029? You say, I'll take it because I'm building this and I need to sell the product as well. So it gives you certainty. But the market looks at that and says, yeah, but hey, that means that if you fix these prices already, you can't raise the prices that much more further. So the price momentum in memory is therefore sort of slowing a little bit. It's not negative, but it's slowing. And that is a key factor. Now, then we also have the capex and we have the emergence of Chinese players, although they're not really competing in the high-end stuff here, but they are there. And that is shifting the dynamic in that AI industry, absolutely.
Now, is there any kind of correlation with what's happening with Indian IT stocks? There is absolutely no evidence for this, except that we have seen on days that you have a meltdown in semiconductor stocks globally, in Korean markets, etc. You have Indian IT stocks doing pretty well. Is there any kind of connection at all, or are both on different trajectories? Because when the reverse was happening, one of the reasons given was Indian IT is suffering because there is no AI trade.
Yeah, that's right. So for your tech sectors, you have to be careful sometimes with correlations in markets, because if one stock goes up in Korea and the other stock goes down in India, and then it's the other way around, it might be different dynamics that drive it. But maybe the rollout of AI is going to be a bit slower than people anticipate. You see in the US, a sort of push back against AI data centers, right? They say, hey, we don't want them in New York, or we don't want them in our city, or these things could take away our jobs. So we've seen graduates at university responding quite negatively to this. So all these things have effects. And of course, that means that maybe the sort of outlook for some of your sectors might be a little bit better if AI doesn't emerge as quickly as people anticipated. So there could be a relationship there as well. But I think sometimes we have to be careful, because there is maybe a relationship, but sometimes local flow and local flow dynamics are really important as well.
Yeah, they are. I'm guessing, Heril, maybe it's a repeat of something that you've said, but I still just want to enumerate it. Giving a conclusive verdict on the turn of flows is difficult, but I've heard now many buy-side institutions who invest into EMs and India individually as well, at the margin turning constructive. If that is indeed going to be the case, could there be an upward surprise even if crude prices were to stay in this slightly higher range of 80-85 and not the 60-65 levels that benefit India?
Yeah, I'm not so worried about crude prices as long as they don't really go well below above 100. I think India seems to be able to deal with it at the levels where we are at the moment. Of course, lower price is better, but so it is. So let's assume for the moment that is not a risk. You are right. A lot of buy side cannot buy more Korea, Taiwan. They're up to their noses in it, what they already own. So that's been our story. People can't buy more. It's actually been a retail story. The retailers have driven these stocks higher. But if the momentum there changes, what we've seen is money goes into Hong Kong. It can flow to India as well. And that comes at a time where in India, some of your high frequency numbers look better, where people have moved underweight on India because they wanted to be overweight or build exposure elsewhere in the region. So your earnings look better, the positionings looks better, and your valuations are still somewhat elevated, but of course not so hefty anymore. So on the margin, India starts to look better. What we now need to see is confidence in these sort of earnings recovery, that the earnings are holding up well. And I suspect they will. So on the margin, that means that money could flow back to India. That's why we upgraded India not too long ago.
Herald, so let's look at some of the recent statistics, right? Credit growth is at about 10-year highs right now. Yesterday, India released the IIP numbers, and IIP is at 2-year highs as well. And as I read the statistics, I mean, Indian corporate balance sheet has not been in a better shape in a really long time. So in some sense, and the Q1 earnings season seems to be doing okay, with IT also participating. In some sense, the micro from within India seems to be doing all the right things. Is that the necessary and the sufficient condition to enable more flows during the rest of the year?
I think it is a necessary but not sufficient condition. So it is necessary, and this is the high frequency numbers that I spoke about. They are looking a little bit better. So that is necessary to gain confidence. It's not sufficient because we need to see other things as well. We need to see a bit of maybe capitalization in AI. And we need to make sure that, for example, oil prices don't go up and some of the other factors. But on the margin, yes, I don't think valuations are low enough that people say India's cheap. But most people say, well, okay, but it's always a bit more expensive. It looks reasonable. So yes, I think it at least means that India is moving in the right direction when it comes to investors' appetite. When I was in Europe about a month ago to talk about it, that's 6 weeks ago now actually, to talk about Asian equities, but institutional fund managers there, India didn't come up a lot. It was all about Korea, but we've seen that shift. People starting to ask us a little bit about it again. So there is a shift in momentum, at least an interest taking place, I believe.
Harold, what are they asking when they talk about India? I'm curious to know your view, because here when we speak to people who track markets day in and day out, they seem to be, for lack of a better word, put off with the Nifty, with the large cap big companies, because they aren't doing too much, not too many exciting stories there. But there seems to be a sense of discovery in the broader Indian markets, whether it's micro caps, small caps or mid caps. Wondering how you are looking at that trend.
Yeah, so the vast majority of people that I talk to, they can't really go into small caps. Their funds are too big for that, so that's difficult for them. Sometimes you meet a specialist that does, and actually I remember having lunch with one of them that has actually done really well in India because he was into small caps. But the vast majority can't do that. So the questions are really about how much confidence do we have in the earnings recovery? What is reasonable earnings growth in India that has actually done really well in India? Because he was into small caps. But the vast majority, what happens with the banks, and also longer term questions. What's going to happen with profitability in India? And how do we have to think about that? But those are long term issues. The near term is really about earnings, oil, movement of interest rates. That's really what people want to talk about. But earnings, I'd say, is number one.
So I'm wondering then if a lot of these investors, when they come back, will be restricted to looking at large caps. Will we then see some improvement there here on? Because domestic investors seem to be looking outside that box.
Yeah. So if you're a domestic investor, you can do that. But if you're, it's just basically mathematics, right? It's if you run a really large fund, you can only buy large stocks because it takes you too long to buy mid-cap stocks. So it's really banks, larger consumer companies that they're looking at. Maybe the oil and gas and energy universe is some interest as well. But you see them trying to trickle lower in the market insofar they can. Maybe a bit of property, maybe some other small cap or a company that does something that is unique at least, and maybe making auto components or something like that, right? So they are looking at that to move away from the large caps, but very often many global funds are somewhat restricted insofar they can do, because if you buy a couple of dollars of stock, hey, then you can buy any stock you want. But if you're running a large fund and you need to buy $100 million, then it's a completely different story what you can buy.
Fair enough. Thank you so much, Harold, for speaking with us today. We always enjoy our conversations with you. And there you have it, Harold van der Linden, Head of Asia Equity Strategy at HSBC, joining in from Hong Kong on the India view. More queries now on India, and they will possibly trickle towards the large cap. Very quick break. On the other side, we get you a SWOT analysis of the new IPO on the block that opens today, Manipal Health. All of that coming up on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandebharatam.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. we're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you
All right, welcome back. Indian markets in good form this morning. You're above 24,200 on the Nifty, sitting pretty there, about 1% up. Nifty IT is once again leading the way, but it's not just IT stocks. Banks are not looking too bad either, 0.7% up on that index. And across the board, you have a sort of a broader market breadth, which is looking good. Just want to pull up the advanced decline ratio before we get to our next story and give you a sense over there. And that's really telling you the market mood. 1916 advances to 673 declines. All right, let's talk a bit about the upcoming IPO, which is actually opening today, of Manipal Health. It's a 9,000 crore IPO that opens today, backed by a 4,167 crore anchor book featuring marquee global and domestic investors. The hospital chain plans to use the proceeds primarily for debt reduction and expansion. Varsha joining in with a SWOT analysis. Varsha, some of the strengths and of course also some of the weaknesses.
Yes, overall an interesting IPO, when it comes to Manipal. Now they have strong brand when it comes to the premium healthcare. 49 hospitals and 13,000 plus beds they cover. Even they have strong acquisition when it comes to Manipal. Now they have strong brand when it comes to the premium healthcare. 49 hospitals and 13,000 plus beds they cover. Even they have strong acquisition and integration track record as well. And the one important thing is they're backed by Temasek and of course the large investors. They are market leader when it comes to Bangalore, Karnataka and Pune. But onto the weakness, I would say the expansion, if you see, has increased at debt levels, which is one of the a negative point. But also the acquisition related debt has actually increased finance costs, which is adding pressure to the profitability. And most probably after IPO, the finance costs, the reduction in finance costs should help in profitability for the company. Talking about the opportunities, they've added 3,000 new beds, and the expansion into new cities and markets will actually aid growth for the company. And there's also a scope of margin expansion after the finance cost goes down. They have a growing demand for tertiary healthcare in India as well. Onto the thread, I would say they are not a single player when it comes to this industry, because industry has a very good players like Apollo, Max and Fortis, so they're going to have to compete with these big guys. Even the dependence on specialty doctors and talent is also one of the threats that the company has. And of course the integration risk from future acquisition will also add to the risk that the company will be seeing in coming future.
Okay, so Manipal in focus this morning, and we spoke a few days ago with Dilip Jose, the Managing Director and CEO of Manipal Health Enterprises. Listen in.
All right, it's the largest IPO by the issue size that's coming up, and we're talking about Manipal Hospital, and we have the management here with us to take us through what is it that the investors will bet on in subscribing to this particular issuance. Dilip Jose, always a pleasure to welcome you on NDTV Profit, and all the very best for such a large IPO really hitting the market soon. And you've just revealed the valuation picture. So 78,000 odd crore rupees at the upper end of the price band that you have suggested. When we compare it to the peers, your company is richly valued in terms of the numbers. While you are the largest when it comes to the beds, second largest in terms of the hospitals in the country and a quality name. What is it that the investors will get pulled into for investment into Manipal Hospital vis-a-vis the other peers who are already trading in the market?
So thank you, Nisha, for having me on your show. We are, like you said, the largest hospital group in the country in terms of bed capacity, present across the country, and have a consistent track record of performance, both in financial and non-financial matrices. So this is what the investors would buy into, and we think we are very well placed to tap into the opportunities that the healthcare sector offers today for hospitals of scale. You asked about the valuation. Our thinking is that this is a valuation that considers incoming investors, a valuation that considers the fact that there is very little OFS in our offer, and there is no intent to maximize the return for anybody. I think our whole intent is to attract the right kind of investors who are keen about the properties of healthcare, who understand healthcare, and who would want to bet on a platform which has a track record which we are demonstrated, and data is there in the DRHP in the public domain.
Well, public domain, and it promises to be a slew of paper that will come into the Indian markets, which could be very, very promising. But if the markets stay the way they are today, I think it could be a really good deal. So, well, from the birthday girl and me and the team that has put this show together, from the NDTV Profit Suzlon Studios, thank you so much for tuning in. Just before we wrap up, Tamanna, one fun thing that you're doing today.
One fun thing, so
aside of anchoring with me, which is always fun. Yeah.
A dear friend has promised to take me out for lunch, so I'm hoping.
Cool.
I'm hoping that's going to be fun.
Have a great time then.
Thank you.
Have a very, very good time.
Thank you. Thank you. So that's all the time we have. The celebrations continue because the markets are in a good mood. Ask Profit on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin rebound near the $64,000 mark on the regulatory optimism. Emirates Airline starts accepting crypto payments. Morgan Stanley Investment Management expands ETP offerings. On-chain real-world asset tokenization market tops $36 billion. Well, Bitcoin has rebounded and is near that $64,000 level marks on regulatory optimism. Securities Exchange Commission Chairperson Paul Atkins has given a public commitment to the Digital Asset Market Clarity Act, which has boosted the sentiment for the major digital commodities for both Bitcoin and Ethereum. Now, if you look at the Clarity Act, that aims to provide a clear regulatory framework for crypto and, of course, the institutional participation. Secondly, now you can purchase airplane tickets by crypto. Yes, you're right. Emirates Airline has begun accepting crypto payments. This is the first major airline in the Gulf to offer this option of using digital assets for flight booking. Now, of course, this option uses the Crypto.com pay service and is live for bookings settled in dirhams on the airline's website and app. And Morgan Stanley Investment Management has announced the launch of Morgan Stanley Ethereum Trust as well as another trust on Solana. These are the two new exchange traded products, or as we call it in the parlance, ETP, that seeks to track the performance of both Ethereum and Solana. That means there is a more institutional support coming in for crypto. Lastly, on-chain real-world asset market capitalization has crossed the $36 billion mark. This shows how rapid growth is there in the tokenized stocks, treasuries, real estate, and of course private credit, which is being issued and settled around the clock on public chains. RWA in crypto stands for real world assets, which are traditional, physical or financial items which are brought onto blockchain through digital tokenization. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. And of course, there is a tight range movement happening, but still on the positive. A little bit of technical rebound there, but largely it seems like the Bitcoin range is between that $62,000 to $65,000. But yes, the range is tightening as of now. Now there's a time to look at the crypto strategy for the day. Here's what's there to keep in mind. Overall, the market outlook is still cautiously optimistic. Remember, tonight is the Fed FMC meet. Status quo expectations is there, but risky assets will be tracking this announcement. The technicals are suggesting a little bit of consolidation here. As I had mentioned earlier, there is a narrow gapping happening, and the Clarity Act momentum might be something to look out for breakout levels. But yes, that's for the first week of August, so we'll be tracking that as well. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri, and this is a show that gets all your stock related queries answered. For viewers who are tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there, and while you do that, we'll take a quick look as to how the markets are doing, because overall the Nifty 50 yesterday closed around 24,000 levels and today opened above the 24,100 levels, almost 170 point of an uptick. Gap of opening is what we saw, and now we're trading above with 250 points of an uptick, so a percent higher on the Nifty 50 at the day's high point. Let's try to pull up the heat map and see as to what are the counters that are contributing positively. Infosys tops that chart. Yesterday it's also saw a good move coming in after Jeffrey turning positive in this particular name. HUL today is again seeing buying coming in. Yesterday we saw a significant amount of pressure on the stock post its Q1 numbers, but most brokerages believe that the selling pressure that came in yesterday was overdone, and that's why we're seeing positive moves on this one. L&T also on the back of numbers doing fairly well, up 3%. Tata Steel is the other one which is doing very well, up 2.7% as well. Bharti Airtel, TCL, HCL Tech, Tata Consumer also doing fairly well. So tech names and FMCG names are the ones that are contributing well. But on the flip side, you have BEL, which is down by about 1.6%. Interglobe Aviation, Shriram Finance are some of the other names that continue to be under pressure. But the Bank Nifty still hovering around the 57,100 levels. Just an uptick of around 0.6% is what we're seeing on the Bank Nifty. And the broader end of spectrum is also slightly underperforming the benchmarks, because the mid cap 150 is up by about 0.6% and the small cap 250 is just slightly underperforming versus the benchmark, because it's up almost about 0.9% at the day's high point again. The BSE 500 quickly before we go on to our guest for the day. There you go. Some of the names that are doing well is something like a C Infosystems, Sonata Software, Gujarat, Ambuja Exports, and on the flip side you have Phoenix Mills on the back of it was not a bad quarter for Phoenix Mills per se, but I think we've seen selling pressure yesterday also coming in, but because this is only because when the business update came in, the stock had run up quite a bit. But Sterlite Tech is the other one which is locked in lower circuit. Sumitomo Chemicals, City Union Bank also on the back of numbers seeing pressure, and Equitas Small Finance Bank also seeing profit booking coming in, plus VST also in that list because of weak Q1 numbers. Especially they don't give the volume numbers out, but it's the volume that's putting pressure on the overall top line. So that's with regards to where the markets go, but let me get in our guest for the day. We're joined by Avinash Gorakshaka, founder and head of research at Avinash Mentor Research Services, joining us now. Thank you so much, Avinash, for taking out the time. I'll start by taking the first question, which is coming in from Lalita, who's writing us from Bengaluru. So Zlon is what she's been holding, 305 shares at the levels of 44. She's sitting on a profit, slight profit. Let's try to pull up the stock and see where it's trading at right now. And she wants to know whether she can continue to hold this one and what should she do. So slight profits is what she's sitting on, Avinash. Considering the way results came out yesterday, the stock tanked quite a bit. What do you make of the earnings first of all, and your take on Suzlon? Avinash, I think you are on mute.
Yeah, sorry. See, yesterday's Suzlon numbers were disappointing, and that's the reason the stock has corrected. But my sense is, the kind of order book they enjoy and the kind of execution track record they have, I would believe that, from the second and third quarter, you could see a faster execution cycle coming in. I don't think this quarter is indicative of the entire 12 months going forward. So I think the investor should hold on. I think not much profit is there from her buying price. So I would suggest that rather than booking out now, I don't think the stock has got further potential to correct significantly from these levels. The market has already given it a thumbs down, but I think hopefully the second quarter is good, execution takes off, then I think you could possibly see higher levels going forward. So my suggestion is it's a hold for the next, say, 12 to 15 months, considering the order book they have and the kind of tailwind we are seeing in the in the wind energy market. So definitely Suzlon being a market leader, I think one should hold on.
Got your view, Avinash, and welcome to.
And the kind of tailwind we are seeing in the in the wind energy market. So definitely Suzlon being a market leader, I think one should hold on.
Got your view, Avinash, and welcome to the show. Let's go across to the next question. This one's coming from Padma from Bengaluru. Wants to enter into Havels as well as Grow. Either of those counters from the technical standpoint. Vaishali Parekh, Vice President Technical Research at PL Capital, now joining in. Vaishali, good morning. Thanks so much for joining in as always. Your view on either of those counters that you like between Havels or Grow right now to enter?
Hi, very good morning to all of you. So I think Havels is a good bet right now because after a good erosion, technically I would say it's a good rounding pattern. So for short-term perspective, 1200 should be the support and one can look for a target of 1320. And the other one that is Grow, it comes at, I think, what is the name of the, one sec. Sorry, I'm having difficulty in this chat, but yes, I would focus on Havels.
Got that view, and we'll probably get back to you, Vaishali, for Grow. Of course, the symbol goes as Grow as well, but we'll come back to you on that query. But let's go to Pune now. Purab dialing in for a first stock-related query now. Purab, very good morning. Thank you so much for calling in. What's your query?
My query is regarding Hero MotoCorp. I'm looking for a fundamental view on Hero MotoCorp.
Okay, and what price have you bought these shares at? 5,100?
I'm holding 100 shares at the rate of 5,100.
Okay, got it.
My horizon is medium term to long term, 1 year to 3 years horizon.
Okay, 1 to 3 year horizon. And Purab, do you have any other auto OEM in your portfolio? Any automaker apart from Hero right now?
Well, I'm holding Maruti also.
You're holding Maruti also, got it. Avinash, on Hero MotoCorp, what's your view? Of course, one of the cheapest two-wheeler makers in the portfolio right now, in the auto space right now as well. Purab's holding on to Maruti as well. Would you recommend to continue holding at 5,100 or pick something else?
No, I think Puneet, the investor can continue to hold Hero MotoCorp largely because I think they have a large kind of a geographical market share, a very strong rural market reach, and most importantly, it is one of those two-wheeler companies which has consistently generated free cash flow. And now with volume growth coming in, for the two-wheeler market, specifically for motorcycles and scooters, I think the next 6 to 12 months is going to be quite well for Hero MotoCorp. So my sense is, despite the fact that the stock is not trading cheap, looking at the kind of free cash flow generation, the new product launches, over the next, say, 12 to 15 months, if the investor can hold on, definitely I think he can expect a decent risk reward. So continue to hold.
Is the one that's in focus, seeing a good momentum in the stock also today. Overall, Pat did see a good growth of 56% and in terms of the operational performance also, it's been a steady quarter. Loan book saw a growth of 23%, net interest income also saw a growth of around 25%. In fact, I spoke to the management, Rajiv Sabharwal, MD and CEO of Tata Capital. Listen to what he has to say. We are now joined by Rajiv Sabharwal, who's the MD and CEO of Tata Capital, joining us now. Rajiv, thank you so much, first of all, for taking out the time. My first question to you is with regards to your NIM expansion. And I'm sure that you would have gotten this question earlier as well, but you've guided for nearly around 10 basis points NIM expansion in FY27. Versus that, you're expecting 8 to 10 basis points increase in borrowing cost as well. So just want to get a sense as to how much of
this improvement in NIM that you're expecting, can you, own it to portfolio mix versus pricing mix? And, overall, what are the execution risks that you might see while doing this? Because at the same time, there is a 10 basis points increase cost that you're looking at.
So our expectation is that during the year, we may see an increase in interest costs of about 8 to 10 basis points. Obviously, a lot is unknown, but that's what our expectation is. And that's what we are planning for. The other thing is we are doing a couple of things to improve our margins. Number one, that in all products, we are looking at how we can improve our margins, and we have realized there is an opportunity for us to do so. And if I look at the monthly trend, we are seeing that improvement happening. The other thing which we are doing is to improve the mix of high margin products in our portfolio. We have a lot of products which give us better margins. For example, when I talk about housing, it's affordable housing, micro home loans, loans against property. We have in retail personal loans and business loans, microfinance, the commercial vehicle business, and now we have got into gold loans. So there is going to be a set of products which will give us better margins, and we are trying to improve the proportion of them. So a combination of both of them, we do believe should give us an improvement in NIM by at least 10 basis points, despite the increase in cost of funds.
Got it. Your retail and SME is now almost 85% of the portfolio. Considering that competition is intensifying with regards to gold loans, unsecured loans, etc., where do you see the incremental growth coming in as per the guidance that you've given? Which pockets do you see more growth coming in from?
So there is no product in India which doesn't have enough competition. Every product is fairly competitive. I think what we enjoy is the fact that we have a very strong brand signifying trust, which helps us in getting us a foothold in the customer's mind. The second thing is that we are AAA rated and we are well diversified on our liabilities, so it keeps our cost of funds low. The fact that we have a lower credit cost also helps us in keeping our cost of funds low. So these things are extremely important for us to get more customers in. Second is we are going deeper into our existing branches, but also expanding to new locations. So geographical expansion is also an important part of our strategy. Addition of new products is a part of our strategy. Similarly, we have invested a lot in technology, which is helping us in making decisions faster, in making productivity work for us, and also help us in improving credit quality. So a combination of all of this is something which will give us better margins and better ROAs.
So just a follow-up on that, because you've always said that credit costs will be sub that 1% mark, and you've largely maintained that. Plus, your asset quality has also seen an improvement. But from the sense that macros right now are not looking very positive, there's always customer stress that is been on an increasing trend. How confident are you in terms of this sub 1% credit cost, and how long do you think can this sustain for you? For FY27, I think you've said that it'll sustain, but going forward, what is the outlook?
So few things are important. If you look at the macro environment, you are absolutely right. This is something which we need to watch on a regular basis. The good part is that the government has not passed on the impact of the fuel price hike in the full way to all the customers. So the impact on SMEs and businesses is much lesser, which they are able to absorb. There is a mild increase in inflation rate, but still I do believe that it is well within control. So that is working well. Similarly, for us, retail unsecured is just about 10.3% of our book. If it inches up by another couple of percentage basis points, still we will largely remain secured on our book. So this will also help us on credit costs. We've invested a lot in data analytics and now in GenAI, which tells us and gives us early warning signals if any of the segments is not doing well. And we have an ability to pull back if that happens. The fact that we are well diversified, we have 25 plus products in our portfolio, gives us an ability to pull back on one or two products if there is a problem and still maintain our growth rate by pushing the pedal on some of the other products. So by remaining diversified and relying on data to make all decisions, I do believe will help us in keeping our credit costs within the 1% range, which we have said. And we do believe we can sustain this over many years.
Got it. You've mentioned adoption of technology and AI to simplify your business. And this is across underwriting, collections, customer servicing, etc. that you've been doing. Is there a possibility for you to quantify as to how much of cost savings has been done, or that you're expecting going forward, or revenue uplift that you can expect because of adoption of AI in your various segments?
So if you look, we were early adopters of AI, and we have tried to use it in almost all parts of our business, right? From sourcing, doing credit evaluation, in our operations, in customer service, as well as in collections. So in each of the areas, we have put in projects where we are using technology, data, and AI to make decisions faster and improve efficiency. If I look at what's happened in the last year or so, our cost to average assets have come down by about 15 basis points. And if I look into the future over the next 2 years, we believe there's another opportunity of bringing it down by 10 to 15 basis points. So this is the plus which we have seen in the past. And because of what we've seen in the past, we do believe that what we're predicting for the future should also happen.
Okay, just one last question, Rajivji, from my end is with regards to motor financing, because the Tata Motor financing integration is largely now behind you, right? So when do you expect this to kind of start generating positive ROE for you, and what is the outlook here when it comes to, after the integration specifically?
So we had set in motion a transformation exercise as well as motor finances business is concerned, because this is a large market and there is an opportunity to do well in this space. The number of things have worked well for us. We are no longer dependent on one manufacturer. We are well diversified across manufacturers. We've also improved our cost to income, coming down from about 70 to about 55, and there with more scope of bringing it down. Our credit costs are coming down. Our volumes, we expect, will start moving up from Q2 and Q3 of this quarter. So we do believe that this will help us. We became profitable in this business in Q4 of last year. In Q1 of this year also, we are profitable, and we expect these profits to improve. We had given a guidance of getting to a 2% ROA by FY28, by end of FY28. And we are working and are on track to do the same.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country.
Welcome back. You're watching Ask Profit. It's time for a rapid fire round. Avinash and Vaishali, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on HDFC Bank. Lavanya from Bengaluru is bought at the levels of 814. She wants to know if this is a good time to average or wait. Vaishali, on the charts, what would you recommend?
I think the damage is pretty much done, average.
Gaurav, who's from Bengaluru, wants to know view on Eternal Vaishali, holding shares at 250. He's holding 700 shares. What would you recommend?
Keep your stop loss trailing and hold for target of 320, 330 for now.
Okay, the next one is on Swiggy. Our viewer has bought 10,000 shares at the levels of 280. Wants to know whether he can continue to hold this one considering the volatility that it's seen, plus earnings are yet to come. But Avinash, your view on Swiggy?
I think continue to hold for the next 12 to 18 months.
Siva, who's from Toronto, wants a short-term view on TVS Motor. Vaishali, you've seen a very sharp run up from that sub just around 3,000 to 4,000 mark very quickly in the last 3 months. Is the momentum expected to continue?
I think so. So now 3,800 is the stop loss and look for 4,300.
Okay, ICICI Bank is the other one. This question is for you, Vaishali. Sunita from Delhi wants to know the 3-month outlook on the charts and target price and stop loss for this one.
So 1410 should be the stop loss and look for a target of 1480.
Rajesh wants to know a couple of smaller names in the pharma space, Avinash, that he can buy for the next 1 to 2 years. Anything that's on your radar?
I think within the pharma names, I think oncology players like say Beta Drugs or Sakar Pharma, I think this can be accumulated, but with a 2-year horizon.
Alright, the next one is on Torrent Pharma. Siddhi has bought at the levels of 4710. She's holding 262 odd shares. Wants to know from a short-term perspective, can she continue to hold, and if yes, for how many months, and what should be the target? Vaishali?
So right now it's at make or break level. So keep a stop loss of 4,800, and if that is sustained, we can have a revisit of 5,100.
Okay.
The next one's on Indus Tower, Vaishali. Satyan is holding shares at 400 and asking what's a good target price that he can expect from this counter.
So Indus Tower currently at 382 and it's in a downward trend. 375 should be the stop loss and 420 should be the resistance for now.
Alright, the next one that we have is coming on Gravita India. Our viewers bought 35 shares at the levels of 1713. Wants to know whether to continue to hold, exit, average, and what should be the target price. Vaishali?
So again, this is at a crucial support level. 1600 should be the stop loss, and if we see a revival, 1750 to 1850 would be the target.
Sriram Raghuraman is holding on to L&T and he's bought at very, very attractive levels of 879.
If we see a revival, 1750 to 1850 would be the target.
Sriram Raghuraman is holding on to L&T and he's bought at very, very attractive levels of 879. So definitely bought it a long time ago. Avinash, how did you view the results, and should he just continue to hold looking at that attractive buying price?
Yeah, I think Puneet continue to hold because numbers have been much better than expectation, and I think the second half for this financial year should be much better. So continue to hold.
Okay, the next one that we have is on MTAR. Mangaldas from Goa is holding 105 shares bought at the levels of 7560. For the next 1 year, continue to hold, Avinash?
Yeah, I think one can hold. There's been a massive price correction, but I think considering the order book and the sectors it operates, I think continue to hold.
Vivek from Himachal wants to know about Canara Bank holding shares at 125. Avinash, what's your view?
No, I think numbers which have come out recently, Puneet, have been much better than the street expectations. I think a very strong performance. So I think continue to hold. We could see, definitely a further re-rating based on second and third quarter numbers, but definitely looks promising and continue to hold.
Alright, Kalyan Jewellers is the other one. Lavi from Bengaluru is holding 1080 odd shares. Bought at the levels of 619. She wants to know the short-term view on this one. Vaishali, on the charts, what would you recommend her?
Well, I would say bought at very high levels, but keep a stop loss of around 610 and look for a target of 650 for short-term.
Alright, okay, that brings us to the end of this rapid-fire round. But again, time to slip into a very short break, but we'll be taking more questions, I promise, on the other side, so do stay tuned.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand.
Welcome back. Let's start digging to all your stock related questions, and we have the first one that's coming in from Bhaskara Madhusudan, who's writing us from Hyderabad, asking about NTPC. He's bought, he says that he wants to buy this for the next 6 months period and wants to know if this is the right decision or not. Vaishali, what would you recommend on NTPC? NTPC this is NTPC, not NTPC Green.
Yeah, sure. So actually, there's nothing much happening, and it's at a support level. Consolidation happening between 330, 340. So as long as these levels are held on, do buy this, and then let's wait for an upside reversal to take place, and you can look for a next target of 380.
Kaushik, who's from Gujarat, wants to know about Nuvama Wealth. His question being if it's a good buy at the current market price. Avinash, what's your view? Should he do that?
No, I think if he's got a 2-year time span, Puneet, he can definitely accumulate. But it's better that he buys it in a staggered manner rather than buying in one shot. So I think good long-term prospects, but valuations are not cheap. So I think it's better to buy it in a staggered manner and keep a time frame of 2 years.
All right. Okay. The next one that we have is on, I think, ZF Commercial. Chetan from Dubai has bought around 30 odd shares. Let's try to pull up the stock and see where it's trading at. There you go. Bought at the levels of 2698. So elevated levels, and wants to know whether to continue to hold this one or what should be the next course of action. Avinash, I'll stick with you for this one. Your view?
No, I think longer term, the company has a very strong product portfolio, but I think in the Q1 numbers were slightly below expectations. So I think numbers have disappointed the market. But longer term, if the investor can hold for the next, say, 12 to 18 months, it's got a very strong portfolio, a very strong parent. So I think it's better that he stays invested, but keep a time frame of 12 to 18 months.
Got that view. But the next question, and this one's on Acutaas Chemicals. Pratap, who's from Andhra Pradesh, wants to know if it's a good time to continue, actually right time to buy for the long term. Avinash, the stock has seen a massive run up. Would you recommend at these levels that it's good enough to buy? What's your view?
No, I think my guess is, Puneet, he should wait for a mild correction because, the stock has moved up quite significantly. So, at these levels, the risk reward may not appear to be attractive. But yes, if it does correct, I think he can adopt a staggered approach rather than buying everything in one shot.
All right. Okay. The next one that we have, I think, is from Kusum, who is writing us from Madhya Pradesh. Inox Wind is the counter that he's bought at the levels of 149, and 60 shares is what he's holding, and wants to know whether to continue to hold or not. Today only there was an announcement that came in with regards to a 200 megawatt turnkey project worth 600 crore that it's received from NLC India. But overall, the order book visibility is very strong. But Avinash, what would you recommend?
I think, as you mentioned, the order book will definitely increase because of this new 1600 crore order. So I think, one should stay invested. Of course, the stock has corrected significantly, but I think downside seems to be more limited now. So, if the investor can keep the faith and hold on for the next 12 to 15 months, I think you can expect a decent risk reward.
Got that view. The next one comes on Bank of Baroda, and our viewer Uma has bought these shares at around 290. So yet again, currently sitting on a loss is what Uma is doing. Avinash, we had this big blip essentially in Q1. The company had alerted before the results came through of that big 5,600 crore settlement, but do you think that's taken the sheen out of this counter? Would you still buy for the longer term, and is it going to be more than a year, because you might see that impact in FY27 earnings, right?
No, I think my guess is, Puneet, most of the damage in the price has already been done. I think if you exclude this one-off adjustment, then I think the bank has done pretty well. Asset quality, credit disbursement, and with double-digit credit growth numbers. My sense is, I think the investor now should take at least a 12 to 18-month call. This is not a bank where there is a huge asset quality issue. I think this one-off adjustment has happened once; it won't occur again. So I think keep the faith and stay invested for the long term. At least 12 to 18 months, one should stay invested at these levels.
Right. The next one that we have is on the IPO that's open today. Manipal Hospitals is what we are talking about. Uma from Bengaluru wants to know whether does it make sense to subscribe for this one. Avinash, any view on Manipal Hospitals, because the valuations, of course, do not look cheap, but is it a good one to subscribe?
I think better to wait for the listing to happen, because in most of these high-flying, glamorous IPOs, the public issue listing is not very strong in recent times. So I think the hospital is very well run. There's no doubt about it. But the valuations, as you rightly mentioned, are definitely demanding. So it's better to wait. One could buy, once the issue gets listed.
Once the issue gets listed, got it. The next question, and this one's on a smaller name, Induco Remedies, and Ram Iyer is holding these shares at 359. So yet again, a counter where our investor is sitting at a larger loss. Vaishali, I don't know if you have a view on this counter, but has been underperforming, down almost 28% in the last 1 year. What would you recommend? Should he average down or just continue to hold?
I would say continue holding, because I'm looking at the longer term chart. 220 should be taken as a stop loss. If these levels break, then it's better to switch. But otherwise, I think this can do well, because deep corrective move taken place and it has got into a trend. So maybe in all likelihood, it can go towards 300.
Got it. Well, we'll slip into a short break, come back with the last stretch of the show and a lot more stock related queries on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि
Hello and welcome back to NDTV Profit. If you haven't already done so, do start sending in your queries on WhatsApp. Also call us to speak to our experts on your stock related queries as well. But the next question coming in, and this one's a stock that's been investors' favorite essentially in the last year up until the Q1 earnings. Then BEL is the one I'm talking about. Biswajit from Kolkata has been holding these shares from almost a year. Avinash, I think this is probably the first time, I think, since this stock crossed that 400 mark that it's trading below that level now. Over the last 4 to 5 quarters, consistent outperformance. Would you mention that it's a good time to look at, evaluate this counter and probably buy more, or something that you didn't like in the result? Is the margin fall essentially so big that the stock should be looked at only post some more historical evidence in terms of good earnings?
No, I think Puneet, first of all, I think the first quarter for Bharat Electronics has always been a slow quarter. In fact, the third and the fourth quarter, if you observe, Puneet, has been one of the best quarters for, I think BEL. So typically execution takes off in the third and the fourth quarter to the maximum level. And I think, if you look at the balance sheet, it's a debt-free business, generates a lot of free cash flow, or sitting on order book of almost 70 to 75,000 crores. So my sense is, the first quarter has been disappointing, no doubt. But that does not mean that growth is not going to kick in. So, investors who want to take a longer term call can definitely think of adding more, I think, from a medium to long term perspective, because this is a well discovered stock. So, you could obviously expect some compounding returns here. But yes, it's a welcome addition to the portfolio if you have a 12 to 18 month kind of time.
All right, okay. The next one that we have is on Eternal. Our viewer Nahayan has bought it at the levels of 313 and wants to know if this is a good time to acclimate. I know that we took this stock in the rapid fire round, but a little more comprehensive view on Eternal if you would like to give, because Avinash, you also said that Swiggy is also a hold, but between the two, I suppose you'd prefer Eternal?
Yeah, I think Eternal has definitely come out with a better set of numbers, more discipline on their operating profitability. And I think, it's clear that given the level of competition and with new players like Zepto now planning to come and hit the capital market, Eternal has got definitely a very sound start. My sense is that, if one were to look at the next 12 to 18 months, definitely the company is moving more towards positive cash flow. And I think the overall market opportunity, even in India, even as of now, is quite, solid and strong. So, from a longer term perspective, one can continue to hold. Any dip can be a welcome addition to the portfolio, but only from a long term point of view.
Got it. Just quickly pull up a couple of counters. Car Trade was one, just came out with earnings about 10 minutes back. Good 45% growth reported in EBITDA, but stock has run up quite a bit. So you're seeing some money being taken off the table right now and probably seeing a downward reaction right now. Of course, the conference call also will be key for this counter. Look at Thangamayal also, just came out with earnings right now 5 minutes ago. Again, a counter that's done exceptionally well. Saw that downtake, now seeing some buying yet again. So up, now down only 2%, reacted with a 5% downtake. But here again, it's doing. So both those counters continue to be in focus on the back of earnings which has just come through. 66% growth in EBITDA for Thangamayal, but yet again, important to monitor both of these counters. Let's also look at City Union Bank, another one which was in focus on the back of results. Anil from Kerala is holding shares at 229. So bought it probably today itself. Wants to know if he can buy more or continue to hold this counter. Vaishali, would you recommend that?
I think you can accumulate the stock with support of 220 because the trend is pretty good. It's likely to continue to do well, and I think it can go towards 250 to 60 levels for now. So yes, accumulate with support of 220.
All right, okay. We've got a caller waiting by. Akash is calling us from Bengaluru. Akash, a very good morning to you. Go ahead, ask your question.
Yeah, hi, good morning. My query is on Canara Bank. I have about 500 shares with me at a 140 rupee per share. I want to understand the medium term outlook, 18 to 24 months. So should I move this money to some other banking name? I have ICICI in my portfolio as well.
All right, okay, got your question. Akash, I'll take this up with Avinash. Avinash, what do you make of Canara Bank right now? Of course, it did post its earnings as well. So, quick take on Q1 numbers as well as overall outlook.
I think Canara Bank has delivered very strong numbers, as I mentioned earlier. I think both in terms of credit disbursements, in terms of the NI, as well as the profit after tax. And I think Q2, Q3 would be quite strong. In fact, my sense is that, the book value is around 129, 130 rupees. And I think the stock definitely deserves to be re-rated. The bank also controls Canfin Homes, which is a very prominent player in South India for housing finance. So clearly, I think if the investor can hold on for the next 12 to 15 months, this is a bank which is clearly undervalued and I think can add a lot of value going forward.
Got that view, Avinash. But the next question, and this one is coming on Philatex India. Again, a smaller counter. We don't discuss it too often. But Radhika wants to know if she can hold on and she can actually buy into this counter now for the medium to long term. Vaishali, yet again, another counter that's done well from the start of the year. How are you looking at this one?
I think a good rally taken place, so it can consolidate at these levels. So in my opinion, 65, 68 should be the level to watch for a new entry and continue holding because the way the stock is doing, very likely it can go towards 90 to 100 levels. So 65 should be the level to watch to add more or buy and hold for the targets.
Okay, the next one is on Bharti Airtel. Vaishali, our viewer, Buddhadeep Bhattacharya from Kolkata has bought 135 shares, bought at the levels of 2121 and wants to know whether to buy, sell or hold. Your recommendation on the charts?
Depending on your time horizon. So trading strategy is hold for 1980 and a long-term perspective, please continue holding and should be there in your portfolio.
Should be there. Got your question, got your view on Bharti Airtel, Vaishali. But the next one, and this one's from Gautam, who's from USA, asking us he wants to enter an AMC counter for the next 12 to 18 months. Avinash, we also had a few questions coming in on the SBI Funds IPO from Arvind as well as from Dubai. I think most of those investors are not too happy with what we've seen post-listing. But first, so a two-part question, which is one of the AMCs that you like, and is SBI Funds one of them, and what's your view on the counter now?
No, Puneet, first of all, the listing price has been a disappointment. But I think clearly, one can't judge a company based on its listed price. So I think my sense is SBI AMC is a very well managed kind of AMC which they have run from a very long time. So somebody who's got a 12 to 18 month time frame should use this as an opportunity to buy it in a staggered manner. Maybe if one wants to diversify, one could look at other stronger players like Nippon or maybe a Prudential, kind of AMC. But typically, I think have a basket of 2-3 companies, and definitely SBI Fund Management looks attractive from a long-term standpoint.
All right, okay. The next one that we have is coming in on Nykaa. Mahesh Babu has bought 200 shares at levels of 230 and wants to know whether he can continue to hold this one. Says that he's a long-term investor. He's already sitting on profits of around 90,000 rupees. Avinash, it's been a couple of good quarters for this one. Plus the business update for Q1 also suggests a strong, yet another strong quarter. Plus 3-year CAGR has also been at that 25% for the top line growth. What would you recommend, Mahesh Babu? Should he be a little more patient and continue to hold this one?
Yeah, he can definitely expect better quarters, in this financial year. But I think it's better that he takes off at least 15 to 20% of the profits because he's entered at a very attractive level. And I think he's made a decent amount of profit. So at least 20% profit booking and the rest he can hold for the next 12 to 15 months.
Got that view, Avinash. The next one. This one's on Bajaj Finserv, yet another counter we've not spoken too much about. Suresh, who's from Bengaluru, actually bought these shares recently at 1900, so actually at the current market price itself. Vaishali, on the charts, anything that you see, what could be the next target?
I think, yes, look for a target of 2000 because it's doing quite well and the trend should continue.
All right, it's time for our second rapid fire round now. Let's try to keep our answers as short as possible. The first one that we have is coming in on Z Entertainment. Sivakumar is holding 10,000 shares, bought at the levels of 115, sitting on a loss of around 70,000 rupees. What should he do? Avinash?
I think he should continue to hold for the next 12 months.
Next one's on Sula. Viewers bought shares at 280. Stocks trading at 166 odd. Avinash, should he continue to hold?
I think Sula you can avoid.
Okay, the next one is on HFCL. Our viewers bought 300 shares at the levels of 180. 6 months view and target on this one. Vaishali?
Yes, so 170 should be a stop loss and look for a target of 220, 250.
Between JK or Apollo Tyre, what's a better pick, Avinash? And is now the time basically to enter? It is Jeshi's question. We've seen margins erosion basically in this quarter because of crude oil prices amongst others. Would you recommend an entry now?
Yeah, I think one can start buying in a staggered manner in Apollo Tyres. I think has got a very large exposure to the car and the truck segment, which is showing very strong growth. So Apollo Tyres from a long-term point in a staggered manner.
Okay, the next one's on Walkhard Pharma. Is this a good time to buy? Chandrasekhar from Hyderabad wants to know. Vaishali, on the charts?
So I would say buy with the support of 1800. It's showing strength right now and look for a target of 2400 to 2800 for now.
Nagesh has a question on All Cargo. He's bought these shares at 18 rupees per share. Avinash asking what he should do with his 787 shares now. What would be your view?
No, I think he should continue to hold. There was a demerger of I think 3 companies. So along with this share, he must have got other 2 shares. So this company handles the multimodal kind of business. So continue to hold.
Okay, the next one's on Gabriel India. Our viewers bought it at the levels of 1098. Continue to hold, sell. Vaishali?
Gabriel, I think it's 1411. Continue holding.
The next one's on TVS Motors. Our viewers actually bought these shares at 1900 rupees. So very attractive levels. I think we took Vaishali's view, but what would you recommend here as well? Avinash, it's an expensive stock, no doubt, but should he continue to hold?
I think he should continue to hold. His margin of safety is very strong, and I think the numbers in the coming financial year should be equally strong. So continue to hold and ride the momentum.
Okay, the next one that we have is from Satyan. He is holding Indus Towers at the levels of 400 for a month or so, and says that he was expecting this to be 470 by now. Wants to know whether to continue to hold this one. What should be the target and stop loss, Vaishali?
So as I mentioned, the trend is down. 370 should be taken as your stop loss and hold. If the view goes right for a bounce back, look for the first target of 405 and after that 420.
Also, Vaishali, on HDB Financial, I think the last couple of quarters the earnings were decent, but after 740 it's falling again is what the observation is from Kavita. What's the view on the stock now?
So the stock did get into a trend. Again, it is a regular profit booking and retracement. So as long as 660 levels are held on and we see a bounce back coming in, I think there is a good chance of this going towards 780, 800.
All right, the next one is on Radico Khaitan. Our viewer Vijay from Chennai wants to know the short-term target on this one. It's up 2% on the back of numbers, but Vaishali, what would you recommend on the charts?
So well, short-term it's very difficult to say because it's already run up. So maybe 4500 should be the next target because it's already in overbought.
United Spirits, our viewer Mahesh is holding shares at 1280. Wants to know if it's good to book up profit on this right now, Avinash. What would you recommend?
I think he should continue to hold. I think the second and third quarter Puneet would be much better. Numbers which have come in now have been quite solid. So continue to hold.
Okay, TTK Prestige is the other one. Dr. Lavanya from Eluru is holding 400 shares. What are the levels of 714? What should be the target and stop loss for this one, Vaishali?
Stop loss should be 640 and continue holding because there is a near-term resistance at 700. So once you see a close above 700, it can go to 750, 780.
Okay.
The next question coming in, and this one's on Godrej Consumer. Our viewers bought shares at 1079, holding 50 shares. Wants to know what he should do with this counter now, Vaishali.
It's gradually getting into a trend. So I think this can go towards 1100 to start with. and above 1100 we can see the targets of 1160, 1200.
Okay, Pradeep from Hyderabad is holding Godrej Properties 40 stocks at the level of 1600. Wants to know if he can sell this and buy Titan. Avinash, what do you recommend that?
Yeah, I think he could look at Titan, but the time frame needs to be 12 to 18 months.
Alright, okay, that brings us to the end of this rapid fire round. Avinash and Vaishali, thank you so much for taking out the time and helping us, with all those stock related queries that we discussed. But with that, viewers, if by the way we've missed your queries on this one, you can of course tune in at 2 p.m. in the afternoon edition. But completely out of time, do stay tuned in. KYC comes up next.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you very interesting companies, newly listed companies, or companies coming recently on their earnings also. But today, I've got you a company which was listed quite recently this year itself. But before that, try to guess this. It's a Rajkot-based manufacturer of precision components and assemblies as well. Hints, right? Second one. It was listed in March 5th, 2026, but the mind-boggling figure is the returns which have come in. Stock is up 3 times from its listing price, and remember, it was at a discount. So what a strong momentum. Very rare to see that in just a matter of 3 to 4 months. And also, Nippon India Mutual Fund has 7% stake in this company, and of course they are known for their small cap fund which has outperformed. But what's the company all about? We'll try to understand that, and that is Omnitech Engineering. This is the company which we'll talk about. But why are we calling this company right now? And just to give you a caveat beforehand, the company has not come out with its Q1 numbers. It's likely to come in this coming week or the next week. So it's on a silent period on a lot of numbers. But nevertheless, we will ask the right questions in KYC, the demand trends and the client confidence, how things are shaping up. We'll decode the precision industry also as a whole, as why Dalal Street is giving a premium valuation to it, growth triggers in this segment, and which segments actually out of which are doing well in the trade. Also, we look at the capex outlook. You know, the company has done its IPO. There has been an expansion at play. We'll have a chat on that. Apart from this, another key question we'll be asking the management or a group of management today. There are 2 guests, of course. We'll try to understand the capex outlook and the progress as well, especially on their expansion plans, and there's an angle of Hyderabad also. So these are the key questions we'll be actually focusing on for Omnitech Engineering, and overall how things look, especially the inorganic expansion and the geographical expansion. This is where a little bit of interest is coming in from the folks interested in this company. But let's understand first, ये कंपनी करती क्या है? राजकोट की कंपनी, and trust me, Rajkot as a whole has a lot of precision manufacturing companies. Let's go back to the history. It was started in the year 2007, almost 18-19 years it's been for the company. Also, let's look at the other key factors. They manufacture the high precision engineered components and assemblies. It's nothing but those smaller elements which focuses on the manufacturing setup. This was listed, of course, on March 5th, entered the energy sector in FY 2016, and as it's progressing, more new verticals are being added. They established their logistics warehouse in Texas, US, because there is a significant chunk of revenue comes from the USA market. We'll understand that. And they are operating in 3 manufacturing facilities in Rajkot, in, of course, industrial area belts. So that's something which we talk about the company. Also, the annualized machining capacity is roughly about 2.65 million man hours, to put things in perspective. Also, one interesting snippet about the company I would like to mention is they serve more than 256 customers. Look at the number, it's 24 countries, it's an international player. And of course, it's quite nascent, this industry, in the way India is placed is something which we'll talk about. Certifications in these new growth areas is very much important. That means is धंधे में और काम आ सकता है, and already these certifications will open up more gates, especially for foreign orders. The unit of length, the micron. Before we start discussing it, I'll just explain you what does micron mean in precision segment. This is almost 1,000 of a millimeter. It's this thin small. Let's understand what this micron is, and we compare that with the company. It's a human hair that's around 50 to 100 microns wide. You can see, you can hardly see it in the graphics itself. It's just one strand of hair. Now, precision manufacturing means something even lesser than that. That means you go more into the details. Let's look at the other relevance of micron. What happens? Omnitech Engineering is doing to 5 microns. They're going more dilute, more thin on it. Just imagine it's lesser than a strand of hair. Also, one interesting data is on the red blood cells. They are between 6 to 8 microns. So the company is doing lesser than that. This is how the precision industry works. The key clients, these are the names. Of course, you've heard about Suzlon, but the international clients are big, especially with a large order win from Weatherford. Motion control, we have Push Industries and CAGN, and these are other third segment also I'd like to point out, where we are seeing a good client momentum. Of course, you must have heard about this local name Jyoti CNC or the Jyoti Group, but these are international clients as well. So they have clients, they have interestingly a good revenue contribution, and the North America segment, this is what I'm talking about. That's why they have a warehouse in Texas. 53% of the total revenue comes from this segment. Of course, the Indian part also is roughly 25% and very minor exposure in Europe and UK. So an interesting setup coming in. The order book, that's roughly 3,000 crore is the order book, and the industrial equipment segment, that is where the majority of this order is coming in. That's roughly 74%. And as time passes, new segments come in, and this diversification in terms of order book is also likely to be there. That's as per our analysis and estimates. But what may work for the company? Company के लिए क्या positive trigger हैं? Promoter has a strong domain expertise in it. Even the management also I saw is pretty good. The D Street is giving premium to this precision theme. So likely, sectoral, you could say tailwinds are there. Marquee clients they have, so cross-selling becomes quite easier in a business scenario like this. Bullish growth outlook from whatever public information the company has shared in the fourth quarter itself, and also the issues which might be there for the company. The valuations remain elevated. Numbers are going to come out in some days. There might be some volatility in the stock, higher receivables from the last 2 years, so we'll try to understand that. But remember, a lot of earning comes from US. There's an exposure to geopolitical risk. This is the point which I mentioned. Also, another reason what may not work for the company is the lack of analyst coverage. It's a new IPO, that is why maybe, but nevertheless, if more analysis comes, you'll understand the models more, and that is why we try to get these companies initially in KYC so that you have an idea of what can happen in the stock or the sector. But let's move on and understand the KYC ratings. How do we judge a company in a KYC show? We have income statement, balance sheet, cash flow. Largely for this company, we have taken the data from RHP since it was recently listed. Return ratios, I'll explain you a very important theme today, that why return ratios are suppressed, especially for a new IPO company. Shareholding street cat, take it with a pinch of salt, it's just been 3 to 4 months. But valuations, we'll try to understand, is it sustainable right now to enter the counter or not? And the outlook, what does it mean for the industry and the company? But let's start with the income statement, and the growth is very strong. Look at the 3-year CAGR numbers from FY24 to FY26 we have taken, and the numbers are 35% plus, beat EBITDA, PAT, revenue as well. The Q4 numbers were also decent sequentially. A little bit of minor adjustments there, but nevertheless on the long term the financials have been very strong, and this is maintained that 33 to that 36% mark. Margins have been maintained. So net till FY26, nothing on the income statement. It's been very strong, so I'm going to give this a thumbs up as well. Balance sheet, the company did use its IPO proceeds also, and these numbers, of course, the FY26, the Q1 or the H1 numbers, when it comes, as if company comes out with, there we'll see the lower side of borrowings. The net debt ratio has come down as well, and the cash element is there for 164 odd crore rupees. So maybe it can be helped in future expansion, be it geographic or inorganic as well. So I'm going to give this balance sheet a strong thumbs up as well. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows. And remember, earlier I had mentioned to you that the receivables on the higher side, and there might be issues because of global exposure, geopolitical risks. Because of that, variation can be there. Of course, these numbers which you are seeing, there's a very limited time space in the listed space. It's just been 3.5 to 4 months. We need to give it more time, but I want to understand more of this data before giving a comment on the cash flows. As of now, let's keep it neutral right now, but definitely we'll be tracking this as well, especially on the receivables front. Now you must be wondering why I'm giving a strong thumbs up for the return ratio. So whenever an IPO comes, there is the equity base that rises. So when you see the ROC, ROE numbers, they stand to be, under pressure. Otherwise, this is a largely a 20% plus ROC, ROE business, and this is from my industry analysis, right? So let's have a look at the ROC also. The same story comes into play, but this time they are maintaining that 14 to 16 odd percent. That means the return ratios are strong. And when you analyze a company who has just come from its IPO, take the return ratios with a pinch of salt, because it's basic mathematics. So I have explained you that, but as of now, return ratios is a strong thumbs up from me. Let's talk about the shareholding, and largely nothing has changed. A minor sell by the DIs, but things remain same. And of course, the exposure is decent enough, but of course, analyst coverage is not there. So let's give it more time. And it's a neutral rating as of now for Omnitech Engineering. But let's talk about street cred, and this is where we see the numbers have been very strong. Whether you have applied through the IPO or even after the IPO, you have made money in both the cases. From the IPO, the stock is up 2.6 times. From the listing price, it's up 3 times as well. Despite a discount listing of 11%, we have seen sustained buying coming in. Is there a valuation mismatch, or is there something more to the stock? And that is why a lot of bullishness is coming in the street. So that's why I've given this a thumbs up as well. So remember, when a stock goes up, the valuations do come under question, and this theme as a whole is getting a valuation premium in Dalal Street. Currently the 12-month trailing P is at that 93 levels, and of course when it started in the IPO it was around 66 times. Already a 50% premium up move we have seen in this segment. But will it sustain, or is there something in the earnings which might coming and we can see a little bit of volatility in the counter or profit booking? That's what we need to wait it out and watch. So as of now, the valuations are not attractive, so we're going to stay out of this, and I'm going to give this a thumbs down. Let's talk about outlook, and that is where the street is also very bullish on. The commissioning a new manufacturing facility in Hyderabad. We need to understand what are the timelines for it and the expansion. These are all IPO proceeds, by the way, and the company has sufficient cash balance as well. Thirdly, recently they set up a fabrication line with almost 7,200 million tons per annum capacity as well. Lastly, I'd like to point out the inorganic acquisition, especially for the manufacturing abilities. A lot of R&D is required. Already they have approvals, so it makes sense for them to acquire more inorganically, especially in this segment. So it's a strong thumbs up for the outlook. But let's try to understand what are the ratings which we should be giving to the company. And we have taken this analysis on the timelines as well. I really like the income statement and balance sheet. Cash flows, there are a little bit of concerns on the receivables, but we need to take this with a pinch of salt. These are business cycles also, and they move around. Return ratios, if you adjust with the IPO analysis which I gave you, it is strong, and that's why the industry is commanding premium valuations. The stock has tripled from the IPO or even the listing price. That is why the valuations become a big concern for me as of now, right now. Let's wait it out, the earnings. These things will change and outlook remains strong. So let's add up the total ratings for Omnitech Engineering. It comes to 6 out of 8. This is the number which I'll give, slightly higher from the average numbers because there is a good rating performance by the company. But let's try to understand the performance from the management also. What's their view looking like? We have Paras M. Parekh. He's the whole-time director and the CFO of the company, where Paras will talk about the financials, and he had already held leadership positions in biggest names you can talk about with Kotak or even HDFC Bank. But there's another management also joining us. We have Bhavin P. Acharya. He's the Chief Revenue Officer of the company's sales revenue. That's what he looks after, and he has leadership positions in Good Luck Engineering and Ambika Steels as well. So the conversation is going to be pretty interesting. The company is coming for the first time in KYC, but before that we'll take a small break and we'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. we're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the
Welcome back to Know Your Company. We're joined in by Paras Mukundrai Parekh. He's the whole-time director and CFO at Omnitech Engineering. Joined in also by Bhavin Prahlad Acharya. He's the Chief Revenue Officer. Good afternoon, gentlemen. It's always a pleasure to have you. And just a caveat, the company has not come out with its earnings, so we will be talking a little bit of less about numbers, but much more about the industry and the company as a whole. But let's start with Bhavin Bhai. I want to understand the demand trends in the client confidence. How does it actually look? And also, if you could just give a little bit of understanding about your company and how it is placed in India's story of precision manufacturing.
No, perfect. Sharad, first of all, thank you for having us on this NDTV Profit. So we really appreciate that. So when we are talking about the current demand trends and what we look at, see, basically we are into high precision engineering and integrated manufacturing solutions. And having said that, customers today are looking for more strategic partners rather than the individual process suppliers. So Omnitech today is well positioned with end-to-end capabilities, including precision machining, surface treatment, kitting, assembly, testing, and even engineered fabrication support. And everything is under one roof. So this integration model really helps to improve quality. It also improves to reduce the lead times, removes bottleneck of the customers. And this particular, aspect gives a very immense confidence to the client as to, Omnitech gives this complete solutions to them. So this really helps, yeah.
Right, so that's an interesting take coming in for the company, and of course Dalal Street is giving a lot of premium valuation to your industry as well. Parasji, I have a question for you also. The capex outlook, after his IPO proceeds coming in, of course you will be putting it out in your expansion. If you could just give us a revision of how that thing is playing out, the capex outlook ahead and the progress also, especially on your plans. There's a Hyderabad angle to it also. There is an expansion going on in Rajkot. If you could give us a bird's eye view of that.
Yeah. See, if you will see, then we have already undertaken some portion that we have planned in FY26, which you will see the result increase our machine hour capacities from 1.7 million hours in FY25 to 2.6 million hours in FY26, which representing an increase of approximately 50 to 52% of the growth in the capacities. Currently, yes, we are deploying the IPO proceeds capex, which will utilize for the development of our two new world-class manufacturing facilities in Chhapra, Rajkot. Along with, we have a certain investment which we are doing in our existing facilities. So all over, we are planning that capex, which is expected to complete by the Q1 of FY28. And in addition to that, we have already acquired 2 land parcels, out of which one is at the Sanand GIDC Ahmedabad, which will support for our future expansion and plans. So, and regarding the Hyderabad facility, at present, it's very small facility, and in which we are looking for some of the R&D to do there. So, yet to plan for the productions and everything there in the Hyderabad facility. And for these all over investments, it is significantly enhance our manufacturing capacities, technological capacities, and operational efficiencies, which will enable to support our future growth across multiple high level of sectors.
Okay, so that's the entire details coming in from Parasji. But Bhavin Bhai, Parasji, just could wait for a minute. We have a small break and we'll be right back just after that.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े vandeBharatam.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches.
Welcome back to KYC, and we are back by a very short and precise break. And speaking of precise, let's get back to precision industry. Bhavinji, I wanted to understand the expansion plans because there are two things which stood out in my analysis. The first thing was the inorganic expansion, because there's a lot of tech involved, detailing is there, and now after IPO proceeds your cash balances are also high, and there's another angle of geographical reach going up also, you had mentioned in your strategy. So if you could just help us out with it, how both will play out, inorganic acquisition as well as geographical expansion.
Yes, so basically, if you see what we have been doing, so of course, we tend to do more business in the export side of it. And of course, we are, expanding, or rather, we are doing quite a lot in the American markets. But we have been steadily growing and expanding ourselves in Middle East, in Asia Pacific, in European markets, and also looking for different segment-wise also, that looking into different areas of applications which are mission critical or safety critical, going into various business lines where we feel that the precision engineered solutions are very much required, and Omnitech is completely geared up to look into how to capitalize on those different segments. So that's basically what we work upon, and that is what our strategy going forward. As far as inorganic growth is concerned, yes, we are evaluating different areas as to what can really help us to achieve our future growth trajectories, and that is where one area, probably it is little bit early to talk about, but we are in discussions, we are in evaluations, and we'll see in future as to how we come up with the inorganic proposals as well.
That's a very interesting point, and we'll take that. But Parasji, I want to understand, good business comes from America, there is geopolitical tensions, little bit of pain in the receivables also. You're a man of numbers. I don't want any numbers from you, but is there a little bit of stress here in the receivables, especially from your global clients because of geopolitical risks? If yes, is there any mitigation at play?
Actually, there is no any risks, as we have a big OEM customers in our buckets. And if you will see the all over, then we have more than 90 to 93% is the ex-works Ecoterms. So once we dispatch the goods from the Omnitech premises, then the ownership will confirm to the customers. So at end side, there is no any risks, and all are the OEM customers. So payables, receivables will be on time. As they are the big OEMs, so we have a net payment terms to net 30, 60, and 90 days. So it's showing the elongated receivable cycles, but all are the good.
Okay, so marquee customers, receivables, not that much of a problem. But Bhavin bhai, I want to understand the order book setup. It's around 3,000 crore plus. Any kind of growth outlook from, we can expect the next 2 to 3 years, 5 years. We don't have to give us a number, but any ballpark range. And out of this, which segment is showing a really good, order outflows?
Yes. So when we look at basically, the order book will definitely remain strong. There's no doubt about it. One of the reasons, of course, the existing business is also growing. But apart from that, as we are entering into new areas, new segment lines, that particular business will also propagate into, order book and so on. So I'm pretty confident as far as the medium term and the long term growth trajectory is concerned, and we will be able to, relatively grow from where we are today.
Right.
And
Paras, I have a very interesting last question to sign off with. This is nothing to do with the industry or your company, but a lot of startups are actually listening or hearing to this show as well. They are looking at you, and they're involved in the precision manufacturing space and even the assembly space. Is there any guidance for these startups, or if somebody wants to do a startup or make a company in your industry, what they should do?
Say all over, if you see, this is very good sectors, and we are in the niche market. Majority we are into the non-automotive segments, and there are lots of entry barriers for the to be a part of these industries. So just I will say all the best and keep it up for these things.
All the best, keep it up, and of course the pie is there for everyone, and it's increasing for Indian exporters.
Yes.
Thanks a lot, Bhavin and Paras, for taking out your time and giving important commentary on the company, and that also in a silent period. Thank you very much, gentlemen, for your time, and best of luck for the results as well. So that's the management of Omnitech Engineering, and stock has almost tripled from its IPO price, and we try to understand India's precision manufacturing story, and yes, it's just at an inflection point. Interesting, right? So for these interesting stories, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। fan?
Hi, I'm Tamanna Inamdar. Watch me on
Benchmarks remain resilient despite the mixed geopolitical cues and higher oil prices. Well, Nifty as well as Sensex hover close to day's high, with the Nifty perched above despite the mixed geopolitical cues and higher oil prices. Well, Nifty as well as Sensex hover close to day's high, with the Nifty perched above 24,200 levels. IT, metals and FMCG lead the gains. Defense as well as real estate on the back foot today. Oil prices rebound, snapping a 3-day losing streak as renewed hostilities in the Middle East reignited the geopolitical tensions after several days of relative calm. L&T shares gained over 3% after the engineering major posted better than expected first quarter earnings and reaffirmed its FY27 growth guidance, reinforcing confidence in its execution and order pipeline. DCM Shriram shares surged after the company posted a more than 6-fold jump in the first quarter profit. Revenue growth remained steady while exceptional gains boosted earnings, driving strong investor optimism. As Nadir Godrej prepares to step down as the chairman of Godrej Industries this August, passing the baton to Feroz Shah Godrej, he says the group's next phase will be driven by innovation while staying rooted in its long-standing values and customer-first philosophy. Exclusive chat lined up on the show. Hello and welcome. You've tuned into Markets at 12 and I'm Nisha Poddar. And yes, markets in good shape today despite the same amount of geopolitical stress points that we have been really dealing with. So if you really take a look at the crude oil prices, while it's at elevated levels today, Nifty 50 holding on to the 1% gains and above 24,200 levels is really coming in as a strength in the economy as well as the market, and also decoupling to some extent from the oil price movement on a day-to-day basis. So that's the most important takeaway from the market momentum in trades today. When we take a look at Nifty 50 and the contribution of the sectors as well as the companies, well, it's a wide range of participation. It's broad-based in nature because the biggest gainer is coming in from HDFC Bank, which had been under quite a bit of, a struggle for the last many trading sessions, but now is coming back with force, almost 50 odd points being added there. Infosys, Larsen and Toubro because of the good numbers, and Bharti Airtel and HUL, after seeing a huge amount of selling pressure today, is really seeing buying from the lower levels that it touched yesterday. So looking at this, it's a broad-based participation coming in, negligible number of companies really showing the momentum towards the downward side. When we talk about the sectors at play, of course, high beta metal space, IT continues to be the top gainer even today and yesterday also. In an otherwise weakish market, it was the top gainer. On the downside, defense, energy as well as real estate are some of the minor, ones which are in the red zone. So that's the overall snapshot of the market. Huge amount of momentum being seen today and a very consistent gain of 1% is being maintained by the key index. Feroz Aziz, the joint CEO of Anand Rathi Wealth, really joins in. Feroz, always a pleasure to chat with you. What do you make of the exuberance that the market is really showing? Of course, the crude oil prices are still elevated. CEO of Anand Rathi Wealth really joins in. Feroz, always a pleasure to chat with you. What do you make of the exuberance that the Washington, also the Middle Eastern countries really are huddling together to find some resolution? So some of these are better cues, but there is nothing definitive positive for the market to really be in a good shape today.
Good afternoon, Nisha. I have been saying, and boringly so, that the market is going to be very buoyant. The news can get worse, but the market's reaction is not going to be as it used to be in the month of March, especially after the weekend war. So, would the markets fall again 3, 4, 5%? That's always likely, and that's what the markets have shown for the last 26 years of this century. If you see, markets average have fallen 15% every year. They find their own reasons. So, what I'm trying to say is there's a lot of volume which has been traded at 24,000. Markets might be at the same level, but how much volume has traded on that? Everybody has got an opportunity to sell if they wanted to. They've got opportunity to buy if they wanted to. April, May, June, and almost July expiry, 4 consecutive expiries. We have seen 24,000 plus or minus 100 or 200 points on Nifty. Does this happen very often? The answer is no. Anytime market spends 4 expiries at the same level, it implies that if Feroz wants to sell, he had enough time to sell, right? Unlike in silver, right? If Feroz wanted to sell silver in January, did he get the peak price? No. If he woke up after 2 days, he would have got 10% lower than the peak price. So market solidity depends on how much time it spends on a specific place. So the buoyancy is coming out of the time spent, one. Second, what is going to happen is if you look at NSE 500's free float and mutual fund AUM, both active and passive, and see it as a percentage, you would be surprised that the percentage of mutual fund AUM as a percentage of the NSE 500's free float has gone up substantively over the last 3-4 years, which implies your dependency on FII has been high, but that will keep reducing as this ratio keeps going up. Nobody in the country tracks that ratio. I've seen this ratio and you'll be surprised how the mutual fund AUM as a percentage of free float has gone up. Dependency on FII has been high, but that will keep reducing as this ratio keeps going up. Nobody in the country tracks that ratio. I've seen this ratio and you'll be surprised how the mutual fund AUM as a percentage of free float has gone up, and our reliance on the foreign money has been low. In spite of a 1.5 year selling, you still show no sharp drops from 26,000. That's the reason.
Feroz, in fact, that's the big takeaway coming in, that the self-reliance in the Indian market, where the domestic institutional investors and the retail participants are really ascribing the value which the FIIs really fail to, because we know the ground reality. So that's really coming out and decoupling from a day of elevated crude prices and Nifty 50 not going with the mood swings. Looking at this, one particular theme which really emerged in the market yesterday was the consumption stock, especially FMCG as well as retail, where 3 of the companies really showed poor either guidance or poor margins and volumes, and therefore the market really punished them in yesterday's trade. Looking at this scenario, and while the inflation concerns still continue because crude is above $85 per barrel, how do you look at the FMCG and consumption space from the sector perspective, demand perspective, and the stock perspective?
Nisha, I think I've expressed this. FMCG have been negative. The reason why to be negative is the rich valuation is not because of the expected growth. See, one is a PE ratio being high, but PEG being so high, growth is not there. Of course, I have interacted with some really large FMCG listed companies as their CXOs could be my clients. They themselves are not so bullish on the growth number. And for the last few years, do 60, 70, 55 Ps are justified? Maybe in an industry where there's growth of 30% expected, then PEG is just 2 on a 60P. But on a 60P with a 10% growth at best, you're still looking at a PEG of 6. No, that's ridiculously high valuations, both on the PE and the PEG basis. So if you see rich valuations, volume growth is still modest, margin expansion largely reflected in the price already, limited earning surprises. I think that's why you've seen some punishment. And I would be negative on FMCG. The reason why they're richly valued is because they have got some reasonably good passive ownership from indices, which is not free float. And that's why you see they keep going up. They've remained up in spite of growth not substantiating those valuations.
All right, so the long-term consumption's growth story of India is what is keeping this particular space elevated, but duly also punished on bad numbers or guidance. Feroz Aziz, always a pleasure to speak to you. Thank you so much for stopping by for NDTV Profit. Thank you. All right, it's time for a short breather on markets at 12, but come back for more from the corporate developments as well as market action on the other side.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the
All right, let's shift focus on 5paisa Capital, which is acquiring 100% in Giscard Data Tech through a mix of cash and share swap. The stock is down almost 0.5% in trade. But if you really take a look at the 351 rupees share price, it is only less than 50 rupees away from its 52-week high levels. Let's get chatting with the management of the company to understand the rationale of this particular acquisition. Gaurav Seth, the MD and CEO of 5paisa Capital, joins us now. Gaurav, always a pleasure to speak to you on NDTV Profit. Many congratulations on this acquisition worth about 121 crore rupees. Can you give us a sense on the rationale and the growth that this particular acquisition is going to add to your company?
Hi, thank you, Nisha. Thank you for having me here. Always a pleasure as well. We're very excited about this acquisition of Giscard Tech, which is Trendline. There are a couple of reasons why we think there are strategic rationale when we've taken the decision and the board has approved this acquisition as of last night. Number one is the fact that when we look at our users, and this is something that we have learned over the last couple of years, they are just not looking for an execution platform. They're also looking for insights. They're looking for data. They're looking for analytics. And Trendline sort of bridges the gap for us. And with this acquisition in place, along with our recent OpenAI partnership, we're trying to do two things. And one is trying, before someone makes an investment, whether they're investing in a mutual fund or they're taking a trade, trying to give them the best experience possible in terms of decision making. And that, with that, I think Trendline, the Trendline capabilities across the entire spectrum is pretty good. I mean, they've been in the market for close to 9 years now with a lot of relationships. So that comes into our toolkit. That is number one. And number two is all of the advancements that we have done on AI in the past 2 years, as well as our recent partnership with OpenAI and getting the latest models, coupled with the work that Trendline has done, we're bringing all of these three things together and provide it to our users. So we are very excited. I think it's just the start. It's the beginning of a new 5paisa.
Right. So Gaurav, very beautifully put. In combination, you have been piecing together your AI strategy. What is the growth momentum that you're really looking at in medium to long term with piecing together the acquisition, OpenAI, as well as the in-house capabilities?
So it's early days. I mean, the Trendline journey will start only after we have proper approvals, regulatory approvals in place, etc. But as the OpenAI partnership is concerned, even pre-OpenAI partnership, we've been working on advancing our AI capabilities. Actually, we were one of the first brokers last year to start an MCP, an MCP version of 5paisa, and when we partnered with Claude and made it live for our users. So, while I can't make forward-looking statements, but we're seeing exciting adoption of AI features on our app. And as we launch, very soon as we launch a new platform, our vision is that AI is integrated across the entire customer journey. So from onboarding to portfolio analytics to picking a stock to analyzing a portfolio to telling you, should I get out of this particular trade, how to hedge it better, and so on and so forth. So that's really what it is. It's it's the entire journey. So we're just starting on it, and we've got very encouraging adoption in the past few months that these things have been live.
All right. So Gaurav, in the application space, India is expected to be also showing a huge amount of momentum when we talk about the entire AI layer and stack. So you spoke about this, but we have to also talk about numbers. You're a listed company. So what is the timeline you're looking at getting all the approvals and finally integrating the new acquisition? How are you going to fund this? Because it's a mix of cash and equity. And on the other hand, from which quarter of which financial year it can start showing some performance-related material numbers on your balance sheet?
So as far as the timeline of the acquisition is concerned, we are forecasting. Obviously, we cannot. It's not deterministic, but somewhere around 3 months time frame, about 10 to 12 weeks from today. Where we will have all the necessary regulatory approvals, all the compliances in place to formally, get Trendline as part of the 5paisa family. I think your second question was when we start seeing some of these initiatives kind of play out. I think it'll start to play out very soon. As I said, it's not just Trendline. Trendline is part of the journey. I think the larger play for us is, enhance customer experience via data and AI, and that thing is already started. I mean, that journey is already started. But I think in the next few quarters, in the next 2 quarters, we see some actual material benefit accruing to the company via what we are doing right now. As far as funding is concerned, the funding, this is being funded from a balance sheet. So even pre-rights issue, we had north of 600 crores on a balance sheet to fund this acquisition. So it's really coming from 5paisa Capital's balance sheet. That's how we're funding the acquisition.
All right. And finally, before we let you go, Gaurav, just a word on how are the discount brokers really focusing on the traders for growth, and how is this industry dynamic playing out for you?
I think my view is and what we are seeing is a lot of hyper specialization in the space, where just a mere execution platform is table stakes. I think the execution has to be the highest quality. So there's latency matters, and very fast trades and so on and so forth. But also whether it is investors or traders, they're demanding more from a platform, and that's exactly where we are headed. So as we re-platform, we're looking at a host of new features, where a trader can go deep, has everything under his control and under one roof. So that is the trader segment. On the investor side, as I said, a lot more richer data analytics set coupled with AI. Also do with, coming back to the acquisition, we'll be able to do things like, specialized baskets, goal-based investing, and so on and so forth. So that's the direction we are going. That's where the industry is headed.
All right, Gaurav, all the best for this acquisition and integrating it and the growth in the AI strategy. Thank you so much for joining us on NDTV Profit. All right. Moving on to another corporate, and a large corporate at that, as Nadir Godrej really steps down as the chairman of Godrej Industries in the month of August, in a few days from now, well, handing over the baton to Feroz Shah Godrej. In an exclusive chat, he says that under the next gen, Godrej Industries will see innovation-led growth across all its business verticals. Listen in. Sustainability, of course, it's for climate consciousness, and that has been a group ethos as well as value for several decades. Tell us about what really is the thinking behind it, and will this value really continue with the next generation as well?
Yes, we have been interested in sustainability for a very long time. We know that businesses are not just for profit, but to look after the entire ecosystem, and the environment is a very important part of it.
Yes.
And my uncle Sorabji Godrej was very, very interested in the environment. He helped preserve all our mangroves, put them in a trust, and he also helped Indira Gandhi to set up Project Tiger and set up the office of WWF India. So we have a long history of sustainability,
Yes.
and we are very sure that it will continue. My son Burgess studied environmental science, and he takes it very seriously in taking all kinds of business decisions.
When we talk about sustainability, it's not just about the environment, but also about, the ethos of profit with purpose.
Right.
What is your sense on that, and how does Godrej, which has really tided over several cycles, over many decades, almost a century, how is this particular bit important for any company which is built for a sustainable value creation?
Right. And many people think that there is a cost to being sustainable, and therefore they're reluctant to do that. But of course, there's a very big positive also that it preserves the ecosystem,
Right.
whether it's environmental sustainability or social sustainability, looking after society, making sure that there's no child labor, no exploitation. DEI is very important, and for a long time our group has been trying to include all kinds of different people. That helps the business grow, helps the environment sustain,
Yes.
and if the environment, by environment I mean both the social and the natural environment.
Yes.
So it's important for the business, but also people sometimes worry that there is a cost to being sustainable. But when we are smart and we think things through, we find that we can take decisions which are good for society, but also good for the business.
That's right. Both have to be in the winning position in this particular
Absolutely.
case. All right. And Mr. Godrej, now you're stepping down, and it's like the fag end of your very long-lasting career at Godrej Group. Now, looking forward, how is the next generation going to take forward the mantle of the ethos of Godrej values, as well as also the growth propensity of the group?
Right. The younger generation is also very keen on the Godrej values, whether it's employee centricity, customer centricity, environment and social sustainability, and they know that it's good for business and they're very serious about it, and I'm sure they will carry that on. Also, the business has always had an ethos of innovation.
Right.
So we feel that our values have persisted for a very long time and should persist for a very long time, but we also have to be innovative, see how things are progressing, and try and follow those trends. Unfortunately, the world is moving at a very fast pace, and it's getting more and more difficult to keep up with things, but I'm sure that the next generation will do their best.
Right. And when we talk about innovation, which sector do you think can really have a lot more innovation coming in from Godrej Group?
So all of our sectors will have a lot of innovation, and
Right.
properties, consumer products, chemicals is a big sector, agriculture, oil palm is growing very fast, and we think it's very essential for India to stop importing oil as soon as possible, and we feel that the industry is in a position to do that. Some people feel that oil palm is not a very healthy oil, and it's actually quite healthy, and you can make many products out of it, both specialty products, which have a special use, as well as palm olein, which is as healthy as any other oil. And some people think that oil palm is not sustainable, but in India we use only drip irrigation. We do not cut any forests. We use agricultural land, and we make good use of all our waste products. So it's actually more sustainable than field crops.
Right.
And we think that that will be a great potential. And we also think that things like AI and all will be important in the future. And we are pretty sure we'll play our role in that, as well as Godrej Capital will try to finance all these new industries.
All right. And biggest growth driver as you leave Godrej Industries, according to you?
I think we will, as long as we are customer centric, we will find lots of growth drivers in different fields, and we will not be focusing on one thing. We have never focused on one thing.
All right, so that was Nadir Godrej Industries chairman. Currently, he's stepping down in August, and as he passes on the baton to Feroz Shah Godrej, those were the values, ethos, as well as innovation-led growth in several verticals that really harped on for the next generation of Godrej Industries to really take it forward. When we take a look at the market, when we see the mid-cap universe, and of course real estate is one sector which is in the downward trajectory today. Phoenix Mills is one counter which has lost the most amount of ground, down 5% in trade, while Larsen & Toubro, after the results, has been one of the top gainers on Nifty 50. L&T Finance, another group arm, is the one which is losing more than 2%. Suzlon Energy also post their results around 1.6% down, and BHEL is the other one which is also down. So these are some of the counters which are on the downward trajectory in an otherwise buoyant market. With that, it's a wrap on Markets at 12, but keep it with NDTV Profit. Lots more news and market action on the other side. Thank you so much.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933। बरसों से सरसों।
कुछ तो बात है इस दिल में।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार, और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Susan studio with me, Hiral Dadia, and Sharad Dubey, who's at the Profit Market Pit. Sharad, interesting day of trade overall. You have Nifty 50, which is up nearly at the day's highest levels, nearly a 1% move coming in there. And yesterday itself we were talking about sustainability in terms of the levels that we were watching out for on the back of the volatility that was expected on expiry day. But it seems that all of that is behind us now.
Well, of course, you see the markets, there's a good momentum coming in, a little bit of gap up opening, and it is sustaining. And Hiral, that's a very good sign for the markets. Maybe that 24,200 levels closing, if you are able to actually maintain that, another round of up moves can happen. And remember, today is the start of the series for the August. Nifty Bank also, the story remains the same. If you can pull out the Nifty Bank chart, what's happening there? We're seeing a good momentum buying, and near the day's high level, we are here up almost 450 points. But what are the key factors you should be watching out for? Of course, we are seeing a good buying happening, and August series has started well. The closing would be very much important. Follow-up buying can happen. Nifty Bank, I'm giving a range. The resistance slightly on the higher side between that 57 to 58,000. But the magic is happening in the small cap, mid cap space as well. A good value based buying. Large new fresh positions are coming in the August series, so you can expect more sustained buying to happen as well. Strong momentum in the IT stock for the second straight day. We are seeing good moves compared to the global AI trade. There is a churn at play, and buying is seen across the sectors and SMIDs. But there are two sectors where a little bit of light sell-off is happening, the realty and the energy. Yesterday also we saw that, but nothing to worry much about. The global cues remain volatile. You take the walls, but there are two sectors where a little bit of light sell-off is happening, the realty and the energy. Yesterday also we saw that, but nothing to worry much about. The global cues, earnings today, Adani Group of stocks will be in focus, Adani Ports and Adani Enterprises. But moving ahead, also there are other earnings you should be focusing on. Asian Paints, it's on the positive, Eicher Motors and Dabur as well. The entire FMCG pack has been doing well after HUL's numbers. The global earnings, two of them you need to track, Microsoft and Meta. But most importantly for the risk assets is the Fed FOMC meet. That's a status quo expectation is there. So there's a lot of things happening on the macro side and also the earnings side. So yes, it will be quite busy week for us.
Yes, a busy week for us, selling pressure in real estate and energy and IT as a sector which is just standing out in the month of July. But let's look at the watch list. L&T. The company reported numbers. Now what is interesting is that the order book is really up 27%. Profits have grown 14%, and that's the reason why that stock is up nearly 3% as we speak. HUL seeing a good amount of recovery, and this is once the earnings came, you did see a slump, and the street was actually overreacting to the volume numbers that came in below estimates. And however, you have brokerages which are absolutely positive, and they're saying that these should be used as opportunities to start accumulating HUL. Swiggy, you have Instamart, which is now a priority, and in terms of profitability as well, and that stock is seeing a uptick in today's session. Varun Beverage is also reacting to numbers, and post numbers we did see a slump, and on the back of the brokerage verdict you're seeing that uptick coming in yet again. Inox Green is another one which is in focus. That stock is down. The NCLT has approved the resolution plan, though there is some pressure coming in there. IT sector, the best month since July 2020, and that's what we're staring at. We will tell you more around it. Hero Motor Bosch, two companies reacting on the revised ABS norms for all two-wheelers, and that is something that could keep these counters on the profitable side. Bosch, however, slightly under pressure. Paradip Phosphates is reacting to your Q1 numbers, where the profits have come in at 393 odd crores, so a good 23-24% uptick coming in there. Phoenix, the stock is down. Overall numbers are good, however, your Q1 EPS miss, that is what has actually irked the streets, and that's the reason why you're seeing pressure there. And the real estate pack as a whole is also under selling pressure today. There is profit booking coming in there. So I think Phoenix is becoming one of the casualties on that front as well. Apart from that, look at our AGI Green Pack. EBITDA up, margins up. SH Kelkar, a spectacular set of numbers that the company has reported. Stock up 11%. Likewise with Orissa Minerals. They've got the environmental clearance for Belkundi mine, and that clearance is what is giving that boost today. Pine Labs, you have Citi, which has gone ahead and cut the target on this counter, and that's the reason why Pine Labs is trading under pressure. and Newgen Software and First Source. Both of these are actually buzzing on volumes. Very strong build-up is what you're seeing in terms of volumes, and 6 to 12% is the kind of surge respectively on each of the counters. So interesting moves there, Sharad, but let's go ahead with the rapid fire with Devin Mehta.
Thanks a lot, Hiral, for that. Good afternoon, Devin. It's always a pleasure to have you. We'll start a rapid fire round, and the first stock I would like to pick is Phoenix Mills. The stock is down almost more than 5%. Q1 EPS estimates were a miss. But is there a buying opportunity here at this dip, or do you think there is more fall left for Phoenix Mills?
Yes, good afternoon. So, as far as Phoenix Mills charts are concerned, I think we can see some further corrective move towards 1840. That can be a good level to accumulate this particular counter. 1840 has strong support. So, yes, 1840 can be the good levels.
Right, and Devin, OMDC, important environmental clearance coming in. Stock is doing well in trade also. Do you think on the charts there will be a sustained up move here, especially on a positional front?
Yeah, definitely. I think the way stock has given a good gap of opening today, the overall structure is trying to get improved. But on the higher side, once it crossed 4350, we can see some further up move. So closing above 4350 is very important for this particular company.
Right, and Devin, Newgen Software, we have already seen IT stocks are rallying, product companies are coming in. Now the small cap IT has also gathered space. Do you think further up moves can happen? And if yes, what level should we be tracking?
Definitely, the counters looks kind of giving a good signs of reversals. I think 505 can be the stop loss, trailing stop loss, and on the higher side 610 to 620 is a range where we can see some resistance. If it closes above this, we can see some strong up move in Newgen. So definitely those are holding and hold.
Right. Another stock, Pine Labs, after a really long time, brokerages have turned slightly bearish for this counter. Good up move has already happened. Good time to book further profits in this, because it seems like there might be more further sell-off here. Your views on Pine Labs?
I think 142 is the strong support for this particular counter. So if it breaches that, then one should try to exit from this counter. But those who are holding right now, and hold with a trailing stop loss of 142. On the higher side, 163 can be the next resistance.
Right, so always keep your stop losses in any trade. But apart from this SH Kelkar, this fragrance theme, now it's starting to buzz. Good earnings momentum coming in this counter as well. The stock is up 11%. Your views on it? Take a little bit of profits off the table from these type of counters?
Yeah, definitely. I think one should try to book at least partial profits, at least 50% profits, and for the rest quantity, 155 can be the stop loss. I think this can move towards 182 levels as the volumes have increased. So 182 can be the next target.
Right, 182 the next target for SH Kelkar. Thanks a lot, Devin, for that. But that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Thank you, Sharad, for that. Not much trending on Google right now, but let's just pull up Adani Ports on the screens. They've just reported numbers. Your net profit has seen a growth of around 9%. The stock is seeing a spike on the way the numbers are panning out. 3,620 odd crores is what you're looking at versus a 3,314 odd crores. If you see in terms of the revenues as well, 18.5% is the kind of up move that you're tracking in terms of where the revenue number goes. 10,821 versus a 9,126 is what you're seeing in terms of Adani Ports as well. There has been an other income component of around 853 odd crores versus the other income component of around 296 odd crores. So there is that mild boost that is coming in on that front as well. But overall, if you just pull up a long-term chart of Adani Ports as well, it'll tell you actually what's really happening, because that number seeming to be good, at least in terms of where the profitability goes and the top line goes. There you go. 22% is the kind of returns that investors have seen in the last 6 months itself, when the market has been on a downward trajectory. But from April, a good surge that has come in terms of the stock price of Adani Ports as well. In terms of EBITDA as well, it's almost a 18 to 20% growth that you're tracking right now. So good numbers from an operational perspective as well. Margins also have seen a mild bit of an expansion that has come in somewhere in that range of around 60%. So again, revenue growth coming in there, profitability growth coming in there. Your margins have improved marginally and operationally looking good. The other income component has been slightly higher as compared to the first quarter of FY26 as well, and that's what the stock is reacting to right now as we speak. But we'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandebharatam.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement.
Welcome back to Trending Stocks, and now we are to talk about L&T. The company came out with its numbers in line, but orders and execution, that is where the bullishness is something coming in from the market. But to decode this entire moves and what brokerages are talking about and the company's performance itself, we have Parth with us. Parth, you are closely tracking the space. Seems like the worst is over and now the infra stocks might be interesting.
Absolutely, and those order inflows has what has given this beat to L&T. If we dive into the numbers, then order inflows were up by 14% year on year to reach over 1 lakh crores. International orders have formed 56% of the order inflows, and the total order book also saw a jump of 27% year on year to reach 7.78 lakh crores. Now the EBITDA margin had a slight miss, but because the finance cost fell by 31% year on year, that is what led that profitability beat that L&T saw during this quarter. If we talk about the operational trends as well, then infra orders have more than doubled. Their conventional energy orders saw a steep fall of 90%, but profitability beat that L&T saw during this quarter. If we talk about the operational trends as well, then infra orders have more than green energy orders were up by 58% year on year, and that was on the back of higher offshore wind projects that the company had won through the quarter. Now if we move on to the brokerages, then Citi has maintained a buy rating with a target price of 4,650 rupees. They said that Q1 had a resilient performance, and management believes that the supply chain pressures are manageable at this point of time. Jeffries has also maintained a buy with a target price of 5,000 rupees. They believe that the margins will remain intact going forward, and a guidance of 10 to 12% year on year on revenues remains intact. And lastly, CLSA has maintained outperform as well with the target price of 4,842 rupees. They believe that L&T stock weakness is a buying opportunity right now, and they believe the company is the most undervalued when we consider the industrial space in India. So that's the entire outlook on the L&T results. We also had a chat with the management of L&T. Please listen in.
Middle East uncertainty is concerned, it has not been just a one-way street in terms of everything coming to a halt and everything is in a distraction mode, etc. We've been having a very volatile situation where there have been pockets of peace, pockets of disturbance. You might be relieved to know that most of the project sponsors who actually provide us the orders are extremely positive in terms of what they need to do going forward.
That's the management of L&T, and joining us we have Raghavendra Kedia. Good afternoon, Raghavendra. It's always a pleasure to have you. We are talking about L&T right now. Management also came up with a good commentary. Stock is up as well. Now, do you think fundamentally, L&T comes in a good medium-term, long-term setup? And also, does this have a rub-off effect on the other infra players as well, seeing the valuations are compressed from their high levels?
Good afternoon. Broadly, it's a yes and yes to specifically medium term for Larsen & Toubro and even for long term for Larsen & Toubro. On both counts, we are bullish on L&T. We believe it's a pure play for India story, thematic, structural. If you're positive on the Indian economy, Larsen & Toubro would be the best stock in terms of engineering, capital goods, hydrocarbons, construction. So it's a very diversified conglomerate with an excellent track record of execution, good governance, and overall deliverables. Now, with their recent earnings, we believe that how the international order book has become a significant contributor to the revenues and profit on the bottom line PAT side, that would be a big positive, considering they have a very wide geographical presence in Middle East, and in the next 3 to 5 years, Middle East will be a space where there will be massive construction, engineering, development. So Larsen & Toubro could be a play not only on the Indian development, but broadly on the Middle East infrastructure push. 20% upside from current levels to a target of 4,700 for a 12-month investment horizon is, we believe, is a safe play, slow and steady. It's a good portfolio stock and a compounder. At every dip, it's a buy.
Okay, every dip is an opportunity to buy an L&T, and I think usually that's the kind of commentary that we've always heard for this company as well. But moving on, the government is likely to ease its proposed ABS for all regulations for two-wheelers. Now, media reports are suggesting that the Ministry of Road Transport and Highway, that is MORTH, is considering a performance-based approach instead of mandating anti-lock braking systems across all motorcycles and scooters. Puneet joins us to decode the winners and losers from the proposed regulatory shift. Puneet, what would this actually mean for this OEM space? And if you have to break it up in terms of winners and losers, what would it look like?
Well, the Minister of Road and Transport and Highways is effectively based on media reports, reduced the earlier regulation on ABS and the mandated for all two-wheelers to have anti-lock braking systems. Now, there are some potential beneficiaries, which will of course be automakers, because now they will not have to put these expensive systems, but it is also negative for some other component suppliers too. But first, media reports are indicating that the government is shifting away from mandating anti-lock braking systems in two-wheelers, and the OEMs would now be needed to have their own systems or prescribed systems essentially, and not certainly ABS, which is the more expensive but the more safer option at this point of time. Now, this regulation was expected to have an impact on especially the 125 as well as the lower entry level motorcycles, and hence this is a big update coming through. You are seeing benefits because you will see reduced cost pressures on automakers. So players like Hero MotoCorp, Bajaj as well as TVS in the listed entity space will get that benefit, because now they won't have to put that expensive system as well. But this can also be slightly more positive for companies like Ask Automotive, because they supply these products right now to the two-wheeler makers. So their existing product profile does not get hampered because of ABS coming in. But it is also negative for a few players. Bosch is definitely seeing a strong reaction on the exchanges today. That's because Bosch has this ABS technology which they were looking to deploy essentially in all the two-wheelers. So hence, this is a negative for them. Endurance Tech is the other one. We're not too much seeing a stock reaction right now. But this could be beneficial for the automakers in terms of reduced cost which they would have to incur otherwise.
Okay, so an interesting move there as well. Raghavendra, what do you make of these news reports which are coming in, and how are you looking at it?
Good afternoon, Hiral. We believe that this could definitely benefit the OEMs, original makers, and Bajaj Auto, TVS Motors, and Hero MotoCorp, the large cap two-wheeler manufacturers, would be the immediate beneficiaries of this proposed regulation whenever it comes in effect. And there is a good catch-up play in terms of Bajaj Auto and Hero. So specifically, we are bullish on these two names. And that could have a negative rub-off in terms of the braking system manufacturers like Bosch or Endurance. And of course, auto ancillaries are at the mercy of auto companies. And this regulation might be a positive for the auto two-wheeler companies, and Bajaj Auto, Hero MotoCorp, we are top picks. And there could be a negative undercurrent in stocks like Bosch and Endurance. Going ahead, we stay bullish and upbeat about Indian auto space with overweight on two-wheelers and overweight on the large cap names from particularly Bajaj Auto and Hero MotoCorp.
Okay, so that's with regards to where Bajaj Auto, Hero Moto, Endurance Tech go. But moving to the consumption space, HUL and Varun Beverages, both of them reported numbers yesterday during market hours, and the kind of reaction that we saw was negative, but a good recovery coming in today's session. Mahima joins us with what brokerages are making of both the counters. Mahima, over to you.
Right, so I'll start with what Jefferies is talking about HUL. What they've said is that, of course, first they've maintained their target price of 2850 with a buy rating. They've said that the 7% drop was baffling given the extent of the miss. There were a few weak spots, but offsetting factors meant the overall EBITDA miss it was small, and they note the consistent improvement in growth and profitability that has happened over the past few quarters. Management commentary was also reasonable, with expectation of stable demand and margin remaining in the guided range. Goldman Sachs has slightly cut down the target price for HUL to 2450 versus that of 2725 earlier. What they've said is that revenue growth is improving. They're expecting further improvement in FY27. Home care growth was strong and is likely to accelerate further as price growth kicks in FY27. Overall, encouraging recovery in beauty and well-being was observed. Food business was also steady, but personal care was where the weakness stands. They expect to sustain EBITDA margins despite input cost inflation, and that's something that they've liked. Macquarie has maintained outperform with the target price of 2860 in HUL, and what they're saying is that the numbers were broadly in line. Volume growth, however, did moderate on QoQ basis. They did not like the continued weakness in soaps due to inflationary pressure. They like the stable FMCG demand outlook going forward into Q2 despite the inflationary pressures. Premiumization continues to grow ahead of mass across the markets, and they believe clarity on a volume uptick remains important to near-term performance going forward. Now, talking about Varun Beverages, Citi has maintained buy but cut the target price to 580 versus 640 earlier. They're saying that the Q2, that because they follow the calendar year, was where the India growth was debatable, and management, however, remained constructive on the growth going forward. They've said that overall international business was strong. The growth has continued there, but they believe that the category overall remains attractive from a long-term perspective, and competitive intensity could gradually ease out. Jefferies has maintained buy with a target price of 615. What they're saying is that is the growth scare, or is it a buying opportunity? The way the stock tanked yesterday, India business volume growth was on a disappointing front, but softer volume base kept expectations high on growth. Management has clarified that weather conditions impacted April. Otherwise, the other 2 months delivered a 20% plus growth. International operations helped offset some of the weakness. Management is confident, especially as July was strong momentum, and believe, so the brokerage believes that the correction was excessive that we saw yesterday. So this is the overall view of what brokerages make of HUL as well as Varun Beverages.
Okay, so interesting moves coming in there. Raghavendra, your view on the consumption space, because everyone is talking about valuations which were much reasonable versus historical averages. Earnings, it's a pretty mixed bag right now so far, and eyes are on what happens in terms of monsoons, the impact it will have on rural demand, the impact it will have on urban demand. What would you advise investors to do with this pack?
Kiral, broadly, we are neutral on the entire FMCG pack. Specifically, if you see the results of Varun Beverages, they have actually done well. And at the current run rate, we believe that Varun Beverages can clock an EPS of around 4.5 rupees per quarter, extrapolating it to around 18 rupees full year EPS, and giving a moderate P multiple of around 30 times on 18 EPS, we reach to a target of around 540. So that's still a 20% upside on Varun Beverages, which is a safe play considering they are diversifying from a single product on Pepsi to multiple products. The stock, Varun Beverages, corrected significantly because there was a related party transaction of around 300 crores, but that was a huge price fall from 650 to 450 levels. So it's actually a good entry point at current levels. Broadly, we are bullish on FMCG. Specific to your question on monsoon, we believe that so far the monsoon progress report has been positive, and in a bad case scenario, it could be an average monsoon. So overall, the urban and the rural story stay neutral to positive, and that is also reflected in the results of Hindustan Unilever.
Right.
So we are bullish on FMCG.
Right, Raghavendra, from FMCG, another space which is buzzing, and it has been buzzing entire July month, and that is the IT space. Of course, a lot of AI stress was there, concerns were there, but seems like the valuations are attractive, bargain buying happening, and also the earnings are not that bad. An order book is also something which the street is quite bullish on. Would you be a buyer in the IT stocks? You can bucket it in large cap, mid cap, or even a product IT play, because a lot of these stocks have run up from their lows, or is there more value left at the table?
So, on counts of dollar strength, we are bullish on IT. In terms of the huge beaten down as considered as India as an AI victim, IT stocks were punished heavily. But broadly, with this results of Q1, where there have been few order wins specific to AI, specific to data centers, and with the big tech of US, believe that the order book would get healthier from here in terms of the large cap IT names, TCS, Infosys, Wipro, HCL Tech, LT Tech. So these are few names which have actually shown some positive signs or a U-turn in terms of their orders increasing from artificial intelligence, data center, and overall North American geography. So broadly, we are bullish on IT. Considering the concerns related to AI, we would be overviewing on large cap names.
Okay, so the large cap IT names is something where the focus would be. Thanks a lot, Raghavendra, for that. It's always a pleasure to have you with us at NDTV Profit. But folks, we are running out of time. That's all from me, Hiral, and the entire team put together this wonderful show of trending stocks.
शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country.
Benchmarks remain resilient despite mixed geopolitical cues and higher oil prices. Nifty and Sensex hover close to day's high, with the Nifty perched above 24,200. IT and metals as well as FMCG lead gains. Defense and realty on the back foot. And oil prices rebound, snapping a 3-day losing streak as renewed hostilities in the Middle East reignited geopolitical tensions after several days of relative calm. L&T shares gained over 3% in trade after the engineering major posted better than expected first quarter earnings and reaffirmed its FY27 growth guidance, reinforcing confidence in its execution and order pipeline. Meanwhile, DCM Shriram shares also surged after the company posted a more than 6-fold jump in the first quarter profit. Revenue growth remained steady, while exceptional gains boosted earnings, driving strong investor optimism. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look when you talk Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look when you talk about the Nifty 50 as well as with that over 1% surge also coming in, and even when you talk about the Sensex as well, you're seeing a little bit of an uptick coming in on that front as well. When you talk about Sensex, about 1% odd higher as well. Now, when you quickly also talk about some of the sectors that are buzzing away in trade, there's actually a lot of resilience that you're seeing coming in terms of the top sectors as well. And when you talk about something like realty or auto for that matter, those are the two sectors that are on the back foot among the major sectors. It's actually strength that's emerging in IT as well, and that's doing quite well for itself. Metals, FMCG, pharma, media, some of those sectors also doing quite well for themselves as well. Let's also quickly take a look at the list of top losers and gainers from within the Nifty 50 as well, because some bit of strength that you're seeing emerging coming in terms of some of those earnings counters as well. In fact, we'll talk about some of those earnings as well in just a bit, but you do have HUL, Infosys as well as Cipla doing quite well for themselves from within the Nifty 50 pack as well. When you talk about some of the other companies as well, something like Keynes Tech is buzzing away in trade with that 13.5% uptick coming in, Paradeep Phosphates, and even Swiggy after that reshuffle at the top level, 7.5% uptick also coming in to that particular counter. And even when you talk about the Nifty 50 pack as well, like I mentioned, something like HUL, Infosys, Cipla, L&T, Hindalco, Tata Steel, all of those counters doing smartly for themselves. Right now, when you talk about the list of top losers, though, it's actually M&M, Power Grid, or something like a Bajaj Finserv or BEL yet again making it to that list as well. So some bit of caution emerging When you talk about some of those counters, let's quickly pull up something like a P&G Hygiene as well, and that also reported a dismal set of numbers, and you can see that impact really coming in terms of the earnings as well. 4.5% downtick, as you can see on your screens. Look at that sharp slide also coming in when you talk about the earnings, and seems to have really disappointed the street as well. That's P&G Hygiene for you right now in terms of those earnings reactions that have come in very recently as well. But let's also move on and start talking about the net profit as well. Like I said, dismal set, so 34% downtick also coming in. When you talk about the net profit, when you talk about some of the other numbers as well, revenue also about 4.9% downtick coming in. And even when you talk about the EBITDA, 36.1% slide coming in, and that also justifies the kind of sharp slide that we saw coming in for the stock as well. EBITDA margins also contracted by quite a bit, from somewhere close to 28% levels to 19% as well. But let's also move on and talk about a fresh development also coming in. In fact, BPCL has told NDTV Profit that it is in discussions with the government on the compensation mechanism and remains confident of continued support for losses incurred on the sale of subsidized LPG cylinders. In fact, Sessa is joining us with some more details when it comes to this one. Sessa, what is the status of these talks, and what does it really mean for BPCL as well?
Right, the Oil Ministry has reviewed the under-recoveries of oil marketing companies for the April-June quarter and is likely to propose a compensation package to the Finance Ministry. Now, meanwhile, BPCL told NDTV Profit that it is in talks with the government on the LPG compensation mechanism. The company, expects LPG compensation of around 633 crore per month to continue through October, and says that it remains confident of continued government support in order to offset losses incurred on domestic LPG sales. Now, as of June 30th, BPCL's LPG compensation buffer stood at around 15,804 crore. This is after adjusting for the installments received under the previously announced LPG compensation package of 7,594 crore. The company expects the government to continue compensating LPG losses in line with the past practice. Remember, the centre had earlier approved rupees 22,000 crore in 2022 and 30,000 crore in 2025 to compensate OMCs for selling domestic LPG below market prices. Even during the West Asia crisis, the government cut the excise duty on petrol and diesel by rupees 10 per litre to cushion the impact of surging global crude prices. According to sources, that decision alone resulted in a revenue hit of more than 1.2 lakh crore for the government. Now, the key question is whether the Finance Ministry will agree to extend further support to OMCs as LPG under recoveries continue to mount and oil prices remain volatile.
No, absolutely, and that volatility really is reflecting as well, and we'll talk about that volatility in just a bit, Sessa, as well. But let's also talk about RD Industries that's in focus. When you talk about the company, they actually are involved in lead recycling as well as non-ferrous metals. Let's also hear out from the management as well, because the IPO opens on August 5th, and in fact, you do have Puneet who's caught up with Sandeep Agarwal, Chairman and Managing Director, as well as Nikunj Agarwal, Whole-Time Director, about the company's expectations from Sandeep Agarwal, Chairman and Managing Director, as well as Nikunj Agarwal, Whole-Time Director, about the company's expectations from this particular IPO and the road forward. Let's go across and listen in.
Let me start off, the first, you are essentially one of the key middlemen between getting the scrap both for these specific metals that I just spoke about. And I'm guessing a lot of your customers are battery makers as well as companies in the metal sector. Talk to us a little bit about your value add at this point of time within the company.
We are lead recycling company having capacity of 1,56,000 metric tons per annum. Our business model is to procure any type of lead scrap and process it at our Naidupeta plant. We are one of the few MCX and LME registered players in India.
We play a key role in the whole supply chain. We're sourcing scrap from over 50 plus countries worldwide. This scrap is actually a resource where we can extract the lead and give it to battery manufacturers in India and globally, where more than 80% of recycled lead is being used in the battery industry now. So we are at the forefront with our capacities at a very good location, that is Tirupati, from where we can both feed the export market and also the domestic market.
We are raising 320 crore rupees as a fresh issue. Yeah.
No, sir, before we get to the fundraise, I just want to understand a little bit more on the business basically, because essentially what the key important factor that a lot of battery makers, including I think Amara Raja, which is your big customer there as your top customer, have started to insource their lead recycling for themselves. So what is the pitch when you go to these companies, and what is the challenge there therefore?
So basically, we've seen a good growth in the past few years. We've been growing at 53-54% per annum in the last 3 years. We're having 50 plus customers as of now and serving 8 countries. So we feel that going forward, we'll be able to maintain the future, the past performance, and having over 36 plus repeat customers. We feel that we're at a very sweet spot, and our OEM approvals are all in place. Therefore, we feel ready.
But sir, your 40% of your revenue comes just from one particular customer. Your top 10 share is also quite material at this point of time, and hence the question that as battery makers like Amara Raja, which is also listed on the exchanges, have given an indication to insource their scrap requirements, and they are already doing so. How does that affect your business? Because while you might have a lot of customers, the concentration for top 10, because they are giants, continues to be high. Am I right?
Yeah. Actually, Indian government introduced the EPR policy. In EPR policy, all the battery manufacturers have to collect their. Actually, Indian government introduced the EPR policy. In EPR policy, all the battery manufacturers have to collect their battery up to the 90%. तो उससे अनऑर्गेनाइज मार्केट का शेयर कम होगा और ऑर्गेनाइज प्लेयर्स का शेयर बढ़ेगा. उससे हमारे को एज दिखाई देता है कि डेफिनेटली आवर शेयर विल इंक्रीज इन द इंडियन मार्केट.
So over the years also, if you see our past performance, our concentration of customers has reduced. 3 years ago, 70% is now down to 40%, and that's why I was highlighting the number of customers and the repeat customers. So that's why we feel that going forward with the government regulations in terms of BWMR, battery waste management rules, we are at the forefront with our capacities of serving multiple customers apart from the ones existing,
Got. And sir, you of course have almost 320 crores of fresh issue from this IPO. A lot of it is going to be used for working capital. But I also wanted to just understand in terms of your specific business, where your pure lead utilized capacity currently is at 50%, and for lead alloys that utilization is at 16% for FY26. So what are the ramp up plans for both these plants?
So our capacity, we've recently increased our capacities from 1 lakh tons in FY26. Now in Q1 May, in Q1, we've added 56,000 tons of additional capacities. We've done this to be ready when we go to OEMs, to be a large sizable player, and to be ready for any kind of orders which come to our way as we grow. Further, if we see our absolute growth in the last 3 years, we've been having an absolute growth of quantity in the terms of production, where we did FY25 around 45,000 tons, and then last year we did around 69,000 tons of absolute production.
Alright, then there you go. So that's the word coming in from this particular company. RDA Industries is the one that you're talking about as well. But let's also move on and slip into a very short break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे।
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about oil as well as gold that are back at the center of global market attention. You do have crude that has rebounded quite sharply and above those $87 a barrel levels. Right now, just below that, with that 3.5% uptick also coming in. When you talk about WTI, you're looking at $82 a barrel thereabout, and a 3.5% uptick coming in on that front as well. And you're looking at renewed Middle East tensions that are the culprit for this right now, reviving some of those concerns over supply disruptions and the Strait of Hormuz. At the same time, gold is holding above the key $4,000 level, trading in a slightly narrow range right now, but investors, of course, awaiting the Federal Reserve's policy decision. Vandana Bharti, head of commodity research, SMC Group, joining us on the show right now. Vandana, thank you so much for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about what's happening with oil prices, and do you also see this rebound being a little sustainable this time around?
Yeah, hi Shanshi. First of all, I think that this price level is not convincing for crude oil prices right now, what it is, because the supply disruptions is more than the demand destructions this time. Second thing is that the diesel premium is on higher side, and apart from the Strait of Hormuz, Bab al-Mandeb and other routes are also getting disturbed, and insurance and freight charges, they are on higher side. Indian crude basket, it is near $88. So $80, $78 or 81 kind of dollar. It is not convincing for the market, and the market should rebound as per the fundamentals. It should rebound near the level of $85, $88. I know this is a concern for the market, but yes, sooner or later, prices should move up if they don't come with any kind of consensus. So in MCX, I'm expecting 8200 level for this week, and for NYMEX, it can rebound near the level of $85, $86, and the support is near $78. I'm not expecting below the level of 78 should be sustainable for crude in this scenario. So this is the case for oil, and today FOMC meet is there, so that is another factor which is going to give impact on the oil prices.
No, absolutely, and not just oil, Vandana. You know, when you talk about gold as well, it seems to be trading in a little bit of a narrow range, and it does look like it might break out of that range. Do you also concur with that view, and what do you expect then coming in for gold prices?
It is not going down, it is not moving up underneath, like money supply is on record high, and gold always follow the money supply. Higher the money supply, higher the gold prices, but this time money supply is going higher and gold prices are going down. So yes, the downside is of course limited. It is suppressed in paper market but not in the physical market, and the prices should see the support of $3,900 and $4,000 kind of dollar in 2026, and expect a limited rise of 42.50 because paper market they are witnessing lower volume trade these days. So because of that, I'm expecting that the prices should see the limited upside of $42.50. In MCX, yes, rupee is in range, and because of that, we can see a level of 1,40,000 on lower side, on higher side 1,45,000. So it is finding a trigger for going upside or downside, mostly upside.
No, absolutely, mostly upside as well. And in terms of fresh buys, Vandana, what do you expect after the Fed meetings wrapped up and those cues are really digested when it comes to gold? What are you then expecting for fresh buys? Because festive season, of course, around the corner right now.
Yeah, I have been in talk with several jewelers, and we have seen the reports that the footfalls, they have risen, and we have seen the correction in the gold prices. It attracted the Indian buyers as well, and sooner Chinese buyers they will carry on the legacy as it happens every year. So yes, festival buying, wedding demand, it is on card. It is improving, and people now they are opting for 22, 14 carat, 18, 14 carat gold. So by the way, the physical demand in India and China, it is rising, and because of that we can see strength in the gold prices in the near term, and from August to November, we consider it a upside rally in gold prices every year. So the time has started, and I'm expecting a kind of a rally of $200, $300 in gold price.
Yes. No, absolutely. And point taken in terms of those timelines that we see every year, right? But what I also mean to ask is that, do you think that it's prudent right now to also be indulging in fresh buys when it comes to gold prices, given that investors have been sitting on the sidelines and the festive season is around the corner?
They can do a staggered buying. 25% in current month, 25% in August. If they want to put 1 lakh of money, 25% they can invest, because this is the time when every year gold get the bottom, and this is the time for rally since till the month of October and November, and December is the month for correction because of the index rebalancing and other things.
Absolutely, and just sort of penciling that also in that trend that you've talked about as well, Vandana. Thank you so much for taking time out and joining us this afternoon. There you go. That's the entire outlook coming in, not just when you talk about oil prices, but also gold prices. Let's also get you some word coming when you talk about the India-New Zealand Free Trade Agreement that is expected to unlock fresh opportunities for New Zealand's farming sector by also sharply improving market access to one of the world's fastest growing economies. And that's something that you're looking at as a key development. You do have farmers saying that the agreement is going to be supporting higher value exports, while banks are penciling in stronger investment technology partnerships, or for that matter, long-term commercial ties. You do have industry leaders also saying that success in India is going to be ultimately depending on quality, sustainability, and trusted relationships rather than price alone. In fact, Nimit Dixit joining in with some of those highlights as well.
Today, we're at a really special place. On the southeast corner of New Zealand's North Island is a 1,500-acre sheep and wool farm called Branspeth. We're standing here in front of a house that's about 6 generations of farmers. This was built around 1850, and it's been built in 3 or 4 parts, and it really tells the story of New Zealand's farming that went through huge highs when wool prices throughout the world exploded and brought all that money to New Zealand to a point where shearing became more expensive than the price of the wool at which it was sold, and caused huge problems. Through all of that, farmers here have sustained, they have stayed around, and they've expanded their practices. Today, we're going to be speaking to William, who's a 6th generation farmer running 1,500 acres here, and we're going to understand from him what it takes to run a large farm, what an FTA with India, which completely eliminates all tariffs for wool and meats to the farmer at the lowest level before it goes to the exporter and then goes to your supermarket in Mumbai. We're going to understand the economics and the opportunities and challenges for the farmer here in New Zealand and how that FTA can improve their lives.
Alright, then there you go. So that's the entire word coming in terms of India-New Zealand Free Trade Agreement that is expected to unlock all of those opportunities, and that's something that Nimit has talked about. But let's go across and listen into a slice of that interview as well.
William Beetham, thank you for taking the time. We're here at your 1500 hectare estate. You have 2 farms here. How many sheep is that?
Ewes. How many ewes? Okay, we've got 5,000 ewes.
You got 5,000 ewes. How do you manage that? How many people manage that? And can you tell us about just the extent of your operation here? How many countries does your product go to, and how many products is it?
Right, okay, well there's a lot in that. So, we have 5,000 ewes on this property, plus we'll also have a lot of lambs that we manage as well. So we have 4 staff, we have a manager on each farm, plus a shepherd who helps those managers, and a fence tractor driver who does a lot of the work around repairing the fences, helps us put crops in spring for our summer crops for our sheep, and repairs all of the fences. So that's the animals we manage on the farm. The farm is just in the lower North Island, just in a place called Wairarapa. Sorry, I can't remember what else you asked.
So there's about 6 people that manage about 1,500 acres.
5 people. 5 people.
That's crazy, William. For an audience in India, that doesn't make sense at all. How do 5 people manage 1,500 acres and, like you said, about 5,000 ewes?
Yeah. So we've got. I suppose we've got a lot of technology. We've evolved our systems to ensure that we work with the animals and we work with their natural behaviours. So animals are outside all the time, rotating through our paddocks. We allow them to express their natural behaviours, and it's a big part of our, I suppose, our animal welfare here. So our animals are, whilst we have to look after them 365 days a year, 24 hours a day, we still allow them to be out in paddocks, enjoying, grazing, and managed within our system.
Yeah. Speaking about the India FTA, which we're doing here, we were speaking earlier, and one of the things that you said really stuck with me. You said more than the FTA itself and selling the product, it's also about the connections that you make with your colleagues there, which are the farmers in India. Can you tell us a little bit about your thinking? What do you mean when you say the connections? What sort of connections do you hope to make, and where do you see growth there?
Well, the connections, when we have a free trade agreement with another country, and we start to sell our product into that country, we know that there are domestic farmers who also will be working with the same customers we will be selling into that country. So therefore we can present our attributes as the domestic farmers can present their attributes to those same customers, and the customers can then create value out of our products and for our consumers to use around the world. That gives us an opportunity through our customers or through the share of producing our products to connect with those different farmers, because the companies will connect and people will go over there and see their farms, as we hope people from India will come and see our properties. Shared learning, shared opportunities, shared connection, it makes shared for a better world.
Alright, then there you go. So that's a slice of a conversation coming in directly from New Zealand as well for you. But that's all the time that we've got on the show for now. Thank you so much for tuning in.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस तेल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. But first, let's look at the market. The first day of the new expiry, that is August month, and the Nifty is up nearly 260 points in trade. We have comfortably crossed above the 24,200 level, in fact cruising around 24,250 now. As per technical analysts, if Nifty continues to remain above this level decisively, then we could see 24,400 very soon on the benchmark. The Nifty Bank Index, that's also up, underperforming the benchmark, but still up around 460, 450 odd points. Again, today's gains have been led by the IT Index. The IT Index is up nearly 2.5% in trade. If you look at the sectoral indices, mainly it's the only real estate and auto which are in red. Apart from that, all the major indices are trading in green. Nifty IT is up 2.5%, Nifty Metal up 2.2%, Nifty FMCG, which was the top loser in trade yesterday, is up nearly 1.6%, followed by Nifty Pharma up around 1.5% in trade. Also, when it comes to the Nifty small cap names, it has been a good day, up more than 1% the index. But Varsha, which are the key stocks here that are buzzing in trade today?
Well, again, Asian Granito India has seen a solid rally. Today also the stock is up. You have Deep Industries buzzing on the back of good Q1 numbers. I would say it's up almost 8% in trade. We do have management where we're going to talk about Q1. You have HSIL again on the back of strong volumes. The stock is up. Sayaji Hotels is also buzzing. It's almost 3 to 4% up in trade on the back of good volumes. I would say Sayaji Hotels is also buzzing when it comes to small cap. Dynacon System is also up on the back of order win. I would say it's up almost 4%. You have True Alt Bioenergy is again solid Q1 numbers, I would say, a very good growth year on year when it comes to PAT and also revenue growth. On the loser side though, you have VST Industries, which is again sulking in trade. You have PTC India Financials, which is also under pressure on the back of Q1. So not much when it comes to on the losing side, but good. I mean, a couple of stocks which are buzzing on the back of Q1 and volumes. But again, speaking of Q1 FY27 numbers, Deep Industries is actually in focus. A good set of numbers that the company has given. We might want to know what's the order book and new order inflows that the company will be achieving, and the margins, what will be the margins when it comes to FY27. And to speak all about that, we are here joined by Mr. Rohan Shah, who's Group CFO and Director Finance at Deep Industries. Mr. Shah, welcome at NDTV Profit. Pleasure to have you. First, let's talk about Q1. How was Q1 according to you? And also wanted to understand the 40% growth that you've seen in Q1. Is this sustainable when it comes to FY27? What would be the guidance that you want to give to the investors?
Hi, so we have grown in last 4-5 years more than 30-35% year on year, and our Q1 is right there as per our expectation for FY27. So for Q1 we have grown almost 40% year on year. And for FY27 also, we are expecting to grow more than, I would say, 25% year on year. So it is exactly in our expectation.
Understood. And sir, what about margins? 39% of margins that you've seen in June 2026 numbers versus 41% last year. I just wanted to understand for FY27, what kind of EBITDA margins one should take into consideration?
So EBITDA margins, we believe, would be on improving trend only. So for FY27 also, we are expecting EBITDA more than 41-42% on yearly basis. So with our various verticals contributing in our revenue with higher profitability, these margins tend to improve.
Okay. Also, if you could just give us some understanding on how has been the rates of the new rig rates that are coming in, given the fact that oil prices have remained at an elevated level. Have you seen any improvement? Do you expect any improvement in the rates going forward?
See, in onshore rig market, rates have been fairly stable in last 1 decade. But recently, we have seen some spike in those rates on a positive side. Considering the recent demand, rates have improved a bit, but fairly they are in line.
Any new any rigs that are coming up for renewal, which could see a bit of higher rate compared to what it was earlier?
Yes, so see, we are operating 20 different rigs, and those rigs, one and or other comes for re-award or renewal. So there we have seen some improvement in rates, of course, primarily due to increase in crude oil prices.
Right. Also, sir, I wanted to understand about the order book. What's the current order book? What are the execution timelines? If you could help us.
So currently our order book stood at 3,048 crore or 47 crore. So this particular order book consists of one larger tenure contract, and the rest are to be executable over a period of 2.5 years. So I would say more than 1,600 crores of contracts would be executable over next 2.5 years.
Okay. And sir, your 1,400 crore ONGC contract, what production gains are expected from the field?
So in production enhancement contract, we are expecting to ramp up incremental production by H2. So probably from Q3 onwards, we'll see a good amount of incremental production. For FY28, it will contribute on very higher side. So we are quite bullish on this particular contract, which eventually will start contributing with good top lines in our overall revenue.
So, coming back to the margin point, just wanted to understand, you did mention earlier, I believe you had given a guidance of around 42 to 43% on the EBITDA margin front. So, by when can we see that number coming in?
So I believe by FY27 we should reach by 42%, and probably by FY28 we can improve further.
Okay, and what are your capital expenditure plans and any new rigs that you plan to buy or take on lease?
Yes, so we are in process of bidding new rigs. So upon getting award of those new rigs, we may go for buying, because as of now my entire fleet is utilized 100%.
Right. Also, I want to understand about the Dolphin Offshore, which is generating revenue now. What contribution can it make to FY27?
We are expecting revenue of more than 150 crores from Dolphin this year, and it can improve further in coming years.
Okay, and also, can offshore eventually become as large as your onshore business?
Yeah, we are gunning towards it. So as a policy, we always believe that we should increase our fleet one by one. So we'll follow that policy in our offshore business as well. So over a period of next 3 to 5 years, it can be as good as our onshore business.
Okay. And lastly, a couple of days back, there were multiple media reports which indicate that government's focus is increasing more when it comes to oil drilling. They are planning investments of close to 80,000 crore rupees. How does that benefit deep industries over the longer period of time? What is the kind of growth an investor should expect?
Yes, government is actively pushing the incremental production for oil and gas, and this particular announcement is quite supportive, and I would say it gives us a great amount of opportunity to our business as well. Largely it will help in our offshore services business, because this particular announcement is for offshore operations, and with Dolphin our offshore support services can gain good traction because of this government move.
Thank you, sir. Thank you for joining us and giving us the way forward for deep industries. Well, that was the management quite optimistic on the growth plans. Let's welcome in our fundamental guest, Girish Sodani, Vice President of Choice India. Girish, you heard the management. They are expecting growth of around 25 to 30%, expect to reach EBITDA margins of 42% by the end of FY27. How are you looking at this count at the current valuations?
No, the current valuation was decent ones. As we talk about the domestic revolution order book of around 3,000 crores, the management targeting is approximately 25 to 27 CAGR's growth. What we are also just expecting the same into the expansions goes with the 300 crore capex plans offshores, as well as the government's high winds towards the propositions of increasing the energy mix, as well as the capex plans of oil ONGCs and oil India and these type of companies, ONGC companies. We are looking out a decent propositions in the overall structure that completely depends on the next 2 year down the lines. I'm just looking out for the some around the range would be 700 to 720 reach.
Okay. Now, KPIT came out with its numbers a while back. Now, if you look at the numbers, there's nothing great in that, given the fact that the company's net profit is down 28%, EBITDA is down 16% on a sequential basis. But do remember that this was pretty much on the expected lines, given the fact that when the quarter, in the month of July itself, the company had come out with this warning where they clearly said that the Q1 numbers would look quite weak on a sequential basis because of some issues with an European client. This was pretty much on the expected lines, given the fact that when the quarter, in the month of July itself, the company had come out with this warning, and that's the reason the numbers are looking bad. Now, if you look at what has come into the presentation, the management has not guided anything for the second quarter, but they are confident that they will be able to report stronger growth in the second half of this financial year, and this optimism might have led the stock higher. It's up around 10% in trade. It's trading at around 660, up 9.9% around up, and this optimism would have led this up move in the share prices, because nothing's that great on the number front, but the optimism towards the second half of this financial year has led the stock higher, now trading around 8% up in trade. Well, with that, let's slip into a short break and we'll address more news related to small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन। केसरिया से मन जोगी हुआ रे, जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandebharatam.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
पीओके के फायरिंग रेंज में खड़े।
Welcome back. You're watching Small Cap Buzzers. Well, Adani Ports delivered a strong start to FY27 with EBITDA rising 19% and revenue up 19%, driven by robust international operations, marine business expansion, and resilient performance from domestic ports. Let's hear from company CEO and whole-time director Ashwin Gupta about company's recent earnings and more.
And thank you for your continued confidence in APSEZ's growth trajectory. What began as a vision to build an integrated transport operator is now a powerful growth engine, especially with international ports EBITDA soaring 256% in Q1. Now, I present another strong performance by APSEZ in Q1 FY27. Revenue and EBITDA both grew 19% year-on-year to rupees 10,821 crore and rupees 6,541 crore respectively. Let's first talk about ports. Our domestic ports business remained a strong growth engine, delivering double-digit growth while maintaining an industry-leading EBITDA margin of 74%. This performance comes even as we execute India's largest private port capacity expansion program, increasing capacity from 653 million metric ton today to 1 billion metric ton by 2030. Our international ports are emerging as a significant growth engine. International ports delivered record revenue of rupees 1,747 crores, up 80% year-on-year, while EBITDA surged 256% year-on-year, driven by the addition of NQXT Australia operations and ramp up of the CWIT Sri Lanka terminal. Cargo volumes nearly tripled to 22.8 million metric ton from 7.7 million metric ton a year ago. The increasing contribution from higher margin NQXT, Australia and CWIT Sri Lanka resulted in a sharp improvement in EBITDA margins to 41.8% compared to 21.1% a year ago. In logistics, our focus on scaling asset-light businesses is delivering results. Truck revenue grew 26% year-on-year. International freight network revenue rose 28% sequentially. Return on capital employed improved from 6% to 10% in FY26, and as asset-light offerings scale further, returns will continue to strengthen. In our marine business, revenue increased 67% to rupees 901 crore and is making strong progress internationally, with revenue from vessels operating in international waters significantly exceeding domestic marine revenues. Recent milestones include our partnership with Oceaneering International to strengthen deep water engineering and offshore capabilities in Europe, as well as a landmark 10-year contract supporting Argentina's LNG export program. In line with our leadership in sustainability, APSEZ became the first Indian transport company to publish a task force on nature-related financial disclosures (TNFD) report, reinforcing our commitment to nature-positive growth. Despite a challenging macroeconomic environment, APSEZ continues to deliver strong growth, underscoring the resilience of our strategy and execution. We remain firmly on track to more than double revenue, EBITDA, and cash flows by FY31. Our scale is integrated across 11,000 kilometers of Indian coastal line and covering 95% of hinterland with growing international presence. Our business excellence is driven by technology, lean organization, and partnership. And the most important, which is our balance sheet capacity to fund the growth. I will take this opportunity to thank all our stakeholders for their continued trust and partnership on this journey. Thank you.
Well, moving on. Odisha Minerals is a stock in focus. The stock is seeing a strong run on the street. It is amongst the top gainers since April and has risen nearly 15% over the last 4 trading sessions. But what's the reason of this buzz? The stock is up almost 8%. Let's see what Path has for us.
Odisha Minerals is in focus today. The stock has seen its biggest ever intraday gain since April 2026, and it is on a 2-day gaining streak, and as you rightly mentioned, has gained almost 15% in the last 4 sessions. If we talk about the company a little bit to begin with, the company mines ores like manganese, iron and chrome as well, and then they sell that ores to steel and ferro alloy plants. Now the key trigger behind this move today is because they have received an environmental clearance for the Bilkundi iron and manganese mine. The total area of this mine spans around 1,276 hectares and it is located in the state of Odisha. The mining has been allowed for 965 hectares of this area, while the rest 311 hectares still awaits a separate clearance for the company. Now about this, the 965 hectares area that has been approved, it has a capacity of 1.8 MTPA for iron ore and 0.3 MTPA for manganese ore. So that is the key trigger behind the move that we have seen in the stock today. Now if we move on to the financials, then FY24 was a decent year for the company, but in FY25 the operations saw big collapse, and that's why we saw that giant downturn in terms of PAT from 2 crores in FY24 to negative 40 crores in FY25. In FY26, however, the numbers have tried to come back to normal, but we still await that scale in which the company used to operate in before.
All right. Thank you so much, Parth, for all the details. Well, Girish, any view on Orissa Minerals? The stock is up almost 8% in trade. What should investors do at this point of time?
So come to the financials now. The top line just rebounds in the terms of financial year 26 to 25. That is almost a 94 crores. And the profitability is a little bit into the pressures because of the overhead cost as well as the compliance cost. As of now, there is no any fresh allocation suggestions for the investors right now. But if anyone holds, then particularly hold with the stop of around 3900, 3950 for the long-term positions.
Moving on to the next counter, that is Century Enka. We have seen a strong margin expansion. In fact 3x. From 5% it has increased to 15%. The stock is on a 6-day gaining streak and it is trading at its highest level since December 2020. What could have led to this kind of a move in Century Enka's result? If you look at the first quarter FY27 numbers, the revenue have jumped nearly 38% on a YY basis. But let's get in Shivam with more details on the same, on what could have been the potential reason behind this kind of a margin expansion.
So yes, the company is mainly involved in the business of manufacturing and selling synthetic yarns and related products, and the company has posted a strong set of numbers for Q1. Looking at the key highlights, all the business segments of the company has delivered a very healthy volume growth and margin performance. And in terms of productivity too, we have seen an improvements, and operating cost has also were lower, and that has supported the margin expansion. In terms of raw material cost, the higher raw material costs were passed to the through the selling prices to the customers, and in terms of the availability of renewable power, that has also been higher as the company is investing more into renewable energy sources that can offset the petro-based energy cost. Also in terms of segmental performance, the nylon tire cord fabric, that the demand of those products has remained resilient after the GST cuts for the for tires and automobiles. In terms of filament yarn volumes, that has remained strong and were mainly supported by the higher share of better margin products. In terms of the value-added products and new mother yarn, which is also one of their products, that has also continued to support the margin expansion in this quarter. In terms of outlook, the management has indicated that the margins going forward will normalize as the higher cost inventory that gets consumed, as it has also been one of the factors that has supported the margins in this quarter, and that was a one-time gain. In terms of polyester tied cord fabric, the company has earlier applied for the production process approval, and that is progressing as per planned, and the commercial sales of that product is expected to start from H2 FY27. And in terms of also the margins, the management has indicated that that may get impacted due to the evolving geopolitical issues and also the inflation that is currently in picture. In terms of stock performance too, the company has given positive performance in past periods too.
Right, thank you for that, Shivam. Girish, looking at these numbers, do you think is it kind of a one-time gain that must have benefited them, or this could sustain over a longer period of time going forward as well?
Overall, the picture looks very sustainable for the longer period, obviously, because the largest in the nylon cord fabrics as well as the yarn fabrics. The patients have a strong balance sheet, what we are looking out, almost a debt-free company, as well as the financials looks very attractive in the terms of PE ratios, a little bit of good PE ratios in the comparison of overall peers right now. And as well as they are just looking out for the more expansion strategies for the nylons, yarns, as well as the modularizations of tire cord fabrics. So the pictures was very, very interesting in the terms of obviously a long-term period. At least with the minimum period would be the 1.5 years to 2 years down the line.
Understood. Well, thank you so much, Girish, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much. Well, viewers, with this is the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Good afternoon, you're watching the afternoon edition of Ask Profit. Now if you look at the market, they continue to trade higher. They're much at a similar level what we saw half an hour back. Nifty is up around 260 odd points, trading above the 24,250 level. If it continues to remain above the 24,200 level, technical analysts believe that we could soon see 24,400 as well. Nifty Bank underperforming the benchmark but still up around 460 odd points. On the sectoral side, it's the Nifty IT index, which is the top sectoral gainer, up around 2.5%, followed by Nifty Metal up around 2%, and Nifty FMCG, which was the top sectoral loser in trade yesterday, is now cruising up around 1.7% in trade. On the flip side, we have Nifty Real Estate, which is down. In fact, Nifty Real Estate and Nifty Auto both are down just around 0.3%. Not much of loser in any other sectoral indices. But let's start with the Ask Profit. And let's also welcome in our both guests today. Sachin, the market expert, is our technical guest, while Nandish Shah, AVP of PCG Private Client Group Research and Advisory, Motilal Oswal Financial Services, is the fundamental guest for the show. Starting off with the very first query, it's from Shiv Juneja. He has bought around 1,000 shares of Dabur, and he has bought it at a price of around 430. He wants to know whether should he continue to hold this counter or sell. Sachin, any view on this?
Hold with a stop loss of 419, but immediate resistance will be around 442 levels. We need to see if it is closing above it or not.
The next query is coming in from Dilip from Kolkata. He wants to invest in APL Apollo Tubes. He wants to know the fundamental view on this counter. Nandish, any view here?
So APL Apollo, we have a buy rating, and we are positive on APL Apollo. So in case he's looking to buy, he can.
Query, the viewer hasn't mentioned his name. Okay, it's from Nand Gopal. He's holding 3.
So in case he's looking to buy, he can.
query, the viewer hasn't mentioned his name. Okay, it's from Nand Gopal. He's holding 300 shares of HFCL bought at a price of 180. He wants to know whether is it to hold this counter for the next 6 months. Any view on this, Sachin?
So he can hold because a strong stock is in a strong uptrend, has a good momentum as well and a good structure. So he can hold, there is no problem.
Okay, the next query is coming in from Sriram Raghuraman. He's a senior citizen, 175 shares of M&M Finance, bought at a price of 140. From 1 year perspective, Nandish, what could be the view here?
So we have been very positive on the NBFC space, and this M&M Finance has also declared good numbers. So in case he's looking for a 1 year view, he can continue to hold it.
Okay. The next query is on Canfin Home. The viewer hasn't mentioned his name here. It's Aditya Gaur. He's holding 1500 shares bought at a price of 917. Should he buy more or book loss here at this moment? Any view on this, Nandish?
So Canfin Home is not in our coverage universe. But as such, looking at the housing finance space, we have been more positive on the private sector and this public sector banks as compared to the home financing companies, because we feel that a lot of competition is likely to enter this space, and these guys are likely to face margin pressures.
Okay. The next query is coming in from Murli from Hyderabad. It's on Datamatics. He wants to know the view for the next 1 year. I believe you won't be covering this, Nandish, but any view, any recommendation, any thing that you have noticed for this counter?
On data patterns, we have a neutral rating with a price target of around 4040. So just looking on their earnings growth, they are likely to report about 30% earnings growth and currently trading at about 50 times FY27 earnings. So it looks a bit expensive.
Expensive is the call coming in for Datamatics, but by that time Asian Paints has actually reported its numbers, and from the first cut what I could look here is that the numbers are much ahead of what the street has been anticipating. I'm just looking out for the volume growth. Volume growth has come in at around 9%, bang in line with what the street was expecting for this one. If you look at the EBITDA number, that has come in at close to 2011 crore rupees. This is much ahead of what the street was expecting. Let's get in Mahima with more details.
Beat, especially in terms of where the profit and EBITDA goes, for sure. Top line is a slight beat, but better than what the street was expecting. The expectation was around 10,183 odd crore versus that of 10,500 odd crore is what the top line beat looks like. So in terms of versus the estimates, the number look pretty good. For profits also, the estimated number was around 1,240 odd crore, but it's come in at 1,540 odd crore. Overall margins also, the expected margins were to be at 18.1%, and that's the range that Asian Paints has generally done, but this time it's come in at 20.6%. To talk about the segments, international business, the net sales increase saw growth of around 27 odd percent. Overall this was led by Egypt, UAE, Oman, Nepal, etc. In terms of home decor business, bath fittings, overall net sales saw growth of around 4.3 odd percent. Kitchen business saw growth of around 10.1 odd percent. White teak is where overall the net sales for white teak saw a growth of 7.4%, and the Weathersill overall saw an increase of around 11.2 odd percent. For the industrial business also, it's been fairly good. The ABBG business has done a growth of around 21.3%, and the PPGAP business has done a growth of around 13.1%. In terms of the overall performance, I think decorative business volume growth has been at 9%, and the overall value growth has been around 16%. So largely, Somit, is what we are seeing is it's largely driven by the price hikes, but 9% volume growth also at the rate the price hikes have been taken is not a bad growth at all, and we are seeing that sharp spike in the stock also coming in, almost up 3% now.
Okay. So let's get in Mr. Chokhalingam to understand more on this. Mr. Chokhalingam, despite the pressure that we had seen from crude and despite the price hikes, the volume growth looks to be quite strong. It's up around 9%. What is your first cut when it comes to Asian Paints number?
Definitely, it's very impressive. The revenue growth has been 18% and PBT is up 40%. Despite year-on-year raw material costs going up quite substantially by about 35-36%, the company has done very well. So it looks like some inventory adjustment in using the materials have helped, and also the productiveness they seem to have increased. That helped to keep margin better and post robust performance. Surprising, despite West Asian conflict and the crude oil price spiking in this quarter, the performance is really surprising on positive side.
Okay, what would be that one key thing that you would look out from the management on the conference call? What would be that one key commentary here?
Yeah, well, key commentary related to how the inventory is going to have impact on the current quarter, that is Q2. So whether they had any advantage of using the cheaper raw material which were procured earlier in June quarter, and that benefit whether it will be available or not available in September quarter. That would be the key thing, because that is what would decide the next quarter performance.
What do you make of the decorative business growth? Because largely it's seen a value growth of 16%, volume growth of 9%. So a lot of it is driven by pricing, but despite that, a good volume growth of 9% has also come in. For industrial coatings, mid-teens growth is what we've already seen, and that segment has done well in the past quarter as well. But decorative has definitely come in as a surprise and has aided to that top line growth. What do you make of that?
Certainly, it's a big positive, because one has to understand the fact that the two large industrial houses already started, the business in same pain. And despite entry of a big player, even the 9% growth, volume growth is really very impressive in this economic condition, particularly in this quarter when many businesses were impacted by the conflict.
Okay, Mr. Chokalingam, thank you for joining us on this Asian Paints strong set of numbers. The stock is up nearly 3%, in fact 4% in trade. Let's slip into a short break and we'll be back with more news and we'll address more queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Well, welcome back. You're watching the afternoon edition of Ask Profit. Let's move on with our queries. This next one is coming in from Satyapati from Bangalore. He's holding 4,500 shares of Bharat Electronics, bought at a price of 140 rupees. He's a long-term investor. Should he continue to hold this counter for the next 5 to 10 years? Is what he wants to know, Mr. Nandish. Any view on this?
Bharat Electronics declared their numbers yesterday, and there was some miss, which has led to some correction in the stock price. But overall, we feel that this theme is like a structural bet, and he can continue to hold Bharat Electronics.
Next query is coming in from Raja from Chennai. He wants to invest 50,000 rupees for 1 year. Nandish, any couple of stocks that you would recommend that he could invest?
So, so we have been very positive on the capital market theme. So Grow and Angel both can qualify, and also on the EMS theme, which is Sirma SGS. Both these stocks look good for a longer term period, for a 1 year period.
The next query is from Sultan from Chennai. He wants to know whether can he buy Bliss GVS Pharma at current price for short term. Sachin, any view on Bliss GVS?
The overall trend for the stock is up only. He can buy this, no problem.
Okay. The next query is coming in from the viewer hasn't mentioned his name. He's from Tamil Nadu. He wants to know the view on Shakti Pumps or KEC. Which one is a better bet to enter now? Any view on this, Nandish? KEC or Shakti Pumps, which is a better one?
So on Shakti Pumps we don't have a coverage, and on KC we have a buy rating with a price target of 630.
The next query is coming in from Uma, JNK Bank. Is it a good time to buy? Is the results bad? Nandish, did you have the time to go through JNK numbers?
No, we have not covered nor I have gone through the JNK numbers.
Nandish, technically Sachin, any view on this technically?
So he can buy on the supports levels around 145, 150 is a good demand zone.
Moving on to an important announcement that has come in from Mahindra and Mahindra side. They will be selling their truck and bus division to SML Mahindra, which is again a subsidiary of M&M itself. And this deal has been finalized at a price of around 525 rupees. M&M is trading low at around 1.5%, but SML is the counter that we should watch out for. That stock has moved up 20% in trade post this announcement has come in. Let's get in Danish with more details on the same.
Well, that's correct. In a big development, we are seeing that the M&M board has approved the transfer of the Mahindra's truck and bus division to SML Mahindra, and the overall deal value of this lump sale will be around 525 crore rupees. And let me remind you that way back in August 2025, we saw that Mahindra had bought a stake from SML, and it was around 58.97%, and this stake was bought from Isuzu and Sumitomo Corporation. And then we saw that Mahindra had some more rights, and now in order to consolidate its commercial vehicle business, this slump sale has happened, and now this entity that will be there, it will be a larger entity, and this will help Mahindra to consolidate its entire commercial vehicle business, and it will also cater to not only medium and heavy trucks but also to the light trucks as well. So if we look at from a company's perspective, then Mahindra is trying to consolidate its commercial vehicle business into one entity, and this through this they will be able to take over the other companies that are in the market, like the Tatas and Ashok Leyland. So all in all, if we see, it's a big development for Mahindra and Mahindra as they have consolidated this EV business into one entity.
Okay, Nandish, any view on this announcement that has come in from M&M?
So we have been very positive on M&M and TVS on the two-wheeler and on this side. So this is likely to be a positive news for Mahindra and Mahindra for a longer term. They would now be able to focus their complete exposure on the passenger vehicles and the electrification portfolios.
Okay. Sachin, technically, any view on charts, how's M&M or SML looking like? SML has hit an upper circuit, but yeah, any view on charts?
Compared to M&M, basically SML chart is looking good. It can touch 48.85 and 53.78 on the upside as it has given a breakout. Today's low will be the stop loss basically.
Okay. The next query is coming in from Prashant, and he wants to know on charts which is a better bet, delivery or shadow fax. Sachin, any view here?
So delivery will be better. Basically, it has a good trend and momentum. Even structure is good. If we are comparing with out of two.
Okay. The next query is again the viewer hasn't mentioned his name. It's Kohinoor Ghosh. He is holding few shares of L&T at a price of 2,100. Can he hold it for one more year? Nandish, any view on this L&T?
So we are positive on L&T, and even yesterday's results were above street expectations. And even the second half is likely to be much better for L&T.
You have to hold on, right?
Yes.
Okay. The next query is from Puneet from Ghaziabad. He wants to invest 4 lakh in few stocks for the next 6 to 9 months. On charts, any top picks that you have, Sachin, or that he could buy and keep for the next 6 to 9 months?
So he can buy basically JNK Bank is one of my favorite stock and Maharashtra Bank, Union Bank. So in banking category, if he wants to do, he can do in this stock.
Buy and keep for the next 6 to 9 months?
So he can buy basically JNK Bank is one of my favorite stock and Maharashtra Bank, Union Bank. So in banking category, if he wants to do, he can do in these stocks. Other than this, on a lighter note, basically in FMCG and Nestle, I am looking good. So from a defense point of view, I think Chennai Petro is good.
The next query is from Prabhakar from Hyderabad. JTL Industries is holding 235 shares. Should he sell or hold? Nandesh, any view on this?
So we have no coverage on JTL Industries. I won't be able to comment anything on this.
On charts, any view, Sachin?
64 rupees.
Sorry, what 64?
He can hold with a stop loss of 64.
Okay. Sunny wants to know whether should he continue to hold Thangamile shares. He is holding around 10 shares. Nandesh, any view?
We have been positive on this jewelry space, and our top pick here is Titan. We don't cover Thangamalai.
Okay. Next query is from Murli from Bangalore. He's holding around 10,000 shares of Bajaj Housing Finance, bought at a price of 140. Should he continue to hold this counter for long term, Nandesh?
So we have a neutral rating on what is Bajaj Housing Finance. It is better to cut down his loss and what is a shift to a better counter.
Nandesh, which one would that be? Better counter, which one?
It can be Aditya Birla, it can be Poonawalla FinCorp, it can be Piramal Finance.
Next query is coming in from Viru from Bangalore. He's holding 500 shares of EPAC Durable, bought at a price of 250. Should he continue to hold this, Sachin?
So EPAC Durable overall, the trend is down. He should not hold, but if still he wants to hold the stock, there should be a very strict stop loss of 214 rupees.
The next query is coming in from Krishnamurthy from Tamil Nadu. He's holding 1,000 shares of Kalyan Jewellers, bought at a price of 598. Should he continue to hold this counter for the next 1 to 2 years? Nandesh, any view?
Kalyan Jewellers has seen a very sharp run up in last, I guess, about 10 or 15 days. So,
Nandesh, any view?
Kalyan Jewellers has seen a very sharp run up in last, I guess, about 10 or 15 days. So, in case he's looking for a diversification, he can shift to Titan. Otherwise, Kalyan Jewellers is also a good buy at these levels. Again, he can hold on to this stock.
Okay. The next query is from Sunita from Hyderabad. She's holding shares of E2E Network, bought at a price of 522. Can she continue to hold this counter for short term, or should she enter Swan Defense? She wants to invest around 60,000 rupees is what her query is. Any view on this, Sachin? E2E Network or Swan Defense?
So E2E Network basically has a good trend. Basically, if she wants to invest, so she can invest in a staggered manner. Every 5 to 10% decline she can, because there is a multiple support levels on the downside.
Right, let's go across to M&M. They're holding a media call, and our colleague might be asking a question very soon on this.
Stations have now started servicing both the brands in just last 9 months since we did the acquisition. Sourcing synergy is a big area where a lot of benefits have started coming in already. And going forward, we are looking at this along with value engineering to add significant amount in terms of the bottom line of the joint entity. Enhanced manufacturing ability. Right now, Roper plant makes a range of SML Post the transaction, Mahindra and Mahindra's Chakan plant and the Zairabad plant will continue to do contract manufacturing for Mahindra trucks and bus range. And going forward, we can leverage the existing manufacturing footprint and also relook at footprint optimization based on the efficiency and cost measures potential. Operational efficiencies I talked about, and needless to say, the big benefit also comes from by harmonizing the entire leadership. Right now, we could do only at the top level because the two businesses were lying in two different companies, and hence there was a limit to what level of leadership harmonization we could do. Now, going forward, we intend to create one common team for the entire organization dealing with two brands. Next. So this is a summary of what I was talking, that without combination, there was a limit to the level of synergy unlocking which we could do. As you can see in each of the synergy ideas, in some we could do more like sourcing, but many we were not able to do more than 50 or 25%. But with combined entity everywhere except sales network. Why sales network? Because there are many cities where independent third-party dealerships have invested for both the brands. So for some period and long, they will continue as a separate dealerships. In any new vacant area, we will look for appointing a combined dealership. So barring that and manufacturing, which as I said, to ensure no disruption, to start with, manufacturing will remain the way it is right now. And M&M will do contract manufacturing for Mahindra branded trucks and buses. But rest everything will be able to fully harness and unlock the potential synergies, which itself has a huge potential to improve the bottom line. Next. So this is a summary of what we feel that through the scale benefit of both the organization coming put together, this becomes the fourth largest formidable challenger in the commercial vehicle industry, with a lot of commercial and cost synergies, which I talked about, and harmonized leadership and talent, which we believe promises very well to maximize investors' value in terms of creating this becomes the unified truck and bus platform, or a company under which all the trucks and buses businesses of Mahindra Group will come under. And with that, we will invest and take this business to its stated potential.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches.
Hello and welcome to India Market Close on NDTV Profit from the NDTV Profit Suzdal studio with me Hiral Dadya and Mahima Vachajani. A very strong day of trade if you have to talk about the new expiry as well.
Yes.
We've started on a strong footing at the day's highest levels. We're above that 24,250 mark, which is really encouraging. In fact, till yesterday, the question that everyone was really talking about was how high will the volatility be because of expiry?
Correct.
And we were not able to cross that 24,000 kind of a hurdle, which was coming in as a strict resistance as well. But this is telling you where we are headed. With this, just let's quickly pull up Bank Nifty as well and see what's happening, and then we look at the heat map on Nifty 50. Again, almost at the day's highest levels, I would say, with gains of nearly 0.9% coming in there in terms of Bank Nifty. Mahima, if you look at the heat map, very interesting names that are contributing today.
Yeah, absolutely. Of course, you have some names topping that chart here, but I'll start with Asian Paints first because it came out with its earnings just a few minutes ago, and here it's a strong beat, right? Almost a 400 crore beat versus what the street was expecting on the top line. A very good beat when it comes to PAT, and margins at 20.8%, which nobody expected. The expectation was to be around that 18.1% mark. So the stock, however, has come off from the day's high point, but still trading around 2.5%.
The question I have on Asian Paints is it getting its mojo back after Birla Opus as well? Because that was the downer when it came, in terms of Asian Paints. And in the last 2 quarters,
Correct.
we've seen that uptrend which has come back.
And the good part is that the decorative business, despite a value hike of 16%, it has seen a volume growth of 9%, which is not at all bad. That was the segment which was impacted by Birla Opus as a competition, and that's not happened this quarter. So most certainly a strong set of numbers coming in for this one. But Jio Finance also topping that chart with the 5% gain. Infosys, yet another day of strong gains coming in from this one after Jeffries has kind of positively given views on this particular one. And if you
talk about IT as well, that sector is the best performing in terms of the month of July since March or July 2020. Correct. So you know the kind of returns that IT has given. 2.5% up move. The metal pack is also absolutely strong. FMCG, as Mahima was talking about, the only losing end is real estate, but that's after a run up over the last couple of days. There is some bit of profit booking that's coming in with regards to Nifty real estate as well. Auto slightly under pressure, and defense, since the time there has been a truce between US and Iran, the defense pack has been slightly subdued, and there is some bit of profit booking coming in there as well. But let's go back to the Nifty components or the contributors which Mahima was talking about as well.
Yeah, and HUL is also seeing good action today, up almost 4.5% after the beating it saw yesterday. And like every brokerage is saying, it was just something that the street was not expecting.
It was an overreaction.
It was an overreaction, and that's correcting today. And you have L&T also on the back of numbers seeing an uptick of 2.8%, followed by a lot of names like Bharti Airtel, Hindalco, Tata Steel, JSW Steel. So that metal pack doing fairly well. Trent also ahead of earnings.
Let's pull up M&M, and then let's pull up SML Mahindra as well, because M&M is going ahead and selling their truck business division to SML Mahindra, on the back of which you have M&M, which is at the day's lowest levels, cuts of 1.5% coming in there. But look at SML Mahindra locked in upper circuit on the back of this news that has come in. In fact, the conference call is ongoing. We will cut back to it shortly, but let's quickly look at the broader markets as we speak right now, and then we'll look at the advanced decline ratio as well. Again, at the day's highest levels, 0.9%. So there is momentum not only in your large cap space, but even your broader markets are showing you a similar kind of momentum, where the small cap index is also up almost 1.3%. Let's look at the advanced decline ratio. I know there is no surprise here. It is going to be the advances, but clearly 1,800 advances versus 800 declines. It's been absolutely pretty much even Stevens, more than even Stevens stables from the time we opened up. But first up, we were talking about Mahindra and SML. Let's cut back to the conference call if we can, because they're kind of creating a separate arm when you talk about SML Mahindra as well. Let's listen in.
Bringing these two together. So from our standpoint, the path that Vinod has laid out up to F31 is going to create significant value for all shareholders. because the growth will far outweigh any initial kind of coming together of costs and P&L, which is going to be a transitionary phase. And then we should see a significant pickup as the growth comes in and all the synergy benefits come in.
Thank you.
Thanks, Amar. The second question is from Raghu at Nuvama. Raghu, please unmute and proceed.
Thank you for the opportunity and thanks for the detailed opening remarks. Couple of questions. Firstly, with reference to, can you please highlight areas of related party transaction? You mentioned about Chakan Zahirabad plants doing contract manufacturing for MTBD. What would be the various areas in which payments or cash flows will happen?
Sure. Vinod, if you're okay, I can quickly address that because this is a big. I mean, as you can well imagine, all the RPT transactions had to be approved by the board of M&M as well as SML. So the detail is as follows. The primary RPT transaction beyond the transaction itself will be ongoing basis contract manufacturing of existing trucks and buses that Chakan does today and supplying that to SML, Chakan as well as Zahirabad. In addition, we do have a strategic sourcing unit which takes care of a lot of the purchase of goods and material that go into our manufacturing. That brings tremendous value to the combined entity, and so there will be some services provided to that. And finally, there will be some transfer of employees, etc. That was more transitionary that will also require. But nothing out of the ordinary here. What you would expect out of kind of a transaction like this with an ongoing manufacturing obligation with M&M.
Noted, sir. Considering the SML strength in ILCV, would sharing each other's platform and cross-badging happen more in ILCV and HCV launches be more focused using Mahindra brands? I'm trying to understand more on the new product and areas of focus which can help the doubling of market share over the next 5 years.
Yeah, so Raghu, you are right. Lot of the commonization of the platform and the cross-badging opportunity will be practically in LCV ICV segment only, where both the brands play. Though they stand for different kind of value proposition, and they have segments where one is more strong versus other. But heavy commercial vehicle is a play where right now only Mahindra trucks and buses play, and hence there will not be much value in creating a new brand in heavy commercial vehicle by SML.
Okay, so that's, the conference call or the media conference which is ongoing with regards to M&M as well. But let's get in Nilesh Jain from Centrum Broking, and we have Mr. G. Chokalingam as well who's joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Mr. Chokalingam, I would want to come to you first on this entire M&M transaction that has happened where the truck division has been sold to SML Mahindra, because of which SML Mahindra is locked in upper circuit, M&M at the day's lowest levels. What do you make of this deal? Mr. Chokalingam, this question is for you.
Oh, sorry. Yeah, tell me.
The conversation about M&M selling its truck business to SML Mahindra. What do you make of this transaction?
A bit surprising because this is an economy which is seeing, larger ones becoming much larger. So here, hiving up to smaller company, and of course, that's a specialized company in bus segment. It makes sense, no doubt. But it's a surprising that, M&M itself, when it is trading at just 23 PE, I would have been happier if, the reverse merger has taken place and M&M business has been consolidated much bigger within the automobile. But of course, we all know the ethical part of Mahindra Group. There is no doubt on that. Otherwise, yes, I am quite optimistic on both companies now.
Okay, Nilesh, let me come to you in terms of what markets are doing as well and your top picks, because you're at the day's highest levels from the broader markets to your benchmarks. Everything's firing for a second consecutive day, I would say. What is the next level that you're tracking, and what would your top picks be in this upcycle?
Very good afternoon, Hiral. Good afternoon, everyone. Well, a very strong move that we have seen from the levels of 23,600 that was tested recently. And this has been the 3-4 consecutive sessions of up move that we are witnessing. And with that, the Nifty has surpassed all short-term moving averages. The 21-day moving average, which is currently placed at 24,100, will act as immediate support. And we are expecting a follow-up move towards 24,400, 24,450 on the upside. The setup looks positive. And on the back of that, I have a couple of recommendations. First of all, NMDC seems to have formed a very good base formation. So NMDC is a buy for upside target of 88 and 90, and stop loss should be placed at 84. NMDC will be the first preferred bet. Apart from that, banking space is looking attractive now. After a recent correction that we have seen, a good base formation can be seen in the stocks like Kotak Bank, IndusInd Bank. In fact, both these counters are looking positive. Kotak Bank looks good for follow-up move on the upside towards 400 and 405. So with a stop loss below 384, Kotak Mahindra is a buy.
Nilesh, anything in the consumption names that you're liking today? You have a lot of them doing very well, especially in the Nifty 50. You have Trent, HUL, Asian Paints, etc. Seeing good gains coming in. Plus, in the broader spectrum also, you have small names like Devyani, which has come out with a good set of numbers, also up almost 6%. Anything specific that you're liking?
Yes, absolutely. So consumption space specifically, couple of stocks that are looking attractive is first of all Trend. We did see a kind of a carnage at the beginning of the July series, and then we have seen a good base formation. Stock rebounded sharply, so we are likely to see a follow-up on the upside towards 3,050 to 3,100. So Trend is a buy and decline kind of a structure, keeping a stop loss below 2,900. And apart from that, Devyani International, yes, in this particular stock is also we have witnessed a good price and volume breakout. So looks good for 125 kind of levels on the upside. Keeping a stop loss below 114, one can go long in Devyani International as well.
All right, okay. So that's the view coming in on all of these consumption names. But Paddy Phosphates is the other one which has done very well today in trade on the back of strong Q1 numbers. And we have Varsha joining us to give us more perspective. And there's also an expansion plan of 250 odd crore, Varsha, if I'm not wrong. Give us more details on that. Yes, absolutely. So two reasons. One is, of course, good Q1 numbers and the expansion plan that they've announced. Starting with the Q1 numbers, if you see, sales volume grew almost 4% year on year, though there was a bit downtick when it comes to EBITDA margin, considering the geopolitical situation that we are in. But overall, a good set of numbers, I would say. Margin impact was led by volatility in raw material prices. Overall, if you see, revenues were up almost 36%, EBITDA was up almost 24%, EBITDA margins were at around 11.8% versus 12.9% last year, and there was a good growth when it comes to net profit as well. Net profit was up almost 23%. Now, talking about the performance overall, if you see, the growth was despite Middle East led raw material volatility and even supply chain efficiency supported operations. Although the raw material sourcing, if you see, diversified across geographies, and also pan-India sales and distribution network, led to, of course, aided growth. Now, talking about the capacity expansion, let's see. The phosphoric acid expansion progressing as planned by the company. The capacity will actually rise from 5 lakh MTPA to 7 lakh metric tons per annum, and the expansion is being undertaken at Paradip's facility only. Now, the other highlighting point over here is the new chemical diversification. So the board has approved 250 crore investment in aluminium fluoride plant, now which will be set up in Paradip facility only, and this marks actually, if you see, entry into industrial and specialty chemicals, which is a kind of high margin products, I would say. The aim is to build non-subsidy revenue streams, and of course the byproducts will be converted into value added products. So this is actually the highlighting point, and maybe market is liking it because this will aid. One is, of course, the margin expansion and the diversification from the subsidy-led revenue. Onto the outlook, management expects global uncertainty to continue, of course, which can have an impact on margins overall, and the focus is on growth through operational discipline as well. So overall, a good set of numbers considering the geopolitical situation that we are in, and the diversification from subsidy-led revenue is one of the reasons also why you're seeing the stock is up almost 10 to 11% in trade.
Okay, so that's Paradip Phosphates. Nilesh, on the charts, strong moves on the back of earnings as well. Would you still be a buyer, or
why you're seeing the stock is up almost 10 to 11% in trade?
Okay, so that's Paradip Phosphates. Nilesh, on the charts, strong moves on the back of earnings as well. Would you still be a buyer, or would you say book profits?
Well, Hiral, we have already seen a very good in today's trading session, close to 13%. So first of all, in terms of taking a fresh entry, it's an avoid. The risk and reward is not looking favorable. But just in case if somebody is already this rally, maybe up to 165 to 170.
All right, okay, so that's the view coming in on Paradip Phosphates, the stock up almost 13% as we speak. But the other one that's done very well is SH Kelkar. It posted a strong set of Q1 numbers. Overall, in terms of revenue, it's on an uptick of 14%, EBITDA an uptick of 17%, net profit a growth of almost 77%, but there was also a one-time gain associated with the profits. But to take the conversation ahead as to how things have shaped up in this quarter, what the outlook is looking like for FY27. We are now joined by Jagdish Agrawal, the Group CFO of SH Kelkar, joining us now. Jagdish ji, thank you so much for taking out the time. Mahima this side. My first question to you would be with regards to how things have fared. A large uptick in terms of top line has come in, if I'm not wrong, from the flavor business. Though of course it's almost 1/4 or 1/5 of your total top line, but there has been a significant growth when it comes to the top line for this one. Even EBITDA has seen a significant growth in terms of this segment. So going forward, how do you expect the mix to be like in terms of fragrance versus flavor? And overall, what's the outlook looking like when it comes to, for the margins also for the both of them?
Thank you. And first of all, good afternoon, Naima. And I'm happy to be here because probably after many quarters, we have seen that we are coming back where we deserve to be. The mix was definitely good. In the first quarter, we have seen flavor has contributed significantly, very high. And we do expect going forward also, we would like to maintain the ratio between these two businesses at a healthy pace only. The mix was definitely good. In the first quarter, we have seen flavor has contributed significantly, very high. And we do expect going forward also, we would like to maintain the ratio. But again, I just want to put a word of cautions because the first quarter cannot be a benchmark for the entire year. We talked about full year outlook, and we are still committed that we are looking into double-digit growth in the top line. Margin definitely is an area for us. We have to continue to protect the margin, and we have to see what are the opportunities to improve this. So our endeavor always is that we have to continue to improve margins by focusing on the cost and other elements of margin improvement areas.
Okay. The other aspect is with regards to your and I'll stick with you just to follow up on that, because fragrance division EBITDA saw a degrowth of around 5% if I'm not wrong this quarter. What has led to that? Is it the cost pressure, inflation that's impacted the quarter, or is there something else?
So it's a mix of things. Mahima, one is that cost pressure is there. The second, if I look at, is AID business, which is our global ingredient business, where we have seen a drastic drop into the sales number. That, if you look at on the last year, it contributed around a slight profit, but this time we had a loss on that. So one is a cost pressure, second is AID has not contributed the way we were expecting that that business would contribute on that. And third element always is that we are building our capability when we talk about R&D, when we talk about creative development centers. We are continuing to build our capability. That OPEX element is also there. For sure, that is going to help us to grow more faster in future, but for the time being, that is also adding to the overall EBITDA movement. And that is more so into the fragrance business.
Okay. Jagdish, good afternoon. This is Hiral on this side. It's interesting to see, how SH Kelkar is making a comeback. How would you peg yourself if you have to look at, global peers like Firmenich, Givaudan, because those are the ones which are actually ruling the roost when it comes to these segments as well to some extent.
So you're right here. And when we look at our aspirations, SH Gilco is the largest flavor and fragrance company of Indian origin. When we look at, but definitely when we talk about those global big four, they are a much larger. And our aspiration, when we look at a long-term aspiration, is that we would like to be a global company, global flavor and fragrance company. And the reason is that we are expanding our portfolio into the European market. We started doing something in US. We are into Southeast Asia. So we have already started having our footprint across the globe. Having that presence into the market, which are really huge in size when we talk about Europe, when we talk about North America, these two markets contribute almost 50%, more than 50% of the global demand. And we have already had our presence into those markets. So our aspirations are very robust, very healthy aspirations when I talk about. And we definitely are looking into somewhere into that we would like to be a most respectable, recognizable global flavor and fragrance company.
My other question to you is, with the kind of performance that you've given out in the first quarter of FY27, how confident are you of maintaining similar kind of growth levels in the remainder part of the year as well? And on number two, is it going to be, premium products that will drive the growth, or is it going to be the same portfolio?
No, so portfolios keep changing, but when we talk about the nature of our business, we have a customized formulations and a diverse portfolio. And again, we work multiple customers, and our customer portfolio is really diverse. So, performance, the demand from the customer, the end segment vary from one quarter to another quarter. The geographical demand scenario also vary from one quarter to another quarter. So when you look at a quarter-on-quarter performance, probably it's very difficult to comment on that. But when I talk about our outlook for full year FY27, we remain confident that we'll deliver double-digit revenue growth. We'll continue to focus to protect our margins and improve our overall EBITDA. Not only that, the other angle is that we would like to definitely focus on our cash conversion cycle to address the debt situation as well.
Okay, can you define double digit for us? Is what we're trying to understand, Jagdish. For FY26, you did around 2,300 odd crore. Yes. By the end of FY27, where does this number go in terms of top line? And for bottom line also, you did 69 odd crores in FY26. So where does that number go by the end of FY27?
So when I say a double digit, I mean to say that at least we are going to have 2,500 crore plus for FY27 when you talk about the revenue, or more if we just extrapolate 650, but that may not be the right way of looking into the number. As I said, we might have variations in quarter over quarter, but for a full year, we are expecting 2,500 crore plus number for sure. When we talk about EBITDA, the EBITDA outlook we have talked in our earlier earnings call is we are targeting at least a 300 crore EBITDA in FY27. That number was at 241 when we look at FY26.
Okay. Jagdish, the other question I have for you is in terms of the leverage and the capacity expansion. You're investing in new manufacturing capacity. So what are the kind of asset turns and return ratios that you're expecting from the projects once fully operational? And number two, the debt level does remain elevated. So what's that deleveraging plan that you have over the next 12 to 18 months?
So first I'll talk about the capacities, what we have. We had one new facility in Almere, Netherlands. That's fully operational from this quarter. In the Q1 onwards, that's working well. That help us to bottlenecking or capacity constraints what we have in Europe. So that definitely is going to help us in our growth. In Maharashtra, we have facility 1 out, which is on track, and we are confident that that will be up and running in the third quarter, most likely. The another Vasivali factory, where we had a fire 2 years back, that is on a rebuild, and that's progressing well. So capacity is not a constraint when we look at, when we talk about the deleveraging the debt positions and also there are a lot of steps which we've already implemented. That are one key element on the cash conversion cycle. We are focusing on a working capital management. We are working well on that. And it's going to take some time. On an immediate term, when we talk about a quarter or so kind of that, we continue to have a pressure. But one thing which we are ensuring is that we continue to have a security, supply security to our customers. And that was a conscious decision when we look at in the first quarter, we build an inventory to ensure that we have a supply security and we'll get more leverage in the market on that. So that was a conscious decision. CapEx cycle is there, that will be there for another 6 to 12 months. So I think it's a matter of time, maybe a couple of quarters, and then definitely we are going to see. But for FY March 27, we definitely are expecting some reductions into the debt. Long term, we are committed to reduce it for every passing year with at least 10% plus.
Just one last quick one, and possibly a 30-second answer on this one, Jagdish. What was the volume versus value growth like in this quarter? And when you say 2,500 crore plus in FY27, how much of that are you expecting from volumes and versus value?
So, given the customized nature of our formulation and the diversity of our product portfolio, a simple, I'll say that volume and pricing split doesn't fully reflect the underlying business performance. I mean, each products are different, and then when I say that we have more than 2,000 kind of product and customized formulation, so it's very, very difficult to comment on that. Even though you might have a separate product, different product mix that might give you a very high revenue irrespective of volume and all. So generally, we don't go into that when we generally look at a product portfolio business and how we are going to win the new business in the market, what kind of project pipeline and all. So instead of a volume and price probably is not a right way to look the underlying business.
Got it. Got it. All right, Jagdish, thank you so much for taking out the time and helping us with all those answers, of course, being so candid. But with that, viewers, time to slip into a very, very short break. But on the other side, we'll get you top by today's Sell Tomorrow call. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा आप अपना देख लो
ये युग तुम्हारा ये रण तुम्हारा हर चुनौती तुम्हारी हर शिखर तुम्हारा तुम ही हो भारत का स्वाभिमान
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Welcome back to India Market Close on NDTV Profit. Let's quickly pull up the markets as well as we speak in terms of Nifty 50 as well. The uptrend continues, which is the most encouraging bit. 1.2% higher is what you're seeing there. In terms of individual stocks, few of the names that I want to highlight right now from the broader markets is SML, Mahindra, we've already spoken about. First Source Solutions is another one which is seeing a very strong day of trade with strong volume build-up. Keynes will be reporting numbers. The expectation is that it is going to be a strong set of numbers, and that stock ahead of the numbers is up almost 11 to 12%. PCBL is another one. 11 to 12% is the kind of gains coming in there. What's under pressure? JNK Bank is down 12%. Thangamal Jewellers is down as well. Inox Green, TD Power, Sharda Cropchem are a few of the other names which are drooling under pressure as we speak. But it is that time of the day where we get you all the chatter from the dealing room. Somit Sarkar joins in with all that he has right now. Somit, very interesting moves that we are seeing in terms of where markets are concerned, almost at the day's highest levels across parameters, but a lot of stock specific action is what we are picking up as well. What is the khabar that you have for us today?
Yes, Hiral, first day of the series, and this is something that we have seen in the last couple of days, last couple of series as well. The first day of the new series, we see a good run up, and that is what has played out. And historically also, if you look at the August series, it has always been, most of the times it has been good for the market. So it will be interesting to see how the series pans out going forward. But yes, a lot of stock specific action that we are seeing. Firstly, on Keynes Tech, there are buy flows on the PMS desk. Now there's a buzz of a strong Q1 numbers and also a potential sale that could happen from the company's side of its smart meter segment. So that would be interesting to watch out for if that comes in, or that's the buzz on the street, and hence the stock is up nearly 12% in trade. For Tilak Nagar Industries, large prominent HNIs and PMS have been accumulating this counter in trade today, hence it was up around 5%. For HFCL, the stock opened lower, but we have seen strong buying action continuing. Now dealers are indicating that some insiders have been accumulating this counter in trade today. In fact, at one point of time, the stock was down nearly 2% and right now it's trading up nearly 3% in trade. For Deepak Fertilizer, there are buy flows on the large HNI and PMS desk. Dealers expect strong Q1 numbers to come in here. And when it comes to HDFC, AMC and Eternal, there are buy flows on the DI desk is what dealing rooms have indicated, and delivery volumes could be on the higher side. For BSE, dealers are expecting a brokerage note regarding inclusion of BSE as a stock in the Nifty 50 to come in very soon, and if that inclusion happens, then there could be inflows of more than $600 million when it comes to BSE as a counter. And lastly, when it comes to PB Fintech, there's a buzz of some announcement that could come in from IRDS side very soon, so keep an eye out for Policy Bazaar as well.
Okay, thank you so much for that, Sumit. Interesting names that we are picking up there. But, you know, one aspect that we need to focus on is what's going to happen from Monday when the new norms kick in on the F&O front in terms of the closing auction prices. Now, as we try to understand what it means and what impact will it have, I'll just quickly take you through what's happening over there. In terms of the new norms that we're talking about right now, you have normal continuous trading that will now stop at 3:15 p.m. The closing auction session will be from 3:15 p.m. to 3:30 p.m. and the buy and sell orders are collected and matched at one single price. That's the closing auction session, and then the single price becomes the official closing price of the stock. What would this really mean for the markets? Prakash Gagdani, founder and CEO at Soaring Peaks Capital, joins in. Prakash, welcome to the show. Always a pleasure to speak to you. Just help us understand what is the kind of impact that these new rules that will have in terms of markets that will kick in from the 3rd of August.
Hi, very good afternoon. First of all, thank you very much for having me. See, the change which is happening is basically the change in methodology of calculating the closing price of the stocks. And we are moving from a volume weighted average price to a closing auction session where it's much more better, much more global. So we're moving to that. I think broadly it is being done because one is obviously in the 30 minutes of the market, if there is a price manipulation in terms of rigging, then that will be arrested by this. But I think the larger one is for the mutual fund NAVs and the passive funds. As the volume and the AUMs and the passive funds have gone up, for them it is going to be a much beneficial way of deciding a closing price, because that's where the trades of the passive funds happens on the closing price. So this is more of a methodology change which is happening, which is more at par with the global exchanges, and Indian exchanges are now following the same path.
Prakash, hi, Mahima also joining in. So as you mentioned, we will, this actually helps us in terms of competitiveness and at par with the global financial system as well. But just want to get a sense, do you think that because of this change happening and it gives us, and makes us at the same level as the global financial systems, do you think the long only passive funds flows will happen in India on account of this change happening? Do you reckon that? And if yes, what could that impact be like if that's quantifiable?
I think this is one of not a driver of getting the foreign money and the FIs and FPI money getting into the country. Definitely it will, for them it makes a level playing field in terms of investment in other markets as well as in Indian markets. But long only funds and the passive funds anyways has grown in India significantly in last 5 years. We are almost at an 8 lakh crore AUM with respect to the equity passive funds. So there is definitely a huge growth in passive funds, but I don't see that this will become a driver of further growth. Rather, this is more of an enabler in terms of reducing the tracking error for the passive funds and NAVs. So I think it's more of operational efficiency rather than a driver of the more business coming in the future. The factors driving would be different than this.
Gosh, how are you seeing an impact when it comes
a driver of the more business coming in the future? The factors driving would be different than this.
Gosh, how are you seeing an impact when it comes to brokerage houses? Because a lot of reports indicating that there will be an impact in terms of revenues of brokers. What's your view on it?
I don't, frankly, I don't see that it is going to have a revenue impact. I'll explain now. Brokers have large revenues. You have brokers from 1,000 crore revenue to a 10,000 crore revenue. If you're saying that this will knock off 10 to 100 crores of the revenue, I think it's a bit exaggerated. If you look, what exactly is changing? It is the methodology of closing price is changing. Markets today, which are there till 3:30, the continuous trading session will be till 3:15. There is no change in the derivative market. Rather, there is a 10-minute extension on the derivative markets. If you look at revenue contribution, largely, I mean, broadly, if you see the listed brokers, half of the revenue comes from the derivative trading, which is typically indexed. So there is no change in the index-based trading, neither future nor options. There is no change in the margin funding, which is the second largest revenue stream. So ideally, there is no much change in terms of the revenue pie of the brokers. There may be a smaller changes for people who are trading in stock futures and or hedging against stock in cash market as well as in futures or in options of stock. So there might be small changes there, but having a 1% plus to up to 5% revenue knockoff, I think that is a bit exaggerated. I don't see a significant change in the revenue in the near to medium term.
Okay, so it's going to be interesting to watch out for once it actually comes into effect from the 3rd of August. But thank you, Prakash, so much for joining in. Always a pleasure to speak to you as well. We'll quickly slip into a short break, but before that, we'll be joined by Shivangi Sarda and Sameer Dalal as well on the other side of the break to talk to us about the markets and what's lined up with the kind of highs that we're seeing in today's session as well. Please stay tuned.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Welcome back. You're watching India Market Close on NDTV Profit. We're talking about the levels that we should be watching out for. Let's get in Shivangi Sarda's view. Shivangi, good afternoon. I mean, good highs that we are seeing in terms of markets. Momentum is looking pretty strong on the first day of the new series as well. What are the levels that you should be tracking? Do you think at higher levels you will again start seeing profit booking? Shivangi, this question was for you. I think we've lost Shivangi. Let me go across to Samir. Samir, I don't want to talk to you about overall markets. What I want to talk to you about is individual stocks right now. In fact, Mahima was very keen to talk about what's happening with an Asian Paints and the kind of recovery that stock has made fundamentally as well in the last 2 quarters. How are you looking at reading the numbers?
I haven't gone through the numbers, to be very honest, in detail to be able to comment on it. What I've seen is the broad headline numbers are 40% up. So obviously that is a big positive, right? When you're doing so well, when competition is still very intense and you have raw material prices going up. So unless there's a one-off, which I have, and like I said, I haven't seen the numbers. The basic numbers seem quite okay at 40% revenue growth. That looked fantastic. So the bigger issue, though, still remains is that, look, the paint industry has gotten very competitive. How long can you sustain growing business without hurting margins when competition is out to take business? So you have 2 large players that have entered. Obviously, we know JSW is one, and the other being Grasim, right? Oppo. So not Oppo, whatever the name is. So given that fact, we still think with competitive intensity remaining firm, this is a sector that is trading at high valuations and the risk still remains. So earnings may be good, but the question is, can they maintain those kind of earnings going forward? And I have my serious doubts on that unless the industry expands exponentially. We don't see that happening. We see a gradual ramp up. So the next year and a half will still remain a little tight, and then maybe things will start getting better once the new players, new entrants have got some amount of market share.
Make of something like a Devyani. Samir, very good afternoon to you, because we've seen good moves coming in a lot of QSR names in the last couple of days, right? And we've talked about this before as well, that you seem to be bullish on the entire space. What do you make of Devyani earnings one, and overall do you think things are changing, the landscape is changing for QSR, of course on the back of a low base as well?
So is the landscape changing for QSR? I think it is. It should start getting better as the consumption story in India keeps picking up, right? So we've been very, very bullish on the whole consumption theme, and QSR being a very discretionary spend, but being a low ticket item kind of situation can do really well. Now, top line growth, I think, came in at about 17%. Which is good, but we need to see how much of that was SSSG and how much of that is due to new store additions, right? So the SSSG did come in positive. I think it was 6%, if I'm not mistaken. I haven't confirmed that yet with my person. But if at 6% SSSG, we think that is a good start. That is a good move up, because then the operating leverages start playing out. We've been saying this for a while, that if you go back into the history of these QSR companies, they have actually seen SSSG degrowth over the last couple years, right? So even if they go back to the previous high levels, I think there's huge potential and huge upside for these stocks. And then you also have them constantly adding new stores, right? So as the new stores start maturing, which will of course take time, it takes 6 months to a year before they reach a level of maturity and start making money for the company, the overall operating margins at the headquarters, that is the OPEX cost at the central office, starts getting further diversified, which gives a further boost to the operating margin. So we remain still very, very bullish on the entire space. Devyani has the tie-ups for the international, plus they've got their homegrown brands as well. And as those scale up where they don't have to pay the royalty, I think that part of the business plus the catering for the airports and all of that, I think is going to do extremely well. So we remain very positive. Valuations, when they look extremely expensive optically because profitability is not there. But if you look at the cash profits of these companies and you value them on that, I think they're very, very reasonably priced.
Okay, so reasonably priced in terms of Devyani International. Shivangi, let me come to you. It's 3:10. I think we could take your calls. What someone should look at more in terms of BTST at this time?
Very good afternoon, Hiral. So the markets have been starting the August series on a very positive note. And, we've seen a lot of stock-specific action. But for BTST, I think my trade would be on a TVS Motor. We've seen that the entire auto space, this one has been one of the strongest names. And buying could be seen today till the last hour of the session with a solid breakout on the weekly basis with good follow-up action as well. Now, volumes have been significantly high from the last two sessions, which is confirming the trend of the trade. And we're recommending a buy here with the next targets of around about 4,200 and a support near 4,015 levels.
All right, okay. So that is with regards to where some of the topics stand. But let's also take a look at Swiggy, because since the announcement of new Swiggy Instamart CEO yesterday, the stock has been zooming in trade. So we decided to do a bull versus bear segment on Swiggy to understand as to what the bull and bear case are. Of course, the first one being that, overall the Instamart CEO resigned, and on the back of that, Nandita Sinha was appointed. She has got a very good experience in terms of her career. She's been the Myntra CEO before this, so we'll have to see whether that translates to growth in quick commerce as well or not, because she's driven growth in e-commerce as well. The next part is that we've seen that the stock has seen a significant downtick in the last 1 year. It's down by about 30% made a low of around 235 in June end, but the stock has also recovered quite a bit from the low point. Almost 35% uptick from the low point is what we've seen. In terms of the recent news flow of the board not to reduce foreign ownership limit to 49.5%, this has happened earlier as well, but that time it got rejected by the shareholders, and it did not get approved. So this time we'll have to wait and watch whether shareholders approve that norm coming in or not. The next one is with regards to the inventory owned model. Eternal has done this. Swiggy also wants to do it, and that's why they want to bring their foreign ownership down to that 49.5% mark. And though this is a very positive one eventually, but in the near term it could put cost pressures because they'll be buying the inventory to own it. So that's the one thing that you need to keep in mind. Lastly, in terms of the guidance given by the management, they've said that contribution margin break even should happen in Q1 FY27, which we'll be, by the way, watching out for in these set of numbers, Q1 numbers, when they come out. But at the same time, we've seen very strong competition coming in, not only from the Zepto and Blinkit side of business, but now also from Amazon Now and Flipkart Minute. So that's something that we'll definitely be watching out. So that's the also from Amazon Now and Flipkart Minute. So that's something that we'll definitely be watching out. So that's the entire case of bull versus bear. But Samir, quick view on Swiggy as well as how the entire quick commerce place is shaping up. What would you say?
Yeah, so I'm leaning a little bit, unfortunately, more in the bear case scenario right now, Mahima, and not for any other reason. I mean, I'm saying the QSR market is growing extremely well, right? People are getting lazier, and home delivery of all your items is becoming a lot easier. But the problem, what you rightfully mentioned, and which I think is a pain point, is going to be the increased competition. It just means that people are going to check more of the apps. People are going to look more for the discounts. Which means that you're not going to be able to grow the profitability arm that easily. Plus, this business relies very highly on volume, right? The turnover that you do, because the more you sell, even at smaller ticket sizes, your OPEX at the store level keeps going down, meaning the per item, per ticket, the cost of the store keeps going down. When competition increases in each of these areas, what will happen is there will be some shift away from one to the other. And that means now your OPEX to sales will start looking a little more elevated. So that remains one risk. Second, to retain market share, if they have to increase discounting, that could become a bit of a problem in the short term. So for us, the food delivery business is something that is fantastic, which will do really well. We think it's good. The QSR is going to go through a bit of time to mature. You have companies that are entering which have very deep pockets, right? Amazon with deep pockets, Flipkart backed by Walmart, deep pockets, and Then you have Zepto, which is also now coming for an IPO, which will get another 5,000 or 6,000 odd crores. So given all of that, we think, I'm not saying the stock is going to crash or anything, but the upside is capped, right? So for me, when I look at returns, I don't see that coming in the near future, in the next, say, year or year and a half. So from that angle, what we have in either Eternal or Swiggy, we'll just hold on to, but we will not add any. If it moves up further above the IPO price, we may actually look to even sell.
Okay, so Swiggy, interesting, but there is a lot of interest right now. If you have to talk about Swiggy and Eternal, both of them have seen some good run up in the last couple of trading sessions as well. So that's the story there. But let's see what happens going ahead. We'll quickly slip into a short break. On the other side, we'll get to your top buy today, sell tomorrow picks as well. Shivangi has already given a few, lots more lined up. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Kia ora from New Zealand, and NDTV Profit is
Welcome back. You're watching India Market Close on NDTV Profit. On to an exclusive conversation. One stock that is, or in fact, the sector that is buzzing is the railway pack. Look at what's happening with the Jupiter wagons today. You have Texmaco Rail as well, which is up nearly 2.5%. My colleague Danish Anand actually got an opportunity to speak exclusively with Saroj Kumar Podar, Executive Chairman of Texmaco, where he's talking about the company which is betting on a new leasing JV to deepen its rail financing presence. Let's quickly listen in.
Today you have announced the formation of a new JV. What sort of benefits do you see for the overall ecosystem in the railways?
I certainly believe that, you see, in India today, the main leasing company is GATX. Texmaco 2X has also been there, but our volume has comparatively been, our market share has been 20-25%. With this Trinity joining in, we will be able to source international funding at very competitive rates and thereby increase the availability of funding available to Indian industry.
All right, so that was, of course, the management of Texmaco Rail. Let's try to take a look at what the stock is doing right now. And there you go, it's up by about 2.3 odd %. In fact, Shivangi, I'll come to you on the entire railway pack. It's been a topsy-turvy ride for railway as a pack in the last couple of months. Anything specific that you're liking, where charts are looking attractive, and a possible entry point in any one of these stocks?
Yes, Mahima, absolutely. More than the topsy-turvy ride, I feel that these stocks have kind of made minor attempts of recovery, but those have been negated, and the stock, the entire sector, has been trading in a downward sloping channel from the last 6 weeks. So somewhere there is some bit of resistances which are still intact in this entire space. However, we've seen that Railtail has kind of performed well today. But overall, the other stocks, if we look at, the other stocks from the same pack. I think momentum is still somewhere missing and lacking for these stocks, and it'll be important for them to hold at these levels for the momentum to again sustain. Yeah.
Railway pack, but a lot of other companies which are buzzing in trade on the back of earnings, volume, strengths. Parth joins us with all that he's picking up. Parth, over to you.
Interesting names. The first one is TIL, which is on a 4-day gaining streak. The stock has gained almost 25% in the last 2 sessions. The stock has also touched the highest level since January 2026, and volumes today are 16 times the 20-day average as well. The second one is Orissa Minerals. The company has got an environmental clearance for a Belkundi mine that is located in Odisha. The output of this mine is 1.8 MTPA of iron ore and 0.3 MTPA of manganese ore as well. The stock has gained almost 15% in the last 4 sessions. Today the company saw its biggest ever intraday gains since April 2026, and volumes today are 12 times the 20-day average as well. The third one is First Source Solutions. The stock is on a 3-day gaining streak, has gained over 10% today. The biggest intraday gain the company has seen since May 2026. The stock has touched its highest level since February 2026, and the volumes today are 13 times the 20-day average as well. Now moving on to 2 companies that are buzzing on the back of news flow and results. The first one is Deep Industries. The company reported a very strong set of Q1 numbers yesterday with both profits and revenues touching the all-time high levels. The stock has also hit the highest levels since September 2025 with while also gaining almost 20% in the last 4 sessions as well. And lastly, Sigma Advanced Systems. The company recently won a 1013 crore export order for artillery shells. The stock has been in the upper circuit of 5% in the last 3 sessions and has gained over 20% in the last 4 sessions as well. So these are the top 5 names that you should that you should look out for.
Angi, anything that you like on the charts from the names that Parth just got for us?
So looking at the entire pack right now, of course, there's a lot of momentum and buzz in most of the sectors that are happening. IT, kind of leading the entire pack from the last 4 trading sessions. We've seen, of course, there's a lot of momentum around here, but my, stock ideas of for the August series would be very selective in case of some of the very specific mid-cap IT space, some of the diagnostic space stocks, and looking at some of the consumption-related counters.
So interesting names coming in there. In fact, I want to take this question with Samir as well. Samir, what do you think of IT? Best month in terms of July since July 2020. Something's happening.
I don't think anything is happening. I think it's just basically something that has been oversold, right? The pessimism was probably overdone. When every broking house in India has reduced their targets to the levels that they have, it kind of tells you that the worst is in the price, right? So I think that is probably one. Now, am I saying that this is going to bounce back and keep going up? I think it's going to be a while before that happens. And for the simple reason that growth still remains a question mark, right? Just to believe that money flow will come into Indian IT because there may or may not be a slowdown in AI investments in the US and China and Japan and wherever else, I think that's a bit of a folly, right? So I still think we need to focus on Indian IT services and the growth rates that they can achieve. And simply put, I still think growth rates are going to be subpar. They're going to be top line growth rates of 2 to 7%, 2 to 8%, anywhere in between. Bottom lines might be a little bit better than that because operating leverages and margins might improve with AI integration.
Sure.
But am I going out and saying gung-ho buy the stocks today? No, I'm saying buy them slowly over the next year.
So staggered buying is what you're saying. Staggered buying is what you should look at. Very quickly, your Lok Sabha is actually adjourned right now. However, the public examinations, that is the Prevention of Unfair Means Amendment Bill 2026 has been passed in the Lok Sabha as well. That's what we're picking up so far. That is coming in as we speak right now. But you have SGS Sirma earnings also The profit is much better as compared to what the street was estimating at 100 crores versus 77 odd crores. Let's just pull up that stock on the screens as well and see what's happening there. We will get more details on that one, but a strong set of numbers, at least in terms of the top line, bottom line. However, the stock is seeing a mild correction as we speak from the day's highs levels. I'll wait for other details, but before we come back to this one, your domestic investors have continued to tighten their grip on Indian equities, and according to a Morgan Stanley report, your domestic ownership has climbed to a record 29% in the June quarter. What has led to this growth and what is holding the FPIs? Sharad joins us with all the answers to this. Sharad, over to you.
Thanks a lot for that, Hiral. And largely we see the June quarter trends, how they're actually panning out, and FI numbers, if you talk about it, that's at a 16-year low. But the DI ownership, that is continuing to make new highs. Let's look at the key numbers. 37 basis points increase coming in, a new high of 29% when it comes to the overall market share for the DIs. This is led by, of course, the retail investors and the mutual funds. The FPI holdings, that's a concern. 16-year lows levels coming in. And the ownership of controlling stakeholders, that's of course the promoters, for the second straight day they are buying. That means volatility was there, but a good buying coming in from them. The average portfolio churn and the sectoral positions have declined in the second quarter of calendar year 26. And the largest institutional overweight is in financials and underweight in industrials. This is the numbers till the June quarter itself, nothing in July. This is how the total picture is looking like of the top 75 companies which has been taken by the broking house. Of course, largely FPIs are having almost 21% stake, and promoters still a majority of it, 43%. Largely look at the biggest purchases and the biggest sales, what has happened in the June quarter. For FPIs, the biggest purchase has been Adani Ports. For promoters, Bharti Airtel has added up. Coal India, of course, the OFS impact was there. Financial institutions, this includes insurance and banks, they have bought the most. That's IndusInd Bank, and amongst the selling is UPL. Also, another category, if you talk about the other categories, the mutual funds, biggest purchased has been IGL. But even if you look at the NRIs and the Indian public, they have added a lot of stocks in the Z. Yes Bank, biggest stake sale, and NRIs, also IndusInd Bank, that's where the sell-off is happening. FPI positions, this is the total positions looking like for, and of course the positions rising for Shriram Finance. Apart from the FPI positioning also, let's look at the domestic positioning, how that plays out. And the most overweight is Axis Bank, most underweight comes in Reliance, and largely other factors also. Let's just have a look at that, where we show you that the financial institutions is most underweight on HDFC Bank, interesting, and most overweight comes in for ITC as well. And net the aggregate numbers, Reliance is most underweight and most overweight is ITC. So this is the entire picture for the June quarter when it comes to the ownership trends.
So much for getting us those details. Very interesting link for sure, and it's interesting to see the names on that link as well. HDFC, one of the biggest holdings for FPIs as well. But you know, it's time for closing, and let's take a look as to how we are ending today's day. We did open with a gap up of almost 175 odd points, and we've maintained that stance for the Nifty 50. You know, when we started the show, we were trading at the day's high point, but overall, let's take a look as to how we are ending today's Nifty 50. There you go. 24,240 is where we are ending, almost at the day's high point for the Nifty 50. The Bank Nifty around 57,100 levels, slightly, you know, we've come off from the day's high point for the Bank Nifty. But the broader markets, let's try to see that whether the small cap 250 again at the day's high point, 1.3% of an uptake, 234 points. The mid cap 150 also ending at the day's high point, up by about 0.8 odd percent. It'll be interesting to see as to how the heat map is looking like for the Nifty 50. You have you know, HUL up by about 4.8%. A lot of recovery from yesterday's loss we've seen. Geo Finance also topping that chart. Infosys is the other one which has also seen very good gains coming in. You also have names like L&T, Trent, Bharti Airtel, etc. doing fairly well. But M&M down 1.4% on the back of that truck business being sold to SML Mahindra News. Eicher Motors also ahead of earnings, not doing very well. But quickly, lastly, the contribution, the Nifty 50 contribution would also be an interesting one to watch out for because of the kind of uptick that we've seen. There you go, large weights on you know, your left hand side, HDFC Bank, Infosys, Bharti Airtel, L&T all seeing good gains, but on the flip side you have M&M, Power Grid, Eicher Motors that weighed down. With that, completely out of time on this edition of India Market Close, but Crypto Minutes is up next with Sharad, so do stay tuned in.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates for the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin rebounds near the $64,000 mark on regulatory optimism. Emirates Airline starts accepting crypto payments. Morgan Stanley Investment Management expands ETP offerings. And lastly, on-chain real-world asset tokenization market tops $36 billion in capitalization. Well, the crypto markets have recovered significantly from the recent lows, but is this rally built on strong fundamentals or is it just simply a temporary bounce? What do on-chain signals reveal about the strength of this recovery, and what should investors watch from here? Let's get some perspective from Ashish Singhal. He's the co-founder of CoinSwitch.
It is still early to say we have entered a full-fledged bull market. Markets don't recover on price alone, so it is important to look at a bigger picture. There are few encouraging on-chain signals. We are seeing more active wallets, higher transaction volumes, and combined inflows into spot Bitcoin ETFs, all of which suggest broader participation and fresh capital are entering into the crypto market again. Another positive indicator is that more investors are moving their crypto off exchanges into self-custody wallets, which typically reflects long-term holding mindset rather than short-term trading. But on-chain data is only one part of the story. Macroeconomics factors are equally important, and that's what we have seen time and again. Things like expectation around interest rate, inflation trends, global liquidity, and overall investor appetite for risk have a significant impact on crypto markets. When the macroeconomics is supportive, it suggests a stronger foundation for capital to flow back into assets like crypto. So when strong on-chain activity is accompanied by favorable macroeconomic conditions, the recovery tends to be much more durable. Right now, the signs are encouraging, but I would still say investors should focus on whether these trends continue over the coming months rather than drawing conclusions from price movements alone.
And Ashish, just a follow-up, if these signals continue to strengthen and confidence keeps returning, how does the investor behavior usually evolve? What kind of changes would you usually see?
Confidence typically returns in stages. Investors usually begin with Bitcoin because it's the largest and most established digital asset. As the market gathers momentum, participation gradually expands into Ethereum and then other parts of the crypto ecosystem. As confidence builds, investors also become more measured in their approach. During volatile periods, attention is naturally drawn towards short-term price movements. As markets stabilize, the focus gradually shifts towards portfolio allocation, diversification, and long-term participation. The change in investor behavior is often reflected in the market as well. You typically start seeing stronger on-chain activity, improving liquidity, sustained buying interest across broader set of assets, right? And those are the signs of a healthier market where participation is becoming more broad-based instead of being driven by price movements alone. For investors, the key is to let those signals guide your understanding of the market without letting them dictate every investment decisions. Volatility remains a part of crypto investing, and so your allocation should continue to reflect your financial goals and risk appetite.
Thanks a lot for that, Ashish. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about the crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं।
Hello and welcome. You're watching Market Express and I'm Himakshi Dhogna. Let's get straight into the show. Viewers, from smartphones to smart homes, Xiaomi is widening its India ambitions. Now, as the company marks 12 years in the country, it's betting on local manufacturing, a broader product portfolio, and even deeper investments. Now, while positioning India at the heart of its next phase of global growth, let's listen in to a slice of a conversation with them.
Talk to us about what the strategy is now going ahead for India, right? You cracked it through your smartphone pricing was how you cracked the India market. Now you're looking to double down on that. Talk to us about your strategy.
Yeah, so first of all, thanks Rishabh for having me on your show. Very happy to be here. So incidentally, this month marks the 12 years of Xiaomi in India as well. 12 years have been a fantastic journey for Xiaomi. Our overall core strategy of the company is built on human times, car times, home through a connected ecosystem. In the last 12 years of our journey, we have been working on the human part of it, which essentially means the devices that you use personally, like the phones, the tablets, the IoT devices and things like that. But the larger ecosystem of the company still remains on the human times, car time, home, which essentially means that the home part, which is the smart home connected devices. And that's the next journey that we are going to take, which will complete our overall philosophy of the company as such.
Mr. Mathur, talk to us about what an Indian user of Xiaomi can expect from the company, let's say 12 months down the line, right? In terms of the product portfolio, in terms of smartphones, in terms of various other things that you're doing. Give us a 12-month timeline into what Xiaomi India is doing.
Right. So first of all, reflecting back now, in these 12 years, from a phone perspective, which has been our core business so far, Xiaomi and India has sold more than 250 million smart devices and close to about 100 million connected IoT devices. Okay. So we are a household name now. We have a large user base that exists in the country. Talking specifically about the next 1 year, that consumers can expect from us. A larger connected ecosystem, like I mentioned, which is going to be a smartphone, tablets, TVs, and now appliances as well, which will fill that gap. So consumers can expect a lot of smart devices for home, which will come as well. If I have to talk specifically about phones as a category, if I may, we all know that the premiumization journey has started. Consumers have started to move and shift from value for money to value for experience. Consumers in the phone can continue to expect a lot of our mid-premium devices, which is led by our Xiaomi sub-brand, which is the Xiaomi 17 series that we have recently launched, more so in partnership with Leica. Even in television side, you would see a more of QLED, larger display. That's the direction which the TV is moving from a consumer's point of view. And more exciting times to come would be the large appliances, which is the home category that we will be building in the next few months. So we have a large portfolio of home devices, which are smart devices, from TVs to washing machines to ACs to robo vacuum cleaners to small home appliances. So we will take the next journey forward in building some of these categories in India.
Very interesting. So a couple of things I want to double down on. One is your pricing strategy. What's that going to be looking like, right? Because you cracked the smartphone market through somewhat of a lower end of the price band is what you cracked the smartphones market through. Now you're talking about premiumization as well. Give us a sense about what your pricing strategy will be for the home appliances sector as well.
So in Xiaomi, we always believe that technology should be affordable for all, and it's not just for a select set of premium consumers. And that's how we have built our brand globally as well as in India, which was built more on value for money. And I think now that is shifting from value for money to value for experience. And I think moving forward, while we will still continue to cater to a larger spectrum of consumers at the same time, keeping the honest pricing as one of the core philosophies in times to come.
All right. Mr. Mathur, you also talk about a broadening of portfolio. None of that comes without manufacturing, right? All these appliances that you'll have to now manufacture. What's Xiaomi's plan going to be? The government has been very tight on manufacturing in India. They've been pushing a lot of incentives, a lot of schemes coming out to boost, especially electronics manufacturing. What's Xiaomi's take on these governments, on the government's manufacturing push?
So just to jog everybody's memory in terms from the past, Xiaomi was the first company to start local manufacturing in India from a smartphone point of view, which was way back in 2015. And now if we look back, today 95% of our products are manufactured in India, whether it is TVs, whether it's phones, whether it is tablets, whether it is power bank, or any of the IoT products that we have launched in this country. So Xiaomi as a company is fully committed towards local manufacturing in India, and don't think that playbook will change when we get into large appliances as well. So yes, local manufacturing is one of the key pillars of our strategy as well, and that will continue moving forward as well. We thank the government for all the incentives and other PLI schemes for manufacturing that have been offered, which is encouraging the whole local manufacturing ecosystem, and we are an active participant in that.
Mr. Mathur, what does the investment landscape now look like for Xiaomi, given the fact that your playbook will remain on manufacturing locally? Where are you looking to invest? What geographies in India are of particular interest to Xiaomi right now?
Yeah, so from a phone and TVs point of view, we are present across the country. Different products are made. It's not a specific geography that we make our product. They are based on our philosophies. We've been working with the local manufacturers, local EMS partners. Those are and that's how it would continue. It's not a particular state or a geography, depending on the capability of our partnership is very much.
Fair enough. Mr. Mathur, also a very interesting development has been the relaxation of the Press Note 3 norms that the government has also come out with. Have you at Xiaomi seen any sort of an improvement in terms of sentiment when it comes to investments flowing back into India, especially from neighboring countries? Xiaomi is one such company as well. Has that sub 10% passive ownership clarification, has that caused any sort of a benefit? How is Xiaomi reading that particular relaxation?
So I see this more as a opening of a relationship between the geopolitical situation that has been. I think it's a welcome move. that we see. Of course, this ownership is on a different space as such, but in directionally, I think it helps boost the investment into the country, and as and when the scenarios open up more, or we will continue to explore some of these areas as well.
All right, Mr. Mathur, India is also now the Xiaomi South Asia headquarters, right? Give us a sense of what this actually means, right? Is this just a technical or an organizational change, or is India going to actually be a very meaningful hub when it comes to all sorts of operations for Xiaomi?
Yeah. So India has always been one of the key strategic markets for Xiaomi, and now India being elevated as a headquarter for the South Asia region, it's not just a organizational change, but it means a lot because it will help India as a market to integrate with the larger headquarter organization and bring in new products, new technologies, and which are far more relevant to the Indian consumers as such. So it's I think in times to come we will see a deeper integration between the headquarters, which is only going to help the Indian consumers as such.
Right. Lastly, Mr. Mathur, before we wrap this up, memory prices and chip prices have been ballooning across the world. That's not just an India phenomenon. It's been observed everywhere. What are you making of this current situation of raw materials, supply chain issues with the geopolitical constraints that we have? How is Xiaomi dealing with all of these?
Yeah, I mean, of course, we all know that the memory prices are going up due to this super AI cycle that is going on. Of course, the prices will continue. There is a shortage on the memory part, which is resulting in the prices going up. Xiaomi as a company, like you have already said, we believe in honest pricing, but some part of it has to be passed on, and of course we are seeing, but at a relative level, Xiaomi is still very, very competitive in terms of our propositions to the market.
All right, so that was an interesting conversation that my colleague Rishabh Bhatnagar had with CEO Xiaomi India, Sudhin Mathur. And with that, viewers, let's slip into a short break. We'll be right back with a lot more action on the other side.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत।
Welcome back, viewers. You're watching Market Express and I'm Himakshi Bahugna. Now let's see how the markets have really fared today. So markets have ended the session on a strong note with benchmark indices closing near the day's high. The Sensex has surged over 800 points while the Nifty has reclaimed the 24,200 mark, and it has been supported by broad-based buying and even positive investor sentiment. Looking at the market trend, so that has remained firmly positive with most sectoral indices ending in the green. IT and metal stocks have led the gains while realty and auto have emerged as the only notable laggards in an otherwise broad-based rally. Looking at some key counters now, first up we have Mahindra & Mahindra's board, which has approved the sale of its truck and bus business to subsidiary SML Mahindra for 525 crores as it looks to consolidate its commercial vehicle business under a single entity. And reacting to that, the stocks have reacted sharply, and it has been executed on a slump sale basis. The deal has shifted. The deal actually shifts assets personal licenses and even liabilities to SML Mahindra. Next counter to look at is Asian Paints that begins the financial year on a strong note. The company reports a sharp jump in first quarter profit, and this has been helped by higher prices, resilient demand and even better margins. Now revenue also grows strongly with the performance coming in ahead of the street expectations and also lifting the sentiment around the stock. Next counter to look at is Laurus Labs, which is extending its stellar run on the street. The stock has nearly doubled from its February lows after a strong set of quarterly earnings, helping the company overtake Dr. Reddy's Laboratories in market capitalization. Now, investors are cheering record revenue, improving profitability, and even continued momentum in its CDMO business. Here's next counter to look at is BSE. So the shares of BSE, they remain under pressure after a sharp correction from their recent highs. Now technical charts now show that the stock is entering the oversold zone for the first time in almost a year. So while that could open the door for a near-term bounce, analysts are saying that investors should watch the key support and resistance levels ahead of the company's quarterly earnings next week. Next counter to look at is Tata Capital, which is in focus after a strong first quarter performance, and the stock has gained after Motilal Oswal has reiterated its neutral rating while raising the confidence also in the company's AUM-led growth story. So the brokerage sees further upside, and this has been backed by healthy loan growth, stable asset quality and also improving profitability. Here's next counter to look at is Hindustan Unilever, which is rebounding after post-earnings sell-off. The stock is recovering as analysts remain positive on the FMCG major, saying that the recent correction offers a buying opportunity. Brokerages continue to back the company's long-term growth, and it has been supported by improving demand and even a stronger margin outlook. And the healthcare IPO space is back in focus. Manipal Health Enterprises has raised over 4,100 crore rupees from anchor investors ahead of its public issue. Now, the IPO is open for subscription, with the hospital chain looking to tap investor interest as it plans to expand capacity and even strengthen its balance sheet. We are keeping up with the IPO momentum. We have Juniper Green Energy, which is opening its public issue tomorrow. Brokerages are largely recommending investors, subscribe, citing the company's strong renewable energy portfolio and even growth prospects. So the IPO is entirely a fresh issue with issue tomorrow. Brokerages are largely recommending investors the proceeds set to fund expansion and even reduce debt. Now looking at some national news now, viewers, a heated exchange erupted in the Lok Sabha after leader of opposition Rahul Gandhi used what the Treasury benches have termed an unparliamentary expression during a debate on the anti-paper leak law. The BJP strongly objected, with Parliamentary Affairs Minister Kiran Rijiju demanding that Gandhi withdraw the remark, and Rahul Gandhi has maintained that his comments were not directed at any member of the House, but the protest led to a noisy disruption. And the flood situation in Assam remains grim. 7 more deaths have pushed the death toll to 75, even as the number of affected people, they've declined to over 3.3 lakh across 7 districts. Now, relief and rescue operations continue with the Army, Air Force and NDRF and also the SDRF on the ground. Meanwhile, thousands of hectares of farmland remain submerged, with the widespread damage reported to homes, schools and even other public infrastructure. And viewers, the CBI has filed its charge sheet in the NEET UG 2026 paper leak case against 13 accused, including paper experts, coaching center associates, middlemen, and even beneficiary candidates. So the agency has cited 360 witnesses and over 400 documents, along with forensic and handwriting analysis reports, claiming that they established the circulation of leaked question papers ahead of the examination. And viewers, the Supreme Court has brought the coal block allocation case against former Prime Minister Manmohan Singh to a close, accepting the CBI's closure report and even setting aside the summoning order. And the court ruled that there were no valid grounds to reject the agency's findings, formally exonerating Singh in one of the UPA government's most high-profile criminal cases. Yes, the US has resumed military strikes in the Middle East, launching joint airstrikes with Saudi Arabia against Iran-backed armed groups in Iraq. The action comes days after Washington has paused its bombing campaign and even follows fresh Iranian attacks on US bases and shipping in the Strait of Hormuz. So the renewed fighting has raised fears of a wider regional conflict, with oil prices climbing as diplomatic efforts really face fresh setbacks. And viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates. Stay tuned to NDTV Profit for more news and updates.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। Kia ora from New Zealand and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this. Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look. The country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew.
markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter finance.
Market closed back over 24,200 after 7 sessions. Sensex and Nifty both end over 1% as RBI likely sells dollars to keep the rupee from depreciating further. HUL regains 50% of its losses yesterday made. It incurred yesterday, and L&T shares gained nearly 3% post its better than expected Q1 results. Rupee strengthens as RBI dollar sales in onshore and offshore markets add support. Indian currency gains 21 paise to close at 95 rupees 65 paise against the US dollar. Oil prices rebound with Brent above $87 a barrel, snapping a 3-day losing streak as renewed hostilities in the Middle East reignited the geopolitical tensions after several days of relative calm. Mahindra & Mahindra restructures business to create a unified commercial vehicle platform under SML Mahindra. Transfers the truck and bus businesses via a slump sale, and SML Mahindra stock hits an upper circuit of 20% surge today. Asian Paints reports strong Q1 results with a beat on all parameters. Profit surges 40%. Colgate-Palmolive shares jump 7% after net profit is up 7% YOY, with toothpaste portfolio in high single-digit growth. Adani Enterprises reports the highest ever quarterly EBITDA of 5,642 crore rupees. Solar module line capacity expanded to 5.7 gigawatt. Data center business signs up new hyperscale order of 400 megawatts. Adani Ports and SEZ Q1 profit rises 9% to 3,620 crore rupees. Revenue jumps 19%. As Nadev Godrej prepares to step down as the chairman of Godrej Industries this August, while passing the baton to Firoz Shah Godrej. In an exclusive chat, Godrej says the group's next phase will be driven by innovation across all verticals. After Delhi government, Haryana now approves 100% tax exemption on new EVs worth up to 30 lakh rupees, stepping up the clean mobility push and making electric vehicle ownership more attractive. Anti-paper leak bill passed in the Lok Sabha. Individuals found guilty will face up to 10 years of jail or 10 crore rupees of fine. Meanwhile, in response to the question, Aviation Ministry rules out fuel switch fault in AI crash that claimed 260 lives. Hello and welcome. You tuned into Profit 360. I'm Nisha Podar. Let's take you through first the Indian market performance today, and the markets ended the session on a strong note with benchmark indices really closing near the day's highs, and the Sensex surged over 800 points while the Nifty reclaimed that 24,200 level, supported by the broad-based buying and also positive investor sentiment. Let's take it across to Parth, who's standing by with all the market highlights and the action for the day. Parth, tell us.
So Nifty has closed in green today, gaining over 1%, and this gain was led by Jio Financial and HUL, both of which were the top gainers of the index, both gaining around 5% today. Now on the broader market side, they have ended on a mixed note with Nifty Midcap 150 closing in green as well, up almost 1%, led by Honeywell Automation and Swiggy, both of which were the top gainers, seeing an uptake of around 7% each. The next one, so Nifty Small Cap 250 also managed to close in green, up almost 1.5% today. PCBL Chemicals and Kaynes Technologies were the top gainers. PCBL Chemicals gaining over 15%, while Kaynes Technologies also saw an uptick of around 13% today. On the sectoral side, all of the sectors have managed to close in green except Nifty Realty and Nifty Auto. Nifty Metal was the top gaining sector of the day, gaining almost 2.5%, led by Lloyd's Metal and Energy and also Welspun Corporation. Lloyd's Metal and Energy gained almost 3.5% today, while Welspun Corp also gained around in the same range of 3.5%. On the losing side, we saw Nifty Realty, which was down around 0.5% today. Phoenix Mills was the top losers in Nifty, Realty, seeing a downtick of around 6% for the day. On the trend side, Nifty IT has closed in green for the 4th consecutive day, while Nifty Pharma has closed in green for the 3rd consecutive day. Also, Nifty Auto and Nifty Realty have snapped their 2-day gaining streak.
Right, broad-based gains and recovery there seen in the Indian equity markets, and so is the case with the Indian currency as well. So rupee closes at 95 rupees 65 paise against the US dollar, strengthening for the 3rd consecutive trading session. Now the domestic currency, remember, continued to strengthen as the Reserve Bank of India really remained active in the market, selling dollars for a 2nd consecutive day to really support the rupee. Let's now also shift focus from the currency market to the crude oil market. Crude oil prices have really moved sharply higher after fresh geopolitical tensions really resurfaced in the Middle East region. Now, Brent crude is trading above $87 per barrel, while the WTI crude has climbed past the $81 mark. The jump is seen after Iran launched the attacks on American forces, while the US, along with Saudi Arabia, really struck Iran-backed militia sites in Iraq. So that's where the flare-up really took place. But we'll stay with the oil and gas sector. BPCL has told NDTV Profit that it is in discussions with the government on the compensation mechanism and also remains confident of continued support coming in for the losses that the company is incurring on the sale of the subsidized LPG cylinders. In fact, Sessa, my colleague, is really poring over the details and has spoken to BPCL regarding this. Sessa, what is the status of these talks and what does it mean for BPCL in terms of recovery and also contracting the losses?
Oil Ministry has reviewed the under-recoveries of oil marketing companies for the April-June quarter and is likely to propose a compensation package to the Finance Ministry. Now, meanwhile, BPCL told NDTV Profit that it is in talks with the government on the LPG compensation mechanism. The company, expects LPG compensation of around 633 crore per month to continue through October and says that it remains confident of continued government support in order to offset losses incurred on domestic LPG sales. Now, as of June 30th, BPCL's LPG compensation buffer stood at around 15,804 crore. This is after adjusting for the installments received under the previously announced LPG compensation package of 7,594 crore. The company expects the government to continue compensating LPG losses in line with the past practice. Remember, the centre had earlier approved rupees 22,000 crore in 2022 and 30,000 crore in 2025 to compensate OMCs for selling domestic LPG below market prices. Even during the West Asia crisis, the government cut the excise duty on petrol and diesel by rupees 10 per litre to cushion the impact of surging global crude prices. According to sources, that decision alone resulted in a revenue hit of more than 1.2 lakh crore the government. Now, the key question is whether the Finance Ministry will agree to extend further support to OMCs as LPG under recoveries continue to mount and oil prices remain volatile.
That's right, Sessa. Thank you so much. An important piece of information when it comes to the oil and gas marketing companies. Now, moving on to the earnings momentum, and quite a few big earnings were really announced today. Asian Paints has delivered a strong set of first quarter earnings, beating the street estimates on both the top as well as the bottom line. Growth was driven by a healthy performance in the decorative paints business, with both volumes as well as the value really seeing a double-digit growth, while the industrial coating segment maintained its strong momentum. Let's take it straight across to Mahima, who's got the key takeaways and the analysis of those numbers. Mahima.
Right, so it was definitely a very good quarter for Asian Paints. A strong beat in terms of all four metrics. In terms of growth, that was driven by both value as well as volumes. Decorative business delivered a volume growth of 9%, a value growth of 16%, and industrial coating has sustained the growth momentum of mid-teens growth. In terms of numbers, revenue saw an uptick of almost 18%, EBITDA growth of 33%, profit a growth of almost 40%, and margins at 20.6 versus that of 18.2%. The expectation, by the way, on margins was for 18.1%, and this is also on account of other income, which has significantly gone up at 241 odd crore, but of course a very minuscule part of the total number of revenue. Tax expense also, by the way, increased to 583 odd crore. But in terms of segments, I think international business has done very well. The sales increased by 27 odd %. Bath and fittings, the net sales decreased by around 4.3 odd %. Kitchen business saw a net sales increase of 10.1%. White teak is where the revenue decreased by around 7.4%, and Weathersall revenue increased by around 11.2 odd %. So this is the overall takeaway, but most certainly a very strong quarter for Asian Paints.
That's right, a beat on all parameters. Thank you so much, Mahima, for getting us those perspective and the internals of the numbers. More on the earnings today. Adani Ports delivered a strong start to FY27, with the EBITDA rising 19% and the revenue up 19%, driven by the robust international operations. In fact, marine business expansion and resilient performance from the domestic ports are the key highlights. Let's hear out APSEZ's CEO and whole-time director Ashwini Gupta about the company's recent earnings and the guidance above. Listen in.
Despite a challenging macroeconomic environment, APSEZ continues to deliver strong growth, underscoring the resilience of our strategy and execution. We remain firmly on track to more than double revenue, EBITDA, and cash flows by FY31. Our scale is integrated across 11,000 kilometers of Indian coastal line and covering 95% of hinterland with growing international presence. Our business excellence is driven by technology, lean organization, and partnership. And the most important, which is our balance sheet capacity to fund the growth.
All right, in a big corporate development and restructuring and simplification of the group, well, Mahindra & Mahindra has approved the transfer of the truck and bus division to really listed subsidiary SML Mahindra through a slump sale valued at 525 crore rupees. Following this announcement, remember, Mahindra stocks hit the upper circuit when we talk about the SML Mahindra, while M&M did slump a tad bit. Danish, my colleague who really tracks the auto sector, gets us the details of this particular group simplification and what it means for the automotive sector of the Mahindra Group.
Well, that's correct. In a big development, we are seeing that the M&M board has approved the transfer of the Mahindra's truck and bus division to SML Mahindra, and the overall deal value of this slump sale will be around 525 crore rupees. And let me remind you that way back in August 2025, we saw that Mahindra had bought a stake from SML, and it was around 58.97%, and this stake was bought from Isuzu and Sumitomo Corporation, and then we saw that Mahindra had some more rights, and now in order to consolidate its commercial vehicle business from SML, and it was around 58.97%, and this stake was bought from Isuzu and Sumitomo Corporation, and then we saw that Mahindra had some more rights, and now in order to consolidate its commercial vehicle business, this will be a larger entity, and this will help Mahindra to consolidate its entire commercial vehicle business, and it will also cater to not only medium and heavy trucks but also to the light trucks as well. So if we look at from a company's perspective, then Mahindra is trying to consolidate its commercial vehicle business into one entity, and this through this they will be able to take over the other companies that are in the market, like the Tatas and Ashok Leyland. So all in all, if we see, it's a big development for Mahindra & Mahindra as they have consolidated this EV business into one entity.
That's right, Danish. It is a sort of a group simplification and also leveraging on the strengths of both the brands. And that's something that was highlighted by the SML Mahindra's executive chairman, Vinod Sahai. Listen in.
We really want to strengthen our core trucks and bus segment by combining the brand strength of both Mahindra trucks and buses as well as SML. We get into an integrated product roadmap, sharing each other's product platforms, aggregates, technologies, leveraging each other's brand equity. Both brands stand for distinct, varying each other's product platforms, aggregates, technologies, leveraging each other's brand equity. Both brands stand for distinct value proposition in the market. It also helps us focus our investments and get more out of the same level of investment which the two entities were together doing.
All right, a big corporate development when we talk about the conglomerate Mahindra and Mahindra. Now, Manipal Health's over 9,000 crore rupees IPO really opens today for public issuance. Now backed by, remember, 4,167 crore rupees of anchor book, which has really featured some of the marquee global and domestic investors. The hospital chain, remember, plans to use the proceeds primarily for debt reduction and also expansion. Varsha, my colleague, is here with all the details on the strengths and weaknesses of this IPO and what is it that the shareholders will really bet on with this particular listing. Varsha.
Yes, overall an interesting IPO, when it comes to Manipal. Now they have strong brand when it comes to the premium healthcare, 49 hospitals and 13,000 plus beds they cover. Even they have strong acquisition and integration track record as well. And the one important thing is they're backed by Temasek and of course the large investors. They are market leader when it comes to Bangalore, Karnataka and Pune. But onto the weakness, I would say the expansion, if you see, has increased at debt levels, which is one of the a negative point, but also the acquisition related debt has actually increased finance cost, which is adding pressure to the profitability. And most probably after IPO, the finance cost, the reduction in finance cost should help in profitability for the company. Talking about the opportunities, they've added 3,000 new beds, and the expansion into new cities and markets will actually aid growth for the company. And there's also a scope of margin expansion after the finance cost goes down. They have a growing demand for tertiary healthcare in India as well. Onto the thread, I would say they are not a single player when it comes to this industry, because industry has a very good players like Apollo, Max and Forte, so they're going to have to compete with these big guys. Even the dependence on specialty doctors and talent is also one of the threats that the company has. And of course the integration risk from future acquisition will also add to the risk that the company will be seeing in coming future.
All right, so that's a very large IPO that is hitting the market soon. Thanks, Varsha, for all the details. Now to a big corporate voice on the show, as Nadir Godrej really steps down as the chairman of Godrej Industries in the month of August, handing over the baton to Feroz Shah Godrej. In an exclusive chat, Godrej says that under the next gen, Godrej Industries will see innovation-led growth across all its business verticals. Listen in. Looking forward, how is the next generation going to take forward the mantle of the ethos of Godrej values, as well as also the growth propensity of the group?
Right. The younger generation is also very keen on the Godrej values, whether it's employee centricity, customer centricity, environment and social sustainability, and they know that it's good for business and they're very serious about it, and I'm sure they will carry that on. Also, the business has always had an ethos of innovation.
Right.
So we feel that our values have persisted for a very long time and should persist for a very long time, but we also have to be innovative, see how things are progressing and try and follow those trends. Unfortunately, the world is moving at a very fast pace and it's getting more and more difficult to keep up with things, but I'm sure that the next generation will do their best.
Right, and when we talk about innovation, which sector do you think can really have a lot more innovation coming in from Godrej Group?
So all of our sectors will have a lot of innovation, and properties, consumer products, chemicals is a big sector, agriculture, oil palm is growing very fast, and we think it's very essential for India to stop importing oil as soon as possible, and we feel that the industry is in a position to do that.
All right, so that was a big corporate voice on the show today. Let's move on. India's toy story is getting bigger. Government has really formed a task force to boost the manufacturing and exports, with India targeting a 5% share of the global toy market by the year 2032. In fact, our colleague Sharad is here with all the details on that. Sharad.
Well, India's toy story has just started, and yes, it's not a child's play. Very important task force has come up from the government, the way the overall export data is going ahead. And let's talk about the key pointers. What does this actual task force mean? They are actually focusing especially on the growth momentum coming in from these schemes. Also remember, they are targeting almost 5% of the shares in the export segment. Now this task force will boost the overall manufacturing, which is domestic, as well as the exports going ahead. Second important reason is, of course, Piyush Goyal has announced this task force for the toy sector. And going ahead, of course, the data is changing as well. And this is the number I'm talking about, 5% of global toy market. That looks quite small, but in terms of the value, it is pretty big. Also, let's look at the other key triggers. This, of course, includes strengthening the overall segment and the innovation. There's only one cluster in Karnataka, and a listed company has a presence there. I'll get you on that. But remember, this is the entire playbook which the government has actually pointed out. But enough of the policy. Which are the stocks we should be focusing on? It's a very niche segment, so we did a little bit of research. Of course, the larger players, let's have a look. That is Shelly Engineering. They have custom injection molded segment. Also Aqueous is recently listed. There's a consumption business of theirs where they also make products in the game, darts, toy vehicles, and some micro caps are also there. And I'm holding a couple of toys and merchandising. There's a reason for it. The company is Pramara Promotions. They make merchandising and promotions, and you can see on my hand both of these are there. These are Kinder as well as Gems product. This is where the toys are inside these products. OK Play, another micro cap where they have their toys and children's furniture as well. But moving on from the stocks itself, let's talk about the overall data, how things move ahead, especially on the exports front. So I've taken a data from 2017-18 and current financial year of FY26 to show you how growth has happened. Let's just pull out the numbers for the exports, how things have changed. And remember, India has turned a net toy exporter in FY22. These are the numbers, 3 times jump coming in FY26 for electronics and non-electronic toys. Also, the second segment, video console games and machines. I'm sure a lot of you have interest in PS5 and PS4s. Look at the numbers, 3 times. This is the jump coming in the exports. Also, looking at the other key data is the festival, carnival and other activities. And that has also jumped almost 2.3 times. You see a significant up move coming in. But what are the key factors aiding this industry? IP rights from foreign brands, that's what you're going to see. Of course, these products which I'm holding, they are having Marvel related products, exclusive merchandising and promotional opportunities. And also a third and most important thing is the strong exports that's expected to likely to continue going ahead. But apart from that, these are some government scheme announcements. The reduction of GST from 12 to 5% coming in. Second important reason, let's get that as well. That is the zero duty market access for the exports for Indian FTAs. We have signed a lot of them, and our toy sector is getting benefited. The National Action Plan for Toys 2020. And lastly, of course, we are talking about the geographical indication, the GI tagging of toys. So a lot of schemes, a lot of benefits, but a lot of fun.
All right, thanks Sharad for that very interesting detail coming in. So it's game on for the toy industry in the country. Moving on, the India-New Zealand Free Trade Agreement is expected to unlock fresh opportunities for the New Zealand's farming sector. In fact, under this particular agreement, the 33% tariff on New Zealand sheep meat and wool will be eliminated immediately when the FTA really enters into force. Now, to better understand this, my colleague Nimit is right there in New Zealand, and he spoke to Betham Pastoral's sheep and wool farmer William Betham. Listen in.
one thing I really want to know is New Zealand product, right? It's going all around the world. It's in China, you're in Australia, you're going to the US. When it comes to India now, under this FTA, the tariffs gone, your products going to come into India. How does an average Indian consumer identify something that's come from New Zealand, right? Is it you open the package and it smells like this? Because how do we know what are the qualities, or what are we looking for in a product from New Zealand that makes it stand out?
So New Zealand, the products that we will deliver to India, the products, we bring quality, food safety and environmental attributes, which are a strong part of our farming systems and our food production system. Those are the key attributes that we can deliver into our customers internationally. On top of that, we really focus on making sure that we provide consistency, so we can provide consistent products all year round. And I suppose for a consumer in India, what they can look forward to in New Zealand products.
All right, back home, an important development there of public interest. Well, Public Examinations Prevention of Unfair Means Amendment Bill 2026 has been passed in the Lok Sabha today amid repeated disruptions. Now, the bill comes into the backdrop of, remember, the nationwide protests over the NEET controversy and seeks to really crack down on the paper leaks with tougher penalties, including up to 10 years of imprisonment and also fines up to 50 lakh rupees. So that's a big development coming in, and apropos of the recent developments of the NEET paper leaks. Government's response in the parliament over India's AI and semiconductor push. Well, under the India Semiconductor Mission, Micron and also Sahasrar are really manufacturing memory chips in India as AI-led demand really lifts the global prices. My colleague Rishabh Bhatnagar shares all the details on this development and the replies and clarifications given in the monsoon session of the Parliament. Rishabh.
Absolutely, very crucial replies in the Parliament coming in from the Ministry of Electronics and IT. One was on, of course, memory prices around the world have skyrocketed, and the government has also taken cognizance of this. What they've said is that there are two firms that have been approved under the India Semiconductor Mission that are currently making memory chips. One of them is, of course, Micron, and the other is Sahasra. Both of them are in the business of building more and more memory chips, such as DRAM chips, NAND chips, all of those, SSDs, solid state drives, all of those will also be being manufactured by them. What the government is saying is that there is an AI boom across the world that is driving global demand, and that global demand is what is causing supply chains to be constrained, and therefore this price is increasing. On the other front, on the India AI mission front, the government has also come out with the latest number and said that it is about 237 companies that are currently enjoying subsidized GPU access under the India AI mission. Roughly 15 compute providers have been impaneled under this mission. You also have the fact that there's an AI supercomputer that is being currently developed at NIC Delhi's data center. All of these are updates that are coming out of the monsoon session from the Ministry of Electronics and IT.
All right, thanks Rishabh for that. Getting future ready when it comes to technological thrust, and those were the responses. With that, completely out of time on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much for tuning in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. we're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत।
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you very interesting companies, newly listed companies, or companies coming recently on their earnings also. But today, I've got you a company which was listed quite recently this year itself. But before that, try to guess this. It's a Rajkot-based manufacturer of precision components and assemblies as well. Hints, right? Second one. It was listed in March 5th, 2026, but the mind-boggling figure is the returns which have come in. Stock is up 3 times from its listing price, and remember, it was at a discount. So what a strong momentum. Very rare to see that in just a matter of 3 to 4 months. And also, Nippon India Mutual Fund has 7% stake in this company, and of course, they are known for their small cap fund which has outperformed. But what's the company all about? We'll try to understand that, and that is Omnitech Engineering. This is the company which we'll talk about. But why are we calling this company right now? And just to give you a caveat beforehand, the company has not come out with its Q1 numbers. It's likely to come in this coming week or the next week. So it's on a silent period on a lot of numbers. But nevertheless, we will ask the right questions in KYC, the demand trends and the client confidence, how things are shaping up. We'll decode the precision industry also as a whole, as why Dalal Street is giving a premium valuation to it, growth triggers in this segment, and which segments actually out of which are doing well in the trade. Also, we look at the capex outlook. You know, the company has done its IPO, there has been an expansion at play. We'll have a chat on that. Apart from this, another key question we'll be asking the management or a group of management today. There are 2 guests, of course. We'll try to understand the capex outlook and the progress as well, especially on their expansion plans, and there's an angle of Hyderabad also. So these are the key questions we'll be actually focusing on for Omnitech Engineering, and overall how things look, especially the inorganic expansion and the geographical expansion. This is where a little bit of interest is coming in from the folks interested in this company. But let's understand first, ये कंपनी करती क्या है? राजकोट की कंपनी, and trust me, Rajkot as a whole has a lot of precision manufacturing companies. Let's go back to the history. It was started in the year 2007, almost 18-19 years it's been for the company. Also, let's look at the other key factors. They manufacture the high precision engineered components and assemblies. It's nothing but those smaller elements which focuses on the manufacturing setup. This was listed, of course, on March 5th. Entered the energy sector in FY 2016, and as it's progressing, more new verticals are being added. They established their logistics warehouse in Texas, US, because there is a significant chunk of revenue comes from the USA market. We'll understand that, and they are operating in 3 manufacturing facilities in Rajkot, in of course industrial area belts. So that's something which we talk about the company. Also, the annualized machining capacity is roughly about 2.65 million man hours, to put things in perspective. Also, one interesting snippet about the company I would like to mention is they serve more than 256 customers. Look at the number, it's 24 countries, it's an international player. And of course, it's quite nascent, this industry, in the way India is placed is something which we will talk about. Certifications in these new growth areas is very much important. That means is धंधे में और काम आ सकता है, and already these certifications will open up more gates, especially for foreign orders. The unit of length, the micron. Before we start discussing it, I'll just explain you what does micron mean in precision segment. This is almost 1,000 of a millimeter. It's this thin small. Let's understand what this micron is and we compare that with the company. It's a human hair that's around 50 to 100 microns wide. You can see, you can hardly see it in the graphics itself. It's just one strand of hair. Now precision manufacturing means something even lesser than that. That means you go more into the details. Let's look at the other relevance of micron. What happens? Omnitech Engineering is doing to 5 microns. They're going more dilute, more thin on it. Just imagine it's lesser than a strand of hair. Also one interesting data is on the red blood cells. They are between 6 to 8 microns. So the company is doing lesser than that. This is how the precision industry works. The key clients, these are the names. Of course, you have heard about Suzlon, but the international clients are big, especially with a large order win from Weatherford. Motion control, we have Push Industries and CAGN, and these are other third segment also I'd like to point out where we are seeing a good client momentum. And of course, you must have heard about this local name Jyoti CNC or the Jyoti Group, but these are international clients as well. So they have clients, they have interestingly a good revenue contribution. And the North America segment, this is what I'm talking about. That's why they have a warehouse in Texas. 53% of the total revenue comes from this segment. Of course, the Indian part also is roughly 25% and very minor exposure in Europe and UK. So an interesting setup coming in. The order book, that's roughly 3,000 crore is the order book, and the industrial equipment segment, that is where the majority of this order is coming in. That's roughly 74%. And as time passes, new segments come in, and this diversification in terms of order book is also likely to be there. That's as per our analysis and estimates. But what may work for the company? Company के लिए क्या positive trigger है? Promoter has a strong domain expertise in it. Even the management also I saw is pretty good. The D Street is giving premium to this precision theme. So likely, sectoral, you could say tailwinds are there. Marquee clients they have. So cross-selling becomes quite easier in a business scenario like this. Bullish growth outlook from whatever public information the company has shared in the fourth quarter itself. And also the issues which might be there for the company. The valuations remain elevated. Numbers are going to come out in some days. There might be some volatility in the stock, higher receivables from the last 2 years. So we'll try to understand that. But remember, a lot of earning comes from US. There's an exposure to geopolitical risk. This is the point which I mentioned. Also, another reason what may not work for the company is the lack of analyst coverage. It's a new IPO. That is why maybe, but nevertheless, if more analysis comes, you'll understand the models more. And that is why we try to get these companies initially in KYC so that you have an idea of what can happen in the stock or the sector. But let's move on and understand the KYC ratings. How do we judge a company in a KYC show? We have income statement, balance sheet, cash flow largely for this company. We have taken the data from RHP since it was recently listed. Return ratios, I'll explain you a very important theme today, that why return ratios are suppressed, especially for a new IPO company. Shareholding street cred, take it with a pinch of salt, it's just been 3 to 4 months. But valuations, we'll try to understand, is it sustainable right now to enter the counter or not? And the outlook, what does it mean for the industry and the company? But let's start with the income statement, and the growth is very strong. Look at the 3-year CAGR numbers from FY24 to FY26 we have taken, and the numbers are 35% plus beat EBITDA, PAT, revenue as well. The Q4 numbers were also decent sequentially. A little bit of minor adjustments there, but nevertheless on the long term the financials have been very strong, and this is maintained that 33 to that 36% mark. Margins have been maintained. So net till FY26, nothing on the income statement. It's been very strong. So I'm going to give this a thumbs up as well. Balance sheet, the company did use its IPO proceeds also, and these numbers, of course, the FY26, the Q1 or the H1 numbers when it comes, as if company comes out with, there we'll see the lower side of borrowings. The net debt ratio has come down as well, and the cash element is there for 164 odd crore rupees. So maybe it can be held in future expansion, be it geographic or inorganic as well. So I'm going to give this balance sheet a strong thumbs up as well. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows. And remember earlier I had mentioned to you that the receivables on the higher side, and there might be issues because of global exposure, geopolitical risks. Because of that, variation can be there. Of course, these numbers which you are seeing, there's a very limited time space in the listed space. It's just been 3.5 to 4 months. We need to give it more time, but I want to understand more of this data before giving a comment on the cash flows. As of now, let's keep it neutral right now, but definitely we'll be tracking this as well, especially on the receivables front. Now you must be wondering why I'm giving a strong thumbs up for the return ratio. So whenever an IPO comes, there is the equity base that rises. So when you see the ROC, ROE numbers, they stand to be, under pressure. Otherwise, this is largely a 20% plus ROC, ROE business, and this is from my industry analysis, right? So let's have a look at the ROC also. The same story comes into play, but this time they are maintaining that 14 to 16 odd percent. That means the return ratios are strong. And when you analyze a company who has just come from its IPO, take the return ratios with a pinch of salt, because it's basic mathematics. I have explained you that, but as of now, return ratios is a strong thumbs up from me. Let's talk about the shareholding, and largely nothing has changed. A minor sell by the DIs, but things remain same. And of course, the exposure is decent enough, but of course, analyst coverage is not there. So let's give it more time, and it's a neutral rating as of now for Omnitech Engineering. But let's talk about street cred, and this is where we see the numbers have been very strong. Whether you have applied through the IPO or even after the IPO, you have made money in both the cases. From the IPO, the stock is up 2.6 times. From the listing price, it's up 3 times as well. Despite a discount listing of 11%, we have seen sustained buying coming in. Is there a valuation mismatch, or is there something more to the stock? And that is why a lot of bullishness is coming in the street. So that's why I've given this a thumbs up as well. So remember, when a stock goes up, the valuations do come under question, and this theme as a whole is getting a valuation premium in Dalal Street. Currently, the 12-month trailing P is at that 93 levels. And of course, when it started in the IPO, it was around 66 times. Already a 50% premium up move we have seen in this segment. But will it sustain, or is there something in the earnings which might coming and we can see a little bit of volatility in the counter or profit booking? That's what we need to wait it out and watch. So as of now, the valuations are not attractive. So we're going to stay out of this, and I'm going to give this a thumbs down. Let's talk about outlook, and that is where the street is also very bullish on. The commissioning a new manufacturing facility in Hyderabad. We need to understand what are the timelines for it and the expansion. These are all IPO proceeds, by the way, and the company has sufficient cash balance as well. Thirdly, recently they set up a fabrication line with almost 7,200 million tons per annum capacity as well. Lastly, I'd like to point out the inorganic acquisition, especially for the manufacturing abilities. A lot of R&D is required. Already they have approvals, so it makes sense for them to acquire more inorganically, especially in this segment. So it's a strong thumbs up for the outlook. But let's try to understand what are the ratings which we should be giving to the company. And we have taken this analysis on the timelines as well. I really like the income statement and balance sheet. Cash flows, there are a little bit of concerns on the receivables, but we need to take this with a pinch of salt. These are business cycles also, and they move around. Return ratios, if you adjust with the IPO analysis which I gave you, it is strong, and that's why the industry is commanding premium valuations. The stock has tripled from the IPO or even the listing price. That is why the valuations become a big concern for me as of now, right now. Let's wait it out, the earnings, these things will change, and outlook remains strong. So let's add up the total ratings for Omnitech Engineering. It comes to 6 out of 8. This is the number which I'll give, slightly higher from the average numbers because there is a good rating performance by the company. But let's try to understand the performance from the management also. What's their view looking like? We have Paras M. Parekh. He's the whole-time director and the CFO of the company, where Paras will talk about the financials, and he had already held leadership positions in bigger names you can talk about with Kotak or even HDFC Bank. But there's another management also joining us. We have Bhavin P. Acharya. He's the Chief Revenue Officer of the company. Sales, revenue, that's what he looks after, and he has leadership positions in Good Luck Engineering and Ambika Steels as well. So the conversation is going to be pretty interesting. The company is coming for the first time in KYC. We are joined in by Paras Mukund Rai Parekh. He's the whole-time director and CFO, at Omnitech Engineering, joined in also by Bhavin Pralad Acharya. He's the Chief Revenue Officer. Good afternoon, gentlemen. It's always a pleasure to have you. And just a caveat, the company has not come out with its earnings, so we will be talking a little bit of less about numbers, but much more about the industry and the company as a whole. But let's start with Bhavin bhai, I want to understand the demand trends and the client confidence. How does it actually look? And also, if you could just give a little bit of, understanding about, your company and how it is placed in India's story of precision manufacturing.
No, perfect. Sharad, first of all, thank you for having us on this NDTV Profit. So we really appreciate that. So when we are talking about the current demand trends and what we look at, see, basically we are into high precision engineering and integrated manufacturing solutions. And having said that, customers today are looking for more strategic partners rather than the individual process suppliers. So Omnitech today is well positioned with end-to-end capabilities, including precision machining, surface treatment, kitting, assembly, testing, and even engineered fabrication support. And everything is under one roof. So this integration model really helps to improve quality. It also improves to reduce the lead times, removes bottleneck of the customers. And this particular, aspect gives a very immense confidence to the client as to, Omnitech gives this complete solutions to them. So this really helps, yeah.
Right, so that's a interesting take coming in for the company, and of course Dalal Street is giving a lot of premium valuation to your industry as well. Parasji, I have a question for you also. The capex outlook, after his IPO proceeds coming in, of course you will be putting it out in your expansion. If you could just give us a revision of how that thing is playing out, the capex outlook ahead and the progress also, especially on your plans. There's a Hyderabad angle to it also. There is an expansion going on in Rajkot. If you could give us a bird's eye view of that.
Yeah. See, if you will see, then we have already undertaken some portion that we have planned in FY26, which you will see the result increase our machine hour capacities from 1.7 million hours in FY25 to 2.6 million hours in FY26, which representing an increase of approximately 50 to 52% of the growth in the capacities. Currently, yes, we are deploying the IPO proceeds capex, which will utilize for the development of our two new world-class manufacturing facilities in Chhapra, Rajkot. Along with, we have a certain investment which we are doing in our existing facilities. So all over, we are planning that capex, which is expected to complete by the Q1 of FY28. And in addition to that, we have already acquired 2 land parcels, out of which one is at the Sanand GIDC Ahmedabad, which will support for our future expansion and plans. So, and regarding the Hyderabad facility, at present, it's very small facility, and in which we are looking for some of the R&D to do there. So, yet to plan for the productions and everything there in the Hyderabad facility. And for this all over investments, it is significantly enhance our manufacturing capacities, technological capacities, and operational efficiencies, which will enable to support our future growth across multiple high level of sectors.
Okay, so that's the entire details coming in from Parasji. Bhavinji, I wanted to understand the expansion plans because there are two things which stood out in my analysis. The first thing was the inorganic expansion because there's a lot of tech involved, detailing is there, and now after IPO proceeds, your cash balances are also high. And there's another angle of geographical reach going up also, you had mentioned in your strategy. So if you could just help us out with it, how both will play out, inorganic acquisition as well as geographical expansion.
Yes, so basically if you see what we have been doing, so of course we tend to do more business in the export side of it. And of course we are, expanding, or rather we are doing quite a lot in the American markets. But we have been steadily growing and expanding ourselves in Middle East, in Asia Pacific, in European markets, and also looking for different segment-wise also, that looking into different areas of applications which are mission critical or safety critical, going into various business lines where we feel that the precision engineered solutions are very much required, and Omnitech is completely geared up to look into how to capitalize on those different segments. So that's basically what we work upon, and that is what our strategy going forward. As far as inorganic growth is concerned, yes, we are evaluating different areas as to what can really help us to achieve our future growth trajectories, and that is where one area probably it is little bit early to talk about, but we are in discussions, we are in evaluations, and we'll see in future as to how we come up with the inorganic proposals as well.
That's a very interesting point, and we'll take that. But Parasji, I want to understand, good business comes from America, there is geopolitical tensions, little bit of pain in the receivables also. You're a man of numbers. I don't want any numbers from you, but is there a little bit of stress here in the receivables, especially from your global clients because of geopolitical risks? If yes, is there any mitigation at play?
Actually, there is no any risks as we have a big OEM customers in our buckets. And if you will see the all over, when we have more than 90 to 93% is the ex-works Ecoterms. So once we dispatch the goods from the Omnitech premises, then the ownership will confirm to the customers. So at end side, there is no any risks, and all are the OEM customers. So payables, receivables will be on time. As they are the big OEMs, so we have a net payment terms to net 30, 60 and 90 days. So it's showing the elongated receivable cycles, but all are the good.
Okay, so marquee customers, receivables, not that much of a problem. But Bhavin bhai, I want to understand the order book setup. It's around 3,000 crore plus. Any kind of growth outlook from, we can expect the next 2 to 3 years, 5 years. We don't have to give us a number, but any ballpark range. And out of this, which segment is showing a really good, order outflows?
Yes. So when we look at basically, the order book will definitely remain strong. There's no doubt about it. One of the reasons, of course, the existing business is also growing. But apart from that, as we are entering into new areas, new segment lines, that particular business will also propagate into, order book and so on. So I'm pretty confident as far as the medium term and the long term growth trajectory is concerned, and we will be able to, relatively grow from where we are today.
Right. Paras, I have a very interesting last question to sign off with. This is nothing to do with the industry or your company, but a lot of startups are actually listening or hearing to this show as well. They are looking at you, and they are there involved in the precision manufacturing space and even the assembly space. Is there any guidance for these startups, or if somebody wants to do a startup or make a company in your industry, what they should do?
Say all over, if you see, this is very good sectors, and we are in the niche market. Majority we are into the non-automotive segments, and there are lots of entry barriers for the to be a part of these industries. So just I will say all the best and keep it up for these things.
All the best, keep it up, and of course there's the pie is there for everyone, and it's increasing for Indian exporters. Thanks a lot, Bhavin and Paras, for taking out the time and giving important commentary on the company, and that also in a silent period. Thank you very much, gentlemen, for your time, and best of luck for the results as well. So that's the management of Omnitech Engineering, and stock has almost tripled from its IPO price, and we try to understand India's precision manufacturing story, and yes, it's just at an inflection point. Interesting, right? So for these interesting stories, stay tuned to NDTV Profit, and yes, keep watching KYC.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
Kia ora from New Zealand and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and this is a show where we talk about your personal finance. And today the two topics that we're going to talk about is first, we're going to talk about equal weight funds. What are they? Should they be a part of your portfolio, etc. is what we're going to talk about. And the second one is with regards to the NPS tools, how to use them, how to practically kind of make use of the new NPS tools, and that's the second leg of the conversation that we're going to have. But let's talk about equal weight funds. They've been gaining traction, and to understand as to what these are, what should one watch out for while taking into consideration these funds. To take this conversation ahead, we're now joined by Vishal Dhawan, who's the founder and CEO of Plan Ahead Wealth Advisors, joining us now. Vishal, always a pleasure speaking with you. I'll start by the very basic question. What are these equal weight funds, and what should one know about these particular funds?
So thank you for having me over. So essentially what an equal weight fund does is, as the name suggests, takes all the stocks which constitute the index and give them an equal weightage in the index. So typically, if you look at what gets reported most often, let's take, for example, the Nifty 50 or the Nifty 100. Those indices are based on free float market capitalization. So essentially what it means is that certain stocks which have a higher free float market cap will tend to have a higher weightage in the index, in contrast to something which is lower down, which will tend to have a lower weightage. In an equal weight fund, basically the weightages become constant, and therefore every stock constituting that index, going up or down, moves the index in the same manner as compared to a free float market cap one, where if the larger ones do better, the index will go up more. If the larger ones do worse, the index will go up less.
Okay, got it. But Vishal, just from the standpoint, because we've seen so much of volatility even in the Nifty 50 space, right? Just let's say, for example, yesterday we saw HUL almost tank 7-odd%. Do you think in times like these, equal weight funds, getting into equal weight funds makes sense because the volatility is extreme on both ends, right?
Yeah, so typically, I think what one may need to think about is essentially a bit of a core and satellite strategy when you think about a free float market cap index or an index fund versus an equal weight index fund. So typically what ends up happening is when you have a very broad-based rally where, the markets are doing well, generally people are very optimistic about the markets. There is a lot of different positive feelers for the markets, etc. You might end up finding that an equal weight index actually does quite well because every stock is probably going to contribute towards that upward momentum. In the case of a market cap, free float market cap based index, which is your typical index composition, depending on what is the weightage of that particular stock which does well or does not do well, the index gets impacted. So in an HUL-like event, what may end up happening is that if the weightage of HUL in a free float market cap index is higher, it will impact the index more. Correct. If it is lower, it will impact the index less.
Makes sense.
And therefore, the way we look at it is, for investors, they may want to think about saying that one part of my portfolio essentially needs to mirror the index performance of the free float market cap index. And therefore, I will put a part of my money there. And then a part of my money I will use tactically to move to the equal weight indices because I don't know which stock within the index will actually do better and which will do worse. And I don't want to take the risk that if it has a higher weightage in the index, then I get impacted negatively.
So then, Vishal, do you think that is there a specific, I mean, I would not like to put it as definition, but is there a specific set of rules where you think that this is the market in which generally equal weight funds do well, if there is such analysis already done? If not, do you think that equal weight funds should be a part of your portfolio in some or the other way?
Yeah, so I think it's a very interesting question because if you look back at the data, right, and you start to measure the performance of a free float market cap based normal index fund versus an equal weight index fund, the trailing data seems to show that over multiple timeframes, the free float fund or index has actually underperformed an equal weighted index. But when you roll this data, which means that you keep changing the base date and look at rolling returns instead of trailing returns, you'll find that in certain timeframes, the market cap index works better. In certain other timeframes, the equal weight index works better. And therefore, I think the way for investors to think about is saying, let me build my core out of free float market cap based indices, because ultimately, if I have to measure my performance of my portfolio, I will typically measure it against a free float market cap index. Also, these free float market cap index funds will typically have a lower expense ratio because they are simply tracking the index itself in terms of what is happening there. In contrast, an equal weight index fund will do better in many environments, especially like I mentioned earlier, if you have a very broad-based rally, if you find that the stocks which are lower down in the market cap actually do well. So let's say if you have stock number 51 to 100, which does well, but stock number 1 to 50, which does worse, you could end up finding that an equal weight index will do better. So in the last few quarters, for example, you will see that because sectors like IT, for example, have a very large weightage in the Nifty 50, you could end up finding that that sector, because the sector itself has done fairly poorly over a period of time, could actually impact the free float market cap index more than what it does on the equal weighted one. So I think as an investor, be mindful that there will be periods where one will do better, one will do worse. There are expense ratio differences between the two, and therefore combining both of these together is normally a good approach to take for most investors.
And what should be that breakdown? I mean, if somebody wants to have an equal weight fund in their portfolio, what percentage should be allocated? Because from what my understanding is that this approach is slightly risk averse, right? So for somebody who is not willing to take much of a risk, could probably go for this. And if yes, what percentage should be allocated? Of course, this will depend on the risk appetite as well. But overall, from that standpoint, what would you suggest?
So what I would say is that, typically within your index composition of funds, anywhere between 70 to 75% need to go to the free float market cap indices so that your returns reflect what the market's returns are without any bias and with keeping your costs extremely low. For the balance 20 to 30% which you have, or 25 to 30% which you have, you can consider an equal weighted index fund, even though it comes with a slightly higher cost because of more turnover that might happen. In certain situations, it may underperform as well, especially when the large names do much better. But in general, our view is that for risk-averse investors, they may be better off actually using a free float market cap because their returns will exactly mimic what the markets are doing. I think one of the things that happens for a lot of investors is when they make investment choices to go to equity, they want to get at least the market return. Because if they get a return which is worse than what the market has done, then it obviously feels very suboptimal to them. So we would always say more weightage to market cap, free float market cap based index funds, the traditional index funds that people use, and relatively lesser weight to an equal weight one.
Okay. The other aspect is that generally rebalancing happens periodically in these funds. So does that mean that it benefits from the disciplined buy low, sell high approach? Do you agree with that?
Yes, it does, because what ends up happening is the weights keep getting readjusted. So to that extent, because it's a very rules-based model, it works well. We need to remember, though, that even a free float market cap based model does have some adjustment that happens on a periodic basis. So to that extent, there is some adjustment. In the equal weight one, it may be more. I think that has to be balanced with the fact that because you have a higher turnover, you could end up probably having higher costs involved with a equal weighted index. And that's why the combination is typically a good way to look at both of these together.
Okay. From a standpoint of this rebalancing that we are talking about periodically, do you think that this could translate to higher tracking error according to you, or no, that doesn't happen generally?
So I think what ends up happening for rebalancing is that it can create a tracking error gap when you have to do it more. But that tracking error gap, in my mind, comes more often because with a higher turnover comes higher expenses. And the more the expenses, the more the tracking error when someone measures performance against a particular index. Also, what could end up happening is that the inflows and outflows in a market cap based traditional index fund can technically be much better managed because those funds are so much larger in terms of what the amount of money that they manage is concerned. While these equal weight funds are relatively managing much smaller AUMs. And therefore the cost gets distributed across a different size of a scheme as compared to an equal weight one. So I would say that by itself, just the rebalancing may not be causing it, but the expenses associated with rebalancing in an equal weight index could cause some distortion in terms of what is happening.
So just one last question, Vishal, from my end, is that for these particular funds, do you think an SIP makes sense or just lump sum investment makes sense?
So we would say that, in general, we prefer SIP models for most investors because these investments need to happen again with a 5 to 7 year view because the underlying investment still continues to be equity, whether you're going to an equal market weight index or a free float market cap based index fund. In certain situations, a lump sum may be preferred. For example, if you feel that equity markets are deeply undervalued, and therefore are trying to time the market to go in because investors have become too fearful, or you find a situation where investors have become too greedy and you believe markets are too overpriced. I think in those situations, you may choose to go with a lump sum, but otherwise, most of the times, you would typically use an SIP route to go in here.
All right. Okay. That makes complete sense. Vishal, thank you so much for taking out the time and helping us understand this entire concept of equal weight funds and of course giving us all those insights. Thank you so much.
Thank you so much. My pleasure.
All right. With that, viewers, time to slip into a very, very short break, but don't go anywhere. We'll be talking about NPS tools on the other side, so do stay tuned in.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as the people here in New Zealand. Let's have a look.
Welcome back. You're watching Your Money Matters here at NDTV Profit. Now, as promised, we're going to talk about NPS tools and as to how to use them exactly. What are these new tools and what are the things that you must keep in mind? And to take this conversation ahead, we are now joined by Mrin Agrawal, who's the financial educator and founder at FinSafe India, joining us now. Mrin, always a pleasure speaking with you. Thank you so much for taking out the time. My first question to you is as to give us a brief as to what these new tools are for NPS, if you can list them out for us, and then we'll take the conversation ahead for each of these tools in detail going forward.
Thank you, Mahima, and it's lovely to be here today. So yes, I think the NPS or the PFRDA has been quite active for the last 6 to 8 months, and we're seeing constantly new things coming. And I think some very interesting things that have come into play now are these two new NPS tools. One is the Pride Disha and the other is the Pension Sahayak. So, all this while, if you wanted to look at NPS returns, you could see point-to-point returns. So I could see like last 3 years, 7 years, 10-year returns, right? But but what happens is that when you're looking at point-to-point returns, it does not really give you the right picture, right? Because NPS is one instrument like an SIP where you're basically putting in money every month, right? So there is a time-based cash flow that is basically coming in, and hence, just looking at point-to-point returns was not the right metric to actually evaluate a fund. Now, so towards this, they have come out with a calculator platform, whatever you want to call it, wherein, based on your age and the sort of contributions that you're making, and from when you've done the contributions, you can actually see what is the extended internal rate of return on, that have been given by the different pension funds in the various categories. So you can choose various categories and you can compare it. So I think it's a very good tool for people to do a more meaningful evaluation of pension returns. The second thing that has come into play is the Pension Sahayak. So this is a grievance redressal system. And essentially, it's like one place. So earlier on, you had to remember your PRAN. You had to have, different logins for different PRANs. Then, you couldn't figure out as to when you put a complaint, you wouldn't know, where it is stuck and stuff like that. So now this is like a single place where you can put in everything, and you have a complete track of what's happening with your particular complaint, like where is it pending, who is servicing it, has it gone to the next level or not. So I think two very useful tools for consumers that have basically come into play in the NPS.
All right, okay. The other aspect is with regards to this Pride Disha and Pension Sahayak. What are these exactly, and what should one know about these tools?
Okay, so first and foremost, in terms of Pride Disha, I think, I've sent across a screenshot. So I just took a screenshot from the portal to just show you what it's like, right? So it's very easy to navigate. And I think the point that one has to remember is that, you can look at returns over various time periods, 7 years, 10 years and stuff like that. So you basically put in your date of birth, you put in the investment amount, you put in the contribution amount, and you put in the options that you basically want to compare and the time period for which you want to compare it for. So basically, then from the date you have started, it is basically showing you till now what is the rolling returns over that period, for example, right? So that is one good thing. So this is what the Pride Disha is basically about. And when you look at the pension sahayak, right? So as I mentioned that earlier on, people had to remember all their details. They had to remember their PRAN. They had to have a separate login for each of the PRANs. They had to identify the correct complaint category and the intermediary. And also the tracking was not very easy. So now, for example, now what you have is one portal where all that you have to do is state what is the problem, right? And then the system classifies it and sends it to the relevant entity, and then you can basically track it, right? So I think you, and the main thing is you just have to tell in brief what is the grievance all about, and and then the system basically helps you in taking it forward. So I think from that perspective, what has happened is that it's become easier because the system displays which is the entity, like where is it stuck, right? So the entity that's handling the complaint, and it also gives you a particular timeline as well. So, I think from a consumer perspective, once you've given a complaint, you have a much better idea in terms of what's happening with the complaint and how long it's really going to take to resolve.
Okay, all right. Got that point. The next one that I had in mind is that, using these tools, how can you actually compare performance, and what is the, step-by-step process to do that?
Yeah. So I think I had detailed out the step-by-step process as being that, it's very self-explanatory on the tool. You just enter a bunch of data and you compare the data. I think, what, Mahima, the bigger thing is that, while you have data available, right, and the data, like, if I look at the data that I have given you, it is basically comparing the active choice with 75% into equity and 25% in corporate bonds. And I have compared it with the aggressive life cycle fund, which is 75%, which starts with 75% equity and then tapers it downwards, right? So what the data shows you is, it shows you, for the different fund managers, I've chosen like a 7-year time period. So it shows you that in a 7-year time period, starting from, let's say 2020, because that's the period that I chose, right? So typically how these funds have basically performed, and what is the returns on each one of these funds. So I think, Mahima, while this data is available and it is more meaningful than looking at point-to-point returns, I think the point still remains that what one needs to do is to basically look for consistency of fund returns over just looking at one data set. So what I would actually suggest, Mahima, for people is that, do not look at just one period and then base your decision on that, right? I think you need to look at it over different time periods and then look at consistency of the returns over choosing the one that is basically given the highest in your data set.
Okay, all right. The other aspect is that, do you actually believe that these tools are, probably make it more transparent for the users? Secondly, do you think that they are more user-friendly in terms of interface? Because that's the aim at the end of the day, right? So what is your overall take on that?
Yeah, certainly I think they are pretty user-friendly. And I think, they also help in improving transparency, but I still feel that at the end of the day, the good thing about the Pride Disha is that it takes into account the fact that you're making contributions at different time periods and hence basically gives you the XIRR, which I think is a good option. Possibly, I think what can be done is to also allow for maybe a third option, like in the sense you can only choose 2 right now, right? So maybe you could allow for a third option to be there as well. And I think, further as we go along, like, as we have seen in the mutual fund space, where you have volatility ratios and stuff like that, possibly, looking at risk return metrics, could be the next step. But yes, this is an overall, it's a great step in improving customer experience and also providing right data to people. And at the same time, where the grievance redressal is concerned, it has certainly made it much easier for people to basically figure out, as to how they, to in the first place, give the complaint and then track the complaint as well.
Okay, and can you tell us more about, firstly, before I go to that, I think the important point here is also for people to kind of understand as to how often should they keep a track of how their NPS has been performing, and, like you said, it should not be for a short term for sure, and one needs to take that into consideration. What are the things that you need to look at when you're checking the performance?
So I think what is very important for investors to remember is that, considering that you're in this investment for 10, 20-year periods, even if you see underperformance for a little bit of time, even if it's for a year, honestly, it's not something to be really perturbed about and immediately switch the investment, right? So I think the real benefit of the tool, of course, to see what the performance of your fund is like. But I think when you are at the investment stage, when you're choosing the fund to invest into, or rather, I should say the PFM to invest into, I think that's where this tool can be utilized. But as I said, please look at it over different time periods, because you want to look at what has been the consistency of the fund returns over the highest return.
All right, just one last one, and this is on Pension Sahayak. Just if you can give us more details on how does this simplify the complaint resolution model?
So, as I mentioned, right, like earlier, you had to basically identify the complaint category, the intermediary. And, earlier, if you had different two PRANs, for example, then you had to log in separately. Now, everything is in one place, basically. And, so for example, let us say your contribution was not reflected, right? Or something was not acted upon. So see, earlier onwards, you had to determine whether it is a central record keeping agency, whether it was the POP, which is a point of presence, whether it was any other intermediary who was basically responsible. But now all that you need to do is that you need to state what is the problem that you have, and then the system classifies it and sends it to the relevant entity. So, from that perspective, it's become much more intuitive and much easier for the subscriber, right? And, much faster, hopefully, as well, because of all of this.
Mrin, thank you so much for breaking that down for us, and as always, taking out the time and speaking with us.
Thank you.
All right, viewers, so two very important topics that we discussed today, equal weight funds as well as NPS tools, and exactly how to use them is what Mrin helped us break down. But with that, completely out of time on this edition of Your Money Matters, but do stay tuned in for more news and updates on the other side.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do?
Cholamandalam Investment and Finance, as we know, has posted a strong start in terms of where the first quarter of FY27 goes. To discuss more in terms of does this quarter actually set precedents when it comes to FY27 as a year or not, D. Arul Selvan, Chief Financial Officer at Cholamandalam Investment, joins in. Mr. Selvan, welcome to the show. Always a pleasure to speak to you. I mean, a strong start to the year. Do you think you will be able to surpass your FY27 guidance? Because what, 20 to 23% AUM growth is what you had guided for the full year. But seeing the way the first quarter has been, what is it looking like?
I would right now want to keep the the forecast or the projections at the same level, because we have just crossed one quarter. Yes, it has been a good quarter, and we have been very positive about the outcome of this quarter and the future. But let us go through the second quarter, because second quarter is also a crucial quarter where the slowdown continues because of the inauspicious month and then the rainfall, etc. And I think always it has been the case where the first and second quarter are the little, slow quarters, and then followed by the festival seasons and then the Q4, which gives us good traction. So if the second quarter also moves on well, then I think we should be in a position to even look at further revisiting our targets. But right now, I would rather keep them where we have said. We have not changed them through the course. We'd like to keep them as it is.
Okay, so nothing changes as of now, but obviously as things develop, we will see some updates coming in there. Have you seen an impact of the West Asia crisis on the business anywhere, maybe from a sentimental perspective as well? And two, if not in the first quarter, do you think there will be some follow-up over there happening in terms of the coming quarters?
The West Asia crisis has got two ways of impacting. One is availability of fuel being a constraint. So far, we have not seen this constraint, and we have been able to bring fuel, and fuel availability is crucial from the vehicle finance perspective. If fuel availability is there, the price of the fuel, even if it sort of inches up a bit, does not impact much, especially in the context of the customer profiles we have, because generally they tend to pass it on because they are a day-to-day price. They price the product or price the services on a day-to-day basis. The second important issue is the West Asia crisis should not result in some shortfall in raw material or shortfall in production or shortfall in some other activities which would impact transportation. If that impacts transportation, then it will also have a fallout on our vehicle finance portfolio, because if there is nothing to transport, then there will be also a lack of business. So these only are the issues, I would say that.
Okay, so basically what you're saying is, on the back of the West Asia crisis, the impact in terms of elevated crude prices, that could have an impact in terms of the vehicle finance portfolio, and that is something that one should watch out for.
No, I'm not talking about the increase in diesel price. I'm talking about the availability of diesel itself. That is all. If there is a price increase on account of the crude price movement, that gets passed down. But if the diesel itself is not available, then the vehicle cannot run. That will be the only crisis. So far, in spite of the more higher tension periods, we have country has managed to bring in diesel from other sources, etc. So there has never been a situation where diesel availability had been an issue.
Okay, understood. And how are you baking in below normal monsoon forecast right now in terms of your expectation? I know it's something too early to even really call out for, but if you have to look at it as a risk, how big a risk that could be?
See, the monsoon, at least for the current financial year, is not going to impact much because the storage and the irrigation facilities and the reservoir levels are quite adequate, across the country except in one or two states. So I think the immediate crop will not have an impact, but we will have to see how it impacts the subsequent crop pattern. So that is what is to wait and watch for, and we will keep observing that. But I think monsoon has picked up a bit, so there should not be too much of a shock.
Okay. And Mr. Silvan, what about the asset quality? Are you seeing any early signs of pressure? Because while growth is remaining absolutely strong from a profitability front, from an AUM front, the gross stage 3 assets have increased sequentially. What does this actually tell you? Is this as a temporary blip that an investor should look at it, or a mild stress that you're seeing anywhere?
See, again, if you look at it from a seasonality perspective, in Q1, the asset quality, slightly, the stage 3 or the NPA numbers increase as compared to Q4. So this is the trend. And if you look at it last year versus current year, the increase had been much muted this year. So I think that is a good start for the current year. So if that is muted in Q1, normally Q1, Q2, there will be slight increase in the NPA numbers, and then it further reduces in Q3, Q4, which are the good quarters, as I was saying earlier. So this trend is always been the case, and we are going through the same thing. But actually, the positive thing is the increase compared to last year, Q4 versus Q1. In the current year, Q4 versus Q1 had been much muted. So that's a good start for starters.
Okay. And, if you have to look at the year, what is tougher for you? Is it going to be maintaining the growth momentum or preserving the credit quality in FY27?
See, between growth and credit quality always is the important one, because growing at the cost of credit is not good. So credit quality will always be on the forefront of our, watch list. So we keep, tracking credit much more closer, and that would be the important criteria. Growth is there. Growth will come, because CV cycle has turned, so there should be a good growth coming in, and we have multiple levers with regard to almost 8 products in our business profile, which would help us to moderate growth, even if 1 or 2 of them goes through a slow cycle.
Okay. And Mr. Silvan, the other question I have for you is, if there is a prolonged period in terms of crude prices, does your credit cost get altered in any way? Because 1.5% has already been achieved in the first quarter of FY27, if you have to look from a guidance perspective, versus a 1.8% in FY26. So what is the stance looking like there?
Yeah, I again reiterate that crude price alone will not be the factor that could result in the credit cost going up. Crude price is generally passed down, but mostly the most important thing is availability of diesel and availability of loan. These are the critical parameters which, if they have an impact, then it will have a fallout on the portfolio. Otherwise, we are confident the price of crude alone will not alter our actually.
And Mr. Silvan, on one side we're talking about the crisis that could come in, but on the back of FCNRB, the liquidity in the system is something which is going to be available at an abundance for some reason, right? Now, for a Chola, do you see any benefits coming in on that front where, there could be a pass on coming in for NBFCs as well, number one? And two, which are those segments that will drive growth then?
See, the FCNRB is very good move by RBI to bring in liquidity. But, currently or as of today, the pricing, at least from Chola's perspective, we are able to get from domestic itself much cheaper than the completely hedged or, the landed price of loan backed on the FCNRB deposits. So we still have not got any, we haven't moved on that front to tap this source. But that source is good and that helps, have a larger liquidity, and it will help us to grow, because money availability is good for us, because that is what is our raw material for our growth.
Okay, and what segments will drive growth?
See, the availability of funding is not necessarily linked to each business directly or independently. We borrow in totality and we lend to the different businesses. So the availability of funds.
My question was mainly in terms of separate, I just clubbed into questions, but which are the segments that will drive growth for FY27?
Of course, vehicle finance, the CSL business, gold, LAP and HL. All of businesses are looking positive now. So these businesses will grow. Vehicle finance will go a little faster as we see the CV cycle turn, and if that sort of holds on, so there we will see a better growth as compared to last year. LAP has already been growing at a good pace, so it will continue its momentum. HL will also continue its momentum because there is enough and more demand for housing, and there we see a good traction coming in. The unsecured, we will move with caution. Yes, there is always a possibility of the unsecured becoming stressed in case the economy turns poor. But it's a very small portfolio, so from a growth perspective, from a smaller base, you will see the growth becoming larger.
Got it. I think all engines are firing, and I think no reason for investors to get disappointed at all. But thank you, Mr. Selvan, for joining in. Always a pleasure to speak to you.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to
slight unwind that we're seeing in the AI trade make this conversation with Mr. Harold van der Linde, Head of Asia Equity Strategy at HSBC, extremely important. Harold, great having you as always. Thank you so much for taking the time out and being with us.
Yeah, thanks a lot as well. I see you got chocolate over there. You can't share it this time around, but good.
Yeah, Harold, maybe the next time that either we are at your side of the world in Hong Kong or if you are in India, we'll order this purple ball once again.
Exactly.
But speaking of chocolates, it's turning out to be a slightly sweet week, if you will, because the markets are kind of doing okay, even as the AI trade around the rest of the Asian markets comes off and brings those markets down along with them. What do you make of this combination, Harold, and therefore the risk appetite that people might have into investing into equities by and large?
No, I think there's a couple of really interesting things going on in the market, and you're right. A lot of that has to do with the AI trade. So earlier this week in Shanghai, we had the listing of a memory company, CXMT, and that has ignited interest. Hey, the Chinese are emerging as a major player in memory. They're not making the memory that the Koreans make, but this could, of course, over the next 2 or 3 years, could change the dynamic in that industry. What we've also seen is that people are getting a little bit more worried about overall spending in the AI industry globally. So semi-stocks, the ones that make the memory for the data centers, those memory stocks around the world have started to come off. And what is added to the sort of dynamic is that there's a lot of people gone into these stocks in Korea, in Taiwan, with borrowed money, or they bought really leveraged products. So you see that a little bit unwinding at the moment. Not violently so, but it's a kind of an interesting process. And money, therefore, flows into other markets. Now, we've seen actually money coming into the Hong Kong market. But I think some of that is going to trickle gradually towards India as well. So that's a positive for you guys.
You know, Harold, I was looking at your 10 surprising statistics and just absolutely love the note. It's too much fun to read. Powerhouse, the number one, Samsung Electronics profits are projected to hit $200 billion in 2026, the same as the combined earnings of all listed companies in India. SK Hynix's shares moved more than 5% intraday on 92 of 131 trading days this year. Samsung for 82. And with the latest top-tier Chinese self-driving cars, you can drive from New York to Boston and halfway back and only need to take over the wheel once. Of course, there are another 7 very interesting ones. But I want to ask you about SK Hynix and this AI trade. Is this a blip? Is this a pause where investors are waiting and figuring out, are we going too fast? Or is something shifting?
I suspect something is shifting, but it's kind of early days. The difficulty here lies is that the actual profits that these companies make still look good. And actually their business is still looks healthy. I mean, they've doubled their prices since the beginning of the year. What is now happening is that they can't raise their prices as fast anymore as what people anticipated. Also, they've locked themselves in long-term contracts. That makes sense from the memory makers. You're building a big fab, cost a couple of $1 billion. So if your customers say, listen, can I already put in orders for 2027, 2028, and 2029? You say, I'll take it because I'm building this and I need to sell the product as well. So it gives you certainty. But the market looks at that and says, yeah, but hey, that means that if you fix these prices already, you can't raise the prices that much more further. So the price momentum in memory is therefore sort of slowing a little bit. It's not negative, but it's slowing. And that is a key factor. Now, then we also have the CAPEX and we have the emergence of Chinese players, although they're not really competing in the high-end stuff here, but they are there. And that is shifting the dynamic in that AI industry, absolutely.
Now, is there any kind of correlation with what's happening with Indian IT stocks? There is absolutely no evidence for this, except that we have seen on days that you have a meltdown in semiconductor stocks globally, in Korean markets, etc. You have Indian IT stocks doing pretty well. Is there any kind of connection at all, or are both on different trajectories? Because when the reverse was happening, one of the reasons given was Indian IT is suffering because there is no AI trade.
Yeah, that's right. So for your tech sectors, you have to be careful sometimes with correlations in markets, because if one stock goes up in Korea and the other stock goes down in India, and then it's the other way around, it might be different dynamics that drive it. But maybe the rollout of AI is going to be a bit slower than people anticipate. You see in the US, a sort of pushback against AI data centers, right? They say, hey, we don't want them in New York, or we don't want them in our city, or these things could take away our jobs. So we've seen graduates at university responding quite negatively to this. So all these things have effects. And of course, that means that maybe the sort of outlook for some of your sectors might be a little bit better if AI doesn't emerge as quickly as people anticipated. So there could be a relationship there as well. But I think sometimes we have to be careful, because there is maybe a relationship, but sometimes local flow and local flow dynamics are really important as well.
Yeah, they are. I'm guessing, Heril, maybe it's a repeat of something that you've said, but I still just want to enumerate it. Giving a conclusive verdict on the turn of flows is difficult, but I've heard now many buy-side institutions who invest into EMs and India individually as well, at the margin turning constructive. If that is indeed going to be the case, could there be an upward surprise even if crude prices were to stay in this slightly higher range of 80-85 and not the 60-65 levels that benefit India?
Yeah, I'm not so worried about crude prices as long as they don't really go well below above 100. I think India seems to be able to deal with it at the levels where we are at the moment. Of course, lower price is better, but so it is. So let's assume for the moment that is not a risk. You are right. A lot of buy side cannot buy more Korea, Taiwan. They're up to their noses in it, what they already own. So that's been our story. People can't buy more. It's actually been a retail story. The retailers have driven these stocks higher. But if the momentum there changes, what we've seen is money goes into Hong Kong. It can flow to India as well. And that comes at a time where in India, some of your high frequency numbers look better, where people have moved underweight on India because they wanted to be overweight or build exposure elsewhere in the region. So your earnings look better, the positionings looks better, and your valuations are still somewhat elevated, but of course not so hefty anymore. So on the margin, India starts to look better. What we now need to see is confidence in these sort of earnings recovery, that the earnings are holding up well. And I suspect they will. So on the margin, that means that money could flow back to India. That's why we upgraded India not too long ago.
Heril, so let's look at some of the recent statistics, right? Credit growth is at about 10-year highs right now. Yesterday, India released the IIP numbers, and IIP is at 2-year highs as well. And as I read the statistics, I mean, Indian corporate balance sheet has not been in a better shape in a really long time. So in some sense, and the Q1 earnings season seems to be doing okay, with IT also participating. In some sense, the micro from within India seems to be doing all the right things. Is that the necessary and the sufficient condition to enable more flows during the rest of the year?
I think it is a necessary but not sufficient condition. So it is necessary, and this is the high frequency numbers that I spoke about. They are looking a little bit better. So that is necessary to gain confidence. It's not sufficient because we need to see other things as well. We need to see a bit of maybe capitalization in AI. And we need to make sure that, for example, oil prices don't go up and some of the other factors. But on the margin, yes, I don't think valuations are low enough that people say India's cheap. But most people say, well, okay, but it's always a bit more expensive. It looks reasonable. So yes, I think it at least means that India is moving in the right direction when it comes to investors' appetite. When I was in Europe about a month ago to talk about it, that's 6 weeks ago now actually, to talk about Asian equities with institutional fund managers there, India didn't come up a lot. It was all about Korea, but we've seen that shift. People starting to ask us a little bit about it again. So there is a shift in momentum, at least an interest taking place, I believe.
Harold, what are they asking when they talk about India? I'm curious to know your view, because here when we speak to people who track markets day in and day out, they seem to be, for lack of a better word, put off with the Nifty, with the large cap big companies, because they aren't doing too much, not too many exciting stories there. But there seems to be a sense of discovery in the broader Indian markets, whether it's micro caps, small caps or mid caps. Wondering how you are looking at that trend.
Yeah, so the vast majority of people that I talk to, they can't really go into small caps. Their funds are too big for that.
Sure.
So that's difficult for them. Sometimes you meet a specialist that does, and actually I remember having lunch with one of them that has actually done really well in India because he was into small caps. But the vast majority can't do that. So the questions are really about how much confidence do we have in the earnings recovery? What is reasonable earnings growth in India? What happens with the banks? And also longer term questions. What's going to happen with profitability in India? And how do we have to think about that? But those are long-term issues. The near term is really about earnings, oil, movement of interest rates. That's really what people want to talk about. But earnings, I'd say, is number one.
So I'm wondering then if a lot of these investors, when they come back, will be restricted to looking at large caps. Will we then see some improvement there here on? Because domestic investors seem to be looking outside that box.
Yeah. So if you're a domestic investor, you can do that. But if you're, it's just basically mathematics, right? It's if you run a really large fund, you can only buy large stocks because it takes you too long to buy mid-cap stocks. So it's really banks, larger consumer companies that they're looking at. Maybe the oil and gas and energy universe is some interest as well. But you see them trying to trickle lower in the market insofar they can. Maybe a bit of property, maybe some other small cap or a company that does something that is unique at least, and maybe making auto components or something like that, right? So they are looking at that to move away from the large caps, but very often many global funds are somewhat restricted insofar they can do, because if you buy a couple of dollars of stock, hey, then you can buy any stock you want. But if you're running a large fund and you need to buy $100 million, then it's a completely different story what you can buy.
Fair enough. Thank you so much, Harold, for speaking with us today. We always enjoy our conversations with you.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news.
Hello and welcome to The Big Question. I'm Vikram Oza, and this evening our focus is on that bill. The bill in the US Senate that could add this whole new twist to India's trade negotiations with Washington. The Senate over there advancing a bipartisan Russia sanctions bill. That bill is going to allow President Trump to impose tariffs of up to 100% on those countries that continue buying Russian oil. India is right in the spotlight over there. We are now Russia's second largest crude customer. We import more than 3 billion barrels a day, with Russian oil now accounting for more than half. More than half of India's crude imports in June comes from Russia. For India, this is not ideology really, it is energy security. We are the world's third largest oil consumer. We import nearly 90% of our crude needs, and discounted Russian oil has helped contain inflation. It has helped lower our import bill as well. But really, this debate is not about oil, it's about leverage. With a Section 301 probe that is already hanging over India, has Washington now found this powerful new bargaining chip, just as the two countries are negotiating a major trade deal? Or the question is, does India still have enough strategic, enough economic, enough geopolitical heft to bargain hard and protect its interests? That's the big question tonight. So yes, the US Senate, and now we're seeing the Trump administration go down the tariffs route, and yet it's being used as a strategy. Now the question is, as we negotiate our trade deal with the Americans, do we still have bargaining power? Let's understand this and take that question across to our panel. Joining us on the show this evening is Amlendru Mishra. He's Professor of International Politics at Lancaster University. Along with him, we have former Foreign Secretary with the Government of India, Mr. Shashank, is with us. And with them, former Union Secretary, Ministry of Commerce and Industry, Ajay Dua is with us as well, and oil and gas expert Kirit Parekh. Gentlemen, thank you so much for making the time for the big question. But Mr. Mishra, and perhaps I should come to Mr. Shashank first. We're looking at a Section 301 probe on one side. We're also looking at a Russia sanctions bill, like we said. That's on the other side. So is this the clearest example yet of the US now merging trade policy and sanctions policy and foreign policy into the single negotiating strategy of theirs?
Well, in any case, trade policies are conducted on the basis of countries' interests India has been doing that all along, and several other countries have joined India in bilateral trade agreements so that this could be a win-win situation. We are still hopeful that India and USA can reach a bilateral trade agreement which should be useful for both of us. So I think that we should continue to work on, while at the same time, we know that US has global security interests, so they would like the Ukraine-Russia conflict to end in a way whereby Russian interests are kept in mind, but also the US interests are kept in mind. So therefore, there's a completely different thing between USA and Russia on one hand, and USA and China. So actually the negotiations are really between USA and Russia and USA and China. India has become a casualty because of the global power that America wields. But I think we should continue our bilateral trade dialogue with America on this basis, that we should keep the American markets open, we should keep the Indian markets open, and Indian investments into USA, as well as the American top technology and other mineral-related investments in India. So I think that is very important, that we have to continue this
we have to
process.
continue. The negotiations have to continue, and they probably will. But now the question is, this tariff threat, the bargaining power that the Americans use at the negotiation table, now is that making it a little more difficult? Mr. Mishra, you're back with us. At a strategic level, has the balance of power in the India-US relationship shifted? Has that happened over the last 48 hours with this, the Russian bill? Or does India, you think, still have enough geopolitical heft to resist any kind of pressure when we are doing the negotiations with the Americans?
Hi, good evening to you all. First of all, nothing is written on stone. In the current context, we have seen how many rounds of trade talks have taken place and how many tariff regimes that President Trump has imposed on almost every country in the world. So I won't sort of hold my breath, and I will be hopeful that something will come around. The challenge, of course, is that this is going to be a bipartisan deal if it comes into fruition in favor of America. But having said that, the global geopolitical scenario is such that United States simply cannot afford to sort of alienate India, so to speak, by imposing 100% tariff. But then you also have to bear in mind the fact that the tariff is not only just going to hurt India, it's going to hurt United States enormously. If you look at the pharmaceutical sector that is heavily dependent in the United States on the Indian pharmaceutical exports, what are they going to do? And all the studies are pointed to the fact that even though Trump is sort of slapping all these tariffs left, right, and center, it's American people who are being affected at the end of the day. So even if Trump manages to impose this 100% sanction, there will be a backlash within the United States, and that will be to India's favor.
So you think there could be backlash, but like Mr. Shashank is pointing out, this is essentially putting pressure on Russia right now, and India is probably now getting victimized because of that. But Mr. Dua, do you agree with that? India and the US, they are negotiating a major trade agreement, and it covers agriculture, it covers dairy, digital trade, industrial tariffs, and market access. All of it is still on the table. So now does this threat of 100% tariff fundamentally weaken India's bargaining position at that table?
Not really. Vikram, I would say that even earlier, President Trump was, without the congressional powers, could do this. And at that point of time, he had levied 25% on for trading with Russia. And he did realize, as was just mentioned by Professor Mishra, that the impact of it was as much on the United States citizens as others. And at that point of time, he had kind of levied the taxes on India, but not on China. India was subjected to this additional tariffs, but not the European Union, which had been importing gas and also the reprocessed oil was finding its way back to the United States. So I think the United States would realize that just because the Congress has authorized it, that instrument must be made use of, probably may not occur. But certainly it will be used as a leverage.
Yes.
the negotiations which have gone up and down 16 months or 17 months over already since we started meeting in January. So it's the leverage position which India would have to kind of navigate.
Exactly.
And the actual threat of it.
So that's exactly what I'm asking, because yes, they may not use or may not impose the 100% tariffs, but using the tariffs kind of baton to negotiate. Mr. Parekh, now India importing 3.06 million barrels a day of Russian crude. This was the figure in the month of June. It's more than half of the total crude imports that India does. So is this now an energy security issue first and the diplomatic issue comes second?
No, I think it's certainly the diplomatic issue is the first one. Because as far as energy security is concerned, if India doesn't import oil from Russia, it will import from some other countries. Even the US may be willing to supply oil. Of course, this would really raise the international price of crude oil, and India would suffer massively in terms of the dollar cost of its energy imports. And I think from that point of view, we should be tough in negotiation. We should not easily give in, but we should insist that unless the US gives us assurance that they will provide us crude oil at a competitive rate and not competitive with the current market rate, but what the Russians are likely to have provided us for.
Providing it at a competitive rate is one aspect, Mr. Parekh, but what about the volumes that Russia provides? Are they going to be able to provide that as well, you think?
Yeah, I think that is not a problem to get that much of oil volume from other countries also, because in the past there are months in which our import from Russia were much lower than this. So it is not.
So volumes may not be a problem, but you're saying that we have to negotiate for a good price. If at all they don't want us to buy Russian oil.
Absolutely.
But Mr. Yes.
And that is critical, because I think for us to have certainly a large outflow of dollars going place will really put strain on India's dollar exchange rate, and it will really put an inflationary impact in India as well.
And the Americans understand that, don't they, Mr. Dua? The Americans understand that, and that's how they're using that as a leverage. So if you are a US negotiator, Mr. Dua, why would you negotiate patiently on dairy, on agriculture, on industrial tariffs, when you can simply say you comply on Russian oil or you'll face 100% tariffs?
I'm one with you, Vikram, that it's going to be used on India to the extent it is possible for the US negotiators. They are going to be pressing, saying that, look, your options now are limited. We are willing to supply you oil, but I don't think they are going to be telling us that will give you discounted oil, that oil at a discounted rate. It's going to be at the market rate, and the market rate would certainly be lower than the 100% tariff if they were to make use of on the Russian oil. So it's going to be all through pressing the Indian government while the negotiations are going on, that there is a possibility that if you do not fall in line, we can make use of the powers now which the Senate and the Congress is now.
So that threat stands. Mr. Shashank, do you think Washington is effectively telling India that access to the American market is now going to come with all these expectations of strategic alignment, or else tariffs?
Well, I feel that up to the September BRICS summit, all these pressures will continue to mount, continue to increase. But we have to keep in mind two things, that since it is a bipartisan bill, and the Democrats had earlier proposed that India should continue to buy Russian oil in order to keep the international market prices at a lower level. Therefore, they will have to take a more cohesive and relevant approach on this issue. Secondly, President Trump himself, the Americans, because of the Gulf crisis, they have been issuing a waiver of sanctions on purchases from Iran and purchases from Russia. So I think that we need to point out that ultimately, if we are playing in non-dollar terms to other countries, and that is an issue of great importance to India. And as Mr. Ketan Parekh also mentioned on that issue.
Yes.
So we have to continue doing on that basis. And I think if worst comes to worst, we have to tell them that, look, if you increase the tariffs on India to 100% because of Russian oil, or earlier they were talking of 500% because of BRICS summit, I think so be it. I think we just cannot, it will be impossible for any government in India to succumb to such a blatant pressure from the Americans, a number of American negotiators who are essentially diplomats, and they negotiate with large number of countries.
Yes.
And they know what they had to bite dust when they were negotiating with the Chinese. So why should they try to do something similar with a democratic country like India, with whom they want to have a strategic partnership?
Professor Mishra, you want to answer that? Because for decades, America has argued for free markets, for free trade. So there is this shift towards trade with us on our strategic terms or else. That's a dramatic shift.
But there is a larger picture as well that we need to take into account. That is that United States is terribly worried that India is going to become a big challenge economically, militarily, just like China in 10 years or 20 years down the line. So that is the reason why it wants to clip New Delhi's wings, if I could put it that way. So this is the beginning of that reckoning in the United States that India's growth needs to be stopped at any cost. Doesn't matter if it is a democracy, doesn't matter that there is a massive Indian diaspora doing great things in United States, doesn't matter that United States growth is also linked to India. So it is the US economic interest, US military interest, and US future kind of long-term interest that kind of hinges upon India. So it has already realized that it cannot give China a bloody nose, but it can to India. So India is the soft target, and it's prepared to go that extra mile to stop India from getting out of its orbit. And that is the reason why I'm pretty certain that they're going to force Indians to open up the dairy market perhaps and other agricultural areas. So it will be done surreptitiously, but that is on the cards, and the Americans are pretty much defiant on it. That's
Mr.
what I would
Dua,
imagine.
do you agree with that point that Professor Mishra is making, that the Americans cannot afford to give the Chinese a bloody nose? India is a soft target. Our growth needs to be stemmed by the American strategy at this stage, considering the kind of strategic implications there are in the region, how geopolitics is coming into play. So you think that is the story currently?
Probably. I wouldn't rule that out at all. The United States does need to show its muscles, and we are an easy target, not a soft target. And the fact of the matter is that going forward, we have this threat not only of the US, the new bill, but also of 301. We should not be signing a deal with the US, trade deal, till we know for sure where do we stand vis-a-vis the investigations which are going on.
Yes.
Labor, yes, we have issued a notification. Probably we have insulated ourselves from it. But at the same time, the US has still under 301 itself, excess capacity as an issue is still to be resolved.
Yes.
And we have been accused of that. So I don't see the US relenting very easily. And in fact, I raised the larger question that till such time as the uncertainty on 301's application is kind of dimmed, considerably dimmed, even an agreement with the US, a trade deal on whatever terms are being negotiated right now could also get adversely impacted, which should be making us wary of hurrying into signing any trade deal with them.
So then, are you ruling out the possibility that India may make certain trade concessions, considering the leverage that the Americans have? Mr. Shashank, what precedent would it set if India does start making trade concessions because of pressure, which is linked to a completely separate issue, whether it's Section 301, whether it's about buying Russian oil? Is it going to impact our energy relationship with Russia? Can India afford to do that? And can we afford to make these trade concessions right now? And do we need to?
No, point is that in the world there is a feeling that the US is fighting all these wars, maintaining all its 800 bases, its 11 aircraft carriers, because of the dollar preponderance, and all the countries in the world, they are paying for the American wars and the maintenance of their defense architecture globally. Therefore, if India does not, so India has to make a choice that does it continue to follow the policies and succumb to the Americans, and the Americans want India to become in the case of a third world war, a cannon fodder supplying country, as it did in the First World War and Second World War. And would India be willing to do that? So I think that there are some basic issues which India and America have to look at very carefully, and the alternatives which are there. Because right now, China, Southeast Asia and India, they are trying to build together a different kind of a formula, which will not be really promoting democracy everywhere, but which will be promoting partnerships and supply chain relationships in the region, and be the growth engine for the world. I think we have to continue to think of that.
So then, are you aligned with Professor Mishra's thought on this, that the larger message is actually aimed at, not being able to give India a bloody nose, but this is actually something that they are following as a strategy against China, and India is getting perhaps caught in the crossfire? That's an extension of that thought. Is Washington deliberately signaling to both countries that economic ties can no longer be separated from geopolitical choices?
I agree with Professor Mishra, but at the same time, I would also say that America was a partner with the UK in cutting the western arm and eastern arm of India, and to make India almost like an island after 1947. I think now time has come for America to prove that it is a strategic partner of India, and to take into account the American and India's long-term interests in mind in Asia Pacific. And I think that perhaps is a very important issue. Americans have to think in those terms rather than just thinking how to keep India in line and to behave as a follower of the Americans in Asia Pacific.
But Mr. Shashank, the US wants India as a quad partner, doesn't it? I mean, an Indo-Pacific counterweight to China, a major defense partner is what they see in India. But doesn't America need India almost as much as India needs America? How has that balance shifted in recent times?
Well, it was needing India at one time, but then India itself said that it's not going to become a military partner with the United States. If India agrees to do that, if India agrees to have military bases of Americans in India and to threaten China with the American troops in India, then of course, India will have a great partnership with the United States. But will India like to do that? Will India like to fight the American wars the same way the Arab states are fighting with the Iranians, the American war? I do not know whether the Indians would like to do that.
Fair enough. Mr. Parekh, if India were to substantially cut Russian purchases, let's assume that India agrees, then what happens first? Are we going to see higher fuel costs? Are we going to see a larger import bill? Will there be refinery disruptions? Or, of course, as the economy progresses with high crude oil prices, are we eventually seeing inflation become the biggest issue for India to deal with?
I think all things are possible, what you said. It's going to raise international price. Our import bill will go up. India would face little more higher inflation rate, and that I think our refinery sector is relatively well balanced and well structured, so it won't be too affected. But you will have to import oil from other sources, and of course, since the demand for all the other oil in the world will increase, this is going to really raise price, as I said. And I think India should not, in my opinion, succumb to this blackmail that the Americans are imposing on us.
So just set the context, Mr. Parekh. How important has Russian crude been for us in bringing our oil import burden down? From 8.5% of GDP now to below 5%. How much of a role has Russian crude played?
Russian crude has not played any significant role in some sense, because we were importing oil from various other countries. We are still importing oil from a lot of countries. Now, I think what we can do, what was important for India to import oil from Russia is that it was giving it a concessional rate, and that certainly helped us in lowering our import bill. But I think our energy security would not be terribly affected, severely affected, by this not importing any oil from Russia. Though I do believe that we should continue to import oil from Russia.
Yeah, so whether or not we are going to be able to do that, considering the negotiations and how the Americans are using this leverage of tariffs. But Mr. Dua, how should India read the combination today of Section 232 tariffs, Section 301 action, the future pharma tariffs, now possible Russia sanctions tariffs? Is this a series of isolated actions, you think, or there is a clear negotiating pattern? And how do you think India, if you were advising the government, what would you tell them to do?
I think the US is inclined to be myopic in its approach to the current set of questions facing the world. And in this, it would have to take a slightly larger view. If you would recall that soon after the Ukraine war started, similar sanctions were imposed on people dealing with other countries dealing with the United States, and that included the oil from there. But India was allowed by the then government. It was a democratic one, but Janet Yellen, at that point of time, the RBI, the federal governor and then the Treasury Secretary, she had very clearly even given out the reason, saying if the US Soviet oil or the Russian oil is no longer in the market, then the prices would go up and it would hit everybody. Oil producers might have benefited more, but generally the world was going to suffer, and that had come out from its own Treasury Secretary.
So it isn't not going to hurt anyone. Professor Mishra, you'd have to agree, but you think this is becoming a new global template where sanctions and human rights concerns and supply chains and tariffs and security partnerships, they're all getting bundled together. But even if India accepts this kind of linkage today, what would stop future American administrations from using similar pressure, whether it's defense purchases or technology partnerships or foreign policy choices?
That's a very good question. Sorry.
Yes, Professor, go ahead. Sorry. Professor Mishra.
Sorry. Yeah, that's a very good question that you're raising. And also it can be read as a wake-up call for India. So when you talk about forced labor, I was reading a report, United Kingdom, where I live, is also slapped this 12.5% tariff. So no one is immune to this mercurial precedent. So therefore, it would make sense for India to sort of maintain a critical distance from United States and explore new relationships with other countries. I know that India and China don't get along very well. We have a history of war, competition, threat, and so on and so forth. But I think perhaps it's time that we recognize that no matter what happens at the global level, we both are going to remain partners. So why don't we sort of align ourselves with each other, sort out our differences, so that will keep United States in the long distance and it won't affect India's long-term interests, perhaps. So I won't sort of consider United States as a friend of India. It has never been a friend to anyone, as one of those United States presidents said once upon a time. It has no permanent friends, no permanent enemies, but just permanent interests.
Yes.
So does India want to sort of deal with a power such as that in the long run? Perhaps it will be a very difficult bullet to bite in the short term if there are these kind of regimes. But we have to accept it and explore new frontiers, new relationships with our neighbors, immediate neighbors, that is, and relieve our over-reliance on the United States.
So if that is the kind of path you're suggesting, this clearly is not about Russian oil anymore. The bigger question is now whether Washington is beginning to bundle those trade tariffs, sanctions, strategic alignments into one negotiating toolkit, and whether India can protect its energy security, its strategic autonomy, without compromising its trade ambitions. So trade ambitions can be pursued elsewhere as well. And that's perhaps the path that India needs to kind of take up very assiduously. You heard the experts. My thanks to Amalendra Mishra, to Mr. Shashank, to Ajay Dua, to Kirit Parekh. Thank you so much for joining us with your perspectives. So in the years ahead, I reckon that India will have its challenge. The challenge lies in bringing that balance between strategic autonomy and pursuing economic opportunities, because we are moving towards a Viksit Bharat. So striking those opportunities and getting that balance right, how is India going to do that? That is the big question. I'm Vikram Oza. Thank you so much for joining us.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
बरसों से सरसों। पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in AN.
Presented by Canara Bank. Together we can.
Talk to us about what the strategy is now going ahead for India, right? You cracked it through your smartphone pricing was how you cracked the India market. Now you're looking to double down on that. Talk to us about your strategy.
Yeah, so first of all, thanks Rishabh for having me on your show. Very happy to be here. So incidentally, this month marks the 12 years of Xiaomi in India as well. 12 years have been a fantastic journey for Xiaomi. Our overall core strategy of the company is built on human times, car times, home through a connected ecosystem. In the last 12 years of our journey, we have been working on the human part of it, which essentially means the devices that you use personally, like the phones, the tablets, the IoT devices and things like that. But the larger ecosystem of the company still remains on the human times, car time, home, which essentially means that the home part, which is the smart home connected devices. And that's the next journey that we are going to take, which will complete our overall philosophy of the company as such.
Mr. Mathur, talk to us about what an Indian user of Xiaomi can expect from the company, let's say 12 months down the line, right? In terms of the product portfolio, in terms of smartphones, in terms of various other things that you're doing. Give us a 12-month timeline into what Xiaomi India is doing.
Right. So first of all, reflecting back now, in these 12 years, from a phone perspective, which has been our core business so far, Xiaomi and India has sold more than 250 million smart devices and close to about 100 million connected IoT devices. Okay. So we are a household name now. We have a large user base that exists in the country. Talking specifically about the next 1 year, that consumers can expect from us, a larger connected ecosystem, like I mentioned, which is going to be a smartphone, tablets, TVs, and now appliances as well, which will fill that gap. So consumers can expect a lot of smart devices for home, which will come as well. If I have to talk specifically about phones as a category, if I may, we all know that the premiumization journey has started. Consumers have started to move and shift from value for money to value for experience. Consumers in the phone can continue to expect a lot of our mid-premium devices, which is led by our Xiaomi sub-brand, which is the Xiaomi 17 series that we have recently launched, more so in partnership with Leica. Even in television side, you would see a more of QLED, larger display. That's the direction which the TV is moving from a consumer's point of view. And more exciting times to come would be the large appliances, which is the home category that we will be building in the next few months. So we have a large portfolio of home devices, which are smart devices, from TVs to washing machines to ACs to robo vacuum cleaners to small home appliances. So we will take the next journey forward in building some of these categories in India.
Very interesting. So a couple of things I want to double down on. One is your pricing strategy. What's that going to be looking like, right? Because you cracked the smartphone market through somewhat of a lower end of the price band is what you cracked the smartphones market through. Now you're talking about premiumization as well. Give us a sense about what your pricing strategy will be for the home appliances sector as well.
So in Xiaomi, we always believe that technology should be affordable for all, and it's not just for a select set of premium consumers. And that's how we have built our brand globally as well as in India, which was built more on value for money. And I think now that is shifting from value for money to value for experience. And I think moving forward, while we will still continue to cater to a larger spectrum of consumers at the same time, keeping the honest pricing as one of the core philosophies in times to come.
All right. Mr. Mathur, you also talk about a broadening of portfolio. None of that comes without manufacturing, right? All these appliances that you'll have to now manufacture. What's Xiaomi's plan going to be? The government has been very tight on manufacturing in India. They've been pushing a lot of incentives, a lot of schemes coming out to boost, especially electronics manufacturing. What's Xiaomi's take on these governments, on the government's manufacturing push?
So just to jog everybody's memory in terms from the past, Xiaomi was the first company to start local manufacturing in India from a smartphone point of view, which was way back in 2015. And now if we look back, today 95% of our products are manufactured in India, whether it is TVs, whether it is phones, whether it is tablets, whether it is power bank, or any of the IoT products that we have launched in this country. So Xiaomi as a company is fully committed towards local manufacturing in India, and don't think that playbook will change when we get into large appliances as well. So yes, local manufacturing is one of the key pillars of our strategy as well, and that will continue moving forward as well. We thank the government for all the incentives and other PLI schemes for manufacturing that have been offered, which is encouraging the whole local manufacturing ecosystem, and we are an active participant in that.
Mr. Mathur, what does the investment landscape now look like for Xiaomi, given the fact that your playbook will remain on manufacturing locally? Where are you looking to invest? What geographies in India are of particular interest to Xiaomi right now?
Yeah, so from a phone and TVs point of view, we are present across the country. Different products are made. It's not a specific geography that we make our product. They are based on our philosophies. We've been working with the local manufacturers, local EMS partners. Those are and that's how it would continue. It's not a particular state or a geography, depending on the capability of our partnership is where we choose.
Fair enough. Mr. Mathur, also a very interesting development has been the relaxation of the Press Note 3 norms that the government has also come out with. Have you at Xiaomi seen any sort of an improvement in terms of sentiment when it comes to investments flowing back into India, especially from neighboring countries? Xiaomi is one such company as well. Has that sub 10% passive ownership clarification, has that caused any sort of a benefit? How is Xiaomi reading that particular relaxation?
So I see this more as a opening of a relationship between the geopolitical situation that has been. I think it's a welcome move that we see. Of course, this ownership is on a different space as such. but in directionally, I think it helps boost the investment into the country. And as and when the scenarios open up more, or we will continue to explore some of these areas as well.
All right, Mr. Mathur, India is also now the Xiaomi South Asia headquarters, right? Give us a sense of what this actually means, right? Is this just a technical or an organizational change, or is India going to actually be a very meaningful hub when it comes to all sorts of operations for Xiaomi?
Yeah. So India has always been one of the key strategic markets for Xiaomi, and now India being elevated as a headquarter for the South Asia region, it's not just a organizational change, but it means a lot because it will help India as a market to integrate with a larger headquarter organization and bring in new products, new technologies, and which are far more relevant to the Indian consumers as such. So it's I think in times to come we will see a deeper integration between the headquarters, which is only going to help the Indian consumers as such.
Right. Lastly, Mr. Mathur, before we wrap this up, memory prices and chip prices have been ballooning across the world. That's not just an India phenomenon. It's been observed everywhere. What are you making of this current situation of raw materials, supply chain issues with the geopolitical constraints that we have? How is Xiaomi dealing with all of these?
Yeah, I mean, of course, we all know that the memory prices are going up due to this super AI cycle that is going on. Of course, the prices will continue. There is a shortage on the memory part, which is resulting in the prices going up. Xiaomi as a company, like you have already said, we believe in honest pricing, but some part of it has to be passed on, and of course we are seeing, but at a relative level, Xiaomi is still very, very competitive in terms of our propositions to the market.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Presented by Canara Bank. Together we can.
Hello and welcome to another NDTV Profit exclusive interaction with Godrej Capital MD and CEO Mr. Manish Shah. Thank you, sir, for giving us your time.
Thank you.
I want to first start with your fresh acquisition of this gold loan portfolio. I've seen Tata Capital also sometime back acquired a gold loan portfolio, a gold loan NBFC in fact. So what is this motivation? What is the rationale? You are having a lot of home loans on your book and SME. So some bit of unsecured as well. The rationale for going behind gold, and gold has been growing across lenders at a very fast pace. So why entry into the gold loan business?
So I think more than any other business or product category, gold loans best represents the formalization of savings, formalization of financial services. It's like you said, it's about a 12 lakh crore market, and it's been the fastest growing in the last few years. It fits in very well from our perspective. It fits in very well from our building a diversified retail lending franchise. Our focus is on SME, MSME and consumer finance, and this fits quite well in. From an acquisition perspective, look, we're always open to inorganic growth. This fit in well for a few reasons. One, this is very different from any other business that we currently do. And, more than the fact that we get presence in a super important state for us, such as Andhra, where there's 50 branches, they have almost 300 crores of AUM. More importantly, actually, we get access to a strong talent pool that understands this business well. So we will build our gold loans business around the understanding of the new team coming in and geographically around the states, starting from Andhra as, our base location, if you will. So it's an important area of growth. We foresee us taking, in our overall ambition of going to 100,000 crores over the next 5 years in our lending businesses, we see a 5,000 crore gold loan opportunity. Right. So it's a great addition to us.
Now you are entering spaces where already a lot of players are there and the market is very tight. Both last month you had launched your wealth management business. This now you have announced acquiring the gold loan business. How would you compete in such tight markets, sir?
Right. So Piyush, I'm just going back to our many conversations over the last few years. You're right. In pretty much any business that we will get into in financial services, all of them are fiercely competed for. That said, what we've learned over the last 5 years in Godrej Capital is that there's actually a simultaneous growing of the pie, and so not only is the pie growing, there's also an addition coming from formalization. So you look at, when we started out 5 years ago in the businesses that we were in, you were looking at an India that was 2.5, 3 trillion. You're now looking at an India which is, 2x the size. So there's almost a pie as large as the original one that's grown. So you've got enough headroom for growth from a customer, from a demand perspective. Yes, like most other businesses, customers have plenty of choices. We've learned from our last few years of, in these businesses that if you innovate with the customer at the core, you look at technology, you leverage technology well to be most useful to the customer, whether it's in how quickly you can make loan decisions, how quickly you can turn around requests, and how well you can give them the power to control how they have, can they build in flexibility in repayments, for example. So while, viewed from the outside, a lot of these places look like there are 10 players in any business category. There's plenty of room for innovation and headroom for growth. And that's been our experience in the last 5 years. And we fully expect that to play out, whether it's a business like gold or a business like wealth.
So let's talk about the growth. We have been covering Godrej Capital since day one now, and we have seen the AUM grow to 30,000 crore, like you mentioned to me. From here on, you're targeting 1 lakh crore of AUM over the next 5-year period. Now, such rapid growth, does it, sure, it is a good thing for investors, and your promoters, but you handling it, you have a hawk-eyes view, right? Sometimes very fast growth is also associated with a lot of risk. How do you balance the risk factor and simultaneously maintaining the pace of growth that you have?
Sure. No, Piyush, that's a great question. And this balance lies at the center of building any business, but particularly risk businesses and even more specifically so lending businesses. So I think there are a few.
Maintaining the pace of growth that you have.
Sure. No, Piyush, that's a great question. And this balance lies at the center of building any business, but particularly risk business. We've been very conscious of incubating no more than 1 or maximum 2 in a couple of years new businesses. So first and foremost, our approach has been to take one business, lay the foundation, see it getting to a certain point before starting something new. So one has been step by step. Second has been in aligning incentives, whether it's our frontline teams, whether it's leadership teams, to making sure that our interests are aligned with customer interests, our interests are aligned with promoter interests, and just in general covering all of the stakeholders. What that does is it gets a one view philosophy on how you think about risk. For example, even when you look at a customer, so today we have less than a 50% approval rate in most of our products, particularly around unsecured products. Not only is that safeguarding the interests of Godrej Capital, it's safeguarding the interests of customers where you shouldn't be taking more credit where it's not appropriate for you. So thinking on behalf of the customers, building one business at a time, going step by step, never in any particular business, never running before you're confident of walking. Spreading the risk around. So geographically spreading it around, making sure we have no concentration. So today, if you look at our portfolio, we have a mix. There is a mix you maintain between secured and unsecured. There's a mix between there's an avoidance of concentration on any one geography, any one customer segment, and on any one product line. So you spread the risk around. You never bet the farm on any one bet. You allow any new business that you have launched to see a cycle, to get going before you start the new thing. And at all points, you're making sure that across the team, whether you're on the business team, underwriting team, operations, you're sort of tying it all together, sort of with, we've invested quite heavily in tech, particularly in our latest new tech front end, which essentially sort of allows uniform access across the board to everyone that's looking at how we're underwriting risk, how we're bringing risk on. And then there's a whole bunch of work we've done on using AI meaningfully in making sure that people are assisted. They'll never be replaced, but assisted with making far better decisions. What all of this put together has done has given us some of the lowest loss rates. I mean, despite the fact that we've gone from 0 to 30,000 crores in 5 years of business, we have an under 1% cost of risk. In fact, we are at 0.7, which is arguably among the lowest in the industry. So we feel quite confident on the base that we have set in how the practices are in people thinking customer, risk and technology first. And now we feel confident in saying of the different businesses that we've laid out, the path from, going from this 30,000 to 100,000 crores, we feel we can manage that in a fairly risk-balanced way. Now, keep in mind that whereas these numbers sound large and the growth rates are obviously, quite high, in the context of what the size of the pie is, for a 2 lakh crore plus business, in market share terms, in sort of what part of the pie, are we working to attract? It's still minuscule. We've also, there are a few segments and, product areas that we believe are risks that we don't understand well and we've wanted to stay away from. And what all of that's put together is in making sure that we have to achieve both hand in hand. There is opportunity to grow fast, which we should take, but it's really pointless if you don't manage risk well, because then it's not profitable growth.
You mentioned interestingly 1 to 2 businesses you enter every 1 or 2 years. Now you've done wealth and gold, so we'll have to wait 1 more year or 2 more years before you enter. Announce your next venture.
Actually,
what would those ventures be, in what segments?
Sure. So if I can just take you back a little bit, we had started off with just home loans. We then extended to SME secured. We then extended that to MSME secured, I beg your pardon, SME unsecured, working capital loans. This year on the lending businesses, we've just launched supply chain and gold. You will hear from us on how we're looking at the unsecured personal loans, how we want to do it differently, and I'd love to talk to you more about it in the coming months. So in the coming months, that's something we can look forward to. This is all within the lending space on the NBFC side. In our housing finance business, our affordable housing business is something we incubated last year. We are now present in 4 states. We started with Gujarat, Maharashtra, Tamil Nadu was next, Rajasthan is currently our newest launch. So our affordable housing business is something we incubated last year, coming along quite nicely this year, where we aim to do 1,000 crores of disbursals in our first complete year this year. Like you mentioned, whereas not in the lending space, wealth is our newest business. So, and I'll come to that in just a minute. So in our lending businesses, you can expect to see us growing on the personal loan side, as having a stabilized supply chain and gold loans as our 2 newest businesses. On the housing finance side, affordable housing is our most important area of focus, where we will expand geographically and look at having a stabilized supply chain and gold loans as our 2 newest businesses. On the housing finance side, affordable housing is our most important area of focus, where we will expand geographically and look at different segments where we can look at increasing our business on the self-construction side. On the wealth side, like where we've started wealth management as a business, the logical next business that you'll see us getting into is the asset management side in the coming quarters. With this, I would expect us to play in this space in the next year to two before saying, okay, what next?
Today you have announced the formation of a new JV. What sort of benefits do you see for the overall ecosystem in the railways?
I certainly believe that, you see, in India today, the main leasing company is GATX. Texmaco 2X has also been there, but our volume has comparatively been, our market share has been 20-25%. With this Trinity joining in, we will be able to source international funding at very competitive rates and thereby increase the availability of funding available to Indian industry.
So currently, what is the capacity like, and what is the utilization and the execution plan of the overall capacity?
I think, you see, as far as capacity is concerned, Indian wagon industry has produced the best in the last 2-3 years because they had a lot of orders from Indian Railways. But of late, there has been some scarcity of orders. So we are waiting. Under the new rail plan, we expect railways to order another 32,000 wagons. Once that is introduced, then I'm sure we'll use our capacity to the full. In addition, let me also tell you, Texmaco is the largest exporter of wagons. We are exporting wagons to a lot of countries in Africa. We've just signed a major project in South Africa where we expect to have a major presence, including a repair facility, repair and maintenance facility. So I definitely believe the future looks very good and bright.
So what is the current order book and what is the revenue visibility that you can give us at the moment?
You see, our order book is reasonably sound and happy because we have the largest orders of private wagons in the country and the largest order for exports. So our orders from Indian Railways is low, but our private orders and export orders are reasonable. So I do believe that, as I mentioned to you, we expect the new orders from railways to come out soon. Thereafter, we will be in a very comfortable.
So what sort of opportunity do you see in the overall scheme of railway infrastructure and the EPC opportunity?
You see, EPC opportunity is unlimited. How much you can do is up to you, because all the railway stations need to be modernized. All the railway stations needs power, renewable power, then manufacture of so many components that we are talking about, including safety equipments like Kavach, propulsion, transformers, hundreds of new products in electronic interlocking, and Texmaco is today working on all these products individually.
So very lastly, what is the overall outlook on the business, considering that we have again seen that the West Asia crisis is again coming back? So what would you like to say on the overall outlook for your business?
I would say the outlook for the business long term is very good, but immediate short term depends on the orders placed by the Indian Railways.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. we're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presented by Canara Bank. Together we can.
Good evening. Welcome to the show, the one that gets you the entire business day with perspective from the headlines down to the bottom line. I'm Vikram Oza, and these are the news that we're tracking on the show this evening. The anti-paper leak bill passes in the Lok Sabha. Offenders are going to face up to 10 years of jail or a fine of 10 crore rupees. Meanwhile, in response to a question, the Aviation Ministry has ruled out fuel switch fault in the AI crash probe that has claimed 260 lives. The Maharashtra Food and Drug Administration, the FDA, has mandated FSSAI licenses for school canteens in Maharashtra and has banned the sale of processed and packaged foods and drinks that are high in fat, sugar and salt within 50 meters of school compounds. The Wall Street closed back over 24,200 after 7 sessions. The Sensex and the Nifty both end more than a percentage point higher as the RBI likely sells dollars to keep the rupee from depreciating further. HUL regains 50% of the losses that it incurred yesterday. Oil jumps around 7% after Trump claims that the US will hit Iran hard. Once again, fears on supply chain looms large. On the earnings front, Asian Paints reporting strong first quarter numbers with a beat on all parameters, profits surging 40%. Colgate-Palmolive shares have jumped 7% after its net profit has jumped 7% year on year, with the toothpaste portfolio reporting high single-digit growth. Adani Enterprises reporting its highest ever quarterly EBITDA of 5,642 crores. The company's solar module line capacity has been expanded to 5.7 gigawatts. Its data center business signing up for a new hyperscale order of 400 megawatts. Adani Ports and SEZ's first quarter profit has risen 9% and come in at 3,620 crore rupees. Revenues have jumped 19%. Xiaomi doubles down on India, betting big on the smart home ecosystem. Fresno 3 easing has added momentum to Xiaomi's India expansion plans. Now let's begin with a new story that could change what is on the plate for nearly 2 crore children across the state of Maharashtra. The Maharashtra FDA drawing a hard line on junk food. So in a sweeping order, every school canteen, every hostel kitchen, all the midday meal contracted food and Anganwadi food suppliers, all of them will have to come under the FSSAI licensing framework. But that is only half the story. The regulator has also effectively declared a red zone around schools for foods that are high in fat, in sugar and in salt, and they've banned their sale, their promotion or even free distribution on campuses, and they have to be outside a 50-meter radius from those campuses. And this is not limited to a handful of institutions. It covers every school board, every district and more than 1 lakh schools across the state. So coming from an from an FDA, I should say, that has already conducted these high-profile crackdowns on restaurants, on hotels and some of Mumbai's most elite clubs, it's a message that food safety is no longer a box-ticking exercise. Commissioner Tukaram Munde is saying that there will be no exceptions, there will be no sacred cows in this entire exercise. So what we are learning from the Tukaram Munde-led FDA, what they're trying to send out is pretty clear that food safety now is not negotiable. Over the past few weeks, the regulator had cracked down on restaurants, on hotels, even some of Mumbai's most prestigious clubs, like I mentioned. So the latest now to come under the scanner is the Cricket Club of India, where the FDA has found what it described as serious hygiene and food safety lapses. So what exactly did inspectors find over there at the CCI on ground? What has triggered such strong regulatory action? My colleague Abhishek went down to the CCI in Mumbai to get some answers. This is the report he filed.
FDA action for adulterated food as well as kitchen hygiene across restaurants and establishment in Maharashtra continues, and latest in the list is today crackdown has taken place across prestigious clubs across Mumbai, and we are present right outside an important heritage old prestigious club, Cricket Club of India, wherein the restaurant inside has been suspended. The license of it has been suspended by the FDA department after thorough inspection. And what was surprising is the gross violation of kitchen hygiene. More importantly, there were no separate section for veg and non-veg preparation that was identified, and moreover cockroaches and expired food products were seen in lying at the kitchen shelf. Brooms were kept on the kitchen floor, and there were gross violation of kitchen hygiene is what the press release of FDA Maharashtra has clarified. And more importantly, such action continues because it's not only one club. The release says that around 7 clubs today where action was initiated, out of which 5 clubs in which the restaurant's license have been cancelled. 1 has been issued stop work notice, and at the same time 1 has been asked to do certain improvements. Definitely this consistent crackdown across Maharashtra has now come to the prestigious clubs across Mumbai, and one of the important CCI is now the restaurant of which the license has been suspended by the FDA.
A suspended license of the CCI and one of the many elite clubs that have seen this kind of crackdown. The bottom line is that this is no longer just a one-off crackdown. It's a statement of intent from school canteens to Mumbai's most elite clubs. Now the FDA is signaling that food safety is finally moving from the rule book to the ground. We're talking about real execution here, and that is the bottom line. Now, the shadow of the NEET paper leaks continues to hang over India's examination system after paper leaks triggered outrage and those protests, and some tough questions were raised on the entire credibility of the competitive exams. Now, the government is looking at sending a very strong message. The Public Examinations Prevention of Unfair Means Amendment Bill 2026 has been passed in the lower house. In the Lok Sabha, it paves the way for even tougher action against exam fraud. That legislation seeks to crack down on paper leaks, on organized cheating rackets, and indeed malpractice networks. There are penalties that can go up to 10 years in jail, and there are fines that go up to as much as 50 lakh rupees. The larger point is that restoring trust in exams may be just as important as conducting the exams. And the government is betting that the fear of punishment can succeed, that the deterrence will actually work where oversight has often failed. Here's what we got from the government and the opposition about the bill in Parliament when it was getting debated.
Public Examination Prevention of Unfair Means Bill 2024 was enacted in January 24. लेकिन हाल ही के घटनाक्रम के बाद ये इस सरकार की संवेदनशीलता है and openness to accept the inputs and to learn from the experience and also to learn from the advice of the experts के लगा कि इसको और stringent बनाया जाए। इस एक्ट के तहत जो अनअमेंडेड था उसमें भी the offence is cognizable, non-bailable, non-compoundable with stringent punishment.
I was very excited, reassured by what the future of this country did on our streets. This was not anger. This was not violence. This was not hatred. This was an expression, deep expression of the youth of this country